And we're back. Forex Focus. Frank and Glenn.
The Ides of July.
Is that true?
No clue. You always say it though.
No. March 15th is the Ides of March. I know that for sure.
Okay. Block that.
The Ides of July might be the 13th. I don't remember how it works. But interestingly enough, I got a new laptop. This is really going to be interesting. And it keeps saying like
E2 Brutus?
20 it takes the date essentially as we know it here in the US and then adds like 10 to it and then has this little word TIR after it. It's like, oh, like today's the 24 tur and then like has like all these like other characters that I'm not used to seeing in the same line. I think that the computer thinks that I'm in some other country.
Yeah, I think.
But it's not Ides. I would welcome, a Roman.
TUR? TIR?
TIR. TI.
Clock.
Yeah.
Tire
see?
clock.
I would just do TIR yet. Yeah, I don't know.
Yeah,
We'll
I think
figure
it's
it out.
broken. Return to sender. Sorry.
But what's going on, man? We're not used to doing this on a Tuesday, but you got a lot of content that you cooked up.
Yeah, thank you. Pleasure to be back here on a Tuesday.
It is important that it's the 15th of July because we're getting inflation today.
This is true. Yep, CPI inflation for the U.S. I think Canada as well, if you're interested in that.
All right.
Canada getting inflation stats as well. But yeah, let's waste no time, hop right into the slides because we've got a little topical study for you. Today we're talking trading FX volatility shocks to fade or to follow. How's that title?
I love it. You set this one up perfectly.
Why, thank you. Because we're looking at the background of today, an economic data release in the form of CPI inflation data for June. But this study is, robust enough to to be evergreen in a sense, and not just reliant on this one data release, because right now we're in a low FX volatility environment.
Sure.
But even so, in any volatility environment, when we see something like an economic data release as important, possibly pivotal, as an inflation reading here in the U.S., we can see that volatility play through in U.S. dollar markets more than 3 times the average or more when looking at hourly price data.
And not only is it evergreen for everything that you just said, but also, I mean, we get this data point every month. And we also get PCE inflation every month. And we also have a non-farm employment number every month. And we have FOMC every month and a third. I don't know how you want to take 10 meetings over 12 months in terms of monthly cadence. But essentially you have probably every week a high level. You throw GDP in there and you've got probably, one big US data point per week. But also just this concept is evergreen. Something big in the market happens. Should I be going against that move? If I should be going against that move, and that's what I think you mean by fade, when should I be going against that move? Or should I be following that move? And if I am going to follow that move, where is a good entry point for that? Because, the way that we always measure these things is the industry standard for measuring these things. I don't really know a better way of measuring these things, is some form of volatility or standard deviation metric, which essentially just lets you know, okay, around CPI inflation or any kind of data point or the last 30 days, whatever, what has been the normal activity? And then, to layer on top of that, should I be going with it or against it? And if I'm going to go with it or I'm going to go against it, where is the opportunity? Because obviously, if CPI inflation comes out at 8:30 Eastern time and then it's 833, and these markets have moved, 0.6% in some direction, and I was gonna go with it. Have I already missed some of the opportunity? Which isn't to say like, oh, now I'm gonna fade it, because maybe that's just an efficient move. So I'm excited to dig into this. Excited to see what study you cooked up.
Yeah, so just to finish up this background here, the average hourly movement in euro dollar over using the past year of data is around 0.06%. That's, coming in every day. But if you look at this graph to the right, you can see I highlighted one of the candles, and the reason I kept a lot of these in percentage moves is because the TastyFX platform calculates it for you right here when you hover over a candle. Here, looking at the hourly chart, and we can see even on a Thursday night with probably the Asian market open, we can see a move of 0.2%,
Sure.
Which is over 3 times that average. So what we did is we took the last year of price data using hourly close data for major US dollar pairs: euro, pound, yen, Aussie, Canadian dollar, Swiss franc, and New Zealand dollar. And we measured hourly close-to-close moves exceeding some percentage thresholds, so 0.2% all the way up to 0.7%. This, would account for low volatility environments, high volatility environments, keeping it all the same, and simulated trade performance when you enter the start of an hour after a shock move that exceeded one of these thresholds, both contrarian and momentum, so fading the move or trying to follow the move, and also tested exits after different time periods when focusing solely on intraday scalping. So nothing, long-term position trades, but just reacting to a shock move, which strategy wins out, and calculated win rates just based on positive P&L after the given time period. Any questions on my methodology here?
This seems pretty straightforward. The only question I have is, did you at any point do a basic standard deviation calculation of any of these markets? Like, do you know what, like, if VIX at 16% is like the North Star of like average performance, is like 0.2% or 0.3% like a normal hourly move? I know you had the average there.
Yeah.
But what would be like a normal range? Is it under 0.2%?
It would be under 0.2%. This would be roughly 2 to 3 times a normal move in this environment, and then taking into account all the way up to 0.7%. We saw, the range of observations drop drastically by 0.7%. So this kind of aggregates a spectrum of volatility environments.
So then let's create the baseline that like 0.2% is one standard deviation, 0.4% is like 2 standard deviations.
Sure.
And then 0.7% is like, okay, now we're, pretty rare air to get close to a percentage point in an hour in an FX market.
Exactly. And it's important to consider for things like economic data releases that this is just hourly close data. It's agnostic of particular releases.
Yeah.
This can be used for any move, and a lot of these economic data releases happen on the half hour. So something like this move, where you are getting that, could be within a half hour.
So just filtering for big hourly moves.
Exactly.
Gotcha.
And I know you say I present a lot of numbers to you, way too many numbers, and rest assured, I have them. They're in slides to
follow. I see a lot of numbers, that's for sure.
But first, we wanted to make this as simple as possible. No numbers, just a lot of words. Is that better? And what I did was aggregated, closing positions intraday across those time intervals that I mentioned before, which strategy wins out by magnitude of move. So as you called out, around a 1 standard deviation move, does that change when things really get drastic? And what it shows, and we had a added scrutiny of only if the average win rate was over 50%. So you can see in that New Zealand dollar for some of those percentage moves, a little too close to 50-50. Wasn't confident giving, a signal here, but using the data, past performance, obviously not indicative of what can happen.
Yeah, I want to make this abundantly clear solely because I like the way that you have simplified this, and I want us to be able to simplify stuff like this in the past. And so I will be abundantly clear in saying that the past performance does not indicate what to do in the future. This is purely telling us, okay, in the last year, if you saw 0.2%, 0.3%, 0.4%, and so on move in these markets, what was the performance on average the next time interval?
Exactly. And which strategy had a higher average win rate?
And so essentially, okay, if that top line there, euro dollar, moved in any given 1 hour bar outside of 0.2% or outside of 0.3% or outside of 0.4%, the last year, on average, the next hour, the market was more likely to revert some of that move than to continue that move. But what's interesting is once you get outside that kind of 2 standard deviation, that big move, you're seeing some of those fades across some of these major pairs turn to follows, which means that if you saw a 0.5% or 0.7% move in that euro dollar market, on average, the next hourly move actually continued in that direction. I'm sure you have the numbers to back all this stuff up, but just right off the bat, you're seeing for euro, for pound, for CAD, and for Aussie, on average, if you saw a 0.2%, a 0.3%, a 0.4%, kind of a 1 to 2 standard deviation move, the next hour they tended to come back. And actually, again, we continue to see, I'll just zero in on Aussie because the CAD has been a little bit mixed, but that Australian dollar seems to be the most mean reverting of these pairs that we look at every time we do a study like this.
Yeah, and the flip side of that is this dollar yen not cooperating with any mean reverting strategies using this criteria in the past year. That one to stay away if
or one to jump on if you're following trends.
Exactly.
Yeah.
So this is how I broke it down by magnitude. Also wanted to take a look at trade timing because these moves come in when we're thinking about the context of U.S. economic data releases. That is early in the U.S. trading period.
Sure.
And so U.S. traders perhaps able to monitor these positions better throughout a whole day. Is that worth it? Here are all your numbers that you like so much. And we took 1 hour, 2 hour, 3 hour, 4 hour, and 8 hours. So a whole accounting for the whole U.S. session approximately. And here we aggregated those hourly moves. So not as granular with the magnitudes, but any hourly move that was above that first threshold of 0.2%. And this is for fading the move. So this is a contrarian strategy. And we see, some validation from the chart before and not a lot of, indication that timing is that important to me, just seeing, green across the board for certain pairs. But what you couldn't see in the chart before is here, using this criteria, U.S. dollar, Canadian dollar appearing the most profitable consistently when fading the move.
Yeah, that is interesting. Okay, a couple of things, because everybody who's looking at this, their eyes are glazing over by how many numbers there are, which is not necessarily a bug. Could be, a positive for everyone, because as you digest this, I will try to talk through it, reiterating what Glenn said. This is accounting for all of the essentially large hourly moves over the last year in each of these markets. And now we're particularly looking at, okay, if you faded that move, or essentially like what were the chances of the move reversing that big 1 hourly move in the next hour, in the next 2 hours, in the next 3 hours, just coming back versus continuing in that direction. the most interesting thing to me here is, of course, one, the majority of these markets, you're seeing more green than not, which is to say that in any of these time frames, in any of these markets, on average, the move has tended to be reversed at least a little bit. Then it has tended to continue in kind of a lightning strikes twice kind of scenario.
Right.
Now, of course, dollar yen, you see that market loves lightning. Lightning strikes for hours and hours and hours. And even that Kiwi, I'm surprised by as a commodity currency that market hasn't mean reverted as much as its Australian and Canadian friends. But the most interesting thing to me here, Glenn, is you have, without even knowing it, confirmed that Losers Club is a very real thing. Because if you look at that 3 to 4 hour stretch there, these odds of the market reversing don't increase for pretty much any of these markets past that 4 hour. You could see for Eurodollar, the peak time for that market to reverse is the next 2 hours after a big hourly move. Pound, the peak is the next hour. CAD, the peak is the next 3 hours. Australia, the peak is 4 hours, but 2 hours and 4 hours, pretty much the same number there.
Right.
And on down the line, there is no market here that tells you the longer I hold this thing, the greater chance I have of reversing this move. And so helpful data in the fact that, okay, I mean, 5 out of 7 of these markets tends to reverse a big hourly move than to continue in it. Now, of course, again, that doesn't mean that, oh, I'm just going to do this blindly every single time with all these different markets and I'm always going to make money. Of course not. We're talking about, small pieces of edge in a relatively binary market. But again, what's super interesting to me, you have a CPI, you have a non-farm, you have an FOMC. That's obviously more of a middle of the day kind of number. Or you have, Trump tariff talks coming out of nowhere, whatever's happening, because this is obviously just filtering for big hourly moves in the last year. The greatest period for trading that back and forth, it looks like, is in the 1 to 3 hour range. If you're holding on to a trade from 8:30 Eastern time when CPI went off and it's 2 in the afternoon, and you're like, well, I'm just going to hold this overnight because I didn't get the reversion I wanted, and I hope I'm going to get it in the next several hours. Right here, not showing you that your chances are increasing as time passes.
Great call out. I think that is the takeaway here as well. That time not necessarily in your favor past that initial move. And then lastly, just want to cover the inverse of that, following the trend across the same time periods. And here you're really only seeing, dollar yen consistently outperform. And the edge there, not as great as the contrarian strategy for something like dollar CAD. But yeah, this would be the call out to me, trending market, and New Zealand dollar can't really make heads or tails of it.
Yeah, that's definitely the toughest one. But what is interesting is we're talking about the FX market, okay? And you can speak more to it on the Tasty FX in particular offering, but most providers in the U.S., the friction to trading is so little that whenever you see some smart guy tell you about how, like, if you're paying this commission and you're paying this spread and you're paying this whatever for your margin, you're paying this interest on your margin, all this different stuff, then you need to have a win rate of like 55%, or something like that. In here, and you can run the same numbers, and it'll be a pretty short and straightforward study. It's going to be less than 1% of friction when you're talking about these major pairs not paying a commission, paying the spread, and getting that trade on and off within an hour, not paying any kind of long-term margin or whatever. Although, of course, you can have the carry trade in your favor, so you can be getting paid. But anyways, I say all of this because if you did want to follow the trend in dollar yen, having a 53.5% win rate, as long as you are closing your losers for the same amount that you're closing your winners, you have some kind of symmetrical win-loss, you're going to be able to theoretically operate in a profitable area. Now, of course, again, that's taking a lot of assumptions there, which is you're going to be able to get the same profits as your losses. And a lot of emotions go into that. How much opportunity is there in that?
Right.
But yeah, especially when you're showing the dollar CAD stats and the Aussie stats and the Euro stats, and they're seeing some fading the trend, some contrarian win rates of 54, 55, 56, even up to 59% there for fading dollar CAD moves. You're talking about in such a low friction market. Being able to engineer some theoretical profitable strategies for sure, as long as, again, you don't let those losers become 2-3x and you're able to get decent average profits.
Exactly. So covering just our key takeaways here, contrarian strategies, using this entry criteria, contrarian strategies have the edge when reacting to these major hourly moves when trying to take these positions off intraday in most pairs. Dollar yen the exception, consistently favoring momentum trades. USD CAD, Canadian dollar, posting the highest win rates for fading a move of greater than 0.2%, and showing that timing the trade less important, but importantly, that holding on to trades from 4 hours to 8 hours doesn't give you any extra edge using this data. That'll do it for our study today. Let's hop into the platform real fast as we wrap up Forex Focus for you today. Just to get you covered, we got, as we've mentioned multiple times, inflation data coming in 36 minutes. A whole bunch of stats. We'll see what is digested as the headline. We got Canada mixed in here. Headline inflation rate year over year forecasted to be 2.7%. Core inflation expected to tick up to 3%. In what would be the first uptick in a while. Any thoughts, heads or tails here? Let's check in on where we're situated early this morning.
I don't have any crazy Kiwi able to fight back a little bit from what they lost yesterday. It does feel, the only thing that I'll say is it feels like the market has changed a little bit. We've definitely at least taken a break from all the dollar selling that we saw throughout April, May, and even into June. And it feels like the dollar is starting to be able to at least, fight back in little places, back up to 148 against the yen. Aussie is back well under 66 cents. Kiwi's under 60. Euro dollar is trading under 117, which doesn't seem crazy, but I mean, we were flirting with 118, 119.
Quickly.
And so that's the only thing I'll say is that the number itself, I don't have any big, who cares what the macroeconomists have to say? They're so wrong so frequently, and I would be so wrong so frequently if I tried to predict what the hell was going to happen based on whatever number. But I will say it just feels like we're getting at least more two sides recently, and this dollar, maybe it's put in a little bit of its low, and with that, I'll expect to see 118 euro dollar in the next hour. But no, I don't have any big thing to say about it.
Well, that'll do it for us here. Stay tuned to FX markets in the next 30 minutes to gauge that dollar reaction. Could see quite the uptick in dollar volatility. Could not. But that'll do it for us on Forex Focus. A lot of Tasty Live left, so stay tuned right after the break. We got Tom, Tony, and Vanetta up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
I want to go home already.
Oh, come on, not already. I call BS. No, you've been in the office for about 7-8 minutes. You were here earlier, but you just came into the office 7, and you roasted both of us, Tom more than me, for the last 7 or 8 minutes. You've been having a great day so far. Don't lie to us.
It's just like I'm literally Siri for boomers.
Breaking news, everybody. No, not NVIDIA or chips or anything like that. Tom broke his Wordle streak. He did not get the Wordle today. Josh, you are our new champion. Josh, everybody.
What was your streak? What was it? How long was it?
4 days.
It was like about the last 6 months, I would say.
Wow.
Yeah, and I had 4 cracks at the apple today.
Yeah.
So,
but you don't read, so you don't know what words are. So you're coming up with words.
Ruin it for everybody else. What was the word?
I'm not
it's not Zoust, right?
I'm not going to say anything. But I had 4 I had 4 letters
Yeah.
and I only needed the 5th, and I had 4 tries. So it's
Yeah.
ridiculous. I hate that.
That's how it happens. The
Brutal.
outlier move.
That's how it happens.
You would buy yourself if you could pick.
It's how it happens. It's the only way you ever lose.
Yep.
Yeah.
So that's bad.
That's bad. So, like, that's the verbal
bad.
part.
That's
of
how you
the
start your
essay.
day. That's
the,
horrible.
That's the
Yeah,
verbal
it's a
part.
horrible way. Like
Oh.
that's like 3 a.m. I couldn't go back to sleep.
Right,
It was
right,
bad.
right. Because at 4 a.m. you scalped bonds. You were doing just fine. Oh.
Doing fine scalping bonds.
No, so that's the verbal part of the SATs, and then the math part of the SATs. Then what happened there, girl?
Julia gave me a math IQ test yesterday afternoon.
Oh no! Why would you do
Just
that?
for fun, just for grins and giggles.
Well, that's how she gets her. That's how
Oh.
she has fun.
I wish I had been there to film it because I need content for the week.
Oh.
So
Yeah.
what did you score,
Not
Mr.
good.
I've built 2 financial
Yeah.
companies and sold them for billions
Well,
of
I
dollars?
forgot
On the
about
backs of Tony Batista,
I forgot about all the
his friends.
all the different positive-
Theorems, all the
different
theorems.
positive, negative numbers.
Oh, positive and negative. Oh, just you know, you
You
just
forgot 2 negatives equal a positive. How do you think?
No,
we
I
You
got
know what an integer is?
I got the 2 negatives equal a I forgot it. It was a long time.
Sure, yeah, yeah.
Yeah, but
You
there's
just need a little bit of a refresher.
there's a lot of
in your
like
mind.
a lot of tricky little calculus in there.
I mean, it's interesting how they teach math, I think, to kids today versus like how you learned it. Like there's differences.
Well, I haven't taken a math class in 60 years, so
Yeah.
50 years, whatever.
70.
70. Just keep going with the numbers. We'll get close.
But yeah. So then my confidence has been shot. Now I'm down to like
So you need a win.
need a win.
Yeah, you need
Yeah, you
Scalp
need.
some bonds.
Yeah.
Scalp some bonds.
Okay.
Got 9 ticks out of them. Can't do any better than that last
Yeah,
night.
Oh,
that's
oh.
pretty good. You,
Bought the low, sold the high.
Got to take your wins where you got to get in where you can fit in. I guess I don't
Yeah.
know.
Yeah.
So what did you do last night
That's
before
fake
your
news.
work-
He didn't buy anywhere near the low. He didn't sell anywhere near the high. But that's close. I mean,
I
you got a
neither
good
there.
chunk in between. I will give him
Kind
that.
of good.
What did you do last night before your world fell apart?
Oh my God! It started out horrible. You should have known Wordle was going to come out bad. I heard what happened to you at dinner.
I had to take a bunch of people out to dinner last night, so
You didn't have to. From the kindness
I
of
wanted
your
to
heart.
take a bunch of people
You
out.
wanted to bring a friend who, I don't know, you
wanna
probably
mention-
know for how many years?
whatever.
Was
You
this
probably know him
Jules?
for 7, 8
this
years,
Jules?
something like that. You wanted to take him out to dinner. Now, our friends you know for 40 some odd years was at your children's first birthdays and stuff like that.
Oh,
you don't want to
shut
take
up.
out for
You didn't
dinner.
want to go out to dinner. You didn't wanna go
Shut
out to-
up, I got it.
You didn't want to go out to lunch this weekend. I tried. Anyway, I was taking some people out to dinner last night.
Yeah, where'd you go?
Well, we were going to Sunwa, the Chinese barbecue.
Oh, you haven't been to San Juana in a minute.
I know.
It's
and
been
I
a
wanted
while.
because we had like 8 people, so I had a big lazy.
The Lazy Susan, yeah.
So I was really excited.
Big, lazy
whatever.
Correct.
Yeah.
Go ahead, yeah.
So we get out there. So we get to Sunwa, and there's a note on the door. We're on vacation.
Oh, they're allowed to take. Oh, so you did not think ahead. You did not plan ahead. You just thought that they were going
I
to be
thought
open.
5 o'clock on a
That
Monday
is a
night.
choice.
5 o'clock on a Monday night. This is going to be easy.
Okay. So then what did you pivot to? What's up there?
Pivoted to Vietnamese food.
Okay. Oh, like, yeah. Okay.
Yeah. Very average.
Okay, but if only
With a big lazy
planning
Susan. I know.
would have avoided
But
this.
it's just, I mean, I like Vietnamese food, but
Sure.
it's not the same.
Okay.
And,
You had the duck on your mind.
I was all duck.
I mean, you can't do that. That's like bait and switch.
They have.
Is this breaking news that Chinese food is not the same as Vietnamese food? This is not groundbreaking information.
No. I was all in for the Peking duck. I'd been talking up the Peking duck and the beef xiao fung, which is their.
I mean, that's risky. Anyway, like a lot of Chinese restaurants just aren't even open on Mondays. Anyway.
Oh, this
I mean,
place is always open.
Okay. Well, obviously they're not always open.
They're only closed on Thursdays, which is crazy, but that's always the way they've been.
Okay.
But so we went for Vietnamese food. We ordered way too much, but I thought it was like, I mean, I like Vietnamnese food. It's just a
Do you
little
have some pho?
versions of it,
Oh, okay.
but it's just a little
Yeah,
bland for me. It's too bland for me.
Okay. Oh, because you need nuclear levels of spice and heat.
Spices and heat.
I gotcha.
It was good, not great.
Okay.
But it was fun night.
It had to disappoint. You couldn't. I mean, you were ready for the duck.
Yeah.
You were,
I was all duck.
Yeah, you knew exactly what you were getting. I mean,
When did they say they were going to come back?
Friday.
Oh, on the sign. Oh, Friday. Okay.
Yeah.
Well, get another shot.
What kind of bull crap is
You were gone for 2 weeks.
that? What do I care what I do? I don't run a restaurant.
Okay. I don't. I don't have any.
Anyway, so I was out.
Yes.
I was out. So
Okay. What's on deck for you tonight then?
tonight, nothing. But I have to go out Thursday night. I'm collecting on a bet Thursday night.
You're collecting on a bet. What was the bet?
The bet was a couple guys on the trade desk.
Well, there's no women on the trade desk.
A couple of us bet. Scott and Steve took Edmonton, and
for hockey.
in hockey.
Oh, okay.
And a couple of us took Florida, and Florida won. So
Yes.
the guys have to buy us dinner, and the guys on the desk decided they wanted to go to Joe's. I don't know why.
Joe Stone Crab?
Yeah,
Oh, that's a good choice.
Expensive.
because it's expensive.
Yeah.
Expensive. That's what I'm going.
Scott's gonna have to bring out his Amex card for this one.
Yeah.
And so we're going to Joe's on Thursday night.
I want to go to Joe's.
You can go. You can go.
Their key lime
Show
pie.
up.
It's good.
Just show up.
Yeah, Mama wants a crab cake. I love crab cakes.
You know what's weird is I love.
Please don't say that you hate crab cakes.
I don't hate crab cakes. I like crab cake Benedict.
Okay. Oh, for breakfast, like a brunch.
For
If you're doing a drag brunch, that's what you order.
At Ann Sadler's, I always do the crab cake Benedict because I just like it because they have decent crab cakes.
Yeah.
But I like Wishbone, the crawfish cakes.
Sure, those are good.
Crawfish cakes.
It's kind of more of like a croquette. Like growing up, my mom would make like salmon croquettes or like
Crawfish cakes
Yeah.
are good. I bought some the other day. I found them in a store. I bought some crawfish cakes.
Costco?
No. I haven't cooked them yet. And I got them, and I'm going to make my own.
Remoulade?
No, I'm going to make my own crawfish cake Benedict.
Hollandaise sauce is the word you were looking for?
No, I bought the hollandaise sauce.
So you're just gonna assemble everything again, like Sandra Lee.
I'm assembling.
Okay, good.
Dude, can I tell you? So when my parents and
assembling
You're gonna
everything.
Assemble everything.
When my parents and I went to South Carolina in May we went to Myrtle Beach, we brought back like a 10-pound bag of Carolina yellow stone ground grits.
Ooh.
And so I shipped it because I bought so much stuff. So I shipped it. So I had them. So I brought it to my parents' house for the 4th of July because it was at my house. And so my dad cooked those Carolina grits.
Yeah, I love those.
They were good.
Didn't Tim Knight send you a bag and you let it go bad?
I think those are peanuts, maybe.
No. Tim sent me a bag of rice.
Oh, rice. Oh, that's right. Yeah, remember because we found it during the pandemic.
Rice for the paella.
Yeah, remember? Yeah.
I used his rice. It was
You went
great.
through a paella phase.
But it was expired, right? I mean, you had waited so long.
Everything I have is expired.
Yeah.
But it's
It's on brand for you.
It was, yeah. I told you I threw all the expired meat out. Anything 2023 and before.
Yeah. Oh,
I threw it out of my freezer.
Good for you. Good for you.
And it was about 20 pounds
Oh, gross.
of,
Yeah.
So we were. I launched a bunch of stuff.
Yeah, and probably a couple diseases. I don't know. How about you, Bat? How was your evening last night?
My evening was uneventful, which is good for me.
Yeah.
Yeah, uneventful. Although my morning started very early. I felt a little bit like Sosnoff. My dog was pacing around, had to go to the bathroom, and the wife was not moving. To her credit, she usually moves to do the dog because her responsibility. It was her life decision that we have the dogs. She takes care of the dogs. But I was the good spouse. I got up at 3:15 this morning and let the dog out. But I'm walking down a hallway. I see a light from underneath my son's door, and I hear him talking. It's 3:15 in the morning. So I knock on the door. I open up. I go, "Are we going to go to bed?" He goes, "I'm not being loud," because 4 nights earlier over the weekend, he was playing a harmonica at 1:30.
What is he, blues traveling? Where did he get a harmonica?
He bought
in
it.
the first
He bought it.
You bought it? Okay.
He taught himself how to play. He knows a song or two. He enjoys it.
You gonna bring him down to Blues Fest? What is happening? I don't understand.
You gotta have the blues in
What
you.
is
You know, you
going
gotta
on
live
in
it.
the suburb? Like, what could he possibly have the blues about?
Yeah. No, maybe a girl.
So he's
not
just
saying,
staying up to all hours of the night, and he just.
Well, it's summertime. I mean, what am I going to do? Normally, I don't know that he's up till 3 o'clock in the morning because I'm not getting up.
I had a job.
He sleeps till 11, 12, 1 o'clock in the afternoon.
I had a job every summer.
He has a job too, but he usually goes to work at 5 o'clock.
Oh, he like works.
He had night out.
Nights, yeah. I guess.
Yeah.
Well.
I don't know. So that was my.
So wait, who is he talking to?
Guys online, his friends, they were all playing stuff. You know what I mean? We didn't have that. We had Stratomatic baseball. That was the easiest thing.
When I woke up, I heard my son on talking in like some, I don't even know what language they were talking in. We caught him at like once when he was, maybe like, he was younger than Vinny, maybe like 12, 13, talking to some kid in like
Indonesia, China, something.
or Singapore, playing World of Warcraft at 3 a.m. on a school night.
Oh my God, they curse at each other and say the nastiest things on there, which I have a hard time with. I don't think that's the right thing, but that's to his friends. I can only imagine what he's doing to like somebody he doesn't know. It's so bad. It's so bad.
Yeah, but they will play. It's addicting. They will play all night long.
Yeah.
Okay. Well, I feel really great about my Social Security. Hey, we got a great show for you today. A lot of good content headed your way. It is a terrific Tuesday here on Tasty Live at the top of the 8 o'clock hour. Options Jive, both sides of the poor man. I don't want any sides of a poor man. No, sir. I did hear something funny. They're like, at my age, men only want a nurse or a purse. I hate it here. But what is both sides of a poor man? Poor man's covered call? What is?
Poor man's covered call or put.
Okay.
They're actually doing I think today's is a poor man's covered put.
So there's two sides of it?
Well, no, you could do the call side or the put side.
Oh, that's what you mean. I see. Gotcha. Okay.
Breaking news here.
Yes.
I just got 2 emails. Dino and Josh both got the word today.
Because they read.
They do. They read British novels. Is exactly what Dino said.
I'm not a buyer. I read Dino's email and I believe him because he had all the same mistakes I made. I mean, not the same mistakes, but the same guesses I had.
Mistakes.
Except for the word that you came up with that was the name of an 1843 British journal, which is not a word.
Josh, I'm not so sure of. I have to check his work.
All right. Well, we got an Options Jive at 8 o'clock. And then let me explain. Chris Vecchio in the house. You have CPI coming out today. So Chris Vecchio is going to be in at 8:40. What are you talking about with Chris today?
I don't know exactly, but we'll probably, listen, it was so slow yesterday.
How slow was it?
They only traded 47 million option contracts.
And half of those were yours.
No.
Yeah.
I didn't trade very much yesterday.
Yeah. All right.
So
more than you had the previous couple of days. That was a little bit of.
It was a little slow yesterday.
Why can't we just take the summer off like Europe does?
Yeah, that's a problem. We're going to have to talk to Europe.
Hey, in other scheduling news, at 9 a.m., we have a market measures IV rank, your market opportunity indicator. That seems like it should be on a bus bench. I'm your market opportunity indicator. Call me. No, what does that mean? You're just going to look at IV rank?
So this is a piece today that was actually written by Thomas, who's
he's our intern.
He's our summer intern, research intern.
Yes.
He's
he's been on the show. You saw him on Trades for Research.
He's a math major at DePaul.
He is. He's a math and financial engineering major at DePaul, and really smart kid. And this is his first piece. And it's like a validation piece.
Okay.
Of
whether he keeps his job for the rest of the summer or not. Is that what it is?
No, usually we don't fire interns. I mean, I can't. Have we ever fired an intern?
No, we have not. We have not.
I don't think we've fired.
We've never fired anybody.
But no.
So it's his first piece. That's great. It's a foundational sort of look at.
He's trying to validate high IVR.
Okay.
That's what it is. It's a high IVR validation piece.
Then 9:30, live from the trade desk, big boy Scott Sheridan, who is buying you dinner this week, is going to be counting down the top trending tickers from Tasty Trade. And it is my favorite day because today is a Tuesday, and that also means Liz and Jenny are live from the floor of the SIBO. If anyone deserves to be taken to Joe's Stone Crab, it's Liz and Jenny.
They've been taken there.
Yeah, I was going to say, they've been there before.
All right, I'm just saying.
It's a 5 Rabanitos day, okay? It's more important than that.
All right. Anyway,
5 Rabanitos.
that is our run of show for today. Programming note tomorrow is assume the position Wednesday. So if you have a trade idea for what's your assumption and underlying with a directional bias, we would love your trade idea. You can submit it however you've been doing it. I don't know.
Truth or skepticism day. It's what's your assumption day.
It's a lot. There's a lot happening.
Today is 5 Rabanitos, though. That's all that matters.
Okay. Hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Jump in.
Today's headline. This just in.
Oh, Josh got it on the last try, so he says.
All right, everybody. Today is a terrific Tuesday. It's July the 15th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Do I look different to you?
Why?
Because I feel different. Because last night, when I came home
I was
from
going to say,
the
did I miss
gym-
your birthday?
No, last night when I came home from the gym, I was taking my creatine, but my little thing that I mix it up with was dirty.
Oh, you're
and-
still doing powder? You can't do powder. You got gummies.
No, I have the gummies for when I travel, but I have the powder anyway. So my little blender bottle was dirty, so I just dry scooped creatine
That's like playing
into
Chubby
my
Bunny
mouth,
or whatever.
like a teaspoon of creatine into my mouth, and then I drank a thing of water.
Ugh.
And I'm like, I'm Linda Hamilton now. I'm a changed person. It's not recommended, but I felt fine. But I'm this close to just snorting creatine.
No, that's like, you can't do that. That's not what you do.
It was fun. I was tired. But I feel different. I crossed a line, and I don't know if there's ever coming back from this. Anyway, this is the part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. Mr. Bat, earnings for today.
Bank, you're not going to care about. Johnson & Johnson, you're not going to care about. PNC, you're not going to care about. Morgan Stanley, you're not going to care about. Goldman Sachs, you might.
Care about Goldman Sachs?
I mean, I don't care about Goldman Sachs. It
Okay.
looks like, I mean, are these earnings must be out. Citigroup, JP Morgan must be out, right?
I would think so by now. I mean, it's
Now
$7.19.
it looks like the stock's down $2. It looked like it was up $3 early. Now it looks like it's down $2.
What'd you do?
Citigroup looks like it's unchanged, up 50
I mean, like I said, I traded a tiny. I just sold a few out of the money calls. That's it. But I only because
Wells Fargo looks down too. Maybe that's why the
I think everything was. I've been saying. I thought everything was priced in.
Yeah.
But who knows?
Well, you might get another who knows in about 11 minutes because the inflation report coming out today, and it could provide clues on the impact tariffs are having on prices. The Consumer Price Index is expected to show an uptick in both headline and core readings, which would, again, give us a more insight into what's been going on and what consumers are facing. What is the implied, start over. What's the expected move for today?
In the bonds or the S&Ps?
In the S&Ps.
You're looking at, I mean, between 30 and 40 handles for the day. I mean, zero day has 30 handles. 1 day to go has 40. So right after the number comes out, I'm sure.
I mean, I don't think it's going to have a big impact on the S&Ps. It might have a big impact on the bonds.
What are you, where are bonds right now? What do you want them to
They're
be?
up 2 ticks today. I want
Okay.
them to be up 2 full points.
You did trade over 113, but they're 112.26, probably mid-range.
I'm a buyer if they go down, and I'm a seller if they go up.
Because you've been scalping bonds this morning, so it's been working.
Well,
Knock on wood.
I bought them last night before I went to bed and sold them this morning. It's not exactly.
Well,
yeah. You're right. 8:19. That's about 10 minutes before he went to bed.
Yeah.
100% Correct, 8:30. Be night-night.
He was tie-tie.
No, I didn't get home until 8:15. When I got home,
Oh, my God. What a long night.
what a long night.
He's going to be at
you
Peach
can't
today.
do that.
Hey, the EU.
3-hour dinner? I know.
The EU has finalized a second list of countermeasures to target U.S. goods worth $72 billion. This now includes Boeing aircraft, automobiles, and bourbon. The U.S. state of Texas is the largest exporter to the EU.
I know that.
Yeah.
But I don't want them to. I have a car on order for the last 4 years, so.
You have a car in order? How did I not know this? What'd you buy, girl? An Aston Martin.
No. He couldn't get in one.
I don't like those cars. They're too low.
Aston Martin?
I just said you couldn't get in one.
I've never been in one, actually.
Yeah, you have. You've been in Scott's.
No, I never was in it.
Oh, really?
No.
Scott had an Aston Martin.
Used to.
Solidifying his S tier in like rich guy pantheon for me. Anyway, what'd you order though, girl? What'd you get from the EU?
No, it was a Range Rover from years ago.
Oh, that's right.
The
Yeah.
fully electric.
No, India isn't Range Rover isn't.
I thought it was. I don't know.
Yeah.
I think it's in Britain.
What are currencies doing this morning? We can talk about that. Talk about euro, the yen, nothing. Pound, peso,
Nothing.
Looney.
They're all just basically unchanged.
How's Tasty FX working for you?
It's owned jointly by British and a subsidiary India-based Tata Motors.
Tata Motors, yeah. You should remember that, Tata Motors.
Yeah.
They told me that we would have the car 3 years ago. They said now it's another year.
But you have a Range Rover, though.
I know. So I want it all electric.
You got the hybrid.
Excuse me.
Oh, I see. Hey, in other news, oil holds its decline as traders assess outlook for Russian supply. Oil held a drop after slumping 1.6% on Monday. What are you doing in crude oil?
Nothing.
Okay, great. Gonna move on.
Flirted with 55, flirted with 65, flirting with 66 right now. 65, 85, unchanged, up 4 cents.
What about natural gas? Because, like I said, Texas exports a lot of liquid natural gas to Europe.
We're trading it a little bit on the long side. So I'm long natural gas. Not a lot. I'm long deltas.
It's had a little bit of a rally from its lows of around 3.2 to 3.44, hanging steady.
We're long right now.
As I reported yesterday, JP Morgan is going to start charging intermediaries for access to customers' financial data, but Block and PayPal climbed after dropping last week. Analysts downplayed the threat of JP Morgan's plan to charge data aggregators, so XYZ and PayPal were not affected.
Okay.
But JP Morgan is affected this morning because they had earnings.
Yeah. Down around $2, 2.5.
Okay.
Depending on where you're looking.
The expected move was $9 or less.
Yeah, well inside the expected move.
Okay.
Ivy rank was only 17.
Ugh. Hey, the crypto industry will take a step closer to going mainstream this week as a series of industry-friendly bills makes its way through Congress, paving the way for the digital assets to potentially be further integrated into traditional finance. The House of Representatives is set to pass a series of crypto-related bills this week. It's being dubbed Crypto Week. Tasty Crypto is going to be dedicating a lot of its program to this and what it all means this week. So definitely check.
It's not mainstream yet. I mean, it has a market cap that's more than gold. I mean,
sure.
That's not. What does this poor little child have to do?
The most notable bill would establish a regulatory framework for stable coins. Let's talk Circle, I guess, and Bitcoin at new highs.
Bitcoin did make a new high, but it's off of that new high. It's down almost 3,000 to 117. Last night got to 120 and change, but its high is closer to around 123.6 or something.
Yeah.
On the Bitcoin.
What about Circle? This is big news for Circle, or is it buy the rumor, sell the news? Beep beep. What are you doing, girl? You're a mime now.
That's a sell.
Circle's down $5, $1.99.
It's a buy the rumor, sell the news.
Okay.
And coin is $3.88 change on the bid, down around $6 also. But that was just off of its new high
Well, MicroStrategy rallied toward an 8-month high yesterday after the software and Bitcoin treasury company disclosed that it had resumed buying Bitcoin as prices surged further into record territory. And do you know who the largest holder of like outstanding MicroStrategy is yesterday, I learned? Vanguard now. So what could go wrong?
MicroStrategy down about $10.
Funny, I can't believe Vanguard. I was watching some guy who was giving a talk on MicroStrategy, and I swear to God, he took my art, like he just basically said, "This is the biggest scam ever." And
But I think a lot of people feel that way.
I know, but it was almost like I felt like it was word for word what I've been saying about
Sure.
MicroStrategy.
You have been beating this drum a long time.
I mean, unbelievable. And he said basically the exact same thing. He's like, I just don't understand how could Vanguard money managers invest in something where they just don't.
It just made a new all-time high. I get it. I agree with you 100%. But the flip side of the coin is just made a new all-time high. Good buys.
In other crypto news, crypto-focused asset manager Grayscale said that they had confidentially They confidentially submitted paperwork with the SEC, signaling potential plans for a U.S. listing as Bitcoin scales new highs. I'm sorry, I'm an 80s kid. This just reminds me. But the power of Grayskull. No, He-Man? No? Okay.
I remember.
That's fine.
I remember.
Hey, keeping it moving. This is so funny to me. Hood just keeps getting passed over for inclusion in the S&P. So Trade Desk, TTD, their stock jumped, 10% yesterday, 12%. As they got the nod, they got called up to the big leagues. They're going into the S&P 500. ANSYS is exiting due to acquisition. Hood is still not in there, and I just laugh and laugh.
Hood is trading 99 and change. You know, Hood's got a market cap now of close to $1 billion. Yeah, right.
Gotta be more than that.
No, 80 billion.
Sorry,
Yeah.
80 billion. I was looking.
Still not good enough for the S&P 500.
No. TTD is up $10.
Yes.
You are correct, from 75 to 85.
Yeah, that's a lot.
Off of its highs of 140, well off its lows, which it just made in April of $50.
Anthropic, Google, OpenAI, and Elon Musk's xAI have been granted up to $200 million each for AI work from the Defense Department. The U.S. Department of Defense said they are granting the contract awards to AI companies to help make agenetic AI agents. What are your thoughts?
Google up 50 cents. Just like
I don't know exactly what this is.
It's a sweet government contract for each of these companies worth up to $200 million.
It sounds like it.
Yeah.
I didn't realize the Pentagon had those evergreens sitting so close to the building.
Yeah, well, there you go. You looked at Google. Do you look at Microsoft?
Google up about 50 cents. Like I said just a moment ago, Microsoft looks like it's down around $1 or so, even though the E-mini S&Ps are up 16 going in the number. NASDAQ's up 100 and change. Russell's down 2, and the Dow is down 8.
Mark Zuckerberg is expected to appear as a star witness in an unusual $8 billion trial that kicks off this week as the Meta CEO is accused of operating Facebook as an illegal enterprise that allowed users' data to be harvested without their consent. This stems from the whole 2016 election and the Cambridge Analytica thing. But they were fined $5 billion. That is not enough.
Well, crime pays because Microsoft is up $1.
Was it Meta?
I mean, Meta is up $1.
Yeah, well, they were fined $5 billion by the FTC.
Well, the stock's at a record high, so it obviously didn't hurt them.
Okay,
Crime
well,
pays.
okay. I'm just gonna.
Even when you get caught.
You don't have a Meta position?
I do not.
I'd be ranked at 28. Not bad in this environment. Earnings
not for a while.
Okay.
We are going to load up right now our bonds. We're put them in the
bonds are up a nickel or 5 ticks.
I know.
12.29.
We're about to see what they do in
right now.
The number is out. Even the S&Ps jump out of the short. The start here up 26.
Bonds didn't even move.
Give it a second.
Bonds are up 12. 113.05. Tom has false news.
Yeah, no.
Russell's
just give it
turned
a second.
green. It's up 5. Dow is down 11 still. That's your one bucker. Fade the first move, Sosnoff, or let it go?
I was hoping to buy bond. I mean, if I was going to make a trade, I was going to buy bonds lower, but I want them to be up as much as they can now. Just run,
bonds go.
Run.
They just trade up to 113.10. They're 113.07. Even the S&P is still up 26. Haven't moved too much.
Pretty much in nothing. Nothing, honey.
Well, it made a new high for the day, 63.41. It was 63.40 and change was.
Nothing, honey.
All
right.
Okie dokie. Well, that's over.
Game's over.
Talk amongst yourselves. Hey, OpenAI is delaying the release of its much anticipated open weight AI model, citing the need for additional safety tests. The model was slated to drop this week, and it would be OpenAI's first major open weight system. Basically, this goes beyond open source. Like, you could build whatever you want on this, and they were just going to open it for everybody. But once you download it and have access to it, you can't take it back. So OpenAI was like, yeah, we're not quite sure this is ready for prime time, and this might be unsafe to humanity, so we're just gonna wait. Okay, thanks, bye.
So they use the 12-year-old rule of no takebacks?
Yeah, no takebacks. I want them to be very diligent and mindful when releasing just massive AI systems into the wild. So Meta lives another day. So there's good news for Meta is the short TLDR version of that. Amazon is jumping into AI vibe coding with Kiro, a program developers can use to write code with help from artificial intelligence.
Like they stole the Snapchat little thing.
Oh, the little ghost? Maybe, kind of. What are you doing in Amazon?
Nothing.
Okay.
All these stocks have super low IVR. We're just.
I mean, I can't invent news.
Sure you can.
I cannot.
You do it all the time.
I cannot. You're not doing anything in Amazon?
No, because we're not going to force trades in stocks that we just have no premium.
IV rank is 26 with earnings August 7th.
Oh, okay. Well, how about this? Nearly 7 in 10 workers believe they're underpaid.
Agreed.
I want to meet those other three.
Even when their compensation is at or above market rates, that's according to a new pay scale report. That's a leap from 51% of employees who felt they were underpaid 4 years ago. Basically, the pay scales report found that wage growth has cumulatively outpaced inflation across most sectors, but workers don't always perceive the progress.
I think that's 100% correct.
I'm surprised that you feel that way. I honestly am, because I thought that I would have gotten like more pushback from you on this.
No.
Interesting. Okay.
I feel strongly about this.
Interesting. Okay. I got nothing else. This restaurant, a 5-star restaurant in Dubai, will be using an AI chef to create its menu. The chef named Amen will not be cooking, but it is trained on large language models. It's trained on decades of food science research. So it's going to make the whole menu of this 5-star restaurant. What are your thoughts? Again, the AI is not cooking, but it's going to develop the whole concept and think based on food research.
I think that's kind of stupid.
Why?
Because I think it's stupid.
But it's called Woohoo.
Love the name.
Okay.
Love the logo.
Okay.
Love it. Woohoo.
All right.
I like it.
Woohoo.
Like it. I just don't like the whole,
Your meal prepared by robots? That's
No, it's
better.
not.
It's not prepared
I know.
The menu is prepared
It's
by
only a
robots.
matter of time.
Yeah.
I like my menu prepared by like some old Italian guy, some old Jewish guy. That's what my menu prepared by.
When was the last time you saw some old Jewish guy in the kitchen or Italian guy in the kitchen?
Yeah.
It said menu prepared by.
Oh.
Your menu at Bad Coffee is prepared by a washed-up comedian.
Yes.
It's prepared by AI.
Okay, yeah, right. Now, anyway, I would definitely try it. I'm curious, because if it has all of the knowledge, obviously, yes, you can go to Le Cordon Bleu, or you could go study in like Tuscany or somewhere with the great, but if you just had the whole repository of every knowledge
repository
of every food,
yeah,
then that you just have you're starting at a different level, I guess. All right, I'm gonna keep moving.
Please.
Hey, back by popular demand, Chipotle is launching its best-selling makeup product, Lipotle Lip Stain. The avocado-inspired lip stain goes on green, and then it is then wiped off to reveal a budge-proof, obviously burrito-proof rose color underneath. Chipotle and Wonder Skin first launched Lipotle in July of 2024. I am a premium Chipotle insider, so I got this email last night that I could use some of my points to get some of
Oh,
the.
so you can use your food points for the bad lipstick?
Yes, it's actually a lip stain.
Sorry, lip stain.
Yes. What is Chipotle doing?
I stain your lips. CMG unchanged here
I hate everything about this.
at around $55 or so. Ivy rank of 45. Earnings July 23rd.
Hey, this is the greatest thing I've ever heard, and it makes so many people so mad. A young lady who worked in the snack shack of this golf course. So she's from the UK. She's never played golf in her life. She went out with some of her coworkers, and she'd been like practicing around, but she'd never played a round of golf. She gets to the course's hardest par 3, right? It's the fourth hole. It's like 99 yards from the forward tees where she is. Because she's playing from the forward tee. Because she's never played golf before. Like, she's not hitting from the tips.
Well, 99 yards is not that far.
Right, I was going to say, yeah.
Right. Well, from the forward, like, but it's still a hard par 3. That's what
Okay.
this course says.
Got it.
So she takes out a driver, right? Again, she's never played golf before, but she friggin'
You
nails
can tell
it.
she's stepping
She
on the hole,
nails
basically,
it.
ruining it for everybody
Hole
else.
in one.
The driver from 99 yards.
Congratulations to Emma Strong. She's never played a round of golf in her life.
She
And on
quit.
the fourth hole, she gets a hole in one. I'm so proud of her. That's awesome.
Good story.
It is awesome.
It's a great story.
Yeah.
She is standing on the hole, ruining it for everybody else now.
No.
Want to rehash my hole in one?
Okay.
Oh, God.
Dubs Dread, number 2, right? Do you want me to? I know your lore.
165 yards.
Yeah.
Didn't even see it go in.
165 yards. Hit a
Tree.
no a blind hole location.
Okay.
Hit a hole. It just crushed an 8-iron
Okay.
and in the hole.
Wow.
Wow.
Beautiful shot too.
Is
In the
there,
hole.
is there a plaque that is up there to commemorate this?
But
or-
everybody in my foursome yelled at me.
Oh man. Hey, this is taking the internet by storm, and even my curiosity is piqued. You guys know, Tasty Nation knows, I do not gamble. Like, I hate to gamble. I hate to lose money. I hate everything about it.
You hate when other people gamble.
That's
and
why
win.
you're not going to Joe's this week.
I want to go to Joe's. Well, Uno is stepping onto the casino stage at the Palms Casino Resort with the first ever Uno Social Club. There's vibrant Uno themed decor, and it's going to be an immersive entertainment experience with upscale flair, private gameplay, and themed drinks. There's Uno Golf, Uno Teams, Uno Show 'em No Mercy, all levels of legal gambling, but based on Uno. I know people in families who still to this day do not speak to each other because of Uno.
I've never played Uno.
You've never played Uno?
I've played, but not for years.
You never had a
Kids.
reverse, draw 4 reverse flipped on you
I
in
don't
your
know
whole
what Uno,
life?
I never played Uno.
Well, I can tell how much time you've spent with your kids. Zero. None.
That's unfair.
I never-
True, but-
Even my dad has played Uno. My dad played Uno with me as a kid. Like,
I never played Uno.
again, I'm sad for you. But what do you think about, well, now you can gamble on it. So now we have to play Uno. So now we have to practice.
I
Because
don't-
I don't understand poker, but I understand Uno.
I don't know how
Did
to
you play Uno for money?
For your, with your money.
Yeah, I don't know how to play Uno. I'm sure I can learn.
Sure, we could.
Well, we have a lady here, AJ. She's actually, she competes in poker tournaments. Maybe she could teach you Uno.
Plays with Jules.
Yeah.
What a life to lead.
Oh, that's so funny. Finally today for my viral video of the day. This is just great. The cinematography, the plot line, the story, the emotions, the roller coaster. So what happens when your dog realizes that it is not in the top 1/10 of 1% of dogs? Watch this. So this golden retriever is on this luxury yacht named the Retriever eating filet mignon. This is real. And then you give your dog the dry brown nuggets and the dog is like, fluff that.
What'd you do wrong, Dad?
Right? No, play it again, John. Look at this yacht, though. Look at these
Very
dogs.
nice. Very
Living
nice.
on this- But they have their own staff. It's called the Retriever. Like, oh my goodness.
I feel your pain.
Right?
I feel your pain.
Anyway, I thought it was pretty good.
You want to feel some more pain? My Mr. Coffee thing here can.
That Beth gave you as a gift.
Broken.
It broke. It's not hot anymore.
You should have bought another one on
Hey,
Prime
hold on.
Day.
Here you go. I don't know if you can see it. Sorry, it's attached.
For $3, you could probably buy a new one. Let me see what they
Buy
got on
another one on
eBay.
Prime Day.
Oh,
Let me
there
see
you
what
go.
they got on
Yeah, there
eBay.
you go. It broke. It's not hot anymore.
Let me see what they got on eBay.
Can you get it here by the
eBay?
I'll trade
Amazon,
you
you
my.
weirdo.
It's like cold coffee now.
Aww.
I'll trade you my.
Seriously, are you having a stroke?
Are you okay? Do you smell toast?
I can't anymore with you. I'm gonna take a quick.
My hubcaps. That's what I was thinking.
Okay, you trade
Change my
Oh,
hubcaps.
by the way, this is the funniest story I've heard in a while. Like, I do believe in karma.
Did your hubcap? Did a lucid hubcap fall in your lap this morning?
Oh my God, that is, I love that for you. Bat, what's coming up next?
Did you drive the Lucid today? Because you'll have 2 hubcaps missing if you did.
I did not.
We'll take a quick 90-second break. When we come back, we got more Tasty Live. Did you check it out? It's like $150.
What?
I said, did you check it out? It's like $150.
Go to the place on Ashland. They'll hook you up.
Just give them 2 hours. They'll find one.
I'm gonna find them.
Sure.
She gets spinners. She gets spinners.
I could.
Yeah.
I've never been a big wheel person, but now I got to get my act together.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send and some cold coffee.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
In the world of investing, a beast lurks between the numbers. ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, let's take a look at the market. Even the S&P's up 21.75. NASDAQ up 131. That's your leader in the clubhouse to the upside. Russell up $1.40 and the Dow down 41. Volatility in by 23 cents. Volatility's been in by 23 cents most of the morning. Bonds up 4 ticks. They caught a little bit of a bid, traded up to 113.10 after the number back down to 112.28 mid-range, lower mid-range.
Yeah, it's a little lower side.
Bitcoin 117 even after making its recent lows for today at 116.6 and change after making highs around 123 and change yesterday. Oil up 12 cents, gold basically unchanged, and silver down 19 cents. That's a half a percentage point. Some of the movers today, I know we had JP Morgan for earnings trading on the offer 187 and change, down around $1, and some of the other ones like Citigroup up around $1 or so. But the big movers
Pretty
today,
much a non-event.
Yeah, are the chip stocks. Nvidia up around $8 or so, 171. A bunch of other ones too. Some of the Chinese stocks too, like Baba is up also. Baba 114 and change, closed at 108 and change. So
I wonder if
chips are alive.
I wonder if today is the higher opening, lower close.
Yeah, volatility up 23 cents, 1% move.
Possible.
Yeah, he's only true believer, Sosnoff, as foretold.
Well, actually,
yeah, come on, these chip stocks save the market.
VIX futures are actually down.
Mm-hmm.
Yeah, not much else going on here this morning. It is Tuesday, July 15th. It's the middle of July. I'm mad. I don't like the middle of July because that's when it starts to get darker.
It's the second half of the year.
Yeah. No, I don't mind the second half of the year because I want time to slow down now. I'm focused on slowing down time, not speeding it up.
Is that what you're trying to do?
Yeah, I'm focused on
Let me know how it works out for you.
I'm trying. Let's see what else. It's 7:47 in the morning. We got Confirm and Send. We got a lot of stuff today.
Mm-hmm.
It's going to be kind of a packed week, but Bat and I will be here all the way through till after the morning show next Thursday when we head out to Denver for a one day event in Denver next week from Friday.
Mm-hmm.
And then then we have an event coming up in Chicago in August, which we can't wait. Hometown. Love the hometown events.
Yep.
And then we go crazy on the road in September. We're going to be in San Francisco and in New York City. I'm actually going to be in New York City a couple times. And then we're going to be in LA in October. And then we're also going to be in Charlotte, North Carolina. And we're going to finish the year up in Austin, Texas. So we got a crazy kind of schedule ahead of us.
Mm-hmm.
If those of you missed Dr. Jim's class, in the reviews I got back from people that were there were great. But the next one for Dr. Jim is October 19th. Crash day. In Detroit, Massachusetts. So Dr. Jim going home. Originally from, 9 Mile? He's from I think 9 Mile, right?
Yeah.
That's where he grew up. But Dr. Jim going back to Detroit, and then Dr. Jim finishing the year up December 7th in Tampa, Florida, where he is now based around there. Mike, Nick, and Katie, they did the DC show. Their next show is on August 10th in Seattle, Washington. So you can sign up for that. After that, those guys go on October 12th. They go to Dallas, Texas, and then they finish up the year on November 2nd in San Diego, California.
Mm-hmm.
So got crazy bunch of stuff ahead. So please take advantage of it.
Please.
Yeah, we've got a bunch of new software releases coming out. We'll tell you more about it later today. There's a new active trader Dome being released. There's we're adding stable coins to funding on the Tasty Trade platform. Those are just a couple of things, and a bunch more stuff on top of that. So I'll let Scott I don't want to rain on his parade. All right, let's go. Emails that came into us overnight last night while I was out
gallivanting around
at a Vietnamese restaurant. Tony was answering emails diligently all night long. Feverishly typing away, and never picked his head up off the computer. Let's see what he did.
Right.
First one, please. Are there any strategies that are better for a small account but aren't good in a large account? Is there anything that would be just really good for a small account but really not yeah.
No. I don't think there's any strategies that are better in a small account but aren't good in a large account. I mean, the probability of success is what it is. So a large account, you're able to use, less portion of your money for higher probability trades. That would be a disadvantage to a smaller account, but I don't think it works the opposite way. I don't think it's a two-way street.
This is a little bit of a strange question because just think about it. There should be there's no such thing as a strategy that would be just for a small account. I mean, all the strategies that we do, you could use them in any account size.
Well, if you can do it in a small account, you definitely can do it in a large account. It doesn't work the other way around.
Right.
Yeah, I agree with you.
So I would say no. I would say, you know what? We're pretty much account indifferent. There's definitely advantages to having a larger account and having more capital to use. There's for sure advantages to leverage and things like that. But you know what? Anything you can do in a small account, you can do in a large account. And almost anything you can do in a large account, you can do in a small account, but just, sometimes you just run out of capital.
Yep.
Let's go to the next slide. So I'm trying to follow your guidelines in theta as far as a percentage of net lick is concerned. So let's say 0.1 to 0.3, somewhere in that range. I'm also trying to maintain 50% or less in capital usage, but I can't seem to find any way to get to that level of theta. I'm around 0.08, just less than 0.1. I know this isn't the highest volatility environment, but I tend to sell naked puts and vertical spreads. Could I be doing something wrong?
No, assuming your position sizing is the same, I don't think you're doing anything wrong. I just think it's a part of maybe, the market being at all-time highs, volatility being at lows. No, I don't think you're doing anything wrong, but I'm a little perplexed because you say vertical spreads. Vertical spreads should really tick up that number pretty big. So I'm a little surprised.
I think that you're not doing anything wrong at all. I think that you're taking the exact right approach, especially in times that are a little bit slower, like now. And I would tell you that if you can't get to the 0.1 number, which is fine, 0.8 is fine, by the way. It's not like a big deal. We're not tied to these things. But it's low implied volatility environment. That's number one. Number two, you're probably not using any futures options at all because that's how you easily pop your number up higher.
Sure.
And number three, you're probably using only indexes and not using some individual stocks where you can get, that trade in a much higher volatility environment. But don't worry about it. If whatever you're doing is working, just keep doing what you're doing. And when vol gets higher, your number will go up. Trust me, it always does.
Yep.
Let's go to the next slide. If the markets are random, then what's the point of backtesting or even doing research?
Yeah, it's a great question. One we've talked about for quite some time. I mean, listen, it's good. Some things are good to know. Some things make you money. Backtesting is a good thing to know that I think is on the cusp of being able to make you money. If this is the way something behaves and you're new to trading, it gives you a little bit of context to say, all right, well, this is what it's done in the past. Maybe it's going to do that again in the future.
Yeah, markets, we do believe markets are random. And, but we also believe that the research that we do helps us to optimize our mechanics. Research we do does not tell us what's going to happen next in the market. We don't do research that says, oh, the bonds are going to be up today. Oh, the S&Ps are going to be down today. That's not what our research is about. Our research is about optimizing mechanics. And of course, you need to look at different things to recognize. We want to say, hey, at what point in the decay curve should we sell premium? Should we cover? There's all these different mechanical things that our research points to. None of it is market direction.
No.
Let's go next slide. Why would someone sell options on the SPY when they could instead sell 2 contracts on MES for the same notional risk or exposure?
Oh, right ahead. There are 6 of one, half dozen of another.
Why would someone do that then?
The margin will be better on the MES, I believe. Maybe with the
So they're saying, why would you ever trade SPY options?
I don't have any clue why one would be better than the other
Okay.
for the buying power.
So a couple things. No. So here's why people would trade SPY options. One, they are way more liquid than MES options. Way more. Number 2, there's actually more strikes. Number 3, the SPY options at the end of the day, or at the end of whenever,
Gesundheit.
or at the end of the expiration cycle, the SPY options turn into stock. The MES options turn into futures. Some people don't want things that are exercised into futures or assigned into futures. The other thing is that, believe it or not, in this industry, 90% of the people that trade, not at Tasty,
Don't even have the
at Tasty, only like 30% don't have futures accounts. At most firms, it's 90% don't have futures accounts. So the reason that people don't trade that is because don't trade MES. It is simply because they just don't have futures accounts. You're right. You know what? MES options they're more capital efficient.
Yeah, they would use a lot less buying power, half.
Yeah, they're more capital efficient. They're generally pretty liquid. MES is not great, but they do have the same market makers. But they settle into futures, which kind of might mess up some people. But it's just a liquidity thing, and it's just the ease of use. SPY, that's it. Let's go to the next slide. Also, if you trade a lot of contracts, the SPY options are cheaper to trade. So I was transaction-wise. So I was wondering if you had any advice on balancing the trade-off between rolling a position to manage and paying brokerage commissions. So I have a very small amount of capital that I'm starting with to better understand trading with live money. I have a few positions I could roll back to more neutral, but I would incur commissions that would eat away my profits since it is a very inexpensive underlying, and to my gain loss, it's only in the range of $5 to $10.
I don't know. So I'm gonna tell you this: delta is king, and if your delta is too big, I don't care what the commission is, you have to move the options to get your delta back in line. Commissions are always, it's 0 to close on Tasty, but you would incur another one for opening the new trade. So you do have that. Then close the trade and find another stock with higher IVR. If this one has high IVR, delta is king. You got to get your delta in line. Otherwise, I don't think you have a harder time being successful.
So,
this is a quandary when you're trying to micromanage something from this standpoint of view.
If your gain loss is only in the range of $5 to $10, you put yourself in a position where you're right. The commissions will come into play, and even if the commissions are basically 0, if they're 50 cents, our commissions are as low as they're ever going to get. They're literally 50 cents. Yep. When I first started trading, they were $25. They're 50 cents now. So there's something about the way you're trading where you have an inexpensive underlying with a gain of only $5 to $10. You're going to have to widen it out a little bit. You don't want your commissions to be, you don't want your commissions to take up, 10, 20, 30% of what you potentially can make. Mm-hmm. That's for sure. But if it's a couple percent, that's fine. I just think, you're trading a little bit, maybe a little bit too conservatively. If you're just trying to learn, then who cares about the commissions? Just look at it as an expense, just a learning expense. It doesn't matter to me. But other than that, maybe you're trading just $5 to $10 range is not hoping to make a lot.
Mm-hmm.
Let's go to the next slide. And the last one. On Monday, the VIX was up and the SPX was also up. I thought these are typically inversely correlated. How often do they actually correlate or go the same way? Is there anything to read into when both move in the same direction?
I actually talked about this yesterday and was looking for it all last week to happen as kind of that little bit of a signal on a market high where the market might be running out of a little steam. Got a little egg on my face there. Although last night we were down around 8 handles, I was feeling good. Even the S&P's up 22 now after this event. And you are right, they usually are inversely correlated, not correlated like they were on Monday going into today. As you can see, the market's up today, so it doesn't matter. So it tells you that it's fairly random. I look at it as maybe it's getting a little bit, the move's getting a little bit long in the tooth. You have volatility lower today and the market a little bit higher. But what's the amount of time this happens? I'm going to say it's probably under 10%.
It's actually a little over 10%.
Okay.
It's actually just under 15% of the time.
Okay. Yeah, fair enough.
Didn't hear an as foretold out of the bat today.
Not yet, but you will get it when even the S&Ps are lower today, okay? You will get that. You almost got it last night, Sadnov. I almost took a picture of it and sent it to you.
I think the S&P...
Everything was down,
I actually think the S&Ps could go lower today, but
that's what hurts me.
As foretold was a little premature.
That's what hurts. Yeah, that was a premature as foretold. You never been premature before?
Never. Let's take a very short break.
Yes, we need one. We'll take a quick 90-second break and come back. We got more Tasty Live with an option jive next. We'll be back in 90 seconds. Tasty
Live. In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
It's option jive.
That's right, Sosnoff. It is time for an option jive. Even the S&P is just under up 25, 24.75. That's all I got for you. Bonds up 14 ticks, 113.06. You gotta like that.
I prefer them up 14 than down 14.
Sure.
So that's okay for the good kids, but let's see. We'll see.
We'll see very soon, Sosnoff.
Yeah, I mean, up 25. I got a little short yesterday.
Yeah, I think I'm leaning that way too and got a little suffering to do.
Yeah, but our positions, like I've mentioned before, they're pretty light.
Relatively small.
Relatively small right now, so not a lot going on. Bonds are our biggest position. S&P.
That's working out for you.
Yeah, S&P is probably second biggest position. Those that will not work out today. But or NASDAQ, being short NASDAQ, it's not going to work out. So happy with my fill yesterday. I worked so hard, now you could do it 10 cents better this morning.
Don't you hate that?
I know.
There's nothing worse.
Rear end off. Anyway, let's do it.
Ready.
John, first piece of research today. Da-da-da-da.
Poor man's option selling.
Poor man's option selling.
Poor man's option selling.
Nobody's ever done this before.
See?
Let's see what we got here, John, today. Option jive. Poor man's option selling. If your short call gets exercised, you'll be required to sell 100 shares for the agreed upon stock price. We're calling this the safe short premium. While this can be resolved by purchasing the shares at the market, already owning the shares makes it the covered call. This generates additional revenue from owned shares for giving up some of the potential upside. That's what covered calls do. You give away a little of the upside. The covered call is perhaps the most popular form of premium selling for retail accounts. Okay? Go with all that, except it's acceptable. Next slide, please. But owning 100 shares is very capital intensive. So if instead you owned an in-the-money call leap, very long-dated option, you could exercise that if required, and if not, you could sell another call for the next expiration. Technically, this is a defined risk diagonal trade, but due to the similarity in profits, payoffs, and lower capital requirements, it's commonly known as a poor man's covered call. Buy a long-term, at-the-money or in-the-money call and sell a near-term, out-of-the-money call.
Okay.
Poor man's covered call.
Sure.
I'm pretty sure we made up that expression.
I believe we did.
Let's go to the next slide. So at Tasty, we embrace the dual nature of the markets, puts and calls, shorts and longs. You hold the reins.
Sosnoff, this is like an educational piece for you. This is pretty good.
Yeah. If you wanted to secure a short put, you could use short shares, a covered put, or an in-the-money put. You can buy an in-the-money put leap, and you'd have a poor man's covered put. We don't do a lot of those, but you could certainly do it.
Sure. And the advantage of this over stock is the buying power use is going to be significantly less.
Both covered puts and poor man's covered puts are much less commonly traded than the call versions. So let's examine why. Why do you think that is?
Why do I think what is?
Why
is it less traded, the
Yeah.
poor man's covered call versus, because the stock is just easier. It goes back to the MES versus the SPY. Really just easier.
Yeah.
For people to understand.
Yeah.
Especially to the long side. They can understand. There's like a covered call. It is a covered call for them. They own stock. That's your long term. It never goes away, right? You long the stock. You sell some call against the covered call. It's one of the first things that
the bottom line
traders do.
The bottom line is the reason that the call side's done is more commonly used is because the market tends to drift higher. So people are they prefer to be long on balance than short. Let's go to the next slide. So short shares have unlimited potential downside, making the covered put both risky and capital intensive. Poor man's covered puts avoid this risk and reduce the capital requirement, but run into difficulties due to volatility skew. Put skew shows that the market believes that large sudden down moves are much more likely than large sudden up moves. So as a result, the poor man's covered put is more capital efficient than securing puts with short shares. They are typically more capital intensive than poor man's covered calls. That's interesting. Poor man's covered puts a little more capital intensive than poor man's covered calls. Let's see why. Let's go next slide. So now we're going to take you, there's a lot of stuff on here, so you got to be, without trying to drive you insane. We have the covered call, the poor man's covered call, the covered put, and the poor man's covered put.
Covered put and the poor man's covered put are just the opposite. You're bearish, where the covered call and the poor man's covered call, the first two, use a bullish strategy.
Yeah. Okay. Yeah. Yep. Bullish, bearish, bearish. Right. And you can see here, directional assumption. Neutral to bullish, neutral to bullish. I wouldn't even say neutral, but neutral to bearish, neutral.
Well, the stock can go no place and you get paid is the point that they're making. And again, this is all common sense. You know this. Let's go to the next slide. Right. Well, hold on a second. That's the takeaway. It's the next slide. I mean, the covered put is unlimited. That's the one side because the stock can go to any price to the upside. That's the only.
And technically, on the downside, the covered call, the stock can go to zero.
Well, they wrote possible sale of shares. I mean, that's your risk. It goes to zero.
Yeah. Right. It's the same. When stock can go from X.
No, a $20 stock that you long stock, short call, your risk is $20 or less, depending.
I understand.
And your upside on that same $20, if you sold stock, or did something like that, would be unlimited. The same as if it was a $2,000 stock.
Got it. Let's go next slide.
I don't know if I'm an expert in this subject.
I didn't realize this last slide.
I said the next slide is see here, if you have 2 ears, listen twice as much as you speak, and you'll get a lot better place in life, okay?
Covered calls are possibly the most popular short option position for retail traders.
For sure.
Covered calls are possibly the most popular short option position for retail option traders. Poor man's covered calls accomplish similar bullish results for significantly less capital than using long in the money call options in place of shares. In a theoretical option market, so poor man's covered put would be a straightforward bearish reflection of this strategy. Unfortunately, typical put skew in implied volatility means that a poor man's covered put generally lacks the efficiency of a poor man's covered call. But when the volatility curve flattens out, the poor man's covered put can be a good tool to have in your pocket. You don't do a lot of poor man's covered puts.
No, we don't. And if I was looking to get long a stock, I probably wouldn't be looking. I mean, listen, I did it in Costco. I did a variation of a poor man's covered call. It was a high price stock, low IV rank, going with a directional bias. So I did do one on Thursday. But you're right. If I'm looking to do something like a covered call, I'm probably sticking with the stock side, but it does use, more buying power than most people want to use on a position. So I do see the advantages of a poor man's covered call. If I had to think about it really quickly before I made the trade, I think I would default to a poor man's covered call rather than going to the stock point. It's just easier, especially on the show when, you sell future, sell put. It's the same thing as a covered put or.
Well, it's a lot more capital efficient for sure.
Yeah. And that's the real takeaway. All right, even the S&P is up 25, NASDAQ up 160. Bonds are up 10 ticks, 113.02. We'll take a quick 90-second break. We're going to get to talk all about the market and NVIDIA. NVIDIA 170, flirting with 172, closed at 164, really lifting this market up. We'll be back in 90 seconds. Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell. It's about 8.5 minutes away, so I don't know if even the S&P's making a run for the roses, up 27.5, just about 4 handles off of its highs. NASDAQ up 172. That's your leader in the clubhouse. Sadnoff, I think this is, by my quick calculations here, this is about 2 months of higher highs. Sadnoff, that is correct on the E-mini S&Ps. Bonds, 112.31, under 113. Bitcoin, 118 and change. It is down 2,000. Off its highs of 123 that it made on the 14th, Sadnoff, at night. Ethereum up $27 to 3,000 and change. Oil down 18 cents. Gold taking a breather, down $7, going sideways last couple of days. IV rank of 25 in there. Silver down 21. Silver's been a bigger mover to the upside than gold as of late. Last couple of days, a week or so. So silver taking a little bit of a breather too. Net gas just turned green. Was green yesterday. It's been green for the last 3 or 4 days. It's up small. The big mover today, Sadnoff, is NVIDIA. NVIDIA trading just under 172, closed at 164. And you got a lot of the Chinese stocks like BABA up big too. What's Baidu doing? Should go into there.
Up $2 or something last time.
$5 now.
Oh.
How about your beloved PDD? 104, up about $2 also. So Chinese stocks higher, NVIDIA and chip stocks higher. Let's see what AMD is doing. Had a little bit of a giggle. Yeah, AMD 153 and change, closed at 146. Yeah, that's a significant move in the chips, helping the NASDAQ for sure. See this water in New York? I mean, I don't know.
I do not. I have not watched.
It almost looks like it's AI kind of made. I mean, it looks so. I guess they're getting a lot of water.
A lot of water in New York. It doesn't
seem from rain. Yeah, yeah. I know.
Never seen New York.
The pictures are pretty disturbing.
Probably AI generated.
Maybe you can't believe anything anymore.
You can't.
You really can't. You got to do your own research. You really do. Bad. But I did have my Taiwanese sources in Jersey send me a picture saying that
it's raining.
Yeah.
You know where it's not raining? Chicago.
No, the weather's been actually pretty nice here. It's been
nice.
Hot. I mean,
hot.
Pleasant. Yeah. I'll take it.
No rain. Yep. Anyway, a couple minutes to go before the opening here. Bonds up 10. But S&P,
bonds up, stocks up.
Bonds up, stocks up.
What's the gas up?
Yeah, S&P's up 30.
30. Yeah, right off of their highs.
Yeah.
Can we fall from higher prices? Because we've definitely get bought from lower prices.
We get bought from lower prices every time. I don't know if we can fall from higher prices. I thought we could.
I don't think have I seen that in my lifetime? I don't think I've seen that in my lifetime.
Yeah, I think they maybe can, but we'll see.
Mm-hmm.
We'll see. There's not too. I mean, it's going to be hard with every chip stock up a
gazillion.
Yeah, it's going to be very hard, but we'll see. I'm ready.
I know you are. Volatility in by 33 cents.
Yeah,
about a 1.5% move, flirting with going under.
That does not surprise me because the volatility was, as foretold. I said yesterday, the volatility was only up because there was a number this morning which did absolutely nothing.
I know today's Tuesday. We have plenty of time before we get to Thursday into Friday, but it's expiration week, Thursday into Friday. typically a bullish.
Typically, but you like to sell them into the VIX expiration on Wednesday morning, which is tomorrow morning. So we'll see. I'm not going to rule anything out today, but it was so slow yesterday that if it stays this slow today, I don't think they're going to reverse to the downside.
My Taiwanese source, Aneta, who I used to call Anita back in the day, told me that, the water was insane. It was like a waterfall in New York yesterday. So, it's real, Sosnoff. It's real. She was actually insulted. She wrote me an email yesterday, a scathing email. She's a teacher in New York City, professor at college. And she said that, making fun of Dr. Jim, the way he dressed, although it was accurate and he does need a makeover, she was sad that I lumped her into the same thing. She's in the fashion world.
Yes, she is. I'm planning to marry Aneta if we're both single when the time we're like,
if it works out, if the timing works out,
10 or 15 more years. Yes, yes. We have a
agreement.
Yeah, a non-exclusive agreement.
Non-exclusive agreement. Yeah. Perfect.
We have an agreement to agree. We've agreed to agree. So we'll see what happens.
I like it. Yeah. Good for you.
So
out of all four indices, for the first time that I've been watching, the market this morning are higher. Even the S&P's up 30, Nasdaq up 179, Russell up 10. The Dow is now up 18.
There you go.
That was the weakest of the group for a moment ago.
There you go. Well, I'm actually looking forward to.
What are you looking forward to? What's a guy like you look forward to?
I'm looking forward to trading days.
Besides lunch.
I think I'm looking forward to lunch too, but I think I'm going to be a little bit
undisciplined today.
No, I think I'm going to be a little bit on fire today.
Oh, you think you're going to be on fuego? You feel like you get the memo or something like that?
Yeah, I feel like I have a good feel for today.
Do you?
Yeah, I don't
Was
like
this one scalp you made last night at 4 o'clock in the morning?
I feel like if you
start off good, you look good.
I feel like if you start off good, I'm going to be I'm a good position to a little two-way trade.
Pounce.
A little two-way trade today.
Okay. I hope you're right. I would love to see some two-way trade. We haven't seen some two-way trade last couple of weeks.
We haven't seen any two-way trade for a while. And there's really thought that they wouldn't annihilate gold today, and they really are.
Gold down 11 now. Yeah. Gesundheit, about a third of a percentage. Gesundheit move in gold. Bearish on gold, bullish for the market.
Bearish on gold.
Is gold going lower? I guess I should say bullish on the market.
Yeah, it could be.
Okay. All right.
Could be. I don't really know if gold matters much anymore. Let's see where we got. Perfect.
How many chips could NVIDIA sell to the world?
I know. How many chips? Well, I think they just opened up China, but I think that's kind of that's a buy the rumor, sell the news thing.
Could be the little blow off and a muted move for that kind of news. I don't know. We'll see. Volatility was up yesterday. It's lower today. We'll see what volatility does.
Yes. Aneta has just confirmed we are engaged.
Potentially engaged.
We're both married, but engaged.
Yes. Got it. I'm going to look forward to it. I hope you two are very happy together. It's going to be good. You got about less than a minute before the market opens here, and you get into less trouble when you start trading and do less talking.
Oh, no, my wife would be fully in favor of.
I'm sure.
Yeah.
So.
Yep, we got 30 seconds to go before we.
Sounds like I got good feelings about today. I don't know why. I think I'm going to be right as we're told today. Why do I feel like that? Am I just
think you're right? I just told you what's going to happen.
No, you don't.
You think you're going to be?
Get off my. I told you.
You got to. If you're going to think, you can't just say. You got to actually trade it. Okay.
I am short delta. I am, and you sold them. You sold them yesterday. What's skewing me up a little bit is the 48-hour rule. I might have to wait until Wednesday now. It's disheartening for all of us who are.
Do we whack them in how?
Holding short delta.
One of my favorite law firms.
You look at my Twitter X handle.
I did not watch the home run derby last night. I heard it was good.
Anybody watch the home run derby?
I heard it was good.
So. Okay, Sadnov, here we come. Spinning out of the turn. Even the S&Ps, that was the bell, up 29 right now. Let's take a look at what some of these movers are to the upside. CRWV, that's Core Weave, up $10. TTD going to the S&P 500, as Vanetta told us, up 9.5. AMD, chip stocks doing well today, up 9. NVIDIA up 7. BABA up 6. AVGO up 6. ARM up 4 and change. Tesla up 2. Crowd up 4, and your beloved Oracle up just about 3 or just under 3. On the downside, CRCL, that's Circle, down 7. App down 6. MSTR down 360. Wells Fargo for earnings down 280. Costco down 2.5. And Coin down $1.90. Boeing down $1.60.
Well, J.P. Morgan, we just closed our position. And
you sold more calls than puts. Than
I actually, you know what worked in J.P. Morgan? It was kind of weird, but I sold puts and then call. Right, I sold calls 3-to-1 over puts.
Yes,
and it actually J.P. Morgan's up $1.50 or $2, but the trade came in by $6, which is pretty good.
Yeah, so I would say that's pretty good.
Yeah. So I sold some out of the money calls in there too that worked out. So I did small JP Morgan, but that's it. I didn't trade Citigroup. I didn't trade anything else. So JP Morgan was fine. Thank you, JP Morgan.
Thank you, JP Morgan.
And we will just take that. We'll get that out of there. So, all right, now I got to figure out where do we.
So what do you do now?
Now we sell a little rally here in the S&Ps.
Okie dokie.
The calls are too cheap, so we're gonna have to sell futures just to start kicking things
You
off.
sell put, sell future, or you Ivy rank of 11?
What?
Just future.
Just some futures here. I just got to get a few off.
63.41, 2 ticks from all-time highs.
Is that what it is?
Pretty much, yeah. I mean, these are all-time high highs. The all-time high is 63.
I'm offering more.
43.
Didn't get filled. So we're trying. We'll get a little short up here. Let's see what else do we got.
NVIDIA look like here. NVIDIA up $6.50. The Ivy rank is only 7. Earnings are August 27th. Got 31 days to August options. You're kind of, in no man's land between 31 and 66. I think you could trade August options here if you want to get short a little bit in NVIDIA. NVIDIA up 7. We're going to wait a day.
Yeah, I don't know. I mean, the Ivy rank's low. I don't know.
It's hard to do a poor man's covered put in here or even call. September volatility is 44 and August volatility is 39. You're looking at almost 5 vol points between the two. That's too much. I don't like it to be over 2.
Yeah, we don't have any. The only stocks we're losing in today are S&Ps and NASDAQ. That's kind of our problem child. Nothing else really. It's kind of all. You know what? No wonder I'm looking at ENPH because I have a position on there. What a crappy markets they have in that stock.
ENPH?
Oh my God.
Yeah, ENPH is horrible for a $40 stock. It has earnings July 22nd. You look at August markets and they're 20 to 40 cents wide. Remember, it's only a $40 stock.
60 cents wide.
Okay.
Yeah.
Depending on where you look, sure.
Yeah. Well, maybe we're going to cancel this. Cancel this.
I mean, S&P is up 21.
Maybe I should
hold
just
them, Sosnov. Hold them for dear life. Don't even
scalping. Okay, something you
don't even look.
Something I'm.
If you have some intestinal fortitude.
Someday I'll teach you a little bit about scalping.
I'm
gonna help.
Said it was going to be a good day. It is a good day for you, Sadnov.
I'm trying to help you. Okay, I'm doing my best.
I'm trying to help you too. I'm trying to help you change your life instead of just living the miserable existence that you have now.
I don't have have a miserable existence. I'm good.
Just teasing you. You sold calls in the MPH?
No. I was sure. I needed to sell some.
You needed to?
I was too long in there.
Mm-hmm.
Yeah, it's a good morning. I mean, it's a good opening for us. Nothing really jumping off the screen, but
nothing jumping off the screen. We just had one of the biggest moves intraday that we've had on the E-mini S&Ps, which is 10 points, and you captured all of it.
9 of the 10. I need some
925 of it. I'm sorry.
Yeah, I could see them going down today.
Oh, don't.
But I don't like the fact
that you just keep doing you.
I don't like the fact the bonds just sold off. They look like crap. And
112.26 up too. They are trading a little heavy.
They look heavy, and the 10-year notes. I really thought those things had a little bit of
oomph to them.
I thought they would. They looked good yesterday. They look horrible today.
Mm-hmm. So did you. I mean, what's the difference?
Oh, no. I look the same every day. Looking through positions. Now, you said what? Goldman has earnings tonight?
Goldman Sachs has earnings. Bank of America, J&J,
Don't trade it.
Morgan
Don't trade
Stanley.
It. Don't trade any of those. But we
Goldman Sachs IV rank of 17. I mean,
ugh.
It's a tough one.
What's the stock doing today?
Down $3. Just off of its highs of around 720 and change at 710. Expected move is 24. I mean, that's a very low.
And what's the stock trading for? Oh my God.
$710.
See, that doesn't make any sense.
They're way too low. I mean, you would think 10% of $70 expected move would be the high end of the range. 24.
3%?
Yeah.
3%.
You got to be directional if you do anything.
How can you trade Goldman Sachs with a 3% move?
It's the world we live in right now, Sadnoff. That's why you're a little bit light on trades.
How do you trade Goldman Sachs with a 3%?
How?
Well, I mean, what's the risk reward?
Big.
That stock could be down 50, 70, could be up 50, who the hell knows?
Not according to the implied move, but yes, I agree with you.
Yeah, I don't think you can touch it.
All right, well, you know what's something I can touch? Mr. Chris Vecchio. I can touch him. You can touch him. We all can touch him.
I don't really want to touch him.
Coming on next, but let me explain with Chris next. We'll be back in 90 seconds. Tasty Live. Down 100. Even the S&P's up 1975.
Yeah, they don't look good. They don't look good.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend, and you know what that means. As foretold, Sosnoff, even the S&P is only up 15. True believers, Sosnoff, as the Russell's down 2 and the Dow's down 150. But all that means nothing right now. I digress. I got my friend, that's right, Mr. Chris Vecchio. Let me explain in the house. Hi, Chris.
Hi, Tony.
How are you, my friend?
Thinking about getting into the landscaping biz these days. How about yourself?
Me too.
He's already in the landscaping business. He's got family in the landscaping business.
My son was a landscaper for 8 hours.
Oh, okay.
He lasted
Nice.
8 hours. He had
8 hours. He had to do a little manual labor. That was the end of that kid.
His idiot was dead. Those guys work hard.
Those guys too.
That was my first real hustle. I noticed when I was a kid that the plows in my neighborhood wouldn't shovel anyone's walkways. They'd only do the driveways. So me and some friends would follow the plows around and knock on people's doors and do the walkways in a few minutes, get $5 or $10, make a few $100 before school.
Easy money. We've been
good
doing
stuff.
that for decades. They don't do it anymore, these kids, but we were doing it for decades. Yes, you're right.
Okay, legitimately though, I don't see kids doing that anymore, and I
They
feel
do
like an
not.
old man yelling at them.
I got one kid in my neighborhood that'll do it.
A couple of years ago, when we had a big snow in Chicago, there was a bunch of kids walking down the alley because the alleys were brutal.
Couldn't get out.
So I had 2 kids that went to DePaul walking down my alley. They're like, "Hey, you want us to shovel this?" I'm like, "Sure." I go, "How much?" You go, "Well, how much do you think?" I go, and there was like 3 feet of snow. I go, "You clean this whole thing out, I'll give you $100. Those guys are like, done. An hour later, they're drenched in sweat. They're in short sleeve shirts. It's freezing out, and they're still. It was the heaviest snow ever. I'd have been dead. I'd literally been dead.
I had on a different note. I had my neighbor across the street. He had to be maybe Vinny's age, around 15 at the time, and I had grass growing in my ground cover. You know, like how grass can get inside your ground cover, and I hated the way it looked. So I was out there, picking away at it a little bit because landscapers don't do it. I guess you can get them to do it, but they weren't doing it. So the kid came up and volunteered. He goes, "How much for me to do this?" And, that wasn't a big area, but I don't know, maybe it was 25, 30 feet.
Yeah.
I go, "How much you want?" He goes, $50. I said, "I'll give you 100. Because it was
Yeah, brutal.
And you find more as you keep going. You do
It's
section.
like done.
He's like, couldn't believe it. He sat there. He was out there for 4 or 5 days. Maybe got halfway there. I go, you got to stop, man. You got to stop. Here's 200. We're done. Don't worry about it. He stopped.
It's hard.
It was hard.
As I got a little bit older, I realized that the rate with which people were paying me was more than the rate with which I could pay day laborers that I pick up from the local train station. And so I started a nice little business there where I just sat back and collected some money.
Yeah, I wasn't that. We didn't have that kind of opportunity.
No.
All we could do was like, the Jewish kids would pay the Italian kids, and we try to arb a few dollars. That's the best we could do.
That's basically the Jewish family paid this Italian kid.
All your money.
That was the best we could do. Was like arb the kids like Tony.
Yeah, sure. I like Tony. Unbelievable. Oh, he's got to come back to me. You ruined everything. Even the S&P's up 17 now.
God, we had him.
God,
we were so close.
Ugh.
Next time, guys.
All right, Mr. Vecchio.
What do you got for us today?
Why don't we circle back to some conversations that Tom and I had on Sunday night, Tom? We had the bank earnings today, of course, and they looked pretty good at the top line. Kudos to you for your call that Q2 earnings would be strong given the regulatory environment that we've seen here. There's not much movement here on the other side of this, but I suppose the question is, Tom, if you didn't like going into the bank earnings with earnings trades on because of the volatility environment, do you find yourself looking at this particular set of stocks now with a different light on the other side of their releases?
Oof. Question.
I think we're, I think we're getting to the point where I don't think this earnings cycle is going to be here. There's two challenges with this earnings cycle. One is the fact that the market's already at such a high level that it's going to be very difficult for this earnings cycle to surprise to the upside.
Just because of where the market is.
Just because of where the market is.
Right. Like he's not saying the stocks can't go higher, but the expected move is $10. They go higher by 3, not 13.
Yeah, I don't like. It's very difficult for me to think about earnings in too broad a sense. I think about earnings relative to where the market is, and when I feel like the market is cheap, and volatility is high, I think earnings are interesting to me. I feel like when the market is expensive and volatility is low, earnings are very challenging. And I look more at the overall market. So we're playing the overall market here a little bit to the downside, but we're not really playing earnings. If that makes sense.
Not really playing earnings. No, that makes a good deal of sense. I mean, some of these names, JP Morgan had an IVR of 16 coming into this week. So
yeah,
it's
Goldman
not like
Sachs.
There's a ton of opportunity there.
Goldman Sachs is 17 tonight. I mean, there's not a hell of a lot here, is the bottom line.
Things aren't juicy.
Things are not juicy. Yeah.
They're not juicy in a lot of sectors. I mean, the sector ETF XLF has a 20.9 IVR, which isn't exactly high. Not the only news, obviously, in the corporate sector that's moving the markets today. NVIDIA now being allowed to sell these chips overseas back to China, which is an interesting ploy. We're going to tariff our allies and sell AI chips to China. More, obviously, to be told there. But NVIDIA is gapping up to new all-time highs. Is this a buy the rumor, sell the news type of event?
No, it's a sell the rumor. It's
sell.
It's a sell. Yeah, I mean, you always look for, in cases like NVIDIA and what else, AMD today.
Although it didn't work with UAL bringing the rest of the airline market up too. I mean,
UAL sold off pretty good. Actually.
UAL did, but the rest of the market stayed up.
UAL's 88. It got up to like 95, so it actually did.
But not the rest of the market. I said the rest of the market. It took the airlines up with it.
I mean, I look at some of these stocks today, and I'm thinking, well, I mean, AMD is probably a better sale than
NVIDIA.
Earnings
are August 5th in AMD.
Yeah, you know what, Chris? You're
looking for something here.
We're we're digging deep right now. We're digging deep, and there's not much.
It feels that way.
Yeah, it really does. It feels like we're just digging deep. There's not a hell of a lot there.
Okay, so walk with me here. Let's say someone sees this NVIDIA news. It's an IVR that's below 10. The stock's just gapping open to an all-time high. There's a contrarian out there who's saying, I've got to fade this move, right? I may not be that person, but someone out there is. How does one structure a trade in this environment where you say you're having to dig deep to find something?
When we get into situations like this kind of market, we have a tendency to lean more towards some of the bigger indexes and ETFs that we don't trade nearly as much when IV is higher. So from a directional standpoint, like this is the first time I've gotten short S&Ps and NASDAQ using indexes in a while. So I think that's one thing. I think the other thing that there's one thing that we've learned over the last, decade and a half of doing Tasty is that, like Tony said to me this morning, he goes, what do you have on NVIDIA? I go, nothing. What do you have on AMD? I go, nothing, because IV ranked was in single digits. And I'm finally paying attention. It's taken me a decade to trust the research, but when the IV rank gets super low, I get out of those positions, and it saved me a lot of money from not like
a lot of aggravation too.
Yeah, I mean, listen, NVIDIA is really the most liquid, the most actively traded stock. NVIDIA and Tesla are like 1 and 2. And so for me not to have a core position in NVIDIA and Tesla, it's really weird. But I don't, because the IV rank's so low.
Yeah.
And it's taken me a long time to
Tesla's
get there.
15 now.
That doesn't mean I'm not going to trade today. We're trading, a little bit. We'll end up making, close to 40 or 50 trades at least. So I'll figure it out. I'll get some stuff going. But I just haven't figured out kind of, yet so far today, how aggressive I want to be on the short side. I'm not buying them here.
Yeah, it's important to have those technical rules, or mechanical rules, if you will. I have a technical rule that I follow, which is to say that when the S&P 500 is more than 3% above its 1 month average, you typically get a weak stall, as in like 6 days of the market stalling out. And that's been the case since the low in October 22. So consistent with that, if I want to stay long and I'm at like 22 DTE and we're 3% above our 1 month moving average, is that the time for me to roll into the position? Or do I take a step back and say, you know what? Let me see how this settles over the next few days. I like to take a step back, and you may miss some things, but the market will be open tomorrow. Speaking of, yeah, go ahead.
I think that's completely reasonable. We rarely step back to review things, because I think then you get into the case where you're either not trusting your instincts, or trading is very,
or your knowledge of the strategy or something.
Yeah, trading's very impulsive. And so we rarely step back to like think about things, but we will back off we won't step back to like look at things, but we will back off based on a lack of opportunity. Like that's how I think there's a difference there. It may not sound like it's much, but like we'll never say, hey, you know what, I want to think about this. Like that's not what we do. But we will step back and say, hey, you know what, I just don't like, it's not that interesting to me.
Well, what's been really interesting this week has been the movement in crypto. Bitcoin flashed up towards 123,000 before coming back in here today.
Yeah.
It's been in the futures market 117, 118K again. It's also Crypto Week in Washington, D.C. There are 3 bills that are currently being reviewed to be passed: the Genius Act, the Digital Asset Market Clarity Act, and the Anti-CBDC Surveillance State Act. Is this a buy the rumor, sell the news type of week in crypto? We know that Ethereum's more than doubled since the April lows. Are we seeing a top here, guys, in your experience?
I mean, I think we're seeing, I think we are seeing kind of a top building in crypto. It's a little early to say, but there's just too much good. There's, tape action's good. You're starting to see a little bit of maybe a few cracks in some of the stocks. Not even much though.
What crack? Where's the crack? What's the crack?
I don't know.
They're not up 20. They're only up 12.
Yeah, exactly. I don't know. Actually,
I'm trying to see it too. I mean, volatility is, basically unchanged. I mean,
yeah, you know what? I'm going to take that back. Forget about the cracks in crypto. In crypto stocks, I just think we have gotten to the point where it's fully priced. Doesn't mean it can't go higher. It just feels like it's fully priced.
Well, pretty complacent here. I mean,
I feel like crypto's in for a rude awakening, just based on price.
Some of the stocks, Riot, for example, this guy couldn't get back to all-time highs. And as you have more of these players coming into the space, there's just a fractionalization of indirect exposure to Bitcoin. So Ethereum's doubled. Bitcoin is up at new all-time highs, and some of these stocks can't get there. There's a lot of copycats in the arena right now.
Well, I mean, I haven't traded Riot. I haven't traded Riot in forever. I thought I traded once at $70, $12. I haven't traded. Yeah, we haven't.
If I wanted to be bearish on crypto, I would look into the equity names as opposed to Bitcoin itself.
Yeah, I agree with you. I mean, you can't trade. You can't do anything in Bitcoin. But yeah, I agree with you.
Plenty to do in Bitcoin. You can buy it. You can buy more of it. You can keep buying more of it.
Right. I mean, you can trade Bitcoin futures, though. I mean, you could trade those two-sided.
Not really.
Big product.
You can trade the micros.
It's a big product.
You can trade the micros a little. Mm-hmm. The markets there stink too.
Agreed.
You're better off just shorting IBIT if you want to get short Bitcoin.
Yeah.
You know what? I mean, it's not the word. Here, you know what? Screw it. Why am I just talking? You can't talk about this. Oh, it's down 90 cents today.
Oh yeah, I'm not having fun in IBIT today. It's not a great.
It's down 90 cents after being up $7 in 7 days.
Yeah, it's moving in the wrong direction today.
Yeah, you're right. It traded as high as almost 70, 69.5 at 67.25. So yeah, it's a little. Buying bonds.
Yeah, Tony, it was your birthday last week. It's my birthday this week. I want my $75 IBIT calls to print. That's not a lot to ask for.
Not a lot to ask for. You're right.
$6 expected move in there. In IBIT, stocks trading 67. We'll sell the 73s. Markets are
great in IBIT. I mean, the penny wide.
They're really nice.
Yeah, they're not bad. All right.
2 cents.
They're tight, liquid, deep.
I'm working it, boss.
See that? You came up with a trade idea. That's why you come on a show. You're good.
I mean, yeah, sure. Came up with a trade idea, Mr. Vecchio.
And you made him buy bonds.
Blind squirrel finds a nut.
I'm selling some calls in IBIT. I just did buy some bonds at 22.
Don't put that on me.
I didn't think I would get a chance to buy them down in the day. Well, I don't know why I didn't think that, because they're down every day. But yeah, I do not like the tape action in the notes today. They look like they're going under 10. I don't like the tape action of the bonds. Neither one of those markets. That is going to put a absolute lid on this market eventually.
Mm-hmm. Eventually.
Yeah,
That's funny that you say that, because my operating view right now is I'm going to be a silly bull in stocks until the 30-year crosses 5%. And once we get above 5% at the long end, that's when stocks probably start to have a problem with things. Like, you can't ignore the bond market forever. We're getting close.
You know, I mean, we've been watching the bonds slowly drop.
Deteriorate?
Deteriorate. I don't know that there's a story here yet. I really don't.
Not yet.
You're off your default thing?
What?
You're off your default thing?
Well, I'm hoping we don't default. Not off my default thing.
Well, you would be bearish on bonds if you were thinking of that anyway.
Well, obviously.
Right. Oh, well, I mean, I don't think it's not so obvious, because after you wrote that in the Cherry Bomb, I was getting the emails, is that why he's long bonds? And I was saying, no, if he really felt that. I mean, I know you think the risk is greater now because it's.
I'm pointing out outlier risks to people because I think it's interesting to talk about it. The 10-year credit default swap is almost 4% right now in U.S. markets. The 1 year is over 60 basis points. I find that to be very interesting because the U.S. doesn't default on treasuries, but the 1 year treasury is trading for, the 1 year credit default is trading for 60 basis points. You know, like I mentioned in my Cherry Bomb, there's 60 basis points sitting on the floor if you want to pick it up.
Nobody wants to make it 50 basis points by whacking the bid or anything like that. That's what I'm trying to say.
Well, the 10-year, which I would never sell, is trading for almost 400 basis points.
Yeah.
When you think about that, we haven't defaulted ever, basically, and so
seems like free money, or somebody's got some explaining to do.
Seems like free money, or somebody's got some explaining to do. Exactly. I mean,
the S&P is up 7, 8 now. Sosnoff, only true believers. Remember?
They know look good.
Look at how quickly you change.
They know look good.
Mm-hmm.
Yeah. Yeah. No, that's it.
Very good. All right, my friend. Anything else, my friend Chris? Are we good?
Yeah, next time, because I've been trying to ask this for the past 2 weeks, and it's my fault for not getting here, but in January and April, we've talked about how AI is changing and its influence in the finance world. We've seen that Claude or Anthropic just announced a new suite of finance-related tools. So I was hoping we could do another one of those check-ins, Tom, because your attitude did evolve in a more positive fashion between January and April. But I suppose that's a teaser for next week's show. We'll talk that next time.
Sure. I'd love to talk about, I'd love to have a kind of a really interesting discussion about AI right here and how it's going to, we can talk about it with respect to finance. We could talk about it with respect to just business in general.
Sure.
Yeah, I think it'll be a fun one.
Next Tuesday. Tune in.
Very good,
Thanks,
sir.
Chris.
We're going to take a quick 90-second break and come back. We got more Tasty Live with the market measure next.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. We literally, it's like this. It's like. Nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator, out of service. I was like, that's not going to be good for Tom.
I looked at it for like 5 minutes.
And he was like, blink, blink, blink.
I'm like, this has to be a mistake.
So Bat, what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? You've got the beard, and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
The sassy guy. Yeah, look at him. He's proud to wear it.
I was trapped once on the air and water show.
Oh.
I was trapped on a boat, like a big giant yacht for an air and water show.
These are not actual problems.
Yeah, it was. We were 200 yards off of the North Avenue beach, and I could have technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already discussed this. You have negative buoyancy.
I went to America's Cup race here. It was the trial.
Look at you with all these rich guy activities. America's Cup.
No. Remember they had the trial for it?
I am black.
I went to that on a boat, and I was trapped out on Lake Michigan. They won't let you back into shore until like after those races are over. So you're out there for like 12 freaking hours. You run out of food. You run out of everything. You're hot as hell.
Your thong is starting to chafe.
Yes.
Get the full scoop by checking out the archives at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a faithful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were gonna Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit of a market measure. Sosnoff, what says it's going to be a great day, better than one Tom, a Tom, and a Thomas? Thomas is with us. How are you, my friend?
Good morning, Tasty. Good morning, Tom and Tony. Glad to be here, and I'm really excited this time. Instead of presenting a trade or talking about Chinese influencers, I'm talking about some research that I've been doing.
What Chinese influencer talk did I miss?
So you missed it. Last Thursday, I was on Gus and Errol's show because Errol was traveling, so I took Errol's place, and we talked about Chinese influencers and how they're like taking up the streets with these ring.
Now, you're not talking about Wang Dang in a car eating Chinese food or anything else like
Wang
that.
Dang is awesome, but not Wang Dang. Just a bunch of live streamers who they literally sit in like.
What are they doing?
They're on the streets, and it's like copy and paste. They have like a line of like 20 streamers on the streets with ring cameras and a phone in the center, and they just live stream in front of people trying to get money. Because I guess streaming it's blowing up here in America, so that's what they want in China. A lot of these young people.
Tell me exactly, what are they doing? I need to hear this. What are they doing?
They live stream just themselves outside.
Outside.
And so the difference with U.S. streaming and Chinese streaming is that these Chinese companies, they don't share ad revenue, and so these streamers in China are more, let's just say, more begging to the audience because the only way they can make money is through donations.
Right. So they're streaming what on? What
Themselves. It is just chatting. So if you know Twitch, it's called just chatting.
Just chatting.
Just chatting.
So is there a Chinese Twitch?
There is a Chinese Twitch. I know. I think Tencent has one.
Oh,
but there's some pretty prominent players in the Chinese.
So there's no split. It's just
no ad revenue split at all, and so it makes the incentive of the Twitch streamer to be more leaning on donations. And so a lot of female streamers there are doing a lot of interesting things to get these donations.
Okay.
Yeah.
So they're getting They're just chatting.
They're just chatting.
What are they chatting about?
Things they enjoy.
Things they enjoy. So they're just chatting about things they enjoy, and they're asking for donations.
That is correct. On the streets.
There's no way that can be.
Watch the show, Gus and Errol, last Thursday. I'm telling you, we had photos and everything.
I got to check this out though myself. I got to see what's going on.
I'll show you later.
Okay, show me where they're streaming though.
I'll show you the platforms as well.
Okay.
We'll talk about it later.
Okay, because I have Twitch and I have Kick.
That's right.
Is that where they're streaming?
They're not streaming on Twitch and Kick. I don't think they're allowed to.
Oh, okay.
They're only allowed to stream on the platforms that.
Oh, I got it. The only Chinese platforms.
Exactly.
This is Making Boomers Young on Tasty Live.
Well, have you been watching this? Are you familiar with this?
No, I'm learning at the same time you're learning it.
Yeah, it's interesting to me.
Glad.
What do you watch?
What do I watch? Yeah. I watch streamers react to the news. I mentioned this on last Thursday.
Streamers react to the news to me.
I am not kidding.
Is kind of boring.
And the streamers are making millions, my peeps are telling me.
They are making millions.
They're not making millions.
They're making millions, Tom. Through Patreon, through Twitch subscriptions.
It's Ferda.
There's a lot of different avenues. There's a lot of different revenue. ad revenues for streamers.
Here's what I understand. Okay, I've watched a lot of the streamers watching, reacting to musicians, listening to Led Zeppelin for the first time and stuff like that. and I think it's kind of fun, but they don't get. How do they make any money?
You're really just looking to see if that Twitch streamer reacts to it either really funny in a really funny way or in a really based way. One that you kind of like, you go along with their thoughts and opinions. It's a very, I don't know, it's very sheep-like, and I fall for the same thing.
So you fall for it.
I fall for it too.
So do you spend money?
No, I am one of those. I'm a YouTube frog, is what us young people call it. Where
A YouTube frog.
A YouTube frog. I'm not a Twitch Andy. A YouTube frog.
So you don't pay. You don't spend any money.
Don't spend any money.
So then how do you support the economy that way?
Like and subscribe is what I do, and that's what you should be doing for Tasty Live as well. Like and subscribe.
Like and subscribe. So you're a like.
But the like and subscribers get them to get bigger companies to back the.
So you're a like and subscriber, but you're not. But you're not paying any money to watch their reaction.
No,
And I don't get who would pay money to watch their reaction. It's not that good. I mean, it's okay, but it's not like that. I mean, it's funny for like a couple seconds, but how much of it can you watch?
I think the main thing is viewers like it when the Twitch streamer shouts them out. You give them a big dono, and next thing you know, the Twitch streamer's like, "Oh my God, thank you to this person."
A dono is a donation.
Donate. Oh yeah, I forgot. Yeah, dono is a donation. Dono is short for donation.
You and I have to have some lessons. I need some lessons here.
I'm down.
I mean, it's really evolved from just taking feet pictures. I mean, this is really
we're way up,
way above this. This is, I mean,
Tony was just selling his underwear, making like $10 a month or something.
We've really evolved. I really have a good feeling for us in the future as a society.
Yeah,
it's good. I'm feeling confident in my kid. Yeah.
Hey, listen, your kid, he's 1 year away from
unbelievable. Now I know what he's doing at 3 o'clock in the morning.
He's Twitch streaming and hoping for a dono.
Yeah, I mean, we told everybody last Thursday to open up a Twitch account. Just do it. Start streaming. Try it out.
Oh God, that's
like and subscribe.
No.
Like and subscribe.
All right, Thomas. Welcome back to the boomer section of the show.
Oh, sure.
Yeah, we have to come up with content that people can use. So
absolutely. Well, I'm ready to present the market measure. I'm excited to.
All right.
Most of our customers are not getting paid a lot of money for showing their feet, just so you know. Or they're anything else.
There's a market for everything, Sal. Don't you be surprised.
Not really. All right, let's do this. So today, this is your first market measure.
That is right.
How'd you feel about that?
I feel, there's like a tie-in, there's a push and pull for this project. It was, I wanted to present something. I obviously want to impress everybody for my first appearance. So I wanted to make this grand project, obviously put up the cool charts, and there's a cost of that.
And we shut you down.
You shut me down, especially. Yeah, I remember I was told this is too complicated. I had to repeat the subject twice, and I couldn't. So clearly it was too complicated for me to explain. And so for the cost of that, the cost of having a really in-depth and complicated research subject, our study, is that it won't really get the audience's attention. It won't be efficient, it won't be effective. And I want to be effective with my time here. And so I made sure to simplify this down all the way down to the foundations because I want the most amount of viewers, the wider audience, to understand what we're talking about here today.
They did a really complicated piece. It was really heavy, but I was like, you're going to scare the children.
Absolutely.
We already have Jacob. Okay. He already scares the children. So, yeah, this is good. What are you a junior or senior?
I'm going to be a senior this year.
You're going to be a senior.
Yeah. Right. So that's exciting.
Yeah. Okay. All right. And your major is what?
My major is in mathematics and then the concentration of financial mathematics.
Perfect. It's right in our world.
Absolutely. It's
awesome. All right, let's do it. You ready?
Let's do it. Let's go to the first slide.
So now this is how we work this, just so you know. Just so we have this clear. Okay. Master, blaster, color guy. Okay. You're like Tom Brady. Okay, you're
not on the football field.
Yeah,
like up
Tony
in the box.
Romo. You're Tony Romo calling you're the color guy. You're adding all the color.
Yeah.
You're like Barkley. Okay. I'm trying to think in your world who's your favorite color guy on the on sports. Who would a younger person think is like their favorite? Would it be like a Brady? I'm trying to think who would it be. Because most of the guys are older.
I don't even think they watch football.
Not a lot.
Football, yeah.
What?
I don't watch football.
Right, of course not. Yeah.
Yeah.
No, it's a very different world.
It's a different world.
Yeah. I'm trying to think of that.
You got to come up with a streamer.
None of the guys are young. They're all.
You got to come up with a streamer.
That's right.
They're all older. All the guys that.
I know you got to come up with a streamer for them.
Yeah. Who's your favorite athlete?
Favorite athlete? Tiger Woods. Tiger Woods.
He's old.
Yeah.
Yeah.
Yeah. Yeah.
All right. Well, you're a golfer, obviously.
I'm a golfer, and I just love. He just was very patient with people at that time, especially when he first started playing. He was very patient, and he just was concentrating on his golf game, and he won. You know,
He was before you were born. He was amazing.
Absolutely, and
yeah,
it was in the face of a lot of challenges, you know, and a lot of.
He was unbelievable in his heyday. He could have been. He was. Tiger Woods was much must-watch TV. He was must-watch TV. He was like people that never watched golf, that would never put on a golf tournament, would sit there and watch Tiger Woods.
Sure, even if you weren't a fan of golf.
Yeah, even if you hated golf.
It was that much better.
You'd watch Tiger because Tiger was a different level. He changed golf forever. And he came right after Michael Jordan, so it's like kind
the world needed
bang.
it.
Yeah.
Nike needed it for sure.
Yeah. Big stuff. Anyway, let's do this. Okay, sorry for distracting. I just like hearing the stories. It's a lot of generations here.
So happy to be here and to talk to you, especially as a viewer, a longtime viewer. This is so cool.
So
really
Ivy Rank, yeah, that's why we want to hear all your stories. Ivy Rank, your market opportunity indicator. Ready, Pat? Let's see what we got. When the Ivy Rank is high, you get paid more or take less risk for the same premium. This is not just theory. We've tested it for over 12 years. Today, we're going to show how Ivy Rank tells you when the market is giving you better deals. Okay, let's keep going. So you did a study. You did 12 years. Did you do anything other than SPY, or you just do SPY?
So I just did SPY, and let me talk about how I even got the idea to do this research study.
Yeah, don't step on his time, Sosnoff. Give him a little time.
No, I'm trying to let him shine.
Hey, no worries. So Dr. Data, he sent an email out that there was some new features added to our options backtesting engine.
Yeah.
One of them being the dollar premium. You can test based on a specific dollar premium. And so that got me thinking, well, I haven't really traded thinking about what dollar premium am I collecting first, and then looking at the deltas and the buying power reductions and things like that. And so this study, we're using our options backtesting engine on Tasty Trade. So any viewer can do this at home as well. And we tested 12 years back, the most that we can use on the options backtesting engine. We opened all these short puts at 45 days, managed at 21. And I used, instead of using the dollar premium, because I wanted to only test out of the money short puts, I didn't want to really test any in of the money short puts.
That's good.
I tested them based on 15 delta, all the way up to 50 deltas with 5 delta steps.
That's perfect. Okay, because that's kind of all our criteria. Like we would rarely sell a 50 delta put. Like most of the puts we sell are 16, 20, 22, 25, maybe 30. 35 would probably be the max. So anything inside of that's fine. Okay, so selling puts was a bullish trade, tested 15 to 50 deltas in 5 delta steps. Okay, let's go to the next slide. All right, so tell us what you've done here. Help us.
So what I've done here is I've pretty much taken a snapshot of the SPY 20 at the August 29 expiration, which today would be the 45-day till expiration.
Okay.
And so today the SPY is trading at $624.77 with an IV rank of 13.4. Low. That is below the 50%. That's low. That's below 50%. And so I classify that as low IVR. And so what we're looking at here is different deltas and what the premiums are for those different deltas. So like you mentioned, 15 to 35 being the deltas we trade most commonly. I put those strikes specifically on the put side of the options chain. And I highlighted one in particular. It's the 604 strike, which is trading at $6.15 at the bid. The reason why we're going to look at this today is because in the next slide, we're going to focus on the 1%, collecting 1% premium of the underlying price. So if the SPY is trading at $624, we're looking for any short puts that have a bid or sell or the premium collected at around $6.24.
And the reason for that is what?
It's to standardize the study. It's to allow us to look at just one specific premium target to determine what the medians are, and so then we can kind of compare and contrast things.
Perfect. So you went for the 1%, which makes logically that makes a lot of sense, and it's probably what does it say here 27 delta. That's kind of right in our wheelhouse.
Exactly.
Perfect.
Yep.
Okay, let's go to the next slide, John. All right. So what do you got here?
So here I have a bar chart. And so what we're looking at is the IV rank advantage. So we're comparing and contrasting the $6 premiums exactly. So the 1% of the underlying price. And this is looking back all 12 years. So when IV rank is low, so 50% or less, you need 30 deltas to have that same premium collected, the 1%, aka $6.24. While when IV rank is high, the median delta you're collecting is 15 deltas. So that advantage of 15 delta points allows you to get that same reward, the same premium, with way less risk, so lower touch.
Sure, because if you're selling one of the things we found over time, which you've just discovered, is that your probability of success is going to be the same regardless of where IV is trading, but your probability of profit is going to be the same. The difference is that there's no scenario where you'd rather sell a 30 delta option as opposed to a 15 delta option. Why put yourself there? Why torture yourself? And why not why not reduce your risk, and why not collect the additional premium if you were going to change whatever deltas you want? That's really kind of cool.
Yeah, and so this perspective, right, this different look, by standardizing just some metrics and then comparing and contrasting how the other metrics are affected through IV, especially IV rank, it really allows you to see this image clearly about the importance of IV rank in your trading.
Yeah, the only difference that we would have done is you used 50%, and we kind of use a IV rank of 30 or higher, as opposed to you're really using 50 or higher. Yeah, because the IV rank doesn't get over 50 that often. So in the SPYs. So the IV rank in the SPYs will get over 50 a couple times a year. So you just wouldn't trade enough. The reason we use 30 is because you're in the game more. You don't want to be on the sidelines for 80% of the time, or 85% of the time. You want to be at least in the game most of the time. So if you get to the IVR of 30, then you're kind of playing the game, at least usually, 65% of the time or something like that, 60% of the time, which is pretty good. Let's go to the next slide. Right?
Got some performance results here.
Okay, let's see this.
So even the safest trades, the low delta, do better when IV rank is high. Notice that the top row compared to the bottom row, so the low IV rank compared to the high IV rank, every single one of these columns outperform. And the biggest, I think, most significant look here is that the 50 delta short puts in low IV rank environments perform worse than the lowest delta, the 15 delta, for the high IV rank. Now, obviously, there is some sort of cost. There's a slightly lower win rate compared to, I believe it's going to be 79 versus 71% for the low and the high, respectively. But what do you think about these performance results?
It's kind of remarkable when you start to look at, at the 20 delta. Tony and I trade a lot of 20 deltas, and it's 108 versus 367. Now, again, you're using that 50%, which is high. But if you said 108 and you just kind of interpolated it and said something like, 30 IVR might be, 108 to, let's say, 216, so it's double. But here you have it, over triple. So, I think it's pretty remarkable when you look at these numbers. It basically screams at you, hey, when IV rank is super low like it is right now, you really don't want to be short a lot of S&P strangles. And if IV rank is high, you have to be, otherwise you'll never make money.
Exactly.
Yep. Let's go to the next slide.
Market implications. So let's look at today's market, right? So today we're trading, the SPY is at an IV rank of 13%, which is low. So to hit a 1% premium, you'll need to sell 25 to 35 delta puts. Like we saw today, it's at the 27 delta, so right in line. What are some trading implications for a 1% premium target? So let's just say, like today, trading the $6.24 short puts. When IV rank is high, greater than 50%, you can get that same premium at 15 to 20 deltas. So like I said, same reward, less risk. And with that lower risk, I would recommend increasing your position size as well, especially to take advantage of the few instances when IV rank is that high. And vice versa, when IV rank is low, so less than 50%, stay selective and keep your position sizes smaller.
It's really good. The only thing I would do different in the future is just lower that number to 30, just because it just keeps you in play more. That's
Absolutely.
the only thing. That would be my only change to this whole study. Let's go next slide.
My first study, he changed everything. So doing good.
He never did a study. It's been 14 years. He's never done one study. Don't worry about it. Go ahead. I'll let you do the takeaways.
Let's do some key takeaways here. Let's send the people home with some knowledge. IV rank tells you how far out of the money you can go. Higher IV rank is equal to lower risk for the same premium. And this last line, this last bullet point, will really send it home. IV rank doesn't predict outcomes. It sets expectations. Use it to align premium potential with risk tolerance.
Bump.
It's a really good piece. Love it.
Your parents just wrote in. They're very proud of you. You represented well, they said.
No, that was great. That was awesome, man. That was really good, and we hope to see many more pieces from you.
I can't wait to share them.
All right, thanks.
Good job out of you, Sosnoff. Good job out of the market. Even the S&P's up 6, NASDAQ up 126, Russell down 15, the Dow down 203, volatility still down 12 cents. We'll take a quick 90-second break and come back. We've got, oh joy, your friend and mine, to Scott Sheridan, Scott Sheridan Studios next. Like 90 seconds.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. Tasty Trade World Headquarters, your friend of mine from the Scott Sheridan Studios, Mr. Scott Sheridan. How are you?
Well, I'm getting over the pain.
Of?
There was a birthday dinner. I don't think you got the nod. I got the last minute. Oh, you can come if you like.
Ooh.
All I want to know. I don't.
Last night? Was this last night?
Yes. I got invited about 15 minutes before the dinner, before kickoff.
Brutal.
I wished everybody well. I said I hope they have fun.
And then you put the malaki on them because the restaurant was closed.
No.
Yes. You have powers. You have powers you don't even know you have.
It's closed on Monday.
Yes.
No,
closed for like summer vacation.
They were away for a week.
Oh, no.
You gave them the malaki.
Well, hold on. Let me think about this because that means you drove there.
Of course you drove there.
So you were there. So now I got to think of where you went. Okay. This would have been way out of your league to have come up with this one. But right up the street from there
is an Ethiopian restaurant.
No, really good Thai. But wait, it's called, oh my God. And I'm not a big Thai person. It's a really good Thai restaurant. Nice outdoor patio. It's huge. It's right up the street from there.
You went for Thai.
I can't remember the name. Wait, what kind of food did you go for? And let me guess.
We went next door for Vietnamese. Yeah, it wasn't that good.
Well, see, at that point,
I made a
that far north.
And he was dying for duck.
You should have gone. Yeah, when you think you're getting the best King duck and
right.
you wind up with it.
I mean,
okay, I don't care what you get. That's a disappointment.
I will bet dimes to dollars that the next week he gets duck somewhere.
For sure. Well, unless you get it from Sun White, you're going to be disappointed. So you got to go.
No. Next Tuesday night, I already ordered duck.
Are we in, by the way, for Thanksgiving?
Oh, we're going to.
I thought we were already in. We were in.
We're not already in, but we're.
He says.
I'm preparing.
Yeah.
I'll be first online. Well, I'll be first online.
If you just understand something, if you only get
I already told Vinny about this.
Yeah, if you only get one, we're sharing it.
You're out, is what he's trying to tell you.
Okay, I'll take care of you guys. I'm going to need turkeys.
I already told Vinny about this.
I'll get you the turkey. I'll get you the turkey. Don't worry about the turkey. Now, more importantly,
I'll get you the lasagna if
the
that's
power move when you were up there already. She got a little bad both burgers.
Oh, he can't think like that. You were 100%.
We're parked already. We're parked.
Back in your
Parked
car.
already.
Right there. It's around the corner.
No, it's not around the corner. It's a long walk.
You get back in your car and you drive a couple.
Okay, listen, I understand where everything is. I'm not doing it. We're there. We had Vietnamese food. It was fun.
And you're disappointed. So there you go.
Yeah,
next time, get back in your car and drive somewhere where we can actually have a proper.
Very disappointed.
Right. Well, because you wouldn't have gone to Vietnamese food. You wouldn't have gone to that place.
And they didn't have a liquor license, so he had to walk through those mean streets to get himself.
A lot of crackheads there.
What?
It's not a good
Why has that area always been so sketchy?
It's really sketchy.
It has always been like that. That area has not cleaned up.
Yeah, it's really sketchy.
Yeah, you don't want to be there after dark.
No.
Good news was you went to dinner at 5.
No, it's a good thing the sun doesn't go down till 8:30.
Right.
Yeah. No, we were there.
He was home by 8:30.
Sleep.
No,
like a vampire.
I was there we were there almost 3 hours. We ordered a lot of food.
3 hours is a long time for Vietnamese food.
I know. It was fun. It's fun, but now I have to take everybody back to the.
Oh, well, of course you do.
I have to take everybody back for Peking duck.
Yeah, maybe if you give me a heads up.
Oh yeah, they need a mulligan.
But so the restaurant that you're going to, when are you going to that place, that steakhouse?
Tomorrow night.
Okay, so if you order in advance,
what can I get?
The duck. You have to order in advance.
He's got duck on the brain.
It's supposedly it's their.
Orange, like orange or what? Peking? What?
I have no idea.
You don't know what it is.
I don't know what it is. I just heard from somebody that you have
so I get Tooch.
To order it today for tomorrow.
Okay, I'll call him right now.
And it's for 2. That's what your dinner is.
Well, I'll get it if you say it's great.
Well, that's their specialty.
The duck.
Yes.
No problem.
Even though it's a steakhouse.
Well, I'm going with a bunch of animals. So.
Who are you going with?
I'm not naming names. I don't call people out like that.
Okay.
I'll tell you later.
No, animals. So order the duck.
I'll order the duck as a side just for the table.
Not as a side.
You get it as an entree. I get it. Everybody has some of the duck. It's when I say a side, it comes, everybody gets it. We'll have family style.
You got to order it the day before. That's all I just told.
I'm going to call. I don't think they're open at 9:34.
It might be.
I was told you got to order it the day before.
And it's for 2? But is it duck for 2 for 1? Is it really for 2?
Duck for 2.
Crispy.
I have no idea. I don't know what it is.
But it's their specialty.
And the crazy thing is, Corinne tells me last night, she goes, you know what? I really feel like duck. And I'm like, you feel like duck? She
eats duck?
She does. And she goes, I want to go to Le Bouchon and get duck.
Yeah, but when you go, do you have to get 2? Because it's duck for 2 for 1. So you get duck for 4 for 2.
Oh, duck for 2. Duck for 2.
like
4 for 6.
Do you get duck for 4 for 2?
I have ordered duck for 2 for 1, but I'm not.
You've never ordered duck for 4 for 2.
Duck for 4 for 2, and then you're eating.
Duck for 4 for 2, I've never done.
Then you're eating 3 because there's no
Not
way.
even in your heyday.
I would have done duck for 4 for 2 last night, but
easily.
But those guys, and then I realized that all these people they all have allergies. I mean, they're all.
Oh my God, they're those type. Oh
no!
I am so glad I
This
didn't.
one's got a mushroom.
I didn't actually.
No.
Every restaurant you go to, they ask you, do you have allergies or something? I say no. Like, who says yes to all of this?
Oh my God,
stuff?
this group last night, they're talking mushrooms. If there was a mushroom on the table,
Oh, to be anaphylactic, to be on the floor. Sorry, I don't mean to bring up bad subject.
6 was not there.
I'm just saying, this was her 10 years ago, all over the place. Mushrooms, I can't touch it.
We did.
Mushroom touch that.
We did have some good dinners though, where the mushrooms came over. The best was my birthday at oh my God, the Italian restaurant. Where
Oh yeah, you're talking about when she lied down. You know, just when the food came.
Strega Nona.
No, a place from New York.
Yeah, it's where I actually got engaged there. I should remember the restaurant.
You should remember if you got engaged there.
I got engaged there. It's the corner. It's by East Bank. It's from New York. My uncle came and he's like, Chicago finally is a good restaurant. It's a New York restaurant.
East Bank.
Yeah, it's right by East Bank.
It's your Italian place.
Still there?
100 times.
Yes, it's
What's
been
the
there.
name?
Oh my God, I'll think of the name.
Forgot to.
I can think of the manager, the owner's name. I can't think of the name of the restaurant. Anyway.
So they bring the food. Okay, they bring the food.
Oof.
And
this is
Wait a minute. He was at you were at his engagement?
No, this is the birthday party.
Oh,
this is like 15 years ago.
So anyway,
it was
you
bad.
handle that on your own next time if you have to get engaged again. You do it by yourself. Okay, you got that.
So I'm sitting there, and they just bring my food. It's a beautiful,
beautiful
pounded veal chop, whatever the deal is. Bring my food, and then his wife has to pull the drama, the whole stint.
Oof, she almost went down.
She goes, mushrooms, lying down, EpiPen, call the ambulance.
I had to go running out looking for medicine. There isn't a pharmacy in the area. I'm going, oh my.
She's on the ground dying. I got a plate in front of me with a beautiful veal chop on it. I'm like, it's a shame that this thing has to go to get cold.
I don't want this to go to waste now.
It's gonna get cold. So I had to,
It's a true story.
I had to be very discreet about how I cut it up and ate it.
Oh my God, why can we not think of the name of this restaurant?
I don't know.
That's bad. I'll figure it out. Oof. Oof.
Did you eat?
Oh, of course he ate.
He ate.
Then when he went to the bathroom, he stepped over. Okay.
We had to step. It was just like the train.
I believe you.
He stepped over when he went to the bathroom.
I believe you.
And then when
too.
he came back, he said, "You're still here?"
It was just like the trading pits.
Yeah.
Okay.
Yeah, carry him out after the bell. All this shading still going on. Leave him alone. Oh my God.
Oh.
This is gonna drive me crazy.
Oh.
Yeah, I'm gonna get it for you.
Thank you. It's really bad. All right. While you're doing that, should we go to some business?
Sure. Even the S&P's up 2. You almost had him down on the day, as I foretold.
What do you think about what's going on right now?
With the market?
Yeah. Like, it just seems to me, from my perspective, it doesn't matter what the news is, it's all good.
It's all good?
Yeah, well, how is NVIDIA getting approval to sell chips to China, but nobody else? It's like, what? I'm not following.
Well, they're all up now. AMD's up. All the rest of them are up. So I'm sure they're.
So now we're picking and choosing, but
Sure
Apple's.
But I'm sure they're going to.
Tim Apple didn't show any love, so.
Tim Apple showing any love,
so Tim's out.
Yeah.
Got to grease the palms.
You know how the machine works. I mean, I know he knows. I know you know.
I mean,
has he been to your place yet?
Cocopazzo.
Cocopazzo, thank you.
That's what I
Cocopazzo.
said.
No, you didn't say it.
I said Strega Nona, which means
Stregonona.
It's not Cocopazzo.
You said Stregonona.
Well, I mean, I know, but Cocopazzo
Cocopazzo.
means crazy grandma, crazy something. That's what I was trying to get to.
Got it.
Is it still open?
I think so. And I really hope the Six isn't watching this because she's not going to be happy if I don't remember the name of the place we got engaged at. I remember the restaurant. I remember the whole scene. It was hysterical because they were trying to get rid of us.
Great restaurant. It's a big open restaurant too. Like the seating is. I mean, it's if you want to put on a spectacle, that's the place to do it.
You want to lie down between tables?
Yes, that's the place to do it.
And hit me with the pen type thing. Yeah.
Was it like a Pulp Fiction type thing? Did you come back from like real far?
I don't think she actually had the pen. It was out, in hand, not needed.
I probably just shouldn't have asked. Are you going to eat that?
I know Sosnoff shows no love.
I remember once we were at some place and she ordered an omelet and they put mushrooms in it. And she's like, "Did you put mushrooms in it?" I was with somebody else. I got up and just walked away from the table. Like,
you knew what was coming next?
I was like, I don't want to be here. I'm here to just get away. I don't want to be here when the next when this guy gets basically his next.
Yeah, I'm not sorry those days are behind us. Now, she won't eat them, but they can be on the table. And if there's one in her food, so be it. She won't
eat them. Loves the shrooms.
She won't. I mean, and truffle still bothers like the smell. I love truffle.
I don't care about truffles.
I love truffles.
I can't eat truffles. Even the S&Ps are gone. There, that's it. They're red. As foretold, son. You just had a hold. You just had a hold.
As foretold. But I don't know what's
a rough
you
one.
Coming in saying you like them is just even more.
I didn't say that. I didn't say that I like them. I said what's bizarre to me is we're in a period where it appears that whatever happens is good news. I mean, they got to new highs again. So we had new highs again.
Yes.
You could say we made new highs again.
Yeah, everybody's happy.
Everybody's happy.
Everybody's happy.
Everybody was
Goldilocks.
Everybody got out of their lawn.
Yeah.
They could wait till
Below the top, I bought the buy last night when they were down 8 handles. I bought them.
Yeah, buy the dips, sell the rallies.
I have a newsletter.
All right. Top 20 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Time for you, number 20, OKLO at a 31 for everybody else. NVIDIA at a 6, AMD at a 31, Tesla at a 14, PLTR at a 41, JP Morgan at 11, SMCI at a 20, iBet at a 39, Amazon at a 26, Apple at a 26, MSTR at 11, Citigroup at a 12, Goog with an L at a 40, TTD at a 54, Meta at a 29, Hood at a 32, Coin at a 37, MP at a 51, Baba at a 22, CRWV at a 19, and number 20 for Tom, OKLO at a 31.
Sadlov, I'm getting some good feedback on Thomas. I mean, they're actually one guy wrote me, if you have any Yank bet, get this kid a job. He's outstanding.
He's a junior.
Well, he'll be a senior next year. Yeah.
He's outstanding.
He looked like he was 12 years old.
He's been a tasty trader since he was in high school.
He met Nick on
junior. He's a junior in college. I think he was like a junior in high school. He looks like he's 12.
Oh no, he's a junior in DePaul. But
I met Nick on a golf course. That's how
this the love affair started.
Yeah, I believe so.
So he's been watching the show for a long time, and he reached out to me to do a talk at him and a group at DePaul to do a talk at DePaul, and that's where we met at the DePaul has a partnership in their finance club with the University of Chicago. I'm sorry. University of Illinois, Chicago campus. And so I did a joint thing one night and we sat around and talked, and he's like, love to intern for you guys. So it worked out. Good kid.
There we have it.
That was easy.
We actually, I think, have our lunch with the interns tomorrow. You want to join?
Lunch with interns. I like lunch with interns.
That's tomorrow.
Lunch with interns.
We did dinner with interns last year.
I think there's a dinner at the end, but you're not going to be here. I think you're on the road for one of the shows. I
went to the dinner last year with interns.
I'm taking them to the floor if you want to come to the floor.
No, thank you.
All right. See, Tony, you want to go to the floor? When was the last time you were on the floor?
Same time as me, probably.
Come with me. Have you seen the new floor? Have you been on the new floor?
No, I haven't.
Come with me.
No.
It's actually...
He can't. He's too big a celebrity now. He goes down to the new floor. People are not going to be able to control themselves. It's not
You
fair.
are on fire today.
It's not fair. It's not fair.
In Fuego.
He can't
told me you were going to be in Fuego. He told me he was going to be in Fuego today, but he was talking about his trading. It's just the digs to me. He has ridden me like a redheaded stepchild.
I would love to have you.
He cannot go down there without
an escort,
a bodyguard. He can't go there by himself.
Could Liz and Jenny, do they qualify as escorts?
Yes, they can.
They're muscle. They can protect you.
They can protect him. They can distract people. You know,
all right, we've got time. It's early August.
Okay, so I got time to think about it.
He's a celebrity.
Love to have
Maybe my celebrity status will go down by then.
Right? Come to the floor.
Can you imagine him?
So we're having, and just let's get it out of the way.
They're going to stop trading when he gets down there.
Let's just get it out of the way for our lunch and learn with the interns tomorrow.
Yeah.
Lunch and learn. I'd love to
Lunch and learn?
I think that's what it's called.
Nice. What are we having for lunch?
That's the whole thing. Let's just get it out of the way because you're going to rip on me for lunch.
What is it?
What's your number one go-to for ripping on me? Think about this. Not chopped brisket. Give me another one. What's your number one go-to? You always say Tori doesn't know how to order because I tell her to order the wrong thing.
Oh my God, the pizza. Yeah. You got the wrong pizza.
Got the wrong Art of Pizza?
From Art of Pizza? Did you get the wrong pizza again?
I haven't had anything to do with ordering in years.
No, this
okay?
is obnoxious.
Is it Art of
Because if
Pizza?
you know you're
Art of
ordering
Pizza.
the wrong pizza when
Tell
you order
her
the
today.
wrong...
Go tell her today what you want. You're not going to be here. You go.
I'll just march right out there and tell her exactly what I'll tell.
Tell her what you want.
Tell her exactly what I'll tell her.
And I can't wait for her to look at you and go, sure, Tom.
She's never listened to one word I've said.
Not one. So I want to stand there when you tell her.
Sure, Tom. GFY.
Sure, Tom. No problem. We'll make sure.
She has never listened to a single word I said.
No,
Never.
not one time.
I taught her early and often. Don't listen to Tom.
No, she orders Art of Pizza pretty good.
Yeah.
Yeah, she's fine.
Kind of a messy food, though, for
Intern luncheon?
an intern luncheon.
Yeah. Yeah, I'll have
to go with like.
Unless they go with the horrible pan pizza.
I'll have to go with thin. That's got to be.
Yeah.
It's got to be able to pick it
No,
up.
I like their thick.
You like their stuff.
I like their stuff. It's great.
Yeah.
It's great.
I agree.
Art of Pizza is so good.
It's great.
I agree.
I got to tell you, prices. I know CPI was up a little bit. CPI was way more with Art of Pizza. Remember Art of Pizza?
He don't give a shit.
It used to be
Art doesn't care.
$3.49.
Yeah, Art don't care.
I think it was $3.49.
I first started going there, it was like in the ones.
I don't know if it was in the ones.
It was in the ones.
Okay, this isn't New Haven when you were parking cars for 50 cents. Okay, maybe it was $2.99. Maybe it was $2.99. But it's like $7 a slice now. $6.50, $7. It's getting up there. A little pricey. It's good though.
When I was buying pizza,
Right?
2 slices.
And a soda.
slice and a Coke.
2 slices of Coke,
$1.
75 cents.
75 cents.
Yep, 25, 25, 25.
And the sad thing about New York City is the dollar slices, I think, have all gone away. I don't know if there's many left. I mean, I think they're all, because there was a place down by Levi, it was Two Bros, $1 a slice.
Oof.
$8 for a pizza.
Those were crappy pizzas.
Oof.
But it did the job, probably.
Did the job.
Yeah. Or we used to go to Sal's in Mamaroneck.
Sal's?
Sal's in Mamaroneck. That was everybody's favorite in Westchester.
How far was whatever the town?
Far, like 20 minutes.
Oh, that's far.
Yeah. Well, we had plenty of other pizzas.
How many towns make up Westchester?
I like 20.
Oh, a lot.
Yeah, there's a lot.
He's in the country.
I mean, Ardsley is where my cousins were from. I know that's part of Westchester.
I grew up next to Ardsley.
Which town?
Hartsdale.
Hartsdale,
Ardsley.
Carvel, whatever. The ice cream down at the end of the hill.
Hartsdale.
He was almost a Carvel.
You were almost a Carvel. You were
not almost a Carvel.
You were almost a Carvel. Spoke to your
one of
mother.
my friends, one of my closest friends when we were in high school, grade school, lived next door to Tom Carvel. He lived in a like a garden apartments.
Was it more than one shop?
When we first started, his first shop. That's when he had his first shop.
Oh, Ardsley, wherever that was the first shop?
Yeah, his first shop.
Yeah, that's the one I went to as a kid.
Right on Central Avenue. Yeah.
I don't know where was it. They were up on a hill. It's very hilly over there. Was your town hilly?
Ardsley's hilly.
Very hilly. Yeah, my cousins were on a hill.
Yeah, we used to sneak onto Ardsley Country Club because they had a hole in the gate. We'd play a 6-hole course on the back of that course at night. Nobody'd ever play it. Nobody'd ever catch us, ever.
At night?
Not at night.
Because you didn't want to play at your club? Is that why you went there?
On Mondays.
Oh, is that what it was? Because on Monday, so you had played this place?
Well, when we were kids.
I mean, because I saw your saltwater pool from Larchmont. It was the whole ocean, okay? Your saltwater pool. I saw the pictures.
As kids, we would sneak on every private course. They never caught us.
Because they didn't have a reciprocal agreement with your private
They
course?
just never caught anybody.
It's funny. I wonder if people do that today. I have no idea.
I don't know. I had no idea.
Right.
But we would go like Westchester Country Club where they played, where they played the tournament every day, the pros. They had like 3 courses.
They played a pro tournament there?
Westchester Country Club every year, 3 in Harrison. We used to sneak on. They'd have 3 courses there. We could play probably 13 holes before they'd catch us.
What do they do? Run after you?
No, they just say, "Hey, get off the course."
What? Like they played PGA?
Hey, get off the course and take your butler with you.
It was a PGA.
Every year, the Westchester Classic.
Well, I don't know. It doesn't.
They did
exist
every year
anymore.
for like 50 years.
Well, like the Western Open doesn't exist anymore.
Western Open doesn't because they played at a course that didn't allow women.
No, but they moved it to Dubs Dread.
Yeah, I know.
Yeah, but then they stopped it.
But then they lost their sponsorship.
Was that what it was?
Yeah.
Who was it?
It was BMW for a while. I don't know who it turned into.
It's a good golf course. Did watch you get a hole-in-one there, number 2.
Where? Which course?
Dubs Dread.
Oh, Dubs. We already talked about that this morning. My hole-in-one. Because there was a girl that made a hole-in-one.
You were there?
Yeah, because you couldn't see it.
It was a blind one.
It was on the right side of the green.
So you had to pay. You had to pay the vig. You had to pay You had to pay up.
I've seen a couple. Teddy on what is it, 10 or 11, like 11, whatever part.
So you had to pay him too.
Sculls, whatever he sculls, it's going about 400 miles an hour, about a foot off the ground the entire way, hits the pole and drops in. I'm looking at him going,
that sucks.
I'm like, that does not count.
That sucked. Mine was legit.
No, Tom's is legit. We were looking, we're like, wow, he must be long, he must be short. Where is it? It was right at the pin. And then we go over and then we had to listen to the How Does Daddy Do It? You know, you know. Oh my God, is that annoying?
Have you ever hit a hole-in-one in the presence of the
I've
boys?
never had a hole-in-one. I've been a foot and have never had a hole-in-one. I think at some point in time, but yeah.
You know, I technically also once, I hit the ball at Doral on the 9th hole at Doral.
Sure. In the water.
Before Trump bought it, at the 9th hole in Doral at the Blue Monster.
This is a true story.
I hit the ball in the water. And it was the 9th hole was all over water. So I hit my second.
This is the Dookie outing?
Yeah.
Yes.
Yeah, I was there.
And I hit my second shot into the hole.
Yeah.
Yeah, I remember that.
So I made a par.
Right, I remember that.
It's a birdie. Oh, on the par 3?
No, par 3.
Oh, par 3. I thought it was par 4.
Yeah, it was par 3.
Now I know why you always win. I could tell how you...
no, because I thought it was the par 4. Yeah.
That was par 3 I made.
It's a good par.
It's a good par. A hole-in-one par.
I remember. I think you won that. Didn't you guys?
No. Scott took us down.
Oh.
We should have won. And then Scott, you know, like carry him a little load.
Oh my God. Can we just get the fighting out over Saturday as to what the handicaps are and who's playing, you know, what the teams are?
We're throwing up balls.
And then we'll do the handicaps.
All even?
Of course. Well, I stink now.
Okay. Perfect.
On that note, even the S&P is down 450 as foretold. We're going to take a quick 90-second break and come back. So I don't know if we got
crashing.
We got more Tasty Live volatility
They're
down.
cashing, they're crashing, they're doing everything they're not supposed to do.
We'll be back in 90 seconds. We got Liz and Jenny from the floor of the SIBO right after this. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
everybody, and welcome to the Tuesday edition of the Liz and Jenny Show. I'm Jenny. The beautiful blonde next to me is Liz Yerging. Hello, Liz.
I love our SIBO team. They know how to handle us right now. Matthew starts yelling at us right before the intro, and we appreciate that more than you will ever know, Matthew. Matthew and Steve, the guys behind us, they're awesome.
We were just scrolling through our own accounts, talking about best and worst of the day, and Liz was hating on Oklo, but I tried to explain it was, as much as it's down yesterday, it was, or up, down today, it was up yesterday.
It's the only thing I'm losing in. NVIDIA for the win today. I was like, ooh, NVIDIA's saving my account.
But hey, everybody better watch out because we've got SPOOs down 10. They were up, and bonds are down. They were up. So a little bit of a change from what we saw earlier today.
It is definitely a little bit of a change. I mean, this morning the numbers came out. When I woke up this morning, SPOOs were up like 30. Then when the number came out, they were up like 12. Then they went back up to 30. And when we got on the train about that, and now
and I know I wanted to sell some bonds. The other day during our show, they were down. They were down 12. I can't remember 12 and how many. But I was trying to get in. They popped up to over.
Did you just go 12
and however many?
Because she doesn't know how to call them ticks.
Yeah. So anyway, I was waiting to get back in to sell some puts in there, and we had a boost in the bonds yesterday and this morning. So I thought I missed my chance. Well, they're back down today.
You never miss your chance, Jenny. It's two-way action trading all the time.
ZB
so we
is
are
down
back.
17 ticks.
17 ticks.
Is that it? 17 ticks?
I think so, yeah.
We never know how to refer. We never know how to refer to the bonds.
We just go like this.
12
but nonetheless, yes. So I mean, SPOOs, we've seen some downside just since we've been here. Just downside. Now we're only down 7 right now.
Oh, really? Well, what we missed today, and I don't know if any of our viewers got it on, the morning SPX trade. We were so busy today, we were working ferociously on the train.
We were working ferociously and forgot to put it on. That being said, I do know, like in Twitter, we do have your Eric, Taco Tuesday. You've got Jack Tucker. They did put it on, and they put it on, a little bit before our show, right around 9:15ish. So later today, we will kind of jump in and take a look at the
SPX has had a decent range. If you want to pop in the platform, we could take a look. For the day, its high today was 63.02, low 62.59. So you're looking at over a 40-point range today, and I'm going to guess the expected move for the day was probably only about 30.
No, it was about 38, 39.
Okay.
And the reason I know this is because I listened to Chris Vecchio, and he was saying the implied volatility was up yesterday with the market up because the CPI number this morning. That's what they were thinking. Everything was going to kind of keep its wings up because of the CPI number.
So we had a little bit more of an expected move. Well, we've hit, over that 40-point move for the day already today.
Yes, we have.
So we'll see what the rest of the day brings. Are we going to get continued downward momentum? We'll see.
I don't know. I mean, we'll see. Let's take a look where VIX is while we're in here. So VIX is, look at this. VIX, the market is now down and VIX is down. I mean,
well, again, maybe a little boost in vol because of the number coming out today. Can you go to TLT because I don't want to miss our opportunity.
Because it's dynamite?
Because
say it.
TLT.
It's dynamite.
She's singing today. She's singing. I pulled up some old pictures and it really got her in the mood to sing.
Man, I wish I was that blonde still.
Okay, so I didn't get into the bonds yet. I know we have a little ZB position, but we add to it with we can add to it with TLT if we want to. If you take a look at the move, today's move, the bar go to TLT.
Let's take a look at TLT. We're going to jump in. Okay. Here's the bar in TLT. That's a big bar. This bar right here. I know it doesn't look like
I know on the big screen it doesn't look like it, but on my computer right in front of me with my magnifiers on, it looks like
it's a big bar. It's a big bar. So, but TLT's back down. Now, granted,
but you see from the morning to today, from the open to today, if you look, the 80 is almost 86, and now we're trading 85. So, dollar move in TLT is pretty big.
It is big.
Yeah.
So let's take a look at TLT. Do you want to pop in? Now we do have a ZB. Hold on, I'm going to address our ZB first. We've got a 112, 111 put spread.
Baby put spread.
We did it 8 days ago. It's a $10 wide. We got $3 for it.
Yeah, baby. If we're looking for a quick boost, let's put on. We usually do Zebra in TLT.
I love it.
Do you want to explain to the viewers what a Zebra is for any newer viewer out there?
Well, I would love to, Jenny Andrews. A Zebra is a zero extrinsic back ratio spread where we wash extrinsic value, thus replicating stock.
So we'll replicate 100 shares of stock in TLT for a fraction of the cost. If I bought 100 shares of TLT, that's going to use about $4,000. How do I put on 100 shares of TLT for a few $100s?
So we'll go through that whole process. I just hit buying it. You go down here, it says $4,500, or I'm sorry, $4,254. That's how you would control 100 shares of stock. The zebra, I'm going to go to the
And
August.
that's on margin. That's if you're on margin. Buying stock on margin, use 50% of the notional value.
If you are not on margin, if you're in an IRA and you want to buy bonds, it's $8,507.
And that's just for TLT, for 100 shares of TLT.
Yeah. Okay, so I went to the August 15th.
Yeah. 31 days to go.
31 days. You're going to sell 150 Delta call, which is the just in the money call, and buy 2 70 Delta calls. I'm going to 71.
This is going to be cheap.
It's going to be cheap. $4. So for the grand total of $4.07, you can control 100 shares.
Do you remember that old joke? Like, what do the birds say when they fly over Kmart?
Oh!
Cheap. I don't know why I remember that joke.
I don't think it's a joke. I think that's a commercial, isn't it?
Maybe. Maybe. Do you remember the blue light special?
I do.
Growing up, we had a Kmart right next to our high school. So if you had any free time, you just walked to Kmart.
You did have one next to your high school. Pitt, Godspeed to the workers at that high school. But here, we're going to put this in. So we're going to buy, I'm buying 2 83 calls, selling 1 85 call, washing extrinsic value. And you can see that here.
It's going to replicate 100 shares of stock. Go to the curve view, show everyone the image. We've got defined risk of $406. And actually, not bad, because we only have $406 of risk in the trade compared to our ZB put spread, where we have like $700 in risk to make $300. Here we have $400 in risk to make unlimited
profit potential. We kid because you have 31 days wherever TLT goes. If TLT goes up to 100, you've made $15.
Yes.
So I'm going to ship this, but this is what a zebra looks like.
I know.
And I'm putting a pin in this for Jenny, not for anybody else. This is one of the reasons why we trade options.
Yeah, because I could put on a trade that would normally cost $4,000 in a margin account,
Or
and
if
I
you're
could
in
put
an IRA,
it on for $400.
$8,000 in an IRA. I use zebras a lot in my IRA.
How did you become so smart, Liz?
I don't know, Jenny. I don't know.
Push that button.
I'm actually going to pay for it. $409 for it.
All right, so we're gonna. This is good. I think 85 is a good level to get into.
I do too.
But again, with numbers like this, with TLT at 85 and bonds back down, I don't think they're lowering interest rates.
I know, I don't think so either. I just want to pop out the side real quick, and I'm going to do
Which, are you in the market for anything? Would it matter to you if they lowered interest rates? Are you looking to buy anything?
I am. I need a new house. Thank you for asking. I am.
Oh yeah, that's right. She sold her Florida house.
Yes, I did.
Now where are you
I've got 1 year for lower. I've got 1 year for lower interest rates and a new house.
So she sold. I'm sorry, John from the Villages. Liz sold her house near Orlando, so she won't be visiting anytime soon.
No, it was more Alan Miller. I was going to go golfing with him in Reunion.
Oh, Alan, I'm sorry, you're not going to go golfing either. She sold her house. You're looking for a new one.
I'm looking for a new one. So I need lower interest rates.
I hear things are getting cheap out in Punta Gorda. Or Cape Coral. Cape Coral, that's where my neighbors are, and I heard real estate's getting cheap down in Cape Coral.
I think you're right. Okay, I do want to look at this. If you want to pop in the platform real quick, thank you very much for that. Yesterday, I want to show this. I will push it through. We usually don't do this. This is our closing order on the SPX we did yesterday. We put on that call spread.
We didn't even push out the opening order.
Okay, well, I'm
not even going to push that out to the
Okay, fine. They're both out there. But so we did close. I just wanted to show, we put that on in a risky maneuver at the end of our show. At 10:48, we bought a call spread, and at 11:55, it closed for $50. So,
all right,
just a little FYI.
So once we have an actual new trade for today, once we have filled in TLT and you push that out to the follow page,
I'm paying $413.
I'll get that out, and so that way our viewers can.
$412.
Hold on, I'm going to show you, but give me a minute. Give me a minute to get logged in and push this out to the follow page.
Okay, so I've got. I'll let Jenny do her job. So we've got TLT in there, and those are the SPX trades from yesterday.
Okay, so if you go to the follow page, if you can follow anybody on the network, right? You've got all these people down on the bottom. Love to see.
You didn't do the SPX trades.
No, because I said we never pushed the first one out yesterday.
True. I pushed them both out.
So why? No,
I just pushed them both out.
I know, but I didn't push them out. I'm just
Okay.
going to ignore them.
Fine, she's going to ignore it. She's not doing her job.
No, I'm not. I push out a trade to the follow page that no one can do. It's over. It expired.
No, but somebody asked us to do them after the fact.
They did?
Yes. Live on air, they said it would be very, very beneficial if we could see what you did and how. I think they want to see how many we win.
Now, go onto the follow page and
I'm on it.
click on, so refresh it because I pushed out the SPX. So typically on the follow page, you can click on a trade. Like you can click on the TLT trade and replicate it, right?
Yeah.
You can click on it and replicate it, like duplicate this trade. SPX, it's over. They're gone.
No, but somebody did ask us to push them out, even if we're not filled during the day, so they can keep a tally of how many we win and how many we lose. And I said we will. So the ones that don't get pushed out are
But usually
full losses. And I think that's what their point was. So if they don't push it out, it was a full loss.
But they're not necessarily full losses because it depends on where it expires.
Depends on where it expires.
So that's a hard thing to track, especially because the order change doesn't take into account
if it's exercise
and assignment at the end of the day. So that's tricky.
Then it
I'm
doesn't.
sorry that we're drinking, but it's hot today.
It's 100 degrees down here.
We usually complain about our tasty studios. It's hot here today.
We thought about doing it without our jackets on, and we thought the natives would get very angry because they have to put their jackets on when we're live. So
I
we
know.
said, that's not fair. We have to do it. They have to. If they have to do it, we have to
wear
do it.
jackets. We have to wear jackets.
So my question to you, Jenny, is we are down $2 right now. What do you think about a Jajun?
Down $2 on what?
Spoos.
Oh. The Jajun won yesterday, but what do I
just want to do a less aggressive. No, I don't want to risk that much. Never mind.
Yeah, I don't.
Here, I'm actually getting a little extrinsic value here.
Do whatever you want to do.
So I'm buying one for $7.80 and I'm selling one for $8.40.
She's back for the Jajun.
We're getting a little bit of extrinsic value. I'm shipping it.
She's back to the Jajun.
Filled.
I'll get that pushed out right away, Liz.
She's going to get right on that one. Okay,
all right.
so that's out.
So the Jajun is just buying a $5 wide wrapped around. We did it for a while. We kind of stopped. We found that what we were making was not much different than what we were paying in fees. We had small profits, but I don't know. We stopped doing it for a while. To me, I really don't do that trade much anymore.
I don't mind it. It's in.
Unless, like yesterday, we saw those call buyers coming in, so we put it on because, the market did rally. Spoos were up 3, we put that on. Market rallied up to spoos up maybe 20.
And then at the end, it came right back down to only
They
up
were
5.
like up 8, I think, at the end of the day.
Yeah.
But we did, so we put that on because we saw a lot of call buyers and we thought maybe someone knew something that we didn't know and the market might be going up.
And the market does. So this is based on an old research study saying that there's more 5-minute up bars than there are 5-minute down bars when our show starts. Okay, I just wanted to show right now we do have this problem child, but there's nothing we can do about it. The upside broken wing butterfly. We've got 3 days left.
Well, we need the market
SPX.
down.
We need the market down.
We need the market down for that. How far through it is it?
It's pretty far through it. So here, we have the 6180, 6190, 6205. It's out of the way of the expected move for the cycle.
That's far.
Yeah. Yeah, we need a crash for that to come in.
80, 90, $10. I'm just doing some math. 80, 90, $10 wide, 2,000. So it's only broken by 5. So we didn't risk much. We only risked like $400 on this trade, or
No, we didn't risk
$5
much.
minus our credit. What's our credit?
I'm trying to find it here.
You can.
Here we go. It's 80 cents.
So $5 minus 80 cents. Our risk is 420.
420.
Not great.
This is what
Not
it is.
great.
Okay, but just addressing. I mean, we address the good, the bad, and the ugly on the show, and that's an ugly and a bad. So,
And when we put it on, when we put that upside broken butterfly on in SPX,
6190 was the expected move.
It was. We thought, we were beyond the expected move. That trade was beyond the expected move.
Our break even was. I think we put the shorts at the expected. Close enough.
It was far. It was far.
I mean, when you
and
got
at the time-
when you have $5 wide in SPX, it doesn't.
So look at this, Liz. We put that trade on 25 days ago. So 15 minus 25 days, we're looking at June 20th. Where were spoos on June 20th?
June 20th, right there.
Where
spoos were $59.99.
$59.99 on June 20th. And now we're $62.65.
All-time highs.
And do you see how, like, when we put it on, and it was, our break even was way above all-time highs, we were like, we're not getting back here.
Yeah, right.
Blew through it. Blew right through it.
Okay. So that being
All
said,
right.
now today is a Tuesday. We've got our option jives recap from Kai. We love it. Thank you very much, Kai. We want to go through that because I think it's important information.
I think
we
so.
also are taking live tweets, but the hashtag LIZJNY on the Twitter, and we will assess it live. I mean, I'm in the platform today, so I can't see the chat. But if Frank the Great, who is our man in the six, who's also his nephew's running around, if he sees anything amazing, maybe he'll tweet it for us.
Share it with us on Twitter. We had a couple earnings trades yesterday. Put on a bullish trade in Albertsons, and we put on a very neutral trade in JP Morgan. JP Morgan.
Look at that. They wash each other.
JP Morgan didn't really move. Where is our calendar?
The calendar is exactly where it is right now. We made 67% in the calendar.
Yeah, so we paid 70 cents. It's worth $1.20, so we made $50 on that calendar. JP Morgan didn't really move. I want to see how much the Iron Fly would have made. Because the Iron Fly, what was our strike? Because it was right in the center.
287.
287, and we were looking at a $15 wide Iron Fly. So 5, 7, right? We were looking at a $15 wide.
No. Oh, maybe. Yes. We were collecting $8 on a $15 wide.
87, 77. Okay, so the $15 wide, yes, it was like collecting $750, risking $750.
Yeah.
87 is worth $583. So
it would have made $300.
It would have made $200.
But you're risking more. We risked a very little amount. So if you want to, I do believe Iron Flies and calendars have that relationship if the risk is the same. Like if we would have
risked as many calendars to make, if this trade was risking $700 and we paid 70 cents for that calendar, if we would have done 10 of those calendars, we would have made $500 on that.
We actually paid $117. No. I'm sorry. We sold 70 cents. Yeah.
70 cents. So if we wanted to risk $700 and we did 10 of those calendars, that would have made $500. One of these risked $700 would have made maybe $250. Yeah. Because it was $750 and now it's almost $6, so it's less than $200.
Yeah.
So you can see how calendars, Iron Flies, they are very similar.
They have
butterflies.
very
similar.
If you want what happens, they will all make money, and that's why if it's too much, like if $800 in risk is too much, do the calendar to your risk parameters.
Right. Okay, so that was JP Morgan and Albertsons. That was the one that the
expected
ACI. We're actually
out $44.
The expected move was 70 cents. The options were so cheap. We said we're just going to buy one instead of selling anything, and we picked. We had to pick a direction.
We chose wrong.
Yeah, because it's down $1.20 on, and it's down almost double its expected move.
But I'm gonna. Oh, look at that.
Look at what?
The markets. No bid at 20 cents.
Oh yeah, that's just unless there's some miracle in Albertsons. That's dead in the water.
Yeah. So I mean, we're gonna lose an additional dime, but I'm leaving that one. Okay. So that's all of our earnings trades from yesterday.
Do you want to pop in Twitter and see what we have today?
I do want to take a look at SMR real quick, Jenny. Are you in our account? You can take a look at it. Go to SMR. So it is an iron condor.
No. We bought a call spread. It's bullish. We sold a put spread to. Oh, it's all puts.
It's all puts. So I'm gonna.
Oh wait. Well, is this like a buffer trade?
This is the buffer.
I think it's a buffer.
So it's a buffer where we bought something, and so we made money. We're actually right where we were.
I know. Can you go to the curve view, the analysis, and take a look? There we
exactly,
go. Yes,
so,
this is was the buffer trade.
So we had money. You can make money all the way to the upside. It's slightly in the money right now. I'm going to close this because we've got 30 days left.
I know. We're almost out of time. We've been in this trade for 20 days.
No, this doesn't matter. Like with butterflies, you have to wait till the end. The buffer trade, you don't. If it would have went up earlier than this, we would have made money earlier.
Okay, so you can close this. We have another buffer trade in OKLO. That was a buffer trade, and that we've seen, go up and down. We could take a look at that one as well. So we're running out of time with the SMR. I would say take it off. I don't know.
And then let's take a look at OKLO.
Now, OKLO, we have a buffer trade.
It's exactly where it was when we put it on.
No, because you can see we're up $125. So
in the SMR, too, it was real wide markets. It was saying we were up money and we weren't. So I'm going to take a look at OKLO. I don't think OKLO's wide markets.
No, I think that if you look at SMR, if you look where it's trading and where our profit starts, I believe that we really are probably up $90 in there.
It does
says
look like
106.
Hold on, let me just show you the markets. So if I go into SMR and hit close trade, The market's, oh, now it's tighter. Okay, we might be up that much.
We paid,
but it's 240 at 310. So I'm gonna get out for
we collected 385. If we could get out for
285,
even 275, we'll make $90.
You got to pay more.
Try
I'm buying
275.
No, I'm paying 285.
Oh, I see.
I'm gonna go 290.
So if we pay 295, we'll make $90 on it.
There we go, 289.
Yeah, so we made about $100.
Okay, so SMR we're out of. Now here's our buffer trade in OKLO, which I also have up. So I'm going to go to OKLO, open it back up, and we'll go to the curve page.
So yesterday.
So here, I'm going to go back this way. This is exactly where it was.
It's like a little bit higher, when that's why it's probably $1 higher, and we're up $125.
If you take a look at the trade page in OKLO, let me show you. There's
you can see when we start this trade.
It's almost exactly where it is. Maybe we bought one in the money.
When we start it, the put is slightly in the money. So when we start the trade, when we start the buffer trade, the put's slightly in the money. And
we should have looked at this yesterday.
No, I know. I told you, Oklo was up so much yesterday.
But
Where
this
were
wasn't.
we yesterday? This was up $200 yesterday, but
Wow.
not during our show.
Oh.
Not during our show. Do you see the bounce up? That happened later in the day. If you see that move up, that happened later in the day.
Okay,
yesterday.
so it wasn't during our show. Because
So
I was like, this would have been able to
show,
come off yesterday.
But if you want to take it off for $125 today, you can.
It's just down today, and it's a bullish trade. Like we were up another $100 yesterday. Can we adjust anything?
No, with the buffer, I don't think so.
I was going to say you can't even pull up your put that you bought.
But we still made $130 on the trade. If you want to take it off, we can take it off.
But
We've been in it for 21 days.
But I don't mind being long Oklo.
Okay.
So wouldn't we put something bullish back on in it?
Yeah, then just leave it.
These are famous last words, though.
We've seen.
Well, you know what? I'm going to close this because you and I can look at it with a fresh set of eyes tomorrow. We're going to get back $1,600.
Yeah. So. That's fine. I know because yesterday's move up kind of saved this position.
Yeah.
Because it was a loser until we had that big jump yesterday afternoon.
Okay.
Okay.
Let me go to all symbols. Today. I don't think I pushed out SMR either.
And I'm going to make sure everything gets sent to the follow page. But these are all just closing orders. So.
Yes. Okay, so we closed, and kind of going through this, we closed OKLO, we closed SMR, we closed JP Morgan, we left ACI.
There's nothing
too wide
left
markets.
Yeah, there's no bid. We have one long option and there's no bid, so we'll leave that.
Okay.
All right. Do you want to pop into Twitter or do you want to start the option jive?
Well, let's see what time it is.
10:22.
Let's pop into Twitter, and we'll come back to Twitter too. So I'm going to go top down. I see you, Eric, but I'm going to go top down real quick. There we go, Eric. Happy Taco Tuesday. IVR up again to 13.3. I put on 2 6-lot tranches. Both are 50 points wide between the shorts with $25 wings at the 16 to 19 delta. GTCs are set at 40% collecting 55.20 in premium. Already swung the upper on that dip with a stacked 4-lot for 1 credit. 1 credit. I don't know what that means.
Thank you.
Eric, I like it.
Yeah, Eric's been busy. Eric's been busy.
You know what? That's top. I want to go latest. Sorry.
I was going to say, we have a lot of tweets. There are a lot of tweets.
Yeah, we do.
So now you're going top down?
Top down.
Okay.
Well, I went to latest before.
Oh.
So I'm sorry, I was on top before.
I see.
Yeah, that's why Eric was first.
Okay, so Punished Pixels. Look at this. NG for the win. Love trading it. So Liz loves trading NG as well.
Love it.
Maybe we should take a look at it right now.
So I actually jumped back into NG again this morning. So it's been, here, let me take a look at it. So NG, and I don't know, we can't, it's too big for
now,
this
Punished
account.
Pixels, I see your profits and, NGU, NGQ, NGN, NGM, like all the different cycles, but I don't know what your strategy is. I don't know what his strategy is.
I don't either. I mean, I can show you mine. So if you take a look at natural gas, so what's happened in natural gas, Jenny, is it's back down to a level where I think it makes sense to jump back in. I looked at it this morning. It's so funny because it's got a 54 rank. So I just did my go-to move where I will buy 1, sell 2.
All right.
I bought 1 305, sold 2 3s.
Are you in the 13-day or 42-day?
42-day.
42-day.
And then my go-to move, you see how you're getting $64 for it, is as soon as I get filled on that, I will go in and immediately put a GTC in to take maybe $100 out of it and buy the 295.
Are you surprised that for natural gas being as big as it is, it only uses $1,700 in buying power for this trade?
Yes and no, because it can. grow teeth.
That's why I asked, are you surprised that it only uses $1,700 in buying power?
Look how far away you are.
Because it could end up using a lot of buying power.
A lot of buying power. And it does move.
Right. So what's, just to give you a gauge of risk in the trade, if someone thought like, oh, it's $1,700 in buying power, that's not much. Go to an at the money put. What's the buying power?
I just did. It's $3,500.
$3,500
plus the loss. So that's what I think people fail to realize is, and we're putting a warning on this. Natural gas is a big product, because if it becomes the at the monies, it's now holding up $3,400 and the loss if it was from 3.5 to 3.
So we don't want to naked position in natural gas in this account. But let's put in similar to the broke wing butterfly, but buy something. We'll have to just buy a wing to have defined risk on this trade.
I mean, and you could just do the put spread. So I just went down to my break even, sold the 3, bought the 295. You're collecting 110. Your max loss is 390.
That's
it's a
not
$5
bad.
wide. It's not bad.
That's not bad. For us, for a smaller size account, sure.
It's not bad. It's the 43 day. You can look at the 13 day if you want to, but I don't want to play with it in this account.
But I like that you gave the example of what you are doing too, because we've talked about, we threatened to like change accounts so we could do more. We've talked about changing accounts and using one of our own just so we could do more, because I hate having the handcuffs of like, oh, this is such a small account, we can't take the risk.
Now, only because I play devil's advocate too, it is nice to have a small account because you're forced to trade differently. And a lot of more people have smaller accounts than have larger accounts.
I guess so. I don't know.
The average account size is $35,000.
Okay.
Which is, we're just average. I'm just kidding. But I'm going to ship this. I actually want to collect.
So collect max profit 110, max loss 390.
Yeah. And we'll see if we can get filled on that. We're going to let that work. So that's a natural gas, and I appreciate that. Punished Pixels, love it. Okay.
I do like it. I'm glad that you posted this.
Jenny posted this.
TBT, Throwback Tuesday. Throwback Tuesday.
This is, I'm sure Steve and Matthew are confused. This is from our original intro.
They made
It was a 3-minute long intro where we had 4 outfit changes.
I mean, this is God's honest truth. I was living at home for 8 years, raising my kids, had a garden, baked cookies every day, was like Susie Homemaker. Then I get to Tasty, and they're like, put on this rap outfit and like pretend you're a rapper.
Yeah,
no one can see my hands in this small
This is a
shot.
true story. That's why I'm standing in front of her.
It's like, what the heck?
It was so funny. But yes, those were the good old days, Jenny.
And I thought Liz was going to beat me up in the next scene. Because I'm pretty sure you tied a red bandana around your head.
I did. I look like Axl Rose in the next scene.
Yes.
One day that footage will come back up. But here we go. Now, Bob on Fire today. So we've got a handful of earnings again today.
ASML, Bank of America, Goldman Sachs, Procter & Gamble, Johnson & Johnson, Morgan Stanley, PNC. Do any of those names sound hot to you, Liz, to trade today?
No.
Maybe.
You know what you get a gold star for? You were reading them as full names using the acronyms. So good job.
Well, you know, I started on the trading floor in 1997. So if I can't figure this out by now, I've got problems.
But isn't it funny that you can literally, like, PGR is Procter & Gamble.
Tell me what you would tell your son. My son's complaining. He's got a chemistry test. He has to know the whole periodic table, like every symbol and what it is.
Know the periodic table.
Yeah, so it's kind of like same thing as reading these stock symbols and knowing the stock. And I said, just, take a picture of it and paste it. Like, stick it to your mirror, stick it to your computer, stick it to your dashboard. And then if you're always looking at it, it'll just seep in.
It'll just seep in. Now, my son's totally different because he's an audio learner, so he reads it out loud to himself, records it, and then listens to it, and then he'll absorb it.
Okay.
Like, he'd be like, H-E, or H is helium, right? H, helium, H, helium. Like, he'll read it all, and then he'll listen to it.
He was trying to quiz me in the car. I had about a 20% success rate.
I think I'd have less than that at this juncture.
I don't remember.
At one point, I can absorb the information, take the test, and then it goes out.
Yeah.
Well, we've been doing this for
a long time.
30 plus years each.
97, we're in 2025.
That's what I said, 30 plus years each-ish. Almost.
We'll be 2027 will be our 30-year anniversary of coming down on the trading floor.
Yeah. Was it 97 when I was at the Board of Trade?
Yeah.
No. That's when you graduated.
No. 97, you were at the Board of Trade, I was at the Options Exchange, and then we graduated May of 98.
I graduated that December. That's why I was thinking
December
it was
97.
Yeah. Okay. Yeah. Okay, Jack
All right,
Tucker
so
comes in.
on that list, I might look at.
You love Bank of America.
No, I was going to say, I might look at Procter & Gamble and Johnson & Johnson.
Okay,
and I won't trade Bank of America until it gets back down to $6. Because when it was $6, I didn't want it. Where's Bank of America now?
Are we saying PGR is Procter & Gamble?
Yeah.
It's Progressive.
See?
And I was
you were
giving
just
you a gold
praising
star.
me on how I knew them all. Bank of America, when it was $6, no one wanted it. Where is it now?
$46.57.
When it gets back down to $6, call me. What?
Spoons are up too. How's our Jajun?
Check the Jajun. I think we need more than up 2. It was unchanged when we put it on.
We are 5 cents away.
No way.
Yeah.
Are you sure?
Yeah. 315, 320, 320. Come on. Come on, Jajun.
Jajun. I hope he's watching.
I hope he is too.
Jajun.
We love Jajun.
We love Jajun. Okay, so Progressive.
Okay,
Progressive.
Now I'm just staring at the Jajun trade. We need a couple more pennies. If it pops up to up 5, we'll be out.
Take a look at Progressive.
PGR. Gold star.
How many gold stars, Liz?
I'm going to pull 1 star away from you for me thinking it's it. PGR's 2. Close it.
Oh, that's it?
Yeah, close it.
Okay, then go to J&J.
Jajun!
It hit. It hit. That was,
let's see how long.
That was a quick $50.
So Jajun was on at 10:20, off at 10:31.
11 minutes. 11 minutes. Good.
$50, 11 minutes.
Jajun, maybe we're going to bring it back.
Okay.
Okay, let's push that out. I'll get this
That sudden movement made me lightheaded.
She almost fell off her chair.
Holding on. Okay, so
you've got a new drink. I picked the drink today, strawberry lemongrass. What do you think?
I believe she uncaffeinated it.
What do you think of the strawberry lemongrass?
I like it. It's pretty good.
I like this one.
Okay, we're in Johnson & Johnson.
Did you get that pushed out?
I did. So we're in Johnson & Johnson. 30 IVR, $155 product. Let's take a walk down memory lane, see where it is. Mid-range, if you were going to ask me. I think
J&J
is about mid-range.
Oh, yeah. Johnson & Johnson.
There's not a whole heap of premium.
Maybe we do another calendar.
That's what I was thinking. So 3-day, 10-day.
Do what we did in JP Morgan. 155, 50 cents. 50 cents. You want to do
1.
No.
2.
Fine, 2.
The problem here is when you look at this, the only reason I'm saying 2 is because if you're going to look at the Iron Condor, you're getting nothing.
You're getting nothing.
So if we are going to compare apples to apples, the Iron Condor or the Iron Fly, to that, you'd only be doing 2 anyway.
So if I did the Iron Fly, I would do the 155,
50-60. And it's $291.
Yes, $291. So you're risking $200. You're risking $200.
I would actually do, if we wanted to, I would move it to the $57.60, $52.50 for $1. You're risking $1.50.
So you're just selling the
Iron Condor, not the Iron Fly.
Yeah, we're not.
That's what I'm saying. When I looked at that,
just close it up.
I know.
Close it up.
That's why it's real hard for us in the beginning of earnings because they're not that exciting.
They're not that exciting. Not yet.
And Jajun. Okay, so I'm getting very excited here. The Jajun trade hit when we were up 4. We're back down 1. So the GTC for the win.
Oh yeah.
Yeah.
And Liz, I don't want to get Frank upset. It's not a GTC. It's just a closing order.
I know, but I put it in as a GTC, Frank, and I apologize in advance. But when you press that button, it not auto corrects. What's it called?
Frank's nephew is right here.
Oh, he wants to be on
I'm pretty
so
sure
bad.
Frank heard that you put on a GTC.
And I think I might have to go
he texted Jeff and was like, get over there.
I might have to go to SIBO jail. Is there a SIBO jail?
Jeff, can you walk behind us and wave?
Jeff, is there a SIBO jail?
Here he goes. He won't do it. He won't do it.
He knows exactly where the cameras are.
He's too camera shy.
He's like, what are those movies where you're stealth and you know where the cameras are and you know how to maneuver around them?
Oh, ask my son.
Yeah.
He's a pro.
Maneuvering around. Oh, he is.
He's a pro. Slipping out his window, scaling the house, avoiding the cameras.
Jenny thought someone broke in.
Yes. Like, I thought someone broke in. The window was off.
And you saw, like, footprints.
Window was off. The window well. There were lots of problems. Lots of evidence that someone broke in. So I went downstairs and I said, you're not going to believe it. Someone broke in our house. I'm calling the police. And he's like, don't call the police, Mom. Yeah, found him at the neighbor's. He snuck out to the neighbor's house.
Yep. Avoided all cameras.
Avoided all cameras.
I'm sure I'm going to find him.
Scaled the bricks.
Yeah, that's what he's like, Jeff.
Or scaled the Hardy board.
Jeff's dodging the camera.
Okay, we better get to the option jive.
Okay.
All right.
Okay. All right. Here we go. The
Option Jive Research Corner.
Option Jive Research Corner. We're very excited for it.
Too bad we're not on full screen now. We just had the famous ALO.
Well, you can see us out of the...
He's going to be on tomorrow.
Yeah, he's going to come on tomorrow. He's got some good stories for us. Okay, Research Corner. Weekly summary. Equity markets quieter than expected. Very quiet yesterday.
Yes. Copper futures surged 13% on Trump's 50% tariff announcement. We remember that. We looked at it. We saw copper was surging.
And then NVIDIA hits $4 trillion market cap milestone. And that was, keep in mind, last week.
And it's still up.
And the NVIDIA news that came out today.
Yep, hop into the NVIDIA chart.
So here, let me show you this. So, I'm going to butcher the news, but Jensen and Trump have reached an agreement, and he can now sell his chips in China.
Okay, let's take a look at that chart. NVIDIA had a big jump. Yeah,
there it
and
is.
Another jump today.
There it is. Well, it was down yesterday, up today. But yeah, so jump. So now it's a $4 trillion plus company.
Right. So our friend whose birthday it is today, Mandy, called me. Her daughter's in college. She's got like 3 college kids. And she's like, the kids told me NVIDIA's going to be making robots, and we're not going to be able to tell if they're humans or not. I was like, I don't know, Mandy. But
I don't know what to say. Just like when you said that to me, I don't know how to comment.
I don't know. But NVIDIA stock is up. That's all I said.
We don't know about that, but NVIDIA is up $7
maybe
today.
that's why the stock is up today.
Okay, so the week ahead in highlights. CPI, that was today. So that was this morning at 7 o'clock our time. 7:30 our time.
Was it that time?
It was 7:30.
7:30. Or 8 o'clock.
No, it was 7:30. Because I didn't leave my house yet.
I was in the shower.
You were not in the shower.
Yes, I was. I got out of the shower. Did you
drive in a towel to the train station?
I have to leave my house at 7:55. I got out of the shower at 7:35. All I know is when the number came out and I was listening to Tom, Tony, and Vanetta, I was in the shower. So 7:30 tracks.
You really need to change your schedule around. That's why you didn't call me this morning. I was telling my husband, I was like, I think she slept in.
No, because... So my
then
son
you leisurely drove listening to an audiobook?
No, my son leaves for school at 7:15, so I stay down with him. I made him cinnamon rolls and eggs and all this like huge breakfast down with him in the kitchen, and as soon as he leaves, I run up and get in the shower.
Nonetheless, CPI was today.
I couldn't get in before because I was cooking everything.
It was at 7:30. Then Jenny drove to the train station in a towel and changed in
to make him in the car.
Put your makeup in the car. Okay, so that was today. Tomorrow is PPI.
And then we talk about the banking sector earnings. Now, if you want to, we can see what all the banks did today and trade the banks for tomorrow similarly because, whoa.
Ooh.
Let's try to see what kind of order that is.
So that's one of the biggest brokers. He's got a guy who comes in once a month. Remember, that's our buddy Keith. And so that's Tom's old clerk. And he comes in. He's got a big guy that comes in once a month.
Once a month.
A lot of rolls.
Well, let's see what they are. I'll see. I don't know how quickly
it's going to take a second, but
it'll take a minute, and then they'll.
KSI is his acronym.
No,
so that was the most excitement we've seen in a long time.
So this is when we need someone to come over and tell us, like, what was that order?
We'll be able to see in a second as soon as KSI goes up.
Now, we did talk to someone earlier, and they said big orders that they saw were a lot of put buyers, cheap put buyers out in August, cheap put buyers out in October. Those are the orders that were coming in that this morning when we got here, some of the guys were telling us about.
I'm not seeing KSI. Is that still his acronym?
Well, what's trading? Call July 15, 6,375 calls.
It's all ARL to ARL.
September 6,300 calls. Well, they might not even be entered yet. They're putting the names on the tickets, then they'll enter the order. It might be a while before we see the orders go up.
All I know is I want to know.
J-Lo just got on the ticket.
Did he?
Because I would have taken that badge.
J-Lo? I want woo-woo. There's somebody who's W-O-O. If I could change that again, I would go to woo-woo.
Woo woo. But that's too long.
It's WOO. Well, no, it was woo to woo.
Woo to.
I was like, woo woo.
All right. We'll let you know. We'll keep an eye on it.
We'll keep an eye on it.
We'll
Okay.
keep an eye on it.
Then here we've got the weekly performance. And so here, I like having the week before and the week after. Last week, everything was down a little bit.
Right. I was gone. The week I was gone, well, I was kind of here.
But it wasn't down a lot.
That's
I mean, when I look at that, that's relatively unched.
I feel like that's our first down week in a while.
It has been our first down week in a while. But it looks relatively unched.
The SEP 6300 calls. That's what I keep seeing. So the guys in the crowd are selling the SEP 6300 calls. Someone's buying the SEP 6300 calls.
It's woo woo.
Yeah, 1,000. SEP 6300 calls. Jan 5800 puts.
I don't see KSI on there yet, though. That's the problem. But that's okay. So it's
KSI. He's on the 60-50 October 60-50 puts.
Do you know what's funny? I think you have a different. Oh, there you go.
October 60-50 puts. I don't know. October 60-50 puts. Let's take a look. We heard yesterday people were buying a lot of cheap puts. October 60-50 puts. Let's see what those look like.
There are a lot of rolls, right?
Well, no, I don't.
October 60. Usually when that person comes in, it's a big roll.
October
60-50 puts. There's only, now let's keep an eye on this because there's only 190
There are
in
30
open
delta.
interest.
They're not the cheap puts that were being bought.
No, but there's only 190 in open interest.
Okay, so we'll look at it tomorrow.
So put a pin in that and we'll take a look at it tomorrow.
Here, and then, October 60-50 puts, more sold. So these guys are selling them. Someone else is buying them. And 62.50 puts. It almost looks like a put spread. 62.50, 60.
Those are the at the monies. The 62.50s are the at the monies, and there's only 140 in open interest. So we'll keep an eye on both of those tomorrow.
It is kind of fun to see the big orders come in and see what the public is doing.
That's the most excitement we've had in a long time.
It really was. Okay. All right. Back to the index weekly performance.
So the weekly performance, the expected move as of, and I'm glad you brought this up because remember this was the week of 7/7 was 4th of July week.
No. The week of 6/30 was 4th of July week because 4th of July was at the end of the week.
Okay, because I was like, this is higher than this. Now we're getting a lower expected move. So we're, you can see that volatility in the expected move is declining as we have been seeing. But the VIX is higher than it was.
Well, we had a few numbers. Like we had some numbers today.
So aren't you confused by that? Because the VIX is the VIX is higher than it was. So the expected move is higher. I'm sorry, I was reading it backwards.
Okay, so week of 7/14. That's this week. VIX 1640. Today we saw it in 17 handle.
17 handle. And it was up yesterday when the market was up.
Right.
Okay, so let's go to the next slide. So this is major assets IVR, and so this week we've got some asset IVR. Last week, we had asset IVR bouncing up a little bit. You've got bonds a little bit up, gold a little bit up, natural gas up, and Bitcoin up.
So looking at this, with bonds being down and IVR up, if I'm in anything, it's short puts in bonds.
Yeah, but I think the world is long bonds right now, don't you?
Not really.
I think let me change.
No,
the tasty world.
Yes, yes. So the tasty.
Let me rephrase.
The tasty world, they're probably short puts in bonds. The world, not necessarily. Like even these guys, if they walk by and I ask them, "Are you short puts in bonds right now?"
No.
I think I'd get 10%.
I just had a flashback because when the kids were small, I would be like, "Hey, can you clean your room?" And then I'd be like, "Hold on, let me rephrase. Clean your room," because I would be like, "It has to be a clear directive." That's why I said, "Let me rephrase." Tasty.
I'm like a child. I need
to.
So gold is up. Gold vol is up. Natural gas vol is up, which we just sold a put spread in natural gas.
And Bitcoin vol is up. And I will say, I think that the things that the vol is up, so you've got your bonds, and I think the pendulum can swing in both directions with implied volatility up. Gold, we know, can go in either direction, and the implied volatility will go up.
And
I think the same thing of natural gas and Bitcoin. You can go up or down, and that implied volatility will stay up.
Right. It's not like the market, where the market's up and vol is low.
Yeah.
And so with markets up, all-time highs, vol's low-ish, 16, 17, low-ish. I'm not surprised there are, a lot of little put buyers coming in right now.
No. Well, he was saying the firms are the little put buyers.
Right. No, he was saying the orders that were coming in, the big orders that were coming in were
put buyers.
Were put buyers.
Yeah, because the firms have to buy the puts.
Well,
and then the market makers.
Were selling them.
Yeah.
So I'm not surprised. I mean, I told you against some of my stock positions, I bought some puts against some of my stock positions because they've gone up so much.
Well,
I have.
And that's kind of what we were talking about yesterday, Jenny, in that when the IVR is low, it's easy to spread it off.
It's
Meaning,
easy.
Because it's cheaper to spread it off when you've got a low IVR.
It's cheaper to buy protection. When the market's falling and the vol's going up and the puts are exploding, it's too expensive to buy the protection.
You can't buy the insurance when the house is on fire,
Right.
but
So-
you can load the units up when it's cheap.
Okay. Next slide. Bitcoin. Yes, Bitcoin all-time highs. Peaked up at 119. Did it cross 120?
It
since
crossed
then?
123.
Yeah. Today, I think it's down a little bit.
I think it's 117 today.
Is it down to 117?
It was. Let me look. It was 117 this morning. 116. Yeah, across the 116 mark, which is not that bad. Take a look at where it is. So just 3 days ago, it's back to where it was 2 days ago. Now, my buddy Tim Knight said
what did he say?
He said it's off to the races as long as it stays above 110.
Okay.
It's a bullish pattern. I don't want to put words in his mouth, but he says as long as it stays above 110. And that's the number I've been hearing from everyone. If it hits 110 and stays above 110, it's a, dare I say, a bullish engulfing pattern?
I don't know. But I continue to roll up my puts in IBIT and just keep rolling them up. I have no choice. Like, if you want to stay in it, I chose to keep selling IBIT puts instead of just being long Bitcoin. And if it keeps going up, I have to keep rolling up my puts.
You have to. You gotta stay with it.
I have to.
So that was a big thing. And then copper, this was another one. Copper hits all-time high since 1968, since before we were born.
Am I going to get more? I have so many coins. I have so many jars of coins in my house, I don't even know what to do with them.
Oh, you mean your copper pennies? Is
Yeah.
this is where you're going
Yes.
with?
Can I take them to the coin bank in the grocery store and get paid more for them now?
I don't think they're real copper, unless they're really old.
I don't know. You don't think so?
I don't think so.
Copper pennies are not copper?
I think pennies are pennies. I think they used to be copper.
Well, where should I have so many coins. I need to take them somewhere and get them out of my closet. Jugs. You know those old, the wine that you buy on a Friday night? Those jugs. I've got so many of those full of coins.
You could take them to a humismatist.
Where is a humismatist?
It's somebody who deals in coins. Did you see me? Like I was racking my brain. I think it's a humismatist.
For the name.
Yeah.
Sounds right.
Numismatist.
All right. So we've got copper breaking records.
And
silver. I'm waiting for Ethereum to do this. I'm waiting for Ethereum to break out of its shell.
I, yesterday, had to get in my car immediately following our show. And so I had Ryan Grace was on with Mike and Nick.
Okay, what did they say?
Says Ethereum, he's waiting for Ethereum to have his day in the sun too.
Yeah.
But a rising, he was like, it's rising tide lifts all boats type of.
And don't I know it? Because I had to go under a bridge. We had to sneak under a bridge with my boat. The Amtrak bridge, the swing bridge was closed. And I said, can we try to fit under it? And my son said, depends on the tide, because a rising tide lifts all boats.
And breaking news, Frank Walsh said, it is a numismatist, thank you very much. Wait, Frank's a numismatist.
Frank, do you want all my coins?
Okay, so that being
next
said,
time you're in town, Frank. Next time you're in town.
I have to talk to him about that. But he also said wheat back pennies. The pennies that have the wheat on the back are copper.
Oh,
that's how old they have to be.
Since copper's at all-time highs, I'm going to take him to my local humismatist.
No, your local humismatist is your favorite humismatist, and his name is Frank the Great.
But Frank's not here. I don't know if Frank's in Sheboygan or if he's in Arizona.
You can wait. I'm going to bring my
Copper might not be at all-time highs next time I see Frank.
Might not be. Okay, the gold-silver ratio dropped to 86. So silver's up high, gold-silver ratio has come back down a little bit.
Yeah. So anyone that was playing that short gold, long silver, they were getting paid in the last week.
Yeah. I can't believe I can't even spell numismatist, but I knew how to say it.
Frank wrote it, numismatist, and it starts with an N, not an H.
I kind of tried to slur it because I wasn't sure.
All right, let's wrap this up because we're running out of time.
Okay, biggest S&P movers.
Delta, the airlines. You see the airlines had a big move up. Coin, right, just like the cryptos had to move up. So we've got the airlines and the crypto products. Then, to the downside, we've still
I don't think those were earnings. The downside.
To the downside.
CarMax. FSLR is
still the solar.
Yeah.
And Datadog. Did they have the solars ever had a bump?
I don't think so.
Let's take a look
FSLR.
at
What's a good solar stock?
Because we don't even need to get to the last slide. It just tells us what the earnings are this week, and Bob gives us that.
Okay, so FSLR had a bump a little bit. If you take a look at it, it's at least come off its bottom. FSLR was, 117, and it's now 170. It's off its bottom.
Oh, really?
Yeah.
Okay, yeah, then it has.
So these solar stocks have come back a little bit.
Look at this today.
Yeah.
And Sunrun. We were in Sunrun. What's that looking like?
That's, it's
Oh,
Run,
yeah,
right?
look at that run. Look at Run.
Yeah, look at Run.
Jeez.
Yeah, I mean, it went from 5 to 11.
11,
so they
double.
did have its...
So those solar companies got their little boost.
They did.
All right, with 10 minutes to go, I want to make sure we get to everyone's tweets. Alan's coming in.
Hold on. Oh, yeah, I'll go to Cantigny. Liz, I guess we'll have to play golf up here at Cantigny or somewhere down your way since you sold your house. Still enjoying retirement. Love you both. We could go to Cog Hill. My son works there.
Yeah, she lives right by Cog Hill. I don't know if you heard Tom and Tony talking about Cog Hill this morning.
I didn't.
That Dubs Dread third hole, par 3, Tom got a hole in one.
That's where you guys hole in one?
Yeah.
Oh, I did not know that.
Yeah. So I'll join you too because I picked up golf, Alan.
Yeah.
I'll come too.
Yeah. So we're looking at getting down there. I just didn't like my current house and had to get rid of it because they were going to build an expressway right above it.
Yeah, they were putting an expressway through her backyard.
Yeah, I was like, thank God I got out on that one. But yeah, so we're still looking down there. But I appreciate it, Ellen.
All right. So as far as the banks go today, so take a look at what the banks did. They were all pretty much within their expected move. So on that note, I feel like we could trade the banks and just sell a strangle.
We could. Hold on. I just want to go to JP Morgan again. Because
JP Morgan down $1.
It's down $1. Okay. See, he's back. He's back. I love when Ben gets all fired up.
Yeah, I know. I know.
So, no, here's what I was going to say, too. If you had the news ahead of time, what would you do with it? Because JP Morgan, I was walking the dog this morning when JP Morgan's news came out. Beat. Stock initially went up like 5%. And then by the time I looked at it, by the time I got home from the dog walk, I was
down.
like, what the heck? So they beat everything. Now, Wells Fargo, miss, and they're down just as much. They're down 5%.
Down 450. And where's Citigroup? What did Citigroup move?
I didn't hear what they did. They weren't out during my walk.
Up $3. So all I can see from this is they're all within their expected move. So maybe we should sell a strangle in either Morgan Stanley, Goldman Sachs is expensive.
MS. Let's
PNC.
see. Okay.
Wait, no,
it
just
keeps
MS.
putting an A in. Watch. I'm just going to try
Click
to scroll
on the
down.
top, Morgan Stanley. There we go.
It would enter an A in.
Let's just look for strangle, 50 cents and 50 cents.
So it's going to be expensive because it's a $150 product. So I'm going to go 137 outside the expected move. It's going to be $2,200.
Well, you could spread that off pretty cheaply.
So I'm going to bring it in. We're going to have
You
to.
might not even have to bring it in because you're going to $1. You don't even have to bring it in because you could use like 13 cents and 13 cents. 137, 132, right? And then what? 148, 155. You're getting $1.25 using $500.
That's not bad. I'm going to ship that. So this is saying that's going to stay within its expected move for the cycle. What I do like about this, take a look at this green bar. I'm going to look at it on the analysis page too. If you look at the green bar, it is outside the expected move for the cycle. Both the
right.
Both
and
of them
all
are.
of the banks seem to stay within their expected move.
Yeah, they did.
So
I'm shipping that. We're using $557.
It was wider on the top.
It's okay. Because it went to 55, right?
But then at least we're in something for earnings.
I mean, we're $5 on the top, and what are we on the $7?
No, it's $7 on the top.
I'm sorry, $5 on the bottom, $7 on the
yeah.
top. That's
but
fine.
the top strikes were a little wonky. They like skipped.
It goes to
yeah.
Once it gets higher. So we are in for earnings on that. What else do we have? I want to see if there's anything else we need to manage.
Or anything else we want to get into that we're not in. Right?
Now, do you
we
have
added
any
the
interest
Zebra in TLT.
Do you have any interest in NVIDIA? It's got a 4 rank, which is part of the problem. So that's what we're going to come across now is a lot of ranks are going to be very, very low.
I mean, it's tough with it at all-time highs, and it's actually pulling back a little bit, giving up a little bit gains today.
Yeah,
but
it was up $8. It's only up 7 now.
Trading is so easy for me. Products at the bottom of the range, very hard. Products at the top.
You know.
So, I don't know.
So take a look at NVIDIA, though. $4 trillion company that has gapped up again today. All-time highs.
I won't come in and sell puts in something like that.
No, I wouldn't either. I just didn't know if there's anything. And when you opened up with a 4 rank, I didn't know if an at the money, you know what I mean, an iron fly or something like that, where you're taking advantage of the implied volatility. But this is what you usually see. If the market is up, the implied volatility is down.
What else can we get into? Everything. We've got so many earnings on the horizon, which is okay.
So I'm waiting for earnings, like you all. I want back in, but I want in on earnings. And that's kind of what we're doing by chasing implied volatility, is we're waiting for those earnings trades.
Well,
you know
all
what
those
refuses to have its day in the sun?
Who does?
Intel. It's just always in the same area, which means selling this should be doing better for us. We're up $93, 27%, but it isn't in the money. It's a synthetic covered call. So that is our earnings trade.
I'm curious to see order chains in Intel, because order chains in Intel, all we really do in there is sell puts. So you go to the order chains, go back to the beginning of the year, it adds up. Go back to year. Can you go to year to date? Yeah, year to date. All we do is sell puts in there, and they're never that much. But look, we made up $600 in Intel just from selling baby puts.
Which isn't bad, but you know, all these other things, like, and I know Intel's not in NVIDIA's. I know it's not in its like same. I know they're not competitors, but everything else seems to be going up and up and up and up, and this is just staying right there. But that's good. So it is sneaky, right? So you're up a decent amount in year to date with which are non-sexy puts. A lot of times we'll have 2.
What else is? I guess 10:56. We're almost out of time.
We are out of time.
I would love to add more premium selling positions on. I'll tell you right now, our theta is negative.
What?
Well, we bought that option on Albertsons, and yeah, you can go to the position page and take a look at theta. Try to see where's our theta at the top.
We don't have it.
We don't have it on there.
We have beta weighted delta and days open.
We'll have to add it. But I know a way to trade in some weeklies.
Weeklies. That'll boost your theta really quick. And I think our theta, because we just bought something too. Where's my theta? Where's theta per? There we go.
And so we have nothing in IBIT right now. And I know, so we were talking about
crypto.
It's
down today.
It really had a run this week, but it's down today. So maybe we want to just sell something in IBIT. We got to get our theta positive. Go out to like the 10-day.
What do you think about a jade lizard?
Sure.
So you could even do, I'm going to start with the top side, see if I get enough. I'm getting 22 cents on the 69.70, and I can go to the 64.
And then sell the 64 put.
To the tune of $5,000, $2,500.
That's the problem with IBIT.
So here's what I did. I brought it the 64.5 still, and so I'm using what I got on that call to buy a put. So we're getting 90 cents using 260.
Sure, that'll boost. That'll help. That'll give us $8 a day in theta, boost our theta a little bit. It's interesting though, like everything's at the top of the range, vol's coming in, our theta is almost nothing. I think we have a couple weekly trades that are throwing it off.
They're throwing it off, right?
But
so
we took off more trades today than we put on.
And I'm going to go through everything we did. I just pushed our IBIT through. So today, all symbols today, we put on an IBIT, Jade Lizard-esque. We had to pull it up a little bit. We got in and out of the Jajun trade, a very quick scalp, and I'm glad we did because SPOs are unchanged. Oklo, we closed our buffer trade. SMR, we closed our buffer trade. JP Morgan, we closed a winning calendar. And then TLT, we put on a zebra.
So
it's pretty good.
Yeah, busy day. Yeah. 7 or 8 trades today. 7 or 8 trades, and Punished Pixels does reply on Twitter that he's mostly doing strangles. So I was asking him what he's doing in natural gas, mostly strangles.
Mostly strangles, and that's awesome. So he's got some good gains in there, and I appreciate the follow through on. We asked a question and you answered, so I appreciate that. You're getting a gold star.
All right, I think that's it. I think it's a wrap for the day. Tomorrow we're going to get a study from Jacob, which last week he talked about.
Ooh, he's gonna add on to it. So
right, he's expanding on last week's study, which was great. We had a lot of great feedback on that, and I think we might have one of the traders from the floor on tomorrow.
Possibly, if they're not too busy. All right, everybody. Good luck with your earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What's one stock or trade idea that everybody's hyped on right now that you think is all smoke and mirrors?
It's got to be either the HIMS or the quantum computing stocks. I think those both volatilities are just so high that you can play into the up move a little bit. It's got a lot of call skew, so you can do call ratio spreads, diagonal spreads, all that stuff. But you can have some short delta there as well too. So those are the two stocks that I think are kind of a little bit overhyped right now.
So I think that the AI thing is a little bit overplayed, especially in the last 6 to 12 months. There's just been this running joke here of oh, just drop the words AI into your earnings call and you'll see a big green candle the next day. So I think there's a little bit of smoke and mirrors in that. Strategy-wise, I am still on the fence about the zero-day options. I haven't had much success doing them, so maybe that's just a bitterness thing. But I would like to kind of either get better at them or encourage people to see both, short-term plays as well as some that maybe have a little bit more days to expiration.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Thomas. Thomas, good morning. How are you, sir?
Good. Just been laying low recently, taking it easy. So
good. What you should do during the summer, you know?
Yeah. Oh yeah. Yeah.
Get outside,
Doing projects around the house, you know.
touch some grass,
Yeah.
as the kids
Touching
say.
grass is underrated.
Yeah.
Grounding yourself, that's a whole nother thing.
Oh, don't go
Do you
Liver
ground
King
yourself every weekend?
What is this?
You just walk out in your yard with no shoes on,
Oh
no
yeah.
socks.
I do that all
You
the
know?
time.
As long as your toes are gripping the grass, then you're
This is a Liver King thing, and he's gone off the deep end.
yeah, he's going to jail most likely.
Probably. Yeah. Something. I think when you go too deep into something, I think you gotta have a little bit.
You get- yeah, you need to feel the energy of the earth. You know. Anyways,
rabbit hole.
Yeah, we've got a little sell-off in Bitcoin here.
Yeah,
but
makes you sad.
It does, but I mean, you would expect that a little chop. The higher the price gets, the bigger the chop. If we keep implied volatility the same in terms of the numbers flying around, but yeah, some big moves under the surface. Nvidia,
yes,
on its way to 5 trill.
It looks like the market's kind of giving it a sell the news type event here. That's what I feel starting to. I also had the normal top signal text. My sister, she texted me just now about 10 minutes ago. She goes, I don't want to jinx it, but I made $8K on that brokerage account that I opened in April. And I said, you mean I made you $8K?
Yeah.
Because I moved everything around. I did everything for her. So that's usually a good signal that we're at kind of market tops is the text from my sister.
Yeah.
Because I get the text when we're down 100, when she's losing $100, like, what did you do? You stink. I hate you. How'd you lose $100? The
opposite.
The opposite when she's up a lot of money.
So we're due for a 10% correction
it.
is what you're
She
saying.
made it. Yeah. So.
Yeah, I was out with some friends this weekend, and one of them was like, yeah, I didn't look at my crypto account for like 6 months, and I checked it, and it's up really nice. I'm like, yeah. Hello? Where you been?
That's usually the top. That's usually the signal. So I'm wary.
It's all right.
Yes.
okay.
Well, we did have a lot of news overnight. You had the Nvidia news, which obviously skyrocketed the stock. It's up $7 and change, a little under 5%. You had CPI come in this morning, which seemed like it was in line slightly, maybe a touch little warm.
Yeah. I think the month over month was good.
Yeah. So had some of that stuff. You got PPI tomorrow, initial jobless claims at the end of the on Thursday. I'm sorry. Got Beige Book. You got a bunch of stuff happening this week. You have expiration on Friday. This is, historically one of the strongest months, kind of like a, summer kind of grind higher, which we've sort of seen in the market. All things are lining up of, like there's not a single bad thing.
Right.
I don't hear anything bad of all those things. So
yeah.
Is it a buy the rumor, sell the news?
I think it's just you buy the rumor until you're 60 years old and see how much money you've got. I mean, it's insane. Everything's straight up. Volatility is at lows. What is there to say? But yeah, I mean, it'll be interesting to see where we go over the next couple of weeks here. We got a bunch of earnings coming out. Last earnings cycle, everyone was basically saying, ooh, too soon to tell, can't give you numbers, pending tariffs, blah, blah, blah. Now I think with tariff rates becoming more clear, maybe you see some moves in some of these stocks that may or may not be affected. And like you said, the NVIDIA news, NVIDIA gets green light to sell H20 chips to China.
The big market.
Yeah.
I would say.
It's just, it's like, what are the, like, which ones of these are real?
It was perfect.
And which ones of these are
timing,
fake?
too.
Yeah.
Right before all the CPI, PPI expiration, all those fun things. I think you got a Fed Beige Book this week. Perfect timing. Got to keep, but it's not reacting. We're not getting. I mean, just to give a quick market update, the E-minis are down 6 right now. They got as high as 63.43 in the pre-market overnight session-ish. We've had about a 43-point intraday range. The low, of course, 6,300 on the dot. So it's been NVIDIA and the chips kind of holding up the market. If you look at SMH, it's up $6 and change. Some of the other ones like AVGO up $5. Micron was up a couple. AMD was up $10 and change. TSM has had a smash to the upside here. So it's been pretty much those stocks as well as some of the Mag 7s. You got Amazon up $1 and has been strong. Apple bouncing a little bit, but it's been shopping between 205 and 210 for the last couple weeks. On the other side, you have like Meta selling off a little bit today, down $2 and change. But it's certainly been mixed, as you can see in the market, with the E-minis down 8, NASDAQ up 100. NASDAQ strength really coming from the chip stocks. Dow down 330 and the Russell down 26. So the Russell actually the weakest of the group today, with bonds actually falling off. They were up at one point this morning. They're now down almost a full point, 20 ticks here on the bonds. So big move in bonds. Oil selling off a little bit, but it's been kind of a chop fest here between 60 and 70. It's at 65.43. Volatility futures down 18 ticks. The VIX itself at 17.15 hasn't really moved all that much in volatility. It kind of seems like we've bottomed in volatility. Gold down $26. Not a shock with the way rates are moving. Rates going higher. Silver as well down 75 cents off the highs that it made just a couple days ago. And then, as Mike said, Bitcoin giving up a little bit of the move that we had, about half of it, down to 117,000 on the dot for spot. Futures a little bit higher than that, a little bit of a carry cost there. But yeah, it doesn't give me warm and fuzzy feelings, this market.
Yeah.
And it hasn't over the last 2 weeks. It's been just waiting for the next pump. What's it going to be? Not the NVIDIA news. Doesn't seem.
This is just
that's about as good as it gets.
I mean, yeah, it's wild. Maybe you see a little dump before the next pump.
Ooh, there you go. We'll buy the dip.
Maybe a little 3, 4, 5% off.
Yeah.
And then everyone's like, ooh, I can get this at a 5% discount. Before the Santa Claus rally. Let's smash.
Free money.
Yeah. One thing that is moving though, the dollar strength.
Yes.
I now have 3 line items that are green.
Told you, it's just a waiting game, baby. It's just a waiting game.
There you go.
Mm-hmm.
But you gotta take some pain to get some gains.
Yeah. Luckily, it's hidden kind of. It's got the second layer, so I don't have to stare at it every day.
Yeah.
But 3 line items now in the green.
That's very nice.
9 more to go.
Mine are coming back. I'm still down a couple shekels here. Speaking of the shekel,
literally.
So still waiting for a little bit of a bigger move in the U.S. dollar, but I was short the euro as well via the euro futures 6E. So that was a nice little trade. We did that in the cherry picks last week. So I took that one off this morning for $100 profit. That was a nice little trade. Cherry picks today coming at you very soon, maybe as we speak right now, but it'll have a look at volatility specifically for some of the sector ETFs. So we're looking at kind of, obviously market volatility at the lows that we are used to in the last, year or so. So we took a look at all the sector ETFs to show you kind of which ones have a little bit higher volatility. Obviously, the top names being GDXJ, which is the gold miners. With the way gold has been moving, volatility in there has certainly been elevated, as well as SMH, which is kind of the market leader right now. It has one of the higher volatilities. And then we highlighted ETH, which is the Ethereum ETF. It is picking up steam in terms of liquidity. You definitely see, it took like a month or two for IBIT to really start to pick up steam. ETH has started to kind of separate itself from the rest of the basket of Ethereum-based ETFs. So this is kind of seems like it's the winner of the Ethereum ETF race. So did a little trade in there. Skewed iron fly to the upside a little bit. hard to get long it here into this move, but
yeah,
playing some vol, playing some long delta.
I mean, that was my big takeaway from the discussion with Ryan yesterday, was that Ethereum is gaining traction relative to Bitcoin dominance, and Ethereum is not really going anywhere.
Yeah,
you
it
know,
hasn't
where these
moved.
other coins could fly around, but like there's a much bigger base of currency that's invested in Ethereum.
Mm-hmm.
So love to see it.
Some of the earnings from this morning, JP Morgan basically unchanged here. I think we're going to see a lot of this because a lot of these stocks have gone just straight up. I feel like volatility, the downside volatility, realized volatility might be a little bit greater than the upside. It's, you know, everything's at highs. It's hard to blast through that. So you're seeing that with JP Morgan, basically an unchanged move. Citigroup up $2 and change here, but very much a inside move from those two. I think there was Wells Fargo as well? Believe so. Yes, Wells Fargo down $4 and change. So net kind of a wash between the three big banks.
Mm-hmm. Yeah, I didn't see what they said or reported, but you did an earnings preview on those banks, right?
Yeah. I think Wells Fargo, they guided like a lot lower on interest income or something like that. So I think that's why they're moving a bit lower. But we have, I think, BAC tomorrow, and then one other tomorrow morning. Goldman Sachs. Maybe?
Yes, Bank of America is tomorrow morning. Goldman Sachs is also tomorrow morning. You're right. Yes.
Goldman Sachs, a little pre-earnings dump.
Oh.
Not sure how you feel about that, but it is interesting that you have 2 out of the 3 selling off, and then you've got a couple more reporting tomorrow. So if you're trying to pick a direction, maybe you go with the trend of the others.
Yeah.
But I probably won't be doing anything. Goldman Sachs, $700, can't do anything there.
16 IV rank, tough.
Yeah.
It's tough.
But yeah, seeing corn move a little bit to the upside. Love that.
Natty Gas as well.
Yeah.
We got that.
Closed my long MNG contract yesterday, and
Nice.
I'm still holding my put spread in NG, so gonna hold on to it.
We basically bottom ticked that.
Yeah.
We had one little day. It was a 1 day rule, not a 3 day rule.
Yeah.
Usually it's the 3 day rule.
Yeah, I got out of the Natty Gas call spread, long call spread this morning for $110 winners. That was nice. 3 winners in a row in Natty Gas futures.
Yeah,
Think about that.
Don't say it too
oversold.
loud.
It was too sold.
Yeah.
The market will hear you.
Sometimes it be like that. Something's oversold, got to get bought up.
Yeah.
And we're more than happy to participate.
It's easier to do that than to buy at highs.
Correct.
You know, it's a lot easier to get long when things are going down.
Correct. But yeah, we got plenty of content coming your way. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. I'm going to pop in the newsletters link because it is Cherry Picks Tuesday. Get that for free. But yeah, we're talking about copper today.
Yeah.
So why don't we pop over to the slides and dive in? What's the play here?
Yeah, so I mean, copper had that really, really big move recently. I mean, it's only like the 3rd time it's gone over 10% in a day or something. So pretty ridiculous move, and that's when the Trump tariffs on copper came in. They go into effect August 1st, I believe. So throughout the whole year, we had U.S. buyers flooding copper into the country in expectation for these tariffs to go on. They were getting it mainly from the LMEs. So, stocks moving from London over to COMEX, and then Shanghai, a little bit of diversion there too. But now, even though they don't go into effect August 1st, 2 weeks, that's pretty much bottlenecked the time it takes to get these deliveries over here. So you're seeing that those arbitrage opportunities. And another thing is that's kind of good. A lot of the copper forecast for surplus this year assumed that China's energy demand and stuff would not grow, or their supply. And with these NVIDIA chips being unrestricted soon, which I think we said earlier this year that Trump and Jensen are buddies, and
Yeah.
this could possibly be, taken off.
He's taken Elon's spot.
Yeah.
He's the next man up. He's the next buddy up.
Right.
Yeah.
So that's really good for copper because these data centers and these energy projects that have been going on in China, they're going to require a lot of copper for those transmission lines and things like that. Also, the U.S., our energy supply is projected to have to grow 20%, 25% over the next 5 years. You need a lot of copper for that. Now, our inventories are bloated. The U.S. is the 5th largest copper producer, but we still import half of our copper because that's how much we consume. So, the largest suppliers, Chile and other places, they're benefiting somewhat off this higher priced scheme, especially in the U.S. But now we could see it where Shanghai inventories kind of start coming down as these energy supply projects grow.
Okay.
But let's get over to the first one. We'll look at the copper gold signal. Well, first, that's what I was just talking about. So the yellow is COMEX, so U.S. inventories. We've seen that, since the start of the year really increase substantially, and those LME stocks in the blue have gone down. Overall, copper inventory has decreased a bit since the start of the year. After growing, in Q1, now we've started coming down and down. So, let's go to the next slide. The copper gold ratio, it's important because you're playing the price of copper, which is growth oriented, against gold, which is more of your safe haven. You go to it in times of trouble where growth is usually, there's concerns. And we've seen that through the first half of the year where, gold had its nice rally. Yeah. The markets were worried about tariffs impacting growth and everything. So copper lagged there. And then, now we have this really notable up move in this ratio, which just means, essentially copper's gone up faster than gold has gone up. But what's interesting, and by the way, every red dot is anytime it's moved over 5%. Okay. I was going to outline, the actual over 10%, but it's only happened 3 times. So, but COVID, the price of copper, it sank and then it came really higher, and we got near those lows from 2020. And in the subsequent 8 to 12 months, we saw the copper price really rise. So it's
relative to gold.
Yeah. It's reflecting kind of what's playing out at that time. Of course, a different economic and trade background right now. But let's go to the next slide. So if you took a position and you went out the 14 to 60 days, I'm not sure, my 7-day line is on the right, that's supposed to be the second bar there. But the win rates are all really good. And this is for taking a position 3 days after the move happens.
Okay, so we're right there. A couple, we're 4 days? Yeah, 5 days.
4 or 5 days. So, 21 days out, 80% win rate going long copper. It stays pretty high all the way out until 60 days, 75%. So that's pretty substantial, compared to other things you look at. 3 out of 4 trades are going to be winners on the long side. So let's go to the next slide. We'll look at performance. So this is your performance. 60 days out is really the big one. This could be skewed a little bit by, because I'm going off of a 5% up move in that copper gold ratio. But, if you go up 10%, then perhaps a bit of that move is already sunk into that initial move. So, but even if, you cut this down, you're still looking at, a 6% performance increase in the price of copper after that copper gold move. So pretty substantial, even 45 days out, over 5%. So it's pretty good if you're looking at, the back tested from a 3-day after entry on these 5% plus copper gold ratio moves. And then let's go over to the last slide. So shorts in this market have been pretty much out, and that's because, speculators knew that these copper tariffs were going to drive all this inventory and, spike the price. So a lot of copper shorts got out. Now it's pretty much up to the longs. So the latest COT data, which was released on Friday, and that data goes up to last Tuesday. It's showing that, now people are starting to get long on copper. So, price is in multi-year highs. Is this move going to have conviction? And a lot of it has to do with the economy. If the tariffs heat up a lot again, it could depress growth outlooks. So it's going to be, if you're looking at this versus gold, gold is really, a lot of the wind has come out in the past month or two, doing really good at the front of the year. I think the second half of the year is now, are we returning to a more growth-oriented mindset where the tariffs, we're negotiating them, stuff like that. Is it copper's time to shine? And a lot of these forecasts for copper that we're seeing a surplus, like the International Copper Study Group is one big one. Their forecast had the assumption that, China wasn't going to be able to drive growth that much because there was all these U.S. restrictions, not only on copper but other things that were national security oriented. So I think it's a good story for copper. After that big move last week, we've seen moderation. I think it's a lot of profit taking, but we haven't seen a lot of appetite to really sell gold back down to those levels. So perhaps we get down to to the March swing low, 5.4 almost, but that'd be a small move. Right now, technically, it's like shaping up kind of a bull flag pattern, which is bullish, a resumption of the prior trend once you break, the resistance of that flag. So yeah, I got in. Actually, the orders. Oh, it filled. Okay, so I got into copper. Short put spread.
I like that.
At 5.45, 5.5. It was pretty much a 1-to-1 risk to reward ratio at a 56 something pop. So, not bad. The buying power just a little higher than the max profit. So not a huge buying power sink like you were seeing last week when the margins were really blown out kind of from that huge move. So things have calmed down a little bit. If you were trying to get copper long last week, it wasn't really a good time to do it. But I think now if you're still long copper or have that long view, now is probably a decent time to get in.
Does it skew your thought process because gold has had such a good year? Because I imagine that gold-silver ratio from other periods of time where it got, where you had that huge move was mostly because of the move in copper, not gold going down a lot. This has really compressed that move. Does that kind of, is there almost a pairs trade of maybe gold has more downside than copper has upside, given that copper's at highs now, that.
Yeah.
That's kind of a.
I kind of think so. And if you're of the view that the dollar is actually bottomed, I mean, that's going to be bad for gold.
Yeah. And rates going up. I mean, we're staying higher.
Right.
Growth oriented. You would think that copper probably has a bid, but that gold would be less. Attractive as a not, aggressive upside trade like that kind of is.
Yeah, I mean, I was long gold pretty much all the first half of the year. I tried to, do some long gold trades June. The trade started kind of not working anymore, just getting long gold whenever, buying those call spreads. So that's not working now. I don't necessarily want to get short gold. I don't know. I mean, I think it's gonna trade around this range for quite a bit.
Okay.
But yeah, copper, I'm going to take a stab here. Try to see if this move, keeps its legs.
Okay. I'm with that. I think I'm going to do like just an iron condor here, kind of play into the volatility, not take a huge directional stand. I'll be around 5 and 6, which is a pretty wide iron condor here at about 1/3 the width of the strikes. If I can get filled, I don't know where I'm going to get filled here, but we can try this. This is a new one. I've never traded the copper options, so
The coptions?
I guess.
Yeah, I just got filled in the same trade, 545, 55 short put spread in August.
There you go.
For $550.
Yeah, and you know, the Trump administration, they're saying they want a lot more copper production in the U.S. I don't know if that's going to happen. I mean, it's a lot more expensive to extract and do
I've
things
heard it
here.
takes like 17 years.
Yeah.
So we'll be what, 55?
To start a mine or to like get everything?
I mean, from the time you explore it to the time copper's actually coming out of the ground.
Yeah.
There's a lot of red tape. And I think I know Freeport doesn't, like Arizona. I think there's some copper mines in Utah. The next biggest copper reserve, I think, in the U.S. is the Upper Peninsula from Michigan, where there's a lot of like national forest, state forest. So I don't know if they tried to do a mine there, there'd probably be a lot of pushback.
Okay.
On just from the locals as well as everyone else.
Makes sense.
I think I'm gonna parlay this into
parlay.
another iron condor. I'm gonna do it in gold too. So I'm gonna play just because both have high volatility. They've both moved significantly. And I don't want to be directional here. I just want to play some volatility. So I'm gonna do an iron condor around the 1 standard deviation in both. Maybe lean a little bit short on gold to play into that thesis of maybe a little bit of an upside move in copper and that ratio to get wider.
Yeah, gold, we're right in the middle of the June range right now, just a little under it.
It's been chopping in this range. Yeah. So maybe we get that for a little bit longer. So I'm going to do just another iron condor, 1/3 the width of strikes, 15 points wide, so use about $1,000.
There you go. There you have it.
Yeah.
Good stuff. There you go. Phil.
Yes.
Awesome. Thank you for that. We are all deeply involved in copper and gold. I saw that gold broke wing butterfly to the downside. That's basically worthless. I could probably close that.
Was the silver move in part because of what happened with copper, you think? As another like industrial...
Yeah.
Because it was kind of it wasn't... So it was 2 or 3 days after the move in copper.
Right. Yeah, I don't know.
It's been like just kind of coiled up in that
Yeah,
range.
I mean, the tariffs aren't on silver, so...
Yeah.
I think silver, I think it's a story where it's, that gold-silver ratio was so high for a while.
Yeah.
Gold had its move. Historically, silver catches up, if you're looking at things the past 20 years. So I think traders lost their appetite for gold a bit and went to, something a little bit more demand-oriented, like silver.
Because that ratio is back to like average right now.
Yeah,
It's back to
yeah.
about 88 ounces of silver per ounce of gold. So you're like, that's pretty normal. We were in the 100 handle, which now.
Yeah, I mean, the silver market's been in a deficit for like 4 or 5 years now, and it's the deficits from what people are saying, it's expected to fall this year a little bit, but still remain in deficit.
Beautiful. So yeah, corn. Corn's trying to get out of the doldrums here. What's the story there?
Yeah, I mean, WASD wasn't like it wasn't huge. There was they had the acreage report from the May or June that they were going off of. There's a lot of corn out there, so that's why prices have fallen to 400 or whatever. But kind of the same thing for soybeans. It's near those big lows. And I think, you know, the market just priced in that big surplus of corn that's coming later this year. And now we're trying to, you know, fade that move a bit. So I'm long corn via micro corn futures contract. I'm going to stay in it for a bit.
Thank you.
But yeah, I mean, you want to see some damage to the crop if you're long, some heat, some drought, some severe storms, things like that. But the corn crop is still pretty good for this year. I mean, for the U.S. So, I mean, it's just a matter of is it too oversold to, you know, keep it down here.
I will let you guys know.
Yeah.
Because I'm deeply long.
Yeah, you have 2 positions on there.
I have 2 diagonals that are basically right next to each other. Yeah.
There you go.
One of them's a scratch. The other one's down a little bit, but we'll see. Still 40 days left. Plenty of time for some mayhem. Aaron, waiting for your SPX butterfly to return the favor from Baba. Thoughts on NVIDIA Strangle 161 85.
So shout out to Aaron for the Baba trade. That was a big move. You got some of the China stocks moving today. I took that swiftly off because these big upside moves in the China stocks are usually good times to get out. It feels like in my trading history.
Yeah.
You get these short-term moves, news-driven, bye-bye.
Yeah.
So I took that one off. SPX butterfly. Yeah, I mean, this is the great thing about these sort of trades, and I know it's not profitable yet. I think I'm out like $50, $60. You know, the nice thing about these trades is that they're your long vol in a way, but you have that far out of the money premium decay as well. So with volatility kind of sitting where it is and the market kind of chopping around, this trade hasn't really moved. I mean, we've gone a little bit higher. We can see here on the market snapshots. So, you know, we're about, we'll call it, let's see what I was at. Oh, hold on. 62.43. So we're 20 points higher and I'm out, you know, 40, 50, 60 cents on it. So it's not like they move a ton, but if you do get a little bit of a downside move and a pop in volatility, this will work nicely.
I love how the 3 Musketeers just flashed on the screen briefly.
My thing got away from me. I had to. But yeah, nothing to do with it now. I mean, we're at highs. Got a little bit of short delta. I've already laid out the sister text indicator. You know, we're starting. You had the crypto boy indicator. You know, people posting their P&Ls. Seems to be happening more. These are things I look for.
Yeah. The hidden.
Everybody bulled up into July expiration. It's always bullish. It's always up. Blah blah blah.
Till everyone's levered in there, and then
everybody's
the big players come in and just smash them, and then they see who's got the weak hands. It's all wild. But yes, NVIDIA Strangle. I don't like it. I'm just gonna be honest. First of all, I don't sell strangles in earning cycles. I don't think it makes sense. I think it's just like you can get paid, yes, but you are holding a lot of risk with you know that the premium is going to stay bid until the earnings announcement. So in NVIDIA, if you have a strangle in September, you have to wait until August 27th to get a big chunk out of there. Now, if you get rid of the call or get rid of the put and lean directional and move your strike 1 or 2 strikes in, you can get the same premium, and now you can get paid on a directional move. So I think that's the move. If you're selling premium in an earnings cycle, I think you have to be directional versus neutral, because the implied theta decay isn't going to be as much as if you didn't have earnings there. So 161.85 gets you $1,300 in premium. It is a lot of premium because of the earnings. So if you get rid of the 185 and you do like the 160 or 165, you get a little more premium. Or if you want to be bearish, same thing. But yeah, I think it's tough with IV rank at a 4.
Yeah, it's
just ripping higher.
You don't want to be.
You don't want to touch this thing with a neutral trade.
I just did a little Johnny broken wing butterfly. I think that's a way to kind of do it where you don't have to have the risk of a pop in volatility or realized volatility in either direction, up or down.
Yeah.
So broken wing butterfly, iron condor, iron fly, those type of things are kind of the route I would go rather than the naked premium where you have a lot of binary risk.
With portfolio margin, one can buy a number of 5-cent puts, 10 or 20x against long delta positions. This supercharges buying power leverage. This is discussed strategy. It's not really a strategy. It's just a hedge. So yeah, it frees up buying power because the broker now knows that you have that hedge there.
Yeah.
But at the end of the day,
It can change.
Yeah,
Just
it
keep
can
in
and
mind.
will change for sure.
Yes.
But yeah, I think maximizing your leverage just because you have it isn't the most conservative strategy with portfolio margin.
Well, if you're using that to go and do other stuff, you have to keep in mind
that you're doing other stuff.
Yeah, that all these can change. So, you free up $10,000 in capital, just as a number, by buying ES puts that are 5 deltas, though the capital on that position can change. And so if you go and put that $10,000 in something else, you're adding even more leverage. So like you gotta keep, you can't be, especially if you're in a portfolio margin account versus a Reg T account. Reg T accounts, your leverage is like, depending on the underlying, up to like 3 or 4x. Portfolio margin can get to 6, 7, 8x because of the dynamics of how the risk is measured. But if you're in a portfolio margin account, you don't need to be at a zero balance option balance, because if you're at a zero balance, you're 10x leverage, or maybe even more.
Yeah.
That's why when Tom talks about having, with VIX at lows and different levels of VIX, how much capital he's deploying, he might only be 20 or 30% now. When VIX is higher, it might be 40 or 50%. You're never going to 100% in a portfolio margin account because you're already fully leveraged at 20%. And so, yes, it's good to buy those as tail protection. They will certainly buffer if there's a pop in volatility or a big move in the market, but that it doesn't mean that it's going to stay at the number that you're looking at right now.
Yeah.
You can't, don't look at it like free money glitch.
Mm-hmm. Glitch.
Free money glitch. Everybody's looking for the free money glitch.
Yep.
Mm-hmm. The dividend arb glitch, the box spread free money glitch.
That is free money though.
Yes.
But
yeah,
XYZ,
have to hold it.
blah, blah, blah.
You got to keep in mind your fills, changes in interest rates. You do a box spread yesterday and rates are now higher today. You're missing out.
You have a marked loss.
Yeah, you have a marked loss. Yeah, so it's there's no free lunch.
No.
Yeah.
TSM reports on July 17th.
Oh, everybody wants to jump into all the chippies.
I forgot about TSM until right now. 230, 225 put credit spread, looking for $135 in credit.
230.
Yeah, I mean
expiration
3-day.
I
think if you're doing something like this, I would just go to the 31-day. You have no defense if it goes down.
Shot trade
after earnings, yeah.
Purely directional.
And on that same note, like if you're really playing for a shot trade here, why sell a put spread when you can buy call spread and have way bigger max profit? Like if you're actually playing for the stock to move up 10 points, I would rather do a call spread in the 3-day than a short put spread. You can make literally 5 times more with a 235, 245 with the same loss. If it goes down 10 points, it's the same loss. It doesn't matter. So if you're doing a near-term shot trade, I like the debit spread versus the credit spread. But if you want the credit spread, I would rather go to August, because then at least if it goes down, you still have 30 days left for it to recover. That's just me though. What are you cooking up here?
Maybe like a little broken wing butterfly. I can't in good measure sell a put spread here. I just can't do it. Into a $7 gap, it's a huge move. You got earnings overnight. Market doesn't look all that great. I think you do like a broken wing butterfly on the call side. Allows you to participate if you get an inside out move. And I think the upside into earnings is kind of muted here with where the market is and where volatility is. I think there's a little bit more downside risk. That's just my opinion. So I like a little broken wing butterfly on the upside like I did in NVIDIA.
There you go.
Like $20 if the stock goes down, you know?
Yeah.
Just a little tiny little something and then a little upside. So I skewed it.
There you
240, 240, 2.5, and then I've risked it 250, round number.
It's perfect.
We're playing all the market god things.
Yeah. As one should. What a day we're having. Thoughts on UNH? IVR looks good. IV looks good. I'm neutral to bullish on the stock. The question is, how much pain are you willing to take?
Yeah, this thing is a pig.
There's a lot of articles out there that are like the pain's over, blah blah blah. It'll recover, but I mean, it's still in the dumps. You just have to be willing to take the pain, realize the pain.
I have a put spread that's at the money. I mean, the stock has pinned 300 for basically every daily close for the last 2 months.
Would you say it's coiling?
I don't know.
30 point
Maybe
expected
it goes
move for
lower.
earnings.
Who knows? It's a huge company.
30 point expected move for earnings.
Yeah.
July
It does-
29th.
Yeah. So is that middle? Is that 2 weeks from
Yeah.
now? 2 weeks.
I think this is a unique earnings because there's so much bad news around this stock right now. If it sells off 30 points, I think you could see some real pain.
Then it's dead.
I think it might go just real low.
Zero.
But if you see the opposite, if you see the good news of making money, blah blah blah, and it goes up 30 points, that could spark a continued rally higher. I think this stock in this particular situation, if it goes down, it's going to keep going down. If it goes up, you could see it keep going up. It could be up 100 points. And
What if it stays sideways?
It's not going to happen.
Not going to happen.
No, so that's actually not in the cards.
I think you sell put spread. How bad could it get?
Yeah, I mean, did you guys see that one Reddit post where the guy UNH dropped and the guy's like, I took out all the equity on my home and bought Leaps, and
Yeah.
my wife doesn't know.
And now it's just a grind fest every day.
Yeah, but that guy might have 5 houses in a matter of months, or 0.
Or zero.
0 and 0 wives.
I don't know. It seems like from past experience, other than like Intel, which is a stock that has looked like this chart for like the last 5 years, but you get to kind of peak bad news at some point.
Yeah.
And like this, when you're there, it kind of looks like this, where you just chop at the same spot, it goes nowhere, and then everybody forgets about it, and then all of a sudden, things blow over, and the stock kind of goes back.
H. Montero, apparently tariff is a made-up word that means buy the dip.
Yeah.
Oh, man.
I saw somebody tweet after the NVIDIA announcement yesterday. Taco chip is with the chips, semiconductor chips, taco chip.
Taco chip.
Because it's kind of like, you've been jawboning at China this whole time. Now we're going to give them the good stuff.
The taco chip.
The taco chip.
We have taco chips waiting for us in about 15 minutes.
Taco Tuesday.
Let's see. How do you manage an iron fly at 0 days? Do you get out of one of your long strikes if it's breach or stop loss? You really don't. I mean, in a 0-day iron fly.
And like SPX, are they thinking? Or
yeah, if you give us these strikes, we can look at it. But if you're doing 0-day iron flies over and over and over, you should have a GTC to close it for profit. And that's pretty much it. I mean, it's not, it needs to pass through your short strikes with an hour left. Like that's the key.
Yes.
If you're trying to get 10, 20% out of it. But if it's a loser, there's not much we do. We're definitely not legging out of the long strikes because now your iron fly that could have $500 of risk is now undefined risk. But yeah, you could use a stop loss if you want, but stop losses are just going to trigger exits more frequently that could have resulted in profits. So I think if it's an iron fly, and we did research on this, we had a research segment on this specifically, iron flies versus iron condors.
Yeah.
What was it, 2 weeks ago?
When we were hosting? Yeah.
Yeah.
Was that the Thursday one that we did? Yeah.
Yeah, I'll find it and I'll pin it and put it in the YouTube chat. I think it was a market measure. Let's find our shiny faces. Profit targets for 0 days. There you go.
There you got good memory.
Thank you. But yeah, definitely have a GTC to close for profit. You can do a stop loss too.
Mm-hmm.
But yeah, I would rather tighten the range and let it run versus have a stop loss on a wider one, personally. Which situation is better for a calendar versus diagonal spread? I wouldn't say it's better. I would always opt for a diagonal spread versus a calendar because you have no risk to the in the money side if you pay a debit that's less than the width of the spread. So if you have a $10 wide diagonal, if you pay $6, $7, $8 for it, you have no risk to the in the money side if you get a big blowout in your favor. Calendar spread is a pure extrinsic value trade where you have risk on both sides. So if you're trying to play for a slight move and you want to do it in a cheap way, a calendar spread will allow you to do that. Diagonal spreads are more expensive than calendar spreads. But your reduced cost up front comes with risk on both sides. What's up with fantasy this year, H. Montero? Well, I'm glad you asked.
DraftKings down a little bit.
Ooh. I think the easiest stack in fantasy, if you're doing a draft, is Ladd McConkey with Justin Herbert.
Right.
Nick's not on board.
I like it. It's just not as cheap as you think it is.
No, I know. But the structure, if you have a full PPR
Herbert's
league,
cheap. I agree with that.
Full PPR league, the strategy is one good running back or two good running backs if you're feeling risky.
Yeah.
But you need one good running back to anchor because there's so many. Like the fact that Christian McCaffrey's going at 8, 9, 10 is a joke. And he's going sometimes behind Genty or whatever.
Hey, listen, he's like us with the young kids in the office now, you know?
True, he is
like
an old man.
McCaffrey's old man.
But if he stays healthy, old man, he's going to win your league.
I just sold a strangle in DraftKings, just so you know.
There you go.
Putting it out there. But yeah, I could go on. So Christian.
No, that was it. Yeah, that's the strategy.
I agree. I think his upside.
Or you go 0 RB and you just do wide receivers.
I don't know. RBs have moved up this year.
Yeah, because there's a lot of them that are not that expensive. Robinhood? No, sorry, RH. Can you look at RH? Looking for leaps for Jan 2027. These are expensive.
This is Restoration Hardware, right? Yes.
Yeah, I mean these are really expensive.
Where are you looking?
$3 wide, Jan 2027.
You can't. 2027, too far out. World could be over by then.
AI will destroy us.
AI will be taking over Skynet. I mean, come on.
Yeah. We'll all have chips in our brains. We'll be working in factories.
We won't even be able to close this thing out.
Yeah. What's that show where they go into the layer and they work and they forget, they don't know what they're doing?
Severance?
Severance is next for us.
That could be true. Permanent severance.
UNH, just buy 25 shares. Sure.
There you go.
Do that.
Yeah, sure.
That gives you the unlimited time frame for sure.
Volatility is still relatively high. So, you know, you can certainly get paid to sell some put spreads. 270, 260. I'm in the 290, 280. With 30 days to go, you get paid $200-300.
Mm-hmm. Theta traders looking at 300 long shares in ETH with 2 short calls against it.
There you go.
Why not?
Yeah. I mean, there's certainly call skew here, obviously. And volatility at 78%, Ivy rank at 76. I did a upside skew to Iron Fly. So I essentially sold the straddle and then bought really cheap wings here. So you might like this trade, Mikey. With it plays the upside, so you have about 27 long deltas in here. So you have a little bit of long delta. You play into this upside skew. The wing on the upside is a little bit closer. So you're selling that call spread for, like $1-ish, which doesn't seem like a ton, but you're $2 out of the money. So it is, pretty far out of the money here. Only use about $400 in buying power. The wing that you buy on the downside, the 17 for 20 some odd cents, it cuts your buying power down from 1,600 down to, 400 or 500. So super capital efficient trade. Nice little theta decay here.
Yeah,
Did
I
I
like
convince you? No.
I was looking at the just a 20 call in December and a short call at 30 in September for $1.
Mm-hmm. Sure.
$5 for a 10-point wide diagonal with a long option in December.
You're going far out.
You hear those sleigh bells ringing?
Talking about Santa this early is too much for me.
Is it though?
Yeah.
Let's see if I can get filled there. $5, $4.99 actually. I got a penny discount. So yeah, I got long the 20 strike in December, sold the 30 strike in September against it in ETH.
There you go.
Alex looking at Uber August 82.5 puts.
I got a Uber position that needs us to stay right here for a little bit longer. I am fully locked and loaded. Certainly 36 IV rank. Probably sell both sides, but yeah, $1,000 in buying power, 82.5, 105. What say you?
I would rather just move it up and get rid of the call side, personally, or the opposite if you're bearish.
Yeah, sure.
But yeah, I think if you're bullish, 82.5 or whatever, I think is fine. 30 days out. They have earnings August 6th. Couple weeks. The movie iRobot is a glimpse into the future. Yeah. I saw some robots playing soccer the other day.
Oh,
was that real?
I think so.
AI. Was it real?
I mean, they have robots doing like American Ninja courses.
Yeah.
They're
getting pretty crazy.
It's legit.
Terminator's gonna be coming.
Yeah.
I like that.
It's only a matter of time. Brandon, AMD inverted short strangle update. I've got the 130, 140 in August. Taken in 1042 on this big AMD move up. Is it time to roll out?
$1 million question.
130.
140.
140.
September's a little long for me. 66 days with earnings coming up. I've already kind of put my opinion out of just kind of dulled earnings across the board. Maybe we're nearing, a little bit of a pullback. So I would hold. That's mine.
Yeah. But yeah, I mean, you're getting to the point where if it keeps ripping higher, you're going to be in a short stock position pretty soon here. But yeah, I mean, you can move the 130, 140 to the 140, 150 for a scratch if you move it out to September. But that extends your implied duration in the trade and it gets you out of the implied volatility crush. So yeah, the August 15 cycle, you're going to see a bigger vol crush than September. If you think it's going to come down a little bit, I do agree with Nick. I think maybe you stay in the 130, 140, and then you roll out to September after earnings, because that will give you a nice credit received, because September will still have plenty of premium when August rolls off. I think that's it.
Cool.
Let's hightail it on out of here.
Yeah, sounds great.
Thanks for tuning in. We will post those trades to the follow page. So thank you, Thomas, for the copper analysis. We're all long as heck. You're neutral, though.
Neutral.
You're offsetting our bullish.
With a little bit of short delta in gold. So I'm with.
Yeah.
Playing the ball.
Sweet. If you want to reach out to us on Twitter, I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. Been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
We're back. It's still Tuesday, July 15th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He is Jamal Chandler. Jamal, I think you were getting us started with an Eddie Murphy bit prior to the start of the show.
You know it. Yeah, that's right. A little bit. It's one of my favorites. It's so funny. And it's such a dad joke. You know what I mean?
It's such a dad joke. It's certainly a day for the Bears out there. Perhaps cleaning things up with the Bulls this morning after the CPI report, Jamal. I think people can look up the Eddie Murphy joke on their own time. But we did have that inflation report today, which came in looking pretty good on the top line figures there. And then you pop open the hood and you don't like what you see, Jamal. It was some June inflation deception this morning.
Yeah, you know what? I feel like there's a lot of spin on what really happened with this inflation report. I mean, did inflation go up? Or was it just higher than expected? Or was it lower than? It was so weird the way a lot of these things were written on it. But overall, it still seems that inflation is a concern.
So inflation is higher than it was the previous month, but it was lower than what was expected.
Yeah.
I suppose that's a good thing and some silver lining. But in reality, when you break down the report, as we're going to do here in the spotlight today, you find yourself wanting more. In particular, this slide looks at the core goods month over month, which doesn't seem like it's a big deal, but we're going to go into that, why it's a bigger deal shortly. For those that missed the numbers this morning, CPI did come in at 0.3% month over month. As expected, that's an acceleration from 0.1% month over month in May. We look at the year over year, it's up at 2.7% year over year. That's higher than 2.4% in May. Again, in line with expectations. On the core, a touch softer, up from last time, 0.1 to 0.2, but below the 0.3 anticipated. And a similar setup for the year over year on the core, 2.8 prior. It comes in at 2.9, but that is below the 3% anticipated. Okay, so there's some good things, there's some bad things there. And certainly when you look to the Cleveland Fed inflation tracker, something that we've pointed out in recent episodes, the July tracking is not that warm. You're looking at the month-over-month readings between 0.16 and 0.24%, which gives you a year-over-year run rate range of basically 1.9 to about 2.9%. So it's contained right now. But when we look at the core goods inflation, goods, things that are produced, right, things that are being tariffed. And we can see that for the first time, really, in fact, going back to July of 2023, core goods inflation is now rising at its fastest rate we've seen in 2 years. And when we consider the trend of inflation, this comes from Pictet Wealth Management, mutual friend over there, Frederick Ducrozet. He sent these charts over today. The trend in PCE durable goods was to the downside over the past several months. We go into 2025. Inflation is beginning to break away from that downtrend. Imported goods, domestic goods impacted by tariffs, they have seen prices rise faster than goods produced domestically. They're not touched by tariffs. So it's early days. It's not significant yet. But were it not for the shelter component declining the way that it is, and there's some housing troubles here in the CPI data as well, if it weren't for the housing troubles that you're seeing in the CPI data, the tariff impact would be a lot more clear. And it looks like there's still more to come.
Yeah, it looks like there's still more to come. And I had to remind myself, I mean, we still have a baseline 10% tariff China, I think there's still like a 30% tariff. There's, obviously different tariffs here and there. There's so many numbers been thrown out. Half the time you forget what's currently in place. And and the other thing, obviously, which we'll get to is, if you're confused about any of it, did it go high? Did it go low? All you need to look at is bond treasuries, right? And you can see what the real sentiment was there. And treasuries did not like it at all. Meaning, and 30 years jumped back up to above 5%. So that just lets you know that we're going to hold rates a little bit higher for a while.
That is a line in the sand for me. 30-year, or we should say, 30-year yields hitting that 5% mark. Yeah. Obviously, today when we saw the initial reaction to the report, yields went down, and then you start to unpeel the data and look through it, and the economists do their thing, and the research notes go out, and people say, "Hold on a second, maybe not so hot," and not so hot indeed, because we do have a little bit of bifurcation in this market in today's session, Mr. Chandler.
Might not be for long.
Careful what you wish for. We see at NASDAQ here that is still technically positive on the day. It was greeted last night by news that NVIDIA would be allowed to sell some of its top-of-the-line chips over to China. These are GPUs that have advanced AI and military applications that are about 20% faster in terms of processing than what China is currently allowed or was allowed to have previously. But those export restrictions are being taken down, and so NVIDIA is regaining access to a very significant market. It's up 4.02% today, and broadly speaking, semiconductors here up 1.87%, Jamal. So that is, I think we can isolate why the NASDAQ is doing so well. It has a different tailwind. But the banks are down a little bit here today after their earnings. We're seeing that the Russell is struggling, and sitting in between that nexus of those two. Your S&P 500 did try to get to the top side of its recent trading range. It technically poked above, but not for long. We're still stuck 62, 60, 63, 35 or so. We persist. What's your take on this market right now? You made a cheeky claim about maybe not everything staying in this bifurcation for a long time.
Yeah, I mean, you mentioned the outperformance of the NASDAQ this morning. That was a big story. I mean, NVIDIA, AMD obviously being able to sell chips again, and it carried a lot of those other chip names along with it, AVGO and the like. So we saw that mostly this morning, but right now we're seeing some of it fade. Obviously, the big loser here is the Russell, but to stay with NASDAQ and S&P real quick, because they have a very similar formation. This is not really that big of a breakdown. This is actually just fine. I mean, this is more of a, it's still riding the wave of the 1 week moving average. Both of them are. So I think that looks fine. Kind of the same in the Russell. Of course, the Russell, I think we could agree, has been the one that's stand to gain the most recently from this bullishness in the market. And this is taking a big hit. Again, right now, I have nothing on any of them, but I'm trying to figure out if I want to get long the Russell today just because of the way that it's moving. Maybe it just, takes a little bit more time. But I think Russell and the Dow are kind of in the same category. They stand to gain the most from the current bullishness if we continue to ascend higher. But right now, this has obviously been this idea of inflation has been it's hurt them the most, you would say, and you're seeing them react the hardest to it. But honestly, the technical formation for the I know I'm all over, but just to go back to SPOOs and NASDAQ, technical formation for those two just seem to be fine. It's just they seem to be intact, and there's no real major breakdown yet. I would say this is probably a good thing for you if you're still bullish the market. It's just the overall story could sort of lose itself within this.
Can we say how ridiculous it is that we're going to go into a world where we're selling our best private companies, most advanced AI chips to our greatest geopolitical adversary, and we're still going to put 25 to 35% tariffs on our allies? That seems so inconsistent that I'm forced to think that if we're allowing the chip sales to go through, this August 1st deadline is basically nothing, Jamal. Yeah. It's just a bunch of nonsense.
I know, right?
It's all theater. It's all window dressing. Okay, so with that point, though, you mentioned the technical structure being intact, and that's very much the case. For the past several days, weeks, noted bear around here, Ilya Spivak, has hung his hat on the idea that this has been range-bound since July 3rd, and to his credit, he's absolutely correct. We haven't seen that departure from this range in any significant form or fashion. The NASDAQ is the one thing that makes me think perhaps you still have something to hold on to here, right? A deeper S&P 500 setback to the bottom part of its range probably means that the NASDAQ here, its breakout is invalidated. And then layering in a third perspective into that, we're quickly getting into the territory where the Russell is testing its uptrend from those June, and what very well may be a July swing low here. That comes closer to 2,200 or so. And so a Russell below 2,200, a NASDAQ that's breaking back below 23,000, an S&P 500 below 6270, 6260. All of a sudden, the market takes on a very different flavor here as we make our way into the second half of July. So I don't want to call it top, at least not for the next 3 days. I'm still pressing some NASDAQ calls that expire on Monday. But this is beginning to look a little bit different. And you could even see the left shoulder head, potential right shoulder here, and RTY forming up over the past week and a half.
So is it worth getting long the Russell as it takes another stab at 2,300, or do we just let it break? I mean, obviously, if we let it break down, I know the answer for you. If it breaks down below 2,200, you're not even going to touch it. You're not interested at that point. And I guess that's really the question we're asking here. Do we try to ride it back up above 2,300, and does it make good this time, or do we just let sleeping dogs lie and just see how it works?
No, we don't ever let sleeping dogs lie. That would make for a boring life, Jamal. We poke things with sticks around here. Look, at the risk to reward, right, if you're thinking about this being a head and shoulders pattern, it does have some of the hallmarks. The left shoulder here exceeded by the head, but the right shoulder does not go above the left shoulder. You want to see that. The head here, that's a nice little evening star candlestick cluster on your 8-hour time frame. And then the right shoulder, piercing candle. You could call it a key reversal. I'll just call it a bearish engulfing because it's not at the exact high, but it does clear out the prior candle high to close below the prior candle low. So your left shoulder, your head, your right shoulder, all very much with a topping flavor to each angle there, Jamal. Look at this long upper wick on that left shoulder. You could call that a shooting star if you wanted to. But you wouldn't want to get short unless you're below like 22. Hey, look at this punch high here at 2210.90. Below 2210.90, you'll have cleared out recent swing lows that we've seen in the market throughout the month of July. And at that point, the risk to reward in getting short makes sense because then the supply region is broken. But selling into support, that's a madman's game. I think your view is probably right. You know, if you're going to take a stab, risk to reward right now, and that's just because I'm a bull, but the uptrend is still technically intact. If you're looking to sell put spreads 2175, 2200 or 2175, 2150 to see if we can catch the low here, that's also congruent with being a momentum person. You buy the rally on dips, and this is the dip. True. If there ever was one in the Russell.
Yeah, I mean, I just released the call spread last week, and I was long with a
good timing.
Yeah, good timing. It was basically around 2268, and so now we're here, 2228, and maybe it's time to put on the 2300, 2400 call spread. And this time, I was in August 29th expiration, but this time I'll go out to September expiration because why not? At least there's an event within that time frame. The September Fed meeting is on the 17th. This is obviously going to be a big week in general. When you look at it, it's the expiration of that week of September. Also, you could also go to the end of the quarter, which might be appealing too. Let me see how big of a difference that is for those two call spreads. It's not that much of a difference. It actually really isn't. Maybe the end of the quarter is the way to go. 77 days.
77. So what we're looking at here, just at 65 DTE, long the 23, short the 2400 is giving you 35 pop with just
that
over
is,
like 2.5 to 1.
Well, that one is the morning. So the other one you had was the morning.
Oh, was it?
Yeah.
Oh, I didn't even catch that.
It probably won't be that huge of a difference, but still. But
even so, I mean, you talk about giving yourself some extra time here,
and
throwing on an extra 11 days.
And I think it's like $100 difference, honestly.
Yeah,
what I saw earlier.
Yes, it's closer to a 2 to 1 reward to risk as opposed to a 2 and a 2.4 to 1. but you're giving yourself 11 more days. That's not an insignificant amount of time to trade off, $100, $200 more of risk and taking in a max profit by $100 or $200. It's an interesting setup here. I have a slightly different view, which is to say that if I'm going to get bullish on stocks, I'm personally waiting for a dip that may arise in August, September, given the seasonal tendency of the market to see volatility spikes over the next few weeks.
I kind of agree. And that's been my premise too, right? It's just for whatever reason today, seeing down 1.5% gets me interested. But I think you're right. It's probably best to just stick to that. I do feel like there's somewhat of a little dip coming. And if I'm wrong, I'm wrong, whatever, it's fine. But I kind of tend to agree with you. For whatever reason, I feel like there's just going to be a small little bit of panic coming.
What's nice about this setup right now is if we do embrace the idea that this is simply a flag up here, for example, and we're just looking at this pullback to 2,200 in the Russell or so, it's not going to be a neckline break because, again, head and shoulders patterns that don't break necklines, they're simply consolidations, continuation pattern potential. You have to never front run any of these named technical setups. So to that end, we see that we have a 1 month moving average sitting at 2209 right now, Jamal. The swing lows in this recent range since we broke out on July 2nd come in that neighborhood, 2202. So if we want to go a little bit beyond there, it's not the sexiest trade setup in the world, as we like to say, no high convexity, but it's honest work. 64% probability of profit, 45 days to expiration. It's a little bit under risking 3 to make 1, closer to 2.5 to 1. If we're wrong in the Russell, you're probably going to know very quickly because that neckline would break, and then you'd be on the other side of this uptrend off of the post-Liberation Day lows, and we'd also be below our 1 month. So why would we want to have long delta exposure there? But there is a trade setup here in a very typical Tasty way, even though it's only a 17.8 IVR, to combine it with the technical support that's in the nearby juncture to take a stab on the long delta side. Otherwise, if 2200 breaks, that sets up a more interesting downside scenario with given a high of closer to, we'll call it 2292. We'll lob off 90 points. We'll look for a move down to say 2100 or so. And what's near 2100? That's convenient. Mid-June swing lows are all right around that area. And so looking for the market to basically take a step lower. This has been like stepping up. There's little ranges that form. We go up, we go sideways, we go up to a new level, go sideways, up to a new level, sideways. So we step back down to the prior resistance turn support. 2100 puts right now, if we wanted to go that direction, like long the 2100, short the 2075, you're looking like 4 or 5 to 1 with a 23% probability of profit. So that obviously would change if there's a little bit more weakness in this market, Jamal. But I think that we should be open-minded here because this is the seasonal window where things start to sour for stocks, even if it's going to be a really good year by the time we look to the end of 2025, 2026.
Yeah, I mean, that's what is that? You're long. I was like long the put spread. I was like, wait, what am I seeing? Yeah, no, for sure. Like that's where things could really get ugly if eventually we see that. But in the meantime, you're right. I mean, there's more than one way to skin a cat. You can either look at the long call spread, again, with the convexity to the upside, or you could, again, with the lower IVR, but you could sell the put spread against former lows, if you will. Well, there's a lot of former lows, but that could also work as well. So I could see both sides.
The way that I'm still approaching this market, leaning long NASDAQ calls, leaning long S&P 500 puts, I guess it's kind of like a synthetic short calendar call spread because I want the NASDAQ calls expire next Monday, but the S&P 500 puts expire at the end of August. And the idea here is like we're going to squeeze a few days more to the upside around expiration through the seasonal peak. You get to July 17th, the market hits its high. July 18th, things start to go down. It chops trade sideways. July, the last trading day of the month, you see a brief blip up to a new monthly high, and then you get into August, and that first week of August, it's then typically game over. If we follow a roadmap as markets have typically moved since 1950. Okay, but so that would mean I'm trying to be too cute here, perhaps, where I want to have the best of both worlds, where I start to dip my toes in with my short delta exposure while it's cheap, and I try to ride this rocket before it sputters out and burns up in the atmosphere. So I see no reason to change that today. The NASDAQ's up, the S&P 500's down. That makes for a happy camper.
Yeah, I mean, you really need some news to really get your puts to work. And it seems like the news even recently hasn't been enough to push markets that low. More recently is what we've been seeing. There's just a strong bullish sentiment that I've noticed. And I like it. I just can't really, fully get behind it right now. So I don't have anything on in any of these indices particularly. I just have a couple of individual name plays sort of heading into earnings. Most of them are calendar call spreads. I got a Netflix. I got an Amazon. I got... those are the main two. I got a brokerage. Again, those we don't speak of. I've said this plenty of times now. Outside of outside
I've never heard you say that before. So that's first for me.
Yeah, those we don't speak of. That's what I it's didn't I discuss this with you about the M. Night Shyamalan movie? No. Remember not Signs, which is a great one, but The Village. Actually, I was discussing it with Josh. The Village. You ever saw that movie?
Yeah.
Yeah, it's a great movie. So that's where it came from. So I don't have any particular exposure to these indices. Again, I do like the way ES looks. I do like the way NQ looks. And I'm just kind of waiting to see if we do get a dip at some point where that would really much more interest me.
You know what's really interesting about this pullback today? I don't know. Maybe it's just me. How come volatility is not up? How come when I look to the market, okay, it's VIX futures, but what if I was just a regular old retail trader?
I got an answer for you. I think it's so yesterday, if you notice, it was a slight uptick in vol heading into CPI, and I think this is just a release of vol after CPI, honestly. And because we're not down like 100, it's like, oh, well, this was not as bad as we thought.
So we have low volume today, 848,000 contracts traded. It's a little bit healthier than yesterday, but still well below that million benchmark we like to sit at by the time the show starts. So we have low vol, we have low volume, and the ranges they're holding. The Nasdaq isn't breaking back down into its range. It's kind of sticking here above 23K. I don't know. This is why I can't throw in the towel right now, and the market's still pushing up higher in the short term because volatility not sticking up. Maybe it's because CPI was a disappointment. It's not good data, but that's next week's problem, Jamal. We can still keep the party going.
Next week's problem for sure.
Yeah, we'll leave it at next week's problem. It's not next week's problem for the bond market, though, which really hates this stuff. It's rotten all around. What's working here today? If you are short deltas in the bonds, the notes, it's working here today. Bonds right now breaking down to a fresh low that we've seen going back to, well, it's not that long ago, June 11th. Suppose the world isn't ending. But I think the more prescient point is that yields have started to push up into uncomfortable territory. You noted that we see a 30-year yield that's begun to creep over 5% now. That's been an alarm bell for stocks recent weeks, months, years. How many times has that been an issue? We see here with the 10s, we're getting close to that 4.5% territory where you cross 4.5%, the market tends to be a little bit yippy, as some might say. What's your play here? I know you and I have been both leaning long deltas or directionally neutral. Even the directionally neutral stuff right now is making me feel a little sweaty with today's action.
Yeah, you're right. I mean, you talk about those levels, 10 years and 30 years that they hit, and often the market does panic. So I will say it is almost surprising that the market isn't down more because of that more than anything. But again, markets have seem to be fine. What's the play in bonds? I'll be honest with you. I don't feel like I'm almost getting to a point where I've talked about one of the best traders I've ever traded with. He had been convicted in a lot of his trades, and I'm convicted in this one. I'm still long bonds. I actually rolled up and out. And I shouldn't say up. I actually rolled down and out. I rolled my call spread down. I actually widened it just a little bit. I went 112, 116, and I went to the October expiration. The hell with it, Chris. I'm just going to stay long this. It's not that big of a position, and considering, my portfolio. And so I'm just going to stay in there. This to me is, and I know we're going to talk about it later. It's reminiscent somewhat of a dollar type of trade. I just feel like at some point or another, tables might turn. And if I'm wrong, it's not going to cost me too much, but I just, as long as vol is not here yet, once vol comes in, I'm probably going to sell a put against this too, against some lower level strikes. But for now, I'm still staying long deltas, and I'm doing it via a call spread in ZB.
It's getting in that territory where I think this is going to be a really interesting trade in terms of it being way too crowded. Right. You and I have taken some decent positions in the market based on positioning in recent weeks. May I apprise you of the positioning and notes here? The Z-score, again, 20-year rolling basis. So this is the anchor week for the second week of July 2005. 52 weeks in a year, 20 years of data, significant data set. The Z-score for notes as of the most recent CFTC COT report was negative 1.95. So we are 1.95 standard deviations below the mean positioning in the market right now, Jamal. That's an increase from minus 1.81. So people are getting more and more short, which, given how the market's behaving throughout the month of July, it makes sense. People are selling notes and notes are going down. What a shocker. But we're getting into that nosebleed territory. And we're getting into a place where the market's actually more crowded now at 110 than it was back in June or May or in April. And so it's taking more and more people to keep notes down at these levels. That says that this is a rubber band that's stretching. How long the rubber band stretches for, the positioning can build further, right? But you get something. Give us something. And we're starting to see the inflation data reflect the tariffs, even if it's only in a modest way. The headline numbers are hiding it because the housing data are so bad right now. We should have another conversation about the housing market. The housing market's starting to look like it's a little iffy in certain parts of the country that could have broader nationwide effects. And it's something I think we've been dismissing for, I don't want to give Ilya credit because the problem's never happened yet. So technically correct and not being worried in 23 or 24. But okay, it's an 8.5 IBR. Here's the thing about notes and bonds, and I think this is the most important part for retail traders to know. Notes are half the size of bonds, half the tick value, half the overnight buying requirement. And so if there are any heroes out there, notes are probably the place where you'd want to look. It's a little bit more constrained, and if that makes you uncomfortable, TLT is your place to be, not necessarily in bond or note futures. But this damage, Jamal, the evening star cluster, that engulfing bar that we're seeing form here today, this is all very negative, very nasty. We couldn't climb back through the 50-day, the 1 month, the 1 week. This bearish rising wedge looks very formidable. The low at 109 and 20 ticks should absolutely be on everyone's radar as a potential target.
Yeah, all that being said, I think, like you said, the fact that there's so many different people that are short this trade, and it probably could go on for a little bit, there's probably going to be some pain. To me right now, the most interesting trade is being long the call spread. Is it the trade that's probably going to win the fastest? Probably not. And that's why I decided to go further out in time. Maybe I'm a glutton for punishment, but I still feel that, again, often too, and that's why I sort of just said the idea, are we going to 5 1/4? Because that's really sort of the next area or levels where we're going to probably see some real pain, I would say, in this type of thing if we just keep going higher. If 5% proves to be that level once again where the market gets scared and things back off, that's really what I'm banking on with this trade.
And what I appreciate too about the ZN view in this is that while ZN Z-score is now negative 1.95, ZB's is still plus 0.19. So this is a trade where, usually when we think about rates, everyone talks about the 10s, but the market has been paying more and more attention to the 30s, and there's an ample amount of room for speculators to come in here and drive this thing into a ditch. People may look at the 10s and say, crowded trade, you know what? I can operate in the 30s. Instead of taking 10 contracts in ZN, I'll take 5 in ZB. And this thing's getting unglued, so why not?
As much as I like the overall trade, I'm not going to go crazy yet, because if I really wanted to go crazy, if I thought it was really oversold bonds overall, and like you said, we were lower at 109 and change for ZN and even that for ZB, I would get in ZB also with a long call spread, but I don't think it's there yet, But if things really get to the point of feeling like panic, that's the next play. getting long ZN because I'm already long ZB.
Yeah, and if there's only one more point to make here through this, if we need some sort of catalyst right now, it would probably be along the tariff front, given the fact that we see the inflation data today. And if you think that I'm taking a gratuitous interpretation that's inappropriate here about how the market's viewing the data and what the data actually says, we can just rely on the market pricing itself, I think, Jamal. And that goes through something like the SR3 contracts, which are available on the platform. So you see inflation, it's up a little bit today, but it's below expectations. Everyone knew that inflation was going up. It was a question of how much. Was it as much as we anticipated, a little bit less, a little bit more? It's up a little bit less than we anticipated, and yet Fed cut odds for July are down. They were at 6% and change yesterday. They're now 2.6% today. So for all the folks out there saying, see, it's just a bump for seasonal reasons, and it's going to go back down when we get the July reading, that very well may be the case. But even the market is reading through the data and saying the reasons why the Fed hasn't cut yet are becoming more apparent as time is going on. So will we get an acquiescent, compliant Fed in a few weeks' time when they meet for their meeting on July 30th? I'm going to take the under on that.
Yeah. That's actually the biggest, I think, takeaway, honestly, is that the market is starting to realize like the reasons the Fed is not cutting is becoming more obvious. And I think that's the biggest takeaway, because there is some confusion, I would say, overall from the market from what we're seeing today from this data. I mean, again, we're seeing yields do what they're doing, but the market's not exactly responding in kind by being down, which we normally would be seeing. So it is a little bit weird today, and it's a little bit conflicting. And I don't know if there's a lot of other news in the market today, if you've noticed, obviously, and name specific, but a lot of individual name specific stuff, right? Which also kind of feeds into some of the other stuff going on. Apple and this MP, which again was one of those companies that the Pentagon took a big stake in, and so that gets back into almost tariffs in a way, right? And so there's just like I feel like a lot of other noise, and obviously bank earnings that might be affecting the market a little bit in a positive way. Because I feel like if this were any other just regular CPI day with no other news, I feel like we would be down more.
I personally really enjoy the headlines around MP materials for the political discourse, because if the federal government's investing hundreds of millions of billions of dollars into a private company, that's capitalism. But God forbid one little New York City mayoral candidate threatens to open up a grocery store. Everyone loses their mind.
Dude, not only investing in a company for rare earth metals, but then on top of that, Apple comes, one of the companies that has probably arguably has the most to lose in this tariff situation, comes right in after that. Oh, yeah, we will support that. Come on, man. I mean, come on.
Come on, Tim Apple.
I was born at night. I wasn't born last night.
Thank you. I like that saying. Let's head over to the world of metals, where Jamal, once again, smarter than me. What did you do last week, Jamal, on Friday?
Well, again, we got to start back. We got to start back on with the initial trade. I mean, obviously, when silver broke out to highs on June 9th. June 6th, 7th, 8th, 9th, I got long then. I got long the 40-42 call spread. Initially, I was long the 42 call spread in August. I eventually flipped it out to September, maybe about a week ago. We got the big boom recently, obviously, exceeded even as of yesterday, was above 40 in the Z contract for silver. We were above $40 per troy ounce. And but on Friday, late Friday, I closed out the call spread. And just mostly because of the size of the position. I mean, it was about $3,000, a decent sized position when you have a $25,000 portfolio. So I decided to close that out, but I still wanted to be long silver because, again, I got long feeling that there was going to be another big breakout and probably eclipse 40 and maybe even go a little bit higher. And again, you've often done this, Chris, where you show the longer term chart going back several years where we see what happened in 2011. And so that's where I think a lot of that's where our thought process has been this whole time. Anytime we've gotten long silver, that's what we've looked for. And this is exactly it. So it's not that I thought it was going to fade, and I still don't think so. I think there's still possibly room for upside. but I just wanted to close the bigger position and put on a smaller position in SLV, which is what I did. So I'm in SLV now, long calls in there. And that position is, well, it was $800 as of yesterday. I've lost 200 as a result of the pullback over the last day and change, but I'm fine with that. And that was all it was. It's not like, look, we are the same in feeling the way we feel about silver. I just don't always trust this market as much as you do. I know I would love to see, boom, go higher above 40, go to 44 real quick. I would love to see that. That's what I would really want to see as far as momentum goes, but I just know it's not going to go that way. And I don't have the patience to sit in while we deal with this another little bit of consolidation in the meantime.
Friday, 11:40 a.m. Eastern. December silver touches 40. I'm going to close the SI call spread. You know what thought crossed my mind when I saw silver yesterday in the SIZ5 contract of the December silver? It's sitting at $40.005. And I went, what are the chances that this is the top tick of the day? So we're $1.50 off that high now. The question is what comes next. We've fallen back to our 1 week moving average, which is 38.49 here in the SIZ5. We're currently at 38.55 here. I'm still holding on long. It's been an uncomfortable 2 days with it bursting up to new highs and then getting crushed here today. But we have tariff inflation and deficits. So has anything changed? If you told me this time last week we'd be up at $38, I'd be a happy little camper with call spreads that still had 40 odd days to expiration. And so a 2-day setback means nothing, Jamal. I've seen what makes these people cheer. Their boos mean nothing to me. And we've been looking for a $43 move, right? All these people who are saying silver can't keep going up, gold can't keep going up. The long-term chart that you alluded to here, we actually haven't shown it in quite some time. But there is this left shoulder, head, right shoulder that is just simply a doubling of the range, gives you $43 by October of next year. So we've been very constructive for some time right now and staying consistent with that, having long exposure. For part of the second quarter, it didn't work because there was a lot of chop and grind. It's worked in recent weeks. Something needs to change here to get me off the train. And I would say that would be, let's go back into the range, right? If we find silver trading back below 37.35, 37.50, okay, maybe this consolidated breakout that we saw, it's failed. And then thinking about the bigger picture, Jamal, I know that you and I have taken a look at this a number of times, but then if you start to get back into the breakout territory, all of a sudden the uptrend off of the April, May, June, now July swing lows, that 1 month moving average, that comes into question. And so then a lot of technical support disappears. So yeah, you could stay long. I'm going to stay long. You're smarter than I am, so you readjusted 2 days ago at the exact price, literally half a penny above where you said the market would be a good place to adjust.
To be fair, I did it a day early. I mean, I did. Again, another trick I learned from, right. Another thing I learned from a trader who was always much more smarter than me. He's right. I mean, a lot of times when you see those, I thought about it and I was like, 40, you know what? Maybe I'll do a little bit in front of 40. I'm probably going to be annoyed if it gets to 40, but you know what? I'll be happy overall because it's better. There's so many times we know this, right, where certain things happen in front of or at around big prices, and that's all this really was. Is that the top? I don't know. It's just the near-term top. It doesn't necessarily mean it's the top overall. And so, again, I'm still long silver. I'm just doing it in SLV now.
Seems like just a bit of profit taking after reaching some big round numbers. I think you might say the same thing about another, not metal, but alternative anti-dollar. What you're seeing here with crypto today, Bitcoin is off the lows, but there's your little bit of a top type of looking thing. The dollar is also doing really well. So higher treasury yields and a stronger US dollar. Has that been a great mix for gold and silver? Absolutely not. No, it has not been. So is this the sign of the metals rally ending? It might just be, again, what have been the most crowded trades? Long gold, short dollar. And we're seeing basically that trade metals currency reverse here in today's session. We can keep moving forward. This is a good spot here if people are on the same page as us. Oil down is the good part. Nat gas up if they didn't chicken out like I did. But we go over to crude oil here, and it's returning closer to the midpoint of this fabled 3-month trading range. That sits closer to 65 here in the CLU5 contract. That's what we're playing for. That's the game. No geopolitical risk of any significant form or fashion, so we look for a lot of sideways chop. The question I find myself facing is, would I want to put this position back on if I had to do it today, or when it becomes roll time next week? And the answer is plainly yes. Wrapped around 64, this has been a sweet spot. This is the ideal place to get in for directionally neutral. So I think press forward here. It's a sea of green, or rather a little oasis, an otherwise desert of Bitcoin and silver, and what that's doing to my position today.
Yeah, an oil iron condor is definitely the best trade to have on right now, even at an IVR of 25. I think we identified this 64, 65 area as probably something it would normalize to after all of the geopolitical craziness that happened a few weeks back, and eventually resettling into that range. So this has been the best trade. Anyway, if you're hunting for a trade in oil, this is it. There's really no other trade, honestly.
There's no other trade right now. There's no reason to be directional.
No
reason to get caught in the chop. 64 days, 63% probability of profit. You can tinker with that. Go $2 wide, wrap right around the 1 standard deviation move. What else is there to do, right? This is not a high convexity trade, but there are some things that are just honest work. And one of those honest work trades, if you're not getting geopolitical risk in the energy market, the best predictor for oil prices at any point in time between now and day 365 out from now is the current price of oil. So I will bet on that time and again. And it's working. So we're not going to get off that train. Natural gas is a real SOB, but we all knew that because that's what natural gas is. Who bottom ticked the market last week when they folded their long exposure and would be back in the money on everything?
I closed mine too down there. It just looked ugly, and I wasn't really interested in playing it at that level. And it would have got even more nerve-wracking because, again, it got below 320, and that I wouldn't have loved at all. So I closed it, closing it for a small loss. Sometimes it's just better for your sanity, Chris. Who cares if it does bounce back?
It's worse for my sanity. And we find ourselves back to the 1 month, which we hit as resistance at the end of June. There is a bit of a hurricane that's forming. We covered this yesterday on the show, either here or overtime. But there's a hurricane that's forming in the Gulf or in the Atlantic right now that could be making its way over to the Gulf by July 21st. It's about a 50% probability of impact, but it could go across the central northern part of Florida, not quite the panhandle, but make its way into the Gulf, which, if folks recall from some of the shows we did last fall, when you have these hurricanes make their way into the Gulf region, some of these wells get shut in, and it temporarily causes a slowdown in production. As a result, there's an imbalance in supply. We can't we can't pull things out of the ground. Oh, okay. Does it fade? Yes, it does. But if we're in the thrall of one of these little bumps, as it were, that's something that we should be keeping in mind. It sets up a rally to sell, in my opinion, then, particularly if we're doing these tariffs, Jamal, right? Countries aren't going to buy our stuff as a tit-for-tat retaliation moves forward. And what do we sell so much of to the world? Natural gas. That sweet, clean natural gas. We're the biggest producer, more than Australia or Qatar. So 3.526. I wish I was still with you because I'd feel a lot smarter and I'd be a lot more dangerous having ridden that low out. Jamal, I'd be really cocky. That's when the mistakes come.
Exactly.
I'm not touching it. I'm not gonna touch it.
Me neither. I decided not to. I'm glad I closed the position. And again, I just feel like it's if it's not something you're really convicted in, again, it's tough because it does have good IVR. I mean, it's 55. Those are the areas where we usually want to trade natural gas, but I'm just staying away for now.
When I said stay away, I meant I'm not going to get directional. But with a 55.7 IVR, that is something that piques my interest. Here's the only issue. Looking at potential open interest and volume in the strikes I'm looking to operate at, I'm not finding too much of anything that I'm particularly thrilled with. The downside strikes aren't the problem. There's ample open interest. There's been meaningful trading volume in there today. When I'm looking at the upside calls that I'd like to sell 42 days out, right around, say, 410, 420, decent open interest. Where's the trading going on right now? So I might have to take a rethink on this, but directionally neutral, it's a 55.6 IVR. We just have to stay within the mechanics of looking for the volatility. There's a bunch here on the board. Vol and equity markets has gone up a touch. The IVRs are into the mid-teens now. So maybe it's in a swell. And August and September, it's swell. So if we're going to sell vol anywhere, maybe not step in front of the seasonal bump. Just a thought. Energy seems a bit distant, unrelated to all that.
Oh, for sure. 100% it is. It's just me personally, this natural gas has been such a kryptonite for me. I haven't been able to get a trade to work for me in here in a while. And I need the layup. It's been a while. I need the layup. I haven't had it. I'm not feeling it right now.
Yeah, and even with the hurricanes coming in, right? Because if it's a temporary delay in production, but it doesn't stop exports, then all we're doing is draining our inventory to keep the game going, and that pushes prices up. But if it's a significant enough disruption where our ports close, then we just consume all that natural gas domestically, and then the prices sink. So what kind of disruption will this be? The market's playing for it to be simply ports stay open, production shuts down, not everything closed. Everything closed is bad for natural gas. Dollar rally running here. Jamal, we don't take victory laps here, but it certainly feels good to be long yen puts these days. This is, again, one of those trades where positioning has been a real North Star for us. A few weeks ago, 2.6, 2.7 Z-scores in the yen futures market. Absolutely outrageous. Still 2.3 and change right now. But the discussion you and I were having today, Japan's in a really interesting spot. Japanese inflation is surging because of rice prices there, and the Japanese government doesn't want to intervene. They want to incentivize production of rice. It's a national staple. So higher rice prices should attract more competition to the space. It obviously takes time to grow rice. So can Japan, will the BOJ hike to counter this rice inflation? No. And so you have real yields eroding. Now the dollar has rates going up, and all of a sudden that downtrend that's been in place going back to February is broken. And here we are, darkness, our old friend. That 50-day moving average, where have we seen you at the end of February and then here in May? Back in June, fourth test. I ask you, is this the turn, Jamal?
I mean, we do take victory laps, okay, just a little bit.
Okay.
Because, I mean, check the tape. We talked about this at length on Tuesday, 7-1. And we talked about the idea that sooner or later, you can't push something down but for so long. Sooner or later, it does turn around. I was expecting more of a bigger type of move on an unwind, a 3 to 4 day type of big move. But, you know, this will suffice just as well. And it's been several days in a row now. We've seen the dollar moving higher. You talked about the yen. It just so happens there's other forces that are acting upon the yen as well, like you mentioned. But then you got the euro. You got obviously the rest of the components of the dollar. And this has been a big move, multi-day move in the dollar here. And this is on the order of what I was expecting. It's not necessarily the fashion in which I thought it was going to happen, but this is the order of what I was expecting. I'm still long my yen put spread in October. I am long the 117, 115. And after our discussion today, I did decide to get long some yen put spread. I got long the 006 in the orders, I guess it is, and the 006 55. So long that in September, and just, you know, potentially playing for more downside in these other currencies versus the dollar.
Yeah, that's something I'm looking to as well. Unfortunately, some of the currency futures markets don't have a ton of open interest in the strikes I'm looking, because the market's basically saying, how could we get back down there? Mm-hmm. That doesn't make sense. We shouldn't even price trades in there. I think that we should be thinking about last year's or even this year's lows in the yen. Why not? Why not 0065 between friends? The yen positioning is a real problem here. This should be a haven environment, should it not, Jamal? Why isn't the yen doing well? Let's go back to where we were in early April. Rising yields and a currency going down. Is the dollar losing its place in global trade? Well, no one's paying attention to Japanese yields going up right now and the yen cratering. That's a problem. That is a real legitimate problem for the currency. and it's not something policymakers can put back into the tube. So let's press this while we have the advantage. Yes, the 68 puts are working. I think rolling them down, taking advantage of this, we have an opportunity for a bounce, mind you. March 28th low at 0067.33.5. Note how close that is from here, 30 pips or so. We go back to the dollar index, we're sitting right up against our 50-day moving average. There's a place for the yen to find a breather and have a counter trend bounce, or for the dollar to stop this, what's basically been a rally for the entirety of the month. This would be a natural resting spot because it's been a place where the market has taken a breather in previous dollar rallies. So as for me, my plan here is to see what happens on this hourly time frame, very specifically the hourly time frame, because it has been a very aggressive move lower here over the past week plus. If at any point in time I see a close 2 consecutive hours above what's this 21 EMA on the hourly time frame, something that we have not notched since July 10th, I'm going to get out. I'm going to take out my current yen puts. I'm going to wait for a rebound, and I'm going to go into those 65 and those 66 puts for that September or December expiry, Jamal. But elsewhere, the opportunities are looking a little bit more immediate, where in the euro today, that's a bearish engulfing bar breaking below the 1 week and 1 month, as well as the uptrend from the April, May, June lows. This looks like it. I mean, this is the turn for the dollar on a technical basis. You have to put your chips in that corner if that's your view in the market.
It's really interesting. I mean, until recently, our dollar was down while our rates were kind of staying elevated, and it's kind of interesting, right, to see that. And then obviously, what's going on with the yen. I'm curious in how many other countries, because we all, I mean, it may be for different reasons at times, but a lot of our countries overall end up being sort of similar in a lot of ways that we don't always necessarily talk about, but it's true. And it's just something I think fascinating to watch, the differential between what's going on with a country's bonds and what's going on with their currency. Something that I think we all need to keep an eye on.
You look at the British pound here, it hadn't put in a close below its 50-day moving average going back to February 12th. Did it yesterday, finding follow through today, losing former highs that we had in April, swing lows that we had in June, which again, the low for June there is 133.90. We're currently sitting at 133.90. So dollar index at 50-day, euro starting to break down, yen reaching a swing low, pound reaching a swing low. If there is a bounce in the market that's anti-dollar, I'm not going to read too much into it. It looks like we've reached like the acceleration point where people say this thing is turned. And I think anyone who has been short the dollar, if there is a bounce here, they're going to view it as an opportunity to close their position at a better price and get out before this thing cascades. So it's working right now. It's working right now. We're not going to go against it. Again, lessons learned. I haven't learned the lesson of taking your advice when you're like, hey, I'm going to get out of this position we're both in. Got to be my own man and continually fall on my face. But with the positioning trades, right, and we've been on this for the past few weeks, what did we make the mistake of last year? You had the other side, a massive net short yen position building all year long, and I threw in the towel. And the first time I threw in the towel, literally that week, the thing exploded, just as predicted. But the market tapped me up.
That's the classic.
So you just got to stick with it.
That's the classic of the writer, often early, Chris, honestly. And that's one of the things that I've tried to change at times in trading. I mean, it's hard. Sometimes you got to hang in there if you're early. It's tough, though.
Got to hang in. And you got to structure your trades so you can hang in. You got to be able to play the game tomorrow. So what do we see on the calendar for tomorrow? Speaking of, the inflation data for the UK is due out, so they have their turn in the barrel. US PPI, which important insofar as CPI and PPI tell us all we need to know about the Fed's PCE. Japanese balance of trade later at night. There's a smattering of Fed speakers along the way who have really not moved the market because none of them are named Jerome Powell. And that remains our usual shtick as it refers to the Fed. But this is the final window with which we're going to hear from Fed speakers, because this Saturday, the communications blackout window begins for the run-up into their July 30th meeting. And I know we'll miss them dearly. Jamal, you're going to be back in 45 minutes time or so for engineering the trade. I'll be back later on today after last call for overtime with Radigan and Spivak. So we're going to keep this going here. Folks should go get a coffee, water, a sandwich. I don't know. What time is it where you're listening? Have something, because Tasty Live is going to be back after a quick commercial with Dr. Jim Schultz and From Theory to Practice.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do, man. Welcome to the It Snuck Up on Me. I totally forgot about this guy, but somehow, some way, we done survived the most important CPI print of our lifetimes. That was 8:30 this morning. It was more imaginary than most, and so I am quite surprised that we are here together again today. So thank you for being here and being a part of what it is that we do. It is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show, man. You can celebrate if you're a bull. You can commiserate if you're a bull. You can celebrate if you're a bear. You can commiserate if you're a bear. Man, you can do whatever you want. I do not care. And of course, if you have a question for me, drop it in the chat box, and I will try to get to as many as I can right around the halfway mark of the show. I typically get to between 1 and 1.5. So the sooner you get it in the chat box, the higher the delta that I will get to your question. So John, bring us into the market. Do we still have a market? Yeah, we got something cooking. Even the S&P is down 5 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, up 130 on the day. Apparently, there was some NVIDIA news that came out last night. And so it was good. It was positive. It was something that had to do with something semiconductor related, and the market loved it. And so the NASDAQ is higher today. That kind of makes a little bit of sense. You got the boomers getting beaten up a little bit today, down 339, and the Russell 2000 futures index down 29 on the day. And so, it's been – I mean, the market was super strong this morning off of the news last night, whatever it was. I didn't catch what it was. I just saw that it was something about NVIDIA that kind of hit the tape there. And yeah, so the market was fairly strong this morning, and then it sold off. And, it's almost like, man, it's almost like nobody knows, man. It's almost like markets move and things change. It's some crazy stuff. You got bonds down 23. You got notes down 15. You got oil down 45 cents. You got UB40 down 25. Man, you got the shifties. Yeah, they're getting smacked around again today. Down 23. They were down yesterday, I think, right? And silver's down today, too. Silver's down significantly. Silver down 64 cents on the day. That's a pretty big drop for the Hunt brothers out there. And so silver down to 38.10. Yeah, you got gold. Hang on a second. So gold, let's see here. If I go to my my trusty chart, let's see here. Yeah, gold was down yesterday, right? Yeah, here we go. This is a daily chart, I think. Yep. So yeah, so gold was yesterday was weak. I was like, I'm pretty sure yesterday was weak. Now I did skip my blueberries for lunch today, but I'm like, I think I got this one. I think we can kind of roll solo Jason Derulo style without the blueberries. But if you look at yesterday, you've got gold down. It was down. Let's see, we opened at 33.76. We closed them at 33.59. So just a little 17-point drop on gold. That's really nothing. That's basically the bid-ask spread differential. And then today, which is a joke, by the way, if you're brand new to the show, today, not a very good one, but it's an attempt nonetheless. And then today, and you know what's funny about attempts at humor? So I did Boston on Sunday night, right? So I did Boston. It was amazing. It was so great. Like, I had so much fun. And again, I can't wait for Detroit. I can't wait for Tampa. But you know what's funny about being in a live setting, right? Is, I mean, I'll be on the show. And if you've seen the show for any length of time, like, you know, we come at you, man. We come at you, and we're just relentless with the B- humor, and we stay right in our lane. Like, it's B- very consistently. But then sometimes I'll say something on the show, and I'm like, I don't know, man, that was pretty decent. We may have touched B. That may have even been B+. But then I go to Boston, and I'm live, and I'm like, no, we are B- on the ceiling. Like, we are usually probably more like C+. And so let's go ahead and remember the fact that we are B- till the day we die. But nevertheless, I digress. Here we go. So gold today down, let's see. Gold opened at 52. Now we're down to 36. And so, so we're down. I mean, we're down 23 in terms of yesterday's gold close, which is not exactly where it closed. But anyway, I digress. I mean, come on, man. It's a Tuesday show. You guys know that we're off the rails on Tuesday. And so, all right, let's go ahead and let's see here. It looks like E-mini S&Ps are about to be unched on the day. Look at the Bitcoin bros, man. I have not given my Bitcoin bros their due like I should. You've got Bitcoin up to 117, right? $117,000 for one Bitcoin. Right, for one Google password that, of course, it's a super strong Google password. Like, this is not like a mediocre Google password. This is when you say, give me the strong stuff. Bitcoin 117. That is, man, that's some really, really crazy stuff. And it was over 120, right? Yeah. Wow, hit a high of 123. And so, I'm not a crypto bro. Like, I leave that to the experts. We'll have to wait and see. I mean, from what I can tell, again, even just looking at this a little bit of the chart here, I mean, you can see you've obviously got, some resistance right here, which was clearly problematic for Bitcoin. You've got some support down there. This is just basic. This is baby pips type stuff. But I mean, just looking at this little bit that we see on the screen here, I mean, you're at 117 right now. They were just at 123. So, I mean, your next couple ticks are going to be, 123, right? Obviously, that's pretty straightforward. 131, right? 136, and then 67.5. And I mean, this is just basic stuff. I mean, you're looking at your fibs, your Elliott waves. It's going to basically send you on this path. And so there you go. 117, 123, 131, 136, 67.5. So, all right. So that's my Bitcoin analysis. And so if you're looking for a crypto show, we have plenty of crypto content here on the show. I'm not your guy, though. I am not your guy, man. Like, I'll give you the B- humor, and I'll give you a couple of other things, but I'm not going to give you any worthwhile crypto commentary. So, all right, let's go in here, though. Do we have any victory laps? I don't know. I don't think we do. Like, we can probably muster one up here, but we've got Citigroup. Oh, maybe we do have a victory lap. So we've got Citigroup and we've got JP Morgan. So these were the two earnings trades for this morning. And I'm a little bit surprised that you've got a little bit of a mixed bag, right? You've got, Citigroup doing well, up $3. You've got JP Morgan doing not so well, down $2.34. And so let's talk through the different things. I mean, there are different strategies. The first one, the Citigroup strategy, was an upside butterfly. And that is the one that's working out really, really well. We're actually up about $1.50 on the trade, which is super nice. And then JP Morgan was just a straight at the money vertical spread. The benefit here to this being only Tuesday in the week, I talked about this a little bit yesterday before I put the trades on. So if you are brand new to the show, I mean, one of the things I really try to do on this show that I think gives you a differentiated product from anything you could find on the internet, anything else you could even find, on the network, in that I do almost all of my trading exclusively on the show. And so again, like if I say, hey, I did JP Morgan yesterday, I did Citigroup yesterday, and you're tuning in for the first time today, welcome aboard. But you can go back to yesterday or whatever day it happened to be, and you can see my thoughts and my analysis around the trade. So if you're curious why I put the trade on, why I chose the strategy I chose, why I was bullish versus bearish, whatever, you can go back into the archives and you can check that out. You can rest assured that I didn't put the trade on at like 9:37 or 11:08 or something like that, where I was off air and I wasn't able able to share my thoughts kind of real time, authentically in the moment. And so that's one of the things that I've tried to do for the longest time on this show. And I've gotten a lot of really good feedback on that. And so we'll keep doing that for some time to come. And so yesterday we did JP Morgan and we did Citigroup together. And so if you're watching today for the first time, go back and watch yesterday. But JP Morgan, well, actually both of these trades together, let's lump these guys into the same category, and then we'll kind of break them apart as we talk about the management. When you do a front week strategy, it really doesn't matter what it is. I mean, it could be a butterfly, it could be vertical spread, it could be strangle, it could be straddle, it could be whatever. When you do a front week strategy and you do it on Monday because the earnings happen to be on Tuesday morning, like was the case for Citigroup and JP Morgan, you're giving yourself multiple outs here. Like you're giving yourself kind of multiple ways to win, multiple days to win. Where if it works out the next day, which is kind of the case we're in here with Citigroup, then you're in a great spot. You can take it off, you can leave it on, you can do whatever. I mean, we'll talk about Citigroup here in a second specifically, but you have a lot of flexibility, you have a lot of leverage, if you will. If it doesn't work out, which is basically the case we have here with JP Morgan, you still have several days left in the week. Now, depending on just how dire the situation is largely going to determine, what you do moving forward in terms of, cut your losses the next day, let it ride, whatever. But when you do a front week strategy for earnings or really for any reason, and you do it on a Monday or a Tuesday, Monday going into Tuesday, Tuesday going into Wednesday, it's important to remember that you have multiple days. That's going to be very different from, I think Netflix is this Thursday, right? Like, so if Netflix is on Thursday, we are absolutely like 100 Delta. You can bet your bottom biscuit we will be trading Netflix on Thursday. I will most likely be doing an expecting a butterfly, but we may hedge it off with like a short put or something like that. So on Thursday, which was another weak attempt at humor, on Thursday, that's of course if we play the butterfly to the upside, which again, if you can't beat them, you got to join them. I mean, the CPI, inflation is like super hot. Isn't inflation like mega pine hot now? Like that's crazy. And that's not even going to send the market down. So man, we're just going to ride this thing all the way to the top before the bubble bursts all over everybody. But if you do a strategy on Thursday, you wake up on Friday, you come into the market. I mean, this is ride or die. Like this is going to be kind of the last Mohican when it comes to that strategy. So it's just a different mindset. It's a different approach. You have to understand what you're signing up for. Monday, Tuesday versus, well, you can't do a butterfly on Friday, of course. I mean, I guess you could. Should we consider that? No, probably not, because then I'd be doing it on the open. You guys wouldn't see it. So I won't do that, but I guess you could do that. So Thursday butterfly is very different from Monday, Tuesday butterflies. Let's go ahead and say that. So, all right. So what are we going to do with Citigroup and JP Morgan? And of course, again, if you guys have a question for me, I would get it in the chat box because I can see you guys in the chat already. Man, look at you guys. Man, look at you guys. Man, you guys are crazy. I see Sam L, Emmett Morrison, Scramble, everything's in the house. Weiss in the house. Kiash in the house, man. Tony AZ's in the house. Man, it's a good day when Tony AZ made it to the show. Man, I appreciate you guys. I'm going to get to you guys here in just a second. Let's talk about Citigroup. Let's talk about JP Morgan. Let's talk about Citigroup first because, so let's think about this. We have a $5 wide butterfly, right? We paid $1.20 for it. We have to understand that the maximum mark price, so this mark price right here, right, that's showing you the current value of the strategy. And you can see for us, it's $2.76 now. The maximum value that I should say could possibly take is $5. That is the maximum value. It can't be 505. It can't be 550. It can't be 10. It can't be 15. The maximum value is $5 because we have a $5 wide butterfly. Okay. It's Tuesday. This guy expires on Friday. What would need to happen for us to hit this maximum value? This is very important. We would need to do two things. We need to essentially fulfill two different criteria. Number one, we would need to pin the short strike. So we would need to pin this 92 strike. So we would need Citigroup up about $1.50, which that's not really that big of a feat for it to hit 92. That's very likely to happen in the next couple of days, I would say. But it has to stay there. And so when we say pin, that doesn't mean touch. That doesn't mean graze. That doesn't mean test. That means pin. That means get there and stay there. That's very, very, very unlikely to do, even for a $92 stock. And obviously, as the stock price goes up, you're dealing with a $200,000, $400,000, $1,000 stock, whatever. The likelihood that you pin a specific number clearly goes down and down and down because you're just dealing with a bigger base. But number one, we'd have to pin the strike. Number two, we would have to do this at expiration. So we can't get away with a Tuesday afternoon pin. We can't get away with a Wednesday morning pin. No, no, no. This needs to be a pin at Friday, or on Friday, I should say, at 4 o'clock. Exactly. So if that sounds like a pretty insurmountable task to you, it should. And so that's important to understand. Like when you're looking at a maximum profit or maximum, potential gain on a butterfly strategy, you have to understand what the criteria is that you need to fulfill to hit that maximum profit. Okay, so in other words, for us right here, that means I've already made $1.58 or so. For me to make another $2.20, give or take, right? I'm going to need to do these two things. Okay. Does it make sense to go for that? No. Does it make sense to go for anywhere near that? No. Okay, that's off the table. So going for anything near max value is off the table. Now, it's a different story when you do a Thursday going into Friday. Like for this Netflix trade, it's going to be a slightly different story for us because we are going to wake up on Friday morning and it's like, okay, expiration is today. It's still not easy to pin a strike, and we might not necessarily go for that, but it's just a totally different approach because you are at the very end of the expiration cycle. So I'm not going to go for max value. I'm not going to go for anywhere near max value. The question becomes, should we go for more than we currently have? Well, if you look at a butterfly that's working early in the week, you're going to see you're going to have positive theta. Like now you really have time. Time is really working on our side right now because we're so close to the short strike. We haven't pinned it, but man, we are so close that now decay is working for us, theta is working for us, and so on and so forth. So, should you stay in the trade? Am I going to stay in the trade? When it comes to making this decision, it's your call, of course, at the end of the day. If you wanted to stay in this trade for another day, I wouldn't necessarily have a big problem with that. The issue that I would have is keeping in mind, so let's zoom out. So forget about butterflies, forget about verticals, forget about earnings, forget about all that stuff. What are we trying to do on the network? Like what is one of our main objectives? Is to manage our winners and give our losers duration. Right now, we have in our back pocket basically $1.60 winner on $1.20 base. So we bought the butterfly for $1.20. We can ring the register for over a 100% gain on this strategy. It doesn't really make a lot of sense to me to hold this strategy any longer. If you were looking at this and you were like, hey, I've worked my tail off to get to this point. I mean, it took me at least 20 seconds to click the mouse a couple times. Hey, I understand. Like, I totally understand. You want to leg this thing out for one more day? I don't think it's the worst decision in the world. I think you can make better decisions, and I think taking this off now is probably the move to make. But as long as you don't have any like grandiose ideas of going for max profit, trying to pin short strikes and things like that, I wouldn't necessarily have a huge problem if you wanted to try to get a wee little bit more juice out of this orange. I don't like it, and I'm going to take this thing off for all the reasons I've kind of just gone through. But I try to be aware of the different pathways forward through the forest and the different things that you guys might be looking at when you're looking at trades that are either the same as mine or similar to mine or whatever or what have you. And so, all right, let's go ahead and let's take this guy off. I think we did it, man. Did we do it? Is the victory lap over for Citigroup? Do we need to find another 5 or 6 minutes somehow? I mean, I can do it. It's not that hard. It won't be related to Citigroup at all. It'll probably be, Ghost and, the sour watermelon, which is, I mean, that's not that great, honestly. It's nothing like the sour pink lemonade or the sour green apple. But now let's take this guy off. Let's just be done with this. And then I want to talk about JP Morgan for a couple of seconds. So let's do, the mid price is 286. I'm going to try 288. Let's just see if we can get somebody to, they gave it to us. Wow. Did you see that? Did you see that? They gave us more than the mid price. Man, those high frequency traders, man, they got us again. And by got us, I mean they gave us 2 cents. And so we appreciate you, HFTs out there. We appreciate you very much. And so, all right, so Citigroup is over and done with. So JP Morgan, because I want to play Goldman Sachs in the morning. Because Goldman Sachs is tomorrow morning, and it's like, hey, we might have a little bit of momentum going. So JP Morgan, this is going to be super quick. We're not going to do anything. There's no reason to. Because if you look at the strategy, it's right there, man. It is right on the razor's edge of being profitable. Like we're down, 30 cents on the trade or thereabouts, but it's not like we're, completely out of the woods. It's not like this thing has gone completely off the reservation. Like we're in a really good spot. We just need a tiny little uptick, just a tiny little uptick in JP Morgan, and we could be profitable on this trade later today. I mean, we could be profitable on this trade tomorrow for sure. And so for JP Morgan, I'm going to sit tight. I'm going to do nothing. Now, tomorrow, if for some reason, if the market, because we got PPI tomorrow morning, and it's not any old PPI, like I can't remember a more important PPI than the one that's coming out tomorrow at 8:30. And so with PPI and the made up numbers and the imaginariness of the model that we're all going to be presented with at 8:30, if the market rips on all that and JP Morgan opens up like $7 or something crazy, there's a good chance I'll take this trade off tomorrow. Now remember, on Wednesdays I'm with Errol for today's assignment, so I may mention it on the show with him. I may not. If I do take it off tomorrow or even Thursday morning, I will certainly circle back to this on Thursday during the show. So you will not miss anything. If we take this off for a winner, you know that the average duration of my victory lap on air is about 11 and a half minutes. So you're going to get an 11 and a half minute commentary and kind of post-mortem analysis on the JP Morgan trade if we do take it off. So JP Morgan, I'm going to sit tight because there's no reason to take it off. Like it's very close to working, so let's give it a chance to work. Goldman Sachs. Let's go into GS. So Goldman Sachs is in the morning, and then I'm gonna get to you guys because I'm right about the halfway mark of the show. Market hasn't done very much since we've been yammering on for the last couple of minutes. Okay, so Goldman Sachs is tomorrow morning. Again, guys, I don't really, I don't know that you need to overthink this, man. You don't want to underthink it, but I think we apply the appropriate level of thought here. And again, if you can't beat them, join them. Like, Citigroup worked, played it to the upside. JP Morgan, it's still TBD, but it looks like it has a good chance of working, playing it to the upside. For Goldman Sachs, I mean, I kind of think, man, let's just go in here. Let's not really overthink this. What if we just go to the upside? I'm going to do another butterfly. So this is going to be a similar approach to how I treated the Citigroup butterfly, I should say, where I'm not going to be really going for a home run. I'm really going to be kind of going for a single, maybe like a Jaron Duran double where he legs something out that should be a single, but he's so fast and he runs like he's angry at the ground. And so he'll be at second before you even know what happened. And so we might go for something like that. But for Goldman Sachs here, I'm kind of thinking, we do a 710, 730, 750. $20 butterfly. I mean, can we get it for less than $5? Wow, look at this. So this Goldman Sachs butterfly, Goldman Sachs at 703 for all my audio only listeners out there. Goldman Sachs at 703. We're doing the 3-day cycle, of course, the front week for the butterfly. 710, 730, 750. Right? Buy a 710, sell two 730s, buy a 750. All calls, of course. This is only 377. I mean, they're straight up just giving these away. They're just giving them away. I thought it was going to be like 470, maybe $5, but this is only 377. And so I don't know that we really need to do too much more analysis on this. I mean, expecting move butterflies are great ways to take a shot directionally. They're fun trades. I mean, obviously they're fun when they work. They're not as fun, I guess, when they don't work. But if you want to take a directional shot, especially with, look at the IV rank. IV rank of Goldman Sachs at 16. I mean, that's a little brutal to do anything that's kind of, traditionally short premium, like, selling a vertical, selling a strangle, selling a put even, what have you. So I think directional shots make a little bit more sense here. And so I think, if it doesn't work, it's only a few bucks. That's only just over 1% of the account. So from a position sizing standpoint, it's also very, very small. So if it doesn't work, with a defined risk strategy, whether it be earnings or really anything else, you need to be prepared to take max loss. You need to absolutely be prepared to take max loss. Now, that likely won't happen a lot of the time. It'll be somewhere in between, or it might even be a winner or whatever. But when you get into a defined risk strategy, a mistake that a lot of new traders make is they kind of feel like they should be kind of, shortchanging it or circuiting the process early on before expiration. You don't really want to put yourself in a position to where you would have to do that, because that can be really problematic from a position sizing standpoint, from a risk per trade standpoint. Like, there's just a lot of negative things going on there. And so make sure you're controlling your position sizing on entry such that If it doesn't come back, it doesn't come back. If it's going to be a max loser, it's going to be a max loser. And so for this trade, if it doesn't work, then we're gonna be okay. But hey, the first warm up set went pretty well with Citigroup, and so it's just like any other training session. The first warm up set goes pretty well. What do? You ratchet it up a little bit for that second warm up set. You want to say, all right, am I on the verge here of a really nice session? Like, you got to find out. And the only way you're going to find out is with a second warm-up set. And so, all right, let's see here. Let's go in here. 377. We might get filled. I don't know. We might not. If we do, we'll just go up a little bit. Or if we don't, I should say, we'll just go up a little bit. Okay, so no takers at 377. Let's do 380. All right, filled at 380. Beautiful. All right, and we're right at the halfway mark of the show. Man, it's almost like we've done this before. We really haven't, and so it's almost like that. But let's see here. It's only been 10 years. But let's go ahead. Where are you guys at? Man, I see you guys. Man, look at you guys. Man, look at the data traders in the house, keeping the chat going, keeping the chat alive near the end. I really appreciate you, Theta Trader. I appreciate you so much. And so, I'm catching somebody in the middle here. Scramble Everything in the middle says, hopefully by the time Dr. Jim gets to the Citigroup trade, it is still profitable. That's happened before on the show. Well, I think it's happened where I've actually been on the trade, like wanting to close it, and our commentary just took us off in so many directions that when it came time to actually close it, the profits had been gone. The profits had disappeared. And so thankfully that didn't happen there with our Citigroup trade. But let's see. Can we surprise and delight somebody else? Oh, you guys are going off the rails with spaghetti and Italian talk and a whole bunch of stuff. And so let's see. MJ. Here we go. MJ says, can you please put the link for your latest option crash course? Thank you, MJ. I appreciate you so much. I can't do it right now while I'm on the show because I'm focused on the show. Can somebody who's watching the show, I'm talking about the core position here. So Theta Trader, I'm looking at you. Sam L, I'm looking at you. Scramble Everything, I'm looking at you. Like Weiss, I'm looking at you. You guys help me out here. Find the link to the crash course, drop it in the chat so MJ can check it out, because that guy was just released the last couple of days, and it's a very different look and feel from what we've done in the past. So I would love to hear what you guys have to say, and of course, email me what you guys have to say, especially if it's negative. If it's negative, don't put it in the comments on the video. Put all positive stuff in the comments on the video, but then email me kind of on the side and let me know your real thoughts if there's some constructive criticism there. But if you love it, then tell me that you love it too. That would be great. So, all right, let's go to the beginning. I forgot to put my comment in at the beginning. Where are we at here? Emmett Morrison. Oh, Grumpy Mike says, I figured it was still muted. No. And Emmett Morrison says, we're free. Yes, you have been freed from the lockout window, the blackout window that is right before my show. And hopefully we don't get the internet might go out here because there's a huge storm. You guys might be able to hear the thunder. I'm not sure, but there's like a lot of thunder crackling around the studio here. And the lights, they've actually flickered a couple of times. And so I'm like, oh man, I really hope we hold out for the next 18 minutes. But if I disappear or if I freeze, it's probably because of the storm. And it is rainy season here in Florida, which, it's only rainy season like 9 months out of the year. And so it's not that bad. But Brian Dowdy says, hello, Dr. J. I'm currently stewing in the bathtub of filth with TLT. You and me both, my friend. I will be using the do nothing strategy, which is exactly what I'm going to do. I think you have a victory lap on C and JP Morgan. So only C, not JP Morgan, but it could just be a postponed victory lap, right? Which we kind of begun. I don't know. We kind of started to take it today, but we may have to finish it in a couple of days. But thank you there, Brian. I appreciate you. And yeah, with TLT, 31 days to go. It's slightly in the money. This is one of the great things about short puts. If it's a stock or an asset that you don't mind being longer term, you can hold an in the money put, no problem. Like, it's not really that big of a deal. Now, bonds is a little bit different than stocks. Whereas a lot of people, most people that are watching, are probably bullish on the stock market long term. And I think that is the only way you can really play it if history is any guide. Bonds are a little bit of a different story in that they're not necessarily, quote unquote, assured to go higher. Nothing is assured to go higher. But stocks obviously have a much better track record than bonds do. Bonds are going to be a lot more back and forth, maybe up a little bit over time, but not quite like stocks have been, of course. But with interest rates, you would think that whenever the cutting cycle does begin, you would think that that's going to lead to higher bond prices. But, you got to be careful saying the market is, quote unquote, supposed to do X, because that's when they get you, man. That is 100% when they get you. Sam L's in the house. What's going on there, Sam L? I appreciate you. Sam L says, Doc, you're the original core position. Best show around. Man, I appreciate you. Look at you. We trade together, we win or lose, then drop a solid B- comment and laugh like seasoned pros. You're definitely underappreciated, Doc, man. I don't know. I appreciate you guys. Right. And you guys tell me that you guys appreciate me. And so I appreciate you guys appreciate me. Right. And so, man, Sam L, you are the core position. Like, I mean, it's you, it's Theta. I mean, so many people I can't even remember. I mean, I see you guys in the Herald, obviously in the house. And so, man, you guys are just, you guys are amazing. So thank you guys so much. And it really means the world to me that you value this show so much. And yeah, I mean, we're trying to blend, we're trying to have a little fun with what we do. You know, I mean, we're serious when it's time to be serious, but when it's time to kind of let loose and have a little bit of fun, we let loose and have a little bit of fun. And so thank you so much there, Sam L. And then, Grumpy Mike says, I always forget and type a few sentences during Chris's show. I hit enter, and well, that was a waste of effort. It's a lot of effort to type, just like it is to click that mouse. Like I was saying before with that Citigroup trade, it's like, man, that's 15, 20 seconds. You're not getting back. And so I understand there, Grumpy Mike. And so let's see. Harold says, Dr. J, how was Boston? Oh, it was amazing. It was so amazing. Like, the live shows are great. Like, I love them. Like, it's got a special place in my heart. And so I can't wait for Detroit. I can't wait for Tampa. And then we'll see. We'll see if Tom cuts us loose to a few extra cities next year. I mean, I've told him many times that I will go on the road as much as he wants me to. Like, I will go to as many cities as he wants me to. And so he knows that. He's known that for me for many years now. And so we'll see, though. We'll see if the powers that be agree with that. And so let's see. Brian says, I forgot to mark where your show started again. I did. There's actually a reason why. It's because of the login stuff with YouTube and stuff. And so for some reason that's given me some fits on my end. But rather than try to figure it out and mess everything up, I was like, let me try to figure that out maybe tomorrow morning. And then I'll be set for the show. And so Emmett says, you're looking rested there, Dr. Jim, man. I appreciate you. Yes, I did get a lot of sleep last night. And yesterday it was a bit like the Twilight Zone for me, just because it was such a long day and a really long night the night before with the show. And then I get done with the show and I'm all juiced up from the show. And so it's hard to go to sleep and then I had to get up early. But no, yesterday and into today was a very normal day. We did a little chest and arms today, this morning, with a little blood flow restriction training for my arm training, which, I mean, if you want to get a nasty, and I mean filthy pump in your arms, pop on some tourniquets, man. Pop on some blood flow restriction training, and it's gonna get nasty real fast. Weiss in the house. Hey, Dr. Jim, I was about to tell on you to the founder for buying premium on C, but it was a nice little trade. Oh, the founder, he does all kinds of crazy stuff, man. You can tell on me all you want, because here's the funny thing about Tom. Don't even listen to what Tom says. It doesn't mean anything. All you need to do is look at what he does, because what he does 80% of the time runs counter to what he says. So just look at what he does. Right now, I'm not saying he's necessarily buying premium, but he's buying some verticals. He's buying some butterflies. I mean, he's doing all the same stuff that we're all doing. And so, but I appreciate you, Weiss. Harold says, I must add, I went to high school with some guy named Robert Roberts. Oh, that's amazing. You're talking about the Anthony thing. Yeah, so Roman Anthony, who is obviously going to win Rookie of the Year, which is really, really awesome for the Red Sox. His family, right? His dad's name is Anthony. His brother's name is Anthony. His grandfather's name is Anthony. That's like the greatest thing I've ever heard. Like Anthony, like that is a power move. That's a power move. Especially if, I don't know what they go by, but like if his brother goes by Anthony and it's Anthony, like that's crazy. If he goes by Tony, it's not quite as impressive, but it's still there, in the formal version of the name. And so let's see. Scrap Everything says, Dr. Jim, welcome back to the show. Hope you're ready for the biggest PBI of your life. Not just my life, it's your life too, my friend. And so I really feel like, I see James just said that he put the link to the Option Crash course in the YouTube chat for you, James. Man, thank you, my man. Like, that's what I'm saying. The team behind the scenes, John and James and Paul and Laura and Ryan. I mean, and there's so many people and Matt. I mean, there's so many people that are doing so many things behind the scenes that make this show go every single day. My show and then all the other shows, they don't get nearly enough credit. They don't get any credit from Tom. And so let me just say, from my vantage point, like, y'all do so much for us. And I appreciate you. So thank you there, James, for dropping that in the chat. That's really helpful. Let's see, where was I? But yes, biggest PPI of our lifetimes. And so, I mean, if you don't have the bunker, if you don't have the materials for the bunker, it's too late. It's too late. You've just got to sit on your couch watching TV with the helmet on. That's the only thing you can do at this point. So Jeff Sanchez says, Brandon, if it was me, I'd probably roll out to September. Oh, that's a separate conversation. I'm gonna let y'all handle that one. Harold says his kids would clown him, saying his parents couldn't come up with another name. Oh, maybe so with Anthony. Oh, Robert Roberts, you mean? Yes, that's really funny. Brad says you're looking refreshed today. Yes, thank you. Got lots of great sleep last night, and so we have my wife and I. We have the most comfortable bed in the world, and so we're very very lucky to have a very comfortable bed. And so let's see. Scrambled says, must be the cousin of Anthony. That's good stuff. Kiosh says, 2 days in a row, I made it for the segment, man. Thank you. I'll take that as a win. Yes, that's a huge win. And so, but Kiosh says I got beaten on ETF 0 DTEs. Yeah, you got to be careful those 0 DTEs, man. It's okay, every once in a while to dip into the cookie jar, which we do, I guess, with our expecting move butterflies. But I still feel like, and I'm not up to snuff on all the research. The Tasty research team does so much research, specifically on 0 DTs, that I can't possibly keep up with all the things that they've come out with. I know the basic things and kind of the big cornerstones that have come out in the last couple of years, but like all the new things that are coming, I'm not up to snuff on all that. So I may say something that runs counter to what the Tasty research suggests. So just keep that in mind as my own personal little disclaimer. But I still don't think that 0 DTE exposure should be replacing the core foundation of what you're doing. And I had this conversation with a handful of people on Sunday night at the Boston event. I still think in at 45, out around 21, and that you can play around with that. Those are just reference points. It could be in at 40, out at 14, like that would be fine. It could be in at 37, out at 11. That would also be okay in my opinion. But some in around 45, out some semblance of early before expiration makes a lot of sense in terms of the reliability of theta. The first half profitability that the team has looked at so many times. I think 0 TTs can be a nice addendum. They can be a nice little supplement to that core foundation, but they can't replace the core position. Like the core position is the core position for a reason. I don't think we know enough about them yet for them to replace the core position, in my opinion. So, take that for what it's worth. You guys didn't even ask, but there you go. There's a little bonus material, so you're welcome. Joe's in the house. What's going on there, Joe? I appreciate you. Theta Trader in the house. I also, being present at this worldwide interwebs place. And time with all of you fine people and Dr. Jim. Yes, thank you, Theta Trader, for being here. Theta Trader is like one of the OGs, man. He's been around like from the beginning, if I can remember. The beginning of like YouTube chats for sure. And so appreciate you, my friend. Kiosh back in the house. Sergio is in the house. What's up, Sergio? Speaking of core position. Greeting, Dr. Jim. Hope all is well with you and the family. Yes, everything is great. My kids are excited because it's still summer for them. We homeschool our kids, so our schedules are all kind of weird. And what Autumn likes to do, actually, because it's so hot here in the summer. It's super hot here right now. Middle of July is kind of like, this is it. Like you just gotta, there's no way out other than through. That's the only thing that you can do. But we typically do a lot of schooling around the summer, and so she's actually gonna fire up school here in like a week and just kind of go through August. Because our time to shine here is like November. Like November, December is like beautiful here. Like February is like amazing here. March is amazing here. January is kind of amazing here too, but it gets pretty cold, man. It'll touch down. It'll get you low 40s. It'll hit you high 30s for like 10 or 20 minutes. And it's like, man, I didn't sign up for this. Like, what is this? A polar vortex in St. Pete? I certainly did not sign up for this. But yes, thank you, Sergio, for being here. I see a Scramble Everything says NVIDIA and Jensen were freed by Trump. Yes, apparently so. And so that's good. And you pronounced NVIDIA correctly, so nicely done. Let's see. Oh, Evan says he's glad I didn't get long silver. I don't know, man. Today the longs might be working a little bit, I guess, right? A little bit of something on the long side. And so Tony Aziz in the house says, why does Jensen Huang pronounce it NVIDIA? Does he know it's mispronouncing? Does he know he's mispronouncing it on all his quarterly calls? Apparently not. Like, you would think he would have figured this out. Like, it's pretty embarrassing, honestly. Like, if I was him, I would be pretty embarrassed. And so the fact that he is not saying it the way that it should be said, NVIDIA, I can't answer that. Like, only he can answer that. I don't want to put words in his mouth, but you have to ask him. So on his next quarterly call, you guys need to be there in the live chat like, yo, man, you're not even saying this right. And so Scramble Everything says, Dr. Jim is right back up to that B- humor standard. That's it, man. We are right there in the pocket. Like, we know We know our strengths, we know our weaknesses because they are many. And so we just hit you guys with the B-. And again, it's the Walmart strategy, right? The quality is low, but the volume is very, very high. And so Brian Dowdy says, off on another tangent. Yes, I think we've hit several today. And so that's good. Tony says the Tuesday tangent show. Yes, I mean, it could be, tangent Tuesday, tangent Thursday, maybe a little tangent Wednesday. Emmett says, over under a number of tangents. I'm 5-bit. Oh, that's pretty funny. Has the over hit now? I can't keep track. I know we've hit several tangents for sure. But you would have to also, I mean, you guys have to establish parameters. Like, is just a random comment, does a random comment count, or does there need to be some kind of extension off of the random comment to qualify as an official tangent? Like, if random comments count, then we're way over 5. But if there needs to be like a comment and then like a follow-up to where it's like, all right, you opened the door and you took a step into the house, like, I think to me that would be what would need to be hit for it to qualify as a tangent. But anyway, that's a tangent about the official definition of tangents. And so we are at an inception level here on the show on this Tuesday. Tony says, I'll take the over. That's easy money right there. And so Brian says, I thought Dr. J would be up on JP Morgan. I forgot what he put on. Yeah, we did a little JP Morgan commentary, obviously talking about not doing anything. And so, but the fact that we're not up, JP Morgan's just gotten hurt a little bit. But again, we're right there, Brian. Like, it's not gonna take much for this guy to be profitable. And so that's kind of why I want to sit tight and do nothing. And I feel good about the Goldman Sachs trade. And so you guys know, you should be doing the opposite of that. You should find a way to fade that trade. And so Tomas in the house. Hey, Jim, favorite segment of the hour. Man, I appreciate you so much. And I'm the only segment for this hour, basically, on Tasty. So that's a nice compliment right there. I'm actually your only option. Obviously, you guys get rewarded. If you make it through my show, you get rewarded handsomely with Jamal, basically heading into the top of the hour to close out the hour. But I'm the lion's share of this hour. And so, man, I appreciate you. But thoughts on a call ratio spread on IBIT? 70, 73, 815 expiration. Okay, so let's set that up. So if I go into IBIT, which is going to be your Bitcoin proxy at a much lower price. If I go into IBIT, and you said August, right? Yeah, so 31 days to go. 70, 73. So I'm going to buy a 70 call. I'm going to sell 2 73s. I'm going to assume you mean a 1x2 because you didn't specify otherwise. And this is kind of your plain vanilla Betty Crocker ratio spread setup. 70, 73. Okay. Is this a good idea? I'm not in love with it. And the main reason why I love ratio spreads, on both sides of the market.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade, and I am your host, Jamal Chandler, and I am joined with one of the truly great educational people in the space and options, Mark Benzaquin, Principal of Investor Education at OIC. What's going on, man?
Jamal, great to be here. Thank you so much.
I mean, I haven't seen you since we were in
sunny
Florida.
Right?
Beach, yeah. That was actually a cool spot.
It was great. PGA National.
When we drove up, this hotel, it's a big bear there, and I'm asking I'm asking the Uber guy, what's that bear there for? He's like, there used to be a lot of bears around here and all. I'm like, oh, okay, interesting. I'm like, there's no damn way that's true. Right. It had to be Jack Nicklaus.
That would be my guess.
But I was like, whatever. I'm going to let this guy tell his story.
Would be my
this
guess.
is why you don't ask your Uber driver questions, especially about trading.
Or at least don't believe them.
No, all the time, for sure. Yeah. We got a couple of different things to talk about today, man. First of all, thanks for having me on your show recently.
Very welcome. Cool. I loved it. We just released a podcast. Yep. It was wonderful. So thank you for being my guest.
Absolutely. And now you are my guest, my friend. Yeah. Tell the people a little bit about your background, your journey in options trading and where it started.
I've been in the business for almost 30 years, started in 97. My brother-in-law at the time was a trader in the SPX. And at the time, I was finishing up a career as a mortgage broker, which, my timing's always been horrible. I got out when rates were high just before they, cratered and all the brokers became millionaires. So
That's why you stopped in 97?
Right. So I stopped that in 97 before I actually started making money.
So wait, to fast forward real quick, we'll come back. But so then once 2001 is happening in real estate, are you annoyed or things going halfway okay?
Well, all of my friends that stayed in the business are now buying, vacation homes and buying boats. And meanwhile, I'm making $18,000 as a clerk on the floor of the CBOE. So that was kind of a tough pill to swallow.
Yeah.
But
how are you feeling as you're becoming a clerk? Like, how was it?
Well, it was crazy exciting. Back in the day, in 97, so, the dot-com boom was just ramping up. Options were still trading in fractions, right? But it was exciting. There was always something to go, something going on. I was a clerk for a bunch of OEX traders. The OEX was the S&P 100. And it was the largest trading pit on the floor at the time. There were 400 plus market makers in the pit. So always something going on, always exciting. The personalities, as you know, were off the charts. So for me, coming into this environment that I had never experienced before, it was exhilarating. It was exciting. It was, decadent. It was the coolest job outside of being a rock star. It was the coolest job in the world for me. And I honestly don't know how I did it, but I lasted down there for 17 years, kind of moved my way up, spent some time in San Francisco working on the exchange out there.
Which is, I always like, so for me, when you say that exchange, my first interaction with that was when I started I started in 07. And again, I came late to the game. And I say late because, I was 30 years old. I could have traded in 97, but I was in a different space and I was in different, time and et cetera. But you bring up San Francisco. Around the time that I was starting to trade, that's when that movie came out, the Pursuit of Happiness, and it was they have a lot of shots of that building. Yeah, and I've gone there, and it's still a beautiful building.
It is,
it's always
and a great movie too.
Yeah, great movie too. Yeah. But the Pecos was pretty cool.
It was a great building, but the interesting thing about there. So I go out there thinking this is going to be terrific. Market opens at 6:30 in the morning. I'm done with work by 1 or 1:15. I'm on the golf course by 2:30 or 3, playing 18 holes every day. It absolutely did not work out that way. Because I got up so early, I lived outside of the city. I lived in a town called Walnut Creek, and I had to be in the office at, I want to say it was 4:30 in the morning.
Sounds about right.
So, I got no sleep at night because I had to be up so early. Yeah. And so by the time I got home, rather than playing golf, I would take like a 4-hour nap. Because I was so tired. And then I couldn't go to bed at night because I took such a long nap and I'd be up until midnight, so I'd get a few hours of sleep at night, a few hours of sleep at nap afterwards.
I'm so glad to hear you say this.
It was that cycle.
Life. Because people make it seem like, I got up at 4, it's great, and I was done trading by 1. I go out and have a couple of drinks, go out and hang out, and then I just do it all over again. I'm like, no,
it was awful. And then, and what was even worse, and I should probably cover up my company logo when I tell this story. What was even worse was on, say a Friday. So you get out of work at like 2, and here I am. I think at the time I was 30. Yeah, single. Yeah. And I go out with all the traders and we hit the bars and everything. And by the time normal people get off of work and go out to have a drink to relax, we had been at the bar for 3 hours already. So my, my dating life was entirely non-existent. That was pretty horrible. But yeah, it was something.
San Francisco was great. I love that town.
I loved San Francisco. I hated the hours of the exchange. And when I got out there, this is gosh, how long ago it was. This is when most of the stocks were still singly listed. Yeah. So once they all became multiple exchange listed, because now the dot-com boom is coming on and everybody wants a piece of, at the time there was Compaq and there was 3M and...
Because you were trading a lot of very tech-heavy stocks.
Right, and that was all in San Francisco. So all of the exchanges are like, well, we want a piece of this too. So to me, the edge that the Peak Coast had over the other exchanges were those listings that they... were almost proprietary. Once they lost all that, they lost all their edge. The seats went to zero bid, literally zero bid for a seat. And I remember, seeing the writing on the wall thinking, you know what, all these people I know out here are from Chicago. And they're all going to be heading back to Chicago looking for jobs. And every single one of these people are smarter than I am. So the only thing I have is, an opportunity to get back to Chicago before they do and secure whatever job I can. I got onto the brokerage side.
So you didn't think at all about going back into real estate? You were like, the hell with that.
I loved what I was doing. Yep. The excitement of it. Every day was something different. Yeah, I realized that this is for me. This is something I want to do. Came back to Chicago, found a gig on the brokerage side, and I did that for the next 17 years, 15 years. 15 years I worked for various brokerage companies. The NASDAQ and the Russell, those were my two primary products. I was one of those idiots in the pit screaming and waving and fighting every day. And, I loved every minute of it.
Yeah.
So, I stayed there till 2015. I got out. Once the money stopped coming in and the pressure was still and the stress was still ridiculous, I thought, you know what, I don't want to do this anymore. And I always had an interest in teaching. I had two terrific teachers in high school. One was my English teacher, one was my economics teacher. And I thought, you know what, I think I might want to try to teach. So I did some substitute teaching for a while.
High school or something, or college?
High school. As a substitute teacher, and what I realized, and no offense to you substitute teachers, but what I realized, it was really just kind of like glorified babysitting.
It really is. I think that's pretty well known.
Yeah.
And you're not letting the cat out.
To me, I didn't. I thought, I'm like, this is great. Let's do some teaching. And I
had
remember
my
there was
best
one
in-class jokes against some substitute teachers. I'll tell you right now.
Well, when I was a kid, I would give them hell. I would make their lives miserable. So, but I was kind of excited to do it. And I remember I did substitute one day for a geometry class, and the kids just weren't getting whatever the concept was. And so I'm like, all right, let's teach. Let's, do this. And we all had a great time. It was something I really enjoyed. So I thought, you know what, I'm going to look into getting my teaching certificate. Meanwhile, I had all of these applications out to every acronym, you could think of, FINRA, the SEC, the NFA, what have you, OCC. And, luckily enough, they gave me a call. I, did some interviews, and I've been with them now since January of 2016. So this coming January will be 10 years. They give me the opportunity to explore my interest in education. They give me the opportunity to capitalize my background in finance and specifically options. And boy, I got to tell you, I couldn't be luckier. It's worked out so much better than I thought it would. It's really, really lucky guy.
Yeah, I happen to know of some of the people you're over there on the team with.
Yeah.
Talk about that role at OIC and sort of the investor education team and what you guys do over there.
So OCC years ago, along with the exchanges, decided, and this was back in the early 90s, decided that in order to get interest and awareness of the options product, we need to make sure that people understand what options are and how they work. So they created this thing called the Options Industry Council. And we were funded by the OCC and all of the exchanges as well. Now, once the exchanges went for profit, then and they started wanting us to focus on some of their proprietary products that they had, but it wasn't fair that we highlight one exchange and not another. So anyways, short story long, we ended up breaking away from the exchanges in terms of funding. We're fully funded by OCC, but again, our mandate, if you will, is really the same thing: to let people know that we exist, let people know who we are and what we're about, which is simply providing education. We don't make recommendations or provide advice or of any kind. We just want people to understand how options work, what the potential risks are, what the potential rewards are, and give people enough of an education as to the nuances of options to where they can make up their own mind whether or not options are right for them. And if they feel that options are right for them, to give them whatever education and information we can of how things are going to work, what to look out for, what these potential pitfalls are going to be. If your position's going against you, maybe some different management techniques. A lot of things that we talk about is corporate actions. If you're a company that you invested in with options underwent a reverse stock split or a merger, how is that going to impact your options contract? Because, to tell you the truth, we put this information out on our website. We've got an information memo section that, even when I read it, well, now I understand it, but back then when I would read these, I couldn't make heads or tails of them.
I agree.
Because a lot of the education is written in a sense, by lawyers for lawyers. Yeah. And, the average everyday person just can't make sense of it. So, we put this information on the website. We help people. We don't interpret it for them. We don't tell them what they should do, but we say, look, this is what it really means. And we try to make them understand so that they can then determine, what their best course of action is. But we create content every day. You were saying that, people from, OCC, Matt Cashman, who I know was on your show recently, he creates this, terrific, more advanced content. Certainly, implied volatility is one of his favorite things. Optionality is his favorite word to say. And he, really...
should it be a drinking game with Matt?
Oh gosh,
optionality?
Yeah, it really should. it really should. I don't know that you'd be able to get out of your chair after one of his presentations. But he really creates, excellent. You and I were talking about how most of your audience is more advanced.
Yeah,
and Matt really creates that advanced concept. Really, he really comes up with great things. We've got, other people. Roma Caldwell heads up our university program.
That's
Ken
my girl,
Keating.
Roma. We work together at CVOS.
Yeah, you know Roma very well, right? She said to say hello, by the way. Ken Keating, who you also know.
Also my boy. Yeah, we work
Ken does a lot
together.
of third-party presentations for different trading firms, and again, just presents webinars and explains what everything is about, and so that's kind of the meat and potatoes of what we do. And hopefully we'll enjoy some success through that by getting more people to understand that we exist and what it is we can offer them. And as you know, everything we do completely free of charge, and it's really just from the perspective of education.
Yeah, and then just I put it in the chat here while we were talking. Optionseducation.org is the site,
Yes, sir.
right? And I know one of the things that I often talk about. We talk about data and tools. You guys got a lot of data and tools on the site. One of the things that I use pretty much every day, and I've talked about this ad nauseum on the show, is on the site. I must have found it years ago. I don't even know how to navigate the site to get to it anymore. I just have it saved.
We redid our page recently.
It's not you guys, it's me more than anything, but I just have it saved. But I look at trending options volume.
Yeah.
I look at that just about every day.
Yeah.
Because again, we often talk here at Tasty about volume and about liquidity, and those are some of our bigger pillars and things we trade.
Mm-hmm.
And so I'm always looking at this, even when I look at it now, it's talking, it's showing me it shows you the top 20 names if you want, but I've shown this a lot on the show because I think it's interesting noticing on any given day, what are the big names that are moving the market? I mean, or not even moving the market, but what's trading a lot. And typically the ones that are trading a lot are the ones that we're probably talking about on a lot of our Tasty shows because that's where the volume is on any given day, right? And so, or there's some sort of news surrounding it, and it's reflected in here. So that's one of the tools that I use.
Yeah, you're going to see that most of those 20 names don't really change so much from day to day. They're always the biggest, day in and day out.
Yeah.
But there's, some interesting things. They show, my mind is drawing a blank right now, but how many puts are trading, as a percentage, and same thing with the calls. Implied volatility, is it higher or lower? So there's a lot of terrific information on that. Matt, I know, is putting out some great content on LinkedIn right now, sharing some of the tools that you're talking about, highlighting one each day. But then OCC, the umbrella over OIC, also has a ton of free content, free data on our website that's much more, not necessarily option-centric, but we've got data, historical data going back 2 years. So, for specific security, how much of that is being traded by market makers versus customers versus firms, the notional value of everything, open interest, flex reports. There's a wealth of, free data that people consume, by the thousands every single day on our parent website, and that's theocc.com. So THEOCC.com. But, combined with the two, there's a ton of free data, ton of free content, ton of free resources. I wish that I knew that this existed when I first got into the business in '97, because some of the content is so much better from an educational perspective than what I was getting from my trading firm that was trying to teach me the basics of calls and puts. When they were explaining it to me, it was like they were speaking Greek. I had no idea what they meant. But now, I look at it on the OIC website. I'm like, oh, this is presented so much easier. I wish that they had done that. Maybe I'd be a millionaire by now.
I know, right?
So, yeah, I blame my old trading firm.
I have two questions for you. I want to mention them, then don't let me forget them. One of them has to do with an options, I guess an action. Let's start with that. And because it just crossed my mind. I know there was a ticker. There was a Russian DTF, right? And like something happens in that, and then it goes. And then so people say somebody had an option position in that, and they had questions, and they come to you about a question with that. Well, how does this happen? How do you go about sort of figuring out, okay, what's going on with this thing, and then how can I best tell them how to? So what are their options, their actions, their abilities?
Well, depending on what is going on with it, the bulk of the questions that we get from people have to deal with corporate actions. So if there was a stock split or a merger or something like that. So those are the questions that we get a lot. How does this impact? So if somebody's got an ETF that something happened, maybe it was halted, or maybe it's going through liquidation, or maybe there is a split. Reverse splits, are typical with ETFs because they want to, maintain that listing status. So, we get people and they say, well, how does this affect me? We do two things. Number one, we direct them to the information memo section of our website where OCC provides detail of what had transpired, what that corporate action was, and then how that option is going to be adjusted. So that's number one. And then number two, we explain to them what it actually means. And we'll give them an example that, if you had a $50 call and the stock was, X, and it went through a split and, whatever it may be, this is what you've got now. And if you look at the pricing, it corroborates what I'm saying, that, your option is, far out of the money now, even though you think it's in the money and there was a reverse split. So it's not exactly what you were hoping for. But the market is reflecting that in the pricing. So if you want to not monitor, if you want to manage that position, maybe here's a couple different things that you could do. Here's how you roll. Here's how you, roll up or roll out, or, whatever it may be. So again, we present it from education, explaining to people, these are things you can do, like you and I were talking about earlier, not things that you should do, or not even what I would do. This is, here's option A, B, and C. And I'll explain to you how all of those work and what they all mean, but it's up to you to, I'll open the door. You decide whether or not you want to go through it.
That's a good way to put it. Open up the door and decide if you want to go through it. And somebody asked a question on chat. Is this different than the Options Industry Council? Sunflower, Mark works for the Options Industry Council. So OIC is the Options Industry Council.
Right. Yeah. OIC, the Options Industry Council, we are the education arm of OCC. So OCC pays signs my paychecks, provides my insurance and everything. But yeah, so we're the educational arm.
Yeah, it's interesting. I would say, and for people on the chat to know, I mean, you and I are basically the same, except the big difference is
you're much better looking than
that's not true. That's subjective. And your wife would disagree. And the big difference is, I'm talking about specific names often. You guys are not. We're talking about ABC and XYZ a little bit.
Yeah,
really
unfortunately.
But then the other thing is, like you said, like most times I will say, this is how I would do a trade. You don't typically do that. You're typically looking at things from a very educational standpoint.
Yeah, and it's
puts and anything.
And it kind of all, and those all kind of go hand in hand. The reason we don't talk about specific tickers is because we don't want it to be interpreted that we're making a recommendation.
Right. Especially since you're connected to the clearinghouse. I mean,
correct. And we are the clearinghouse.
You are the clearinghouse.
Right. Yeah, that's the thing. So that's what OCC is. We are the clearinghouse. So we are what is known as a SIFMU. Again, everything's an acronym. It's a systemically important market financial utility. So
I actually never knew it's SIFMU.
Yeah, I always have to look up and they're SIFMU, right? Make sure.
See, that's what when you look up and to the right. I saw this in a movie once. You're accessing your cerebral cortex.
Yeah.
I don't know. Sam Jackson's in the movie.
So then, by the same token, what is it when you're driving and looking for an address and you turn down your radio? What are you accessing there?
I don't know what you're doing there.
Right? But everybody does it, right? What does the sound of the radio have to do with you recognizing an address?
Yeah, that's weird.
But anyways, so because we're a SIFMU, basically utility, we've got regulations, we are much more heavily regulated than, at any other normal trading company or, what have you. So there are things that many things that we cannot do. Like, for example, you and I were talking earlier that we are prohibited from trading options on any security that we clear. So that means all, equities, ETFs, the majority of the indices, we cannot trade options on those. We can't even trade stock on our clearing members because there's a lot of sensitive information that comes, through our doors. I'm certainly, nowhere near high up on the totem pole to where I see this sensitive information. But the fact that it exists within our building and within our computers, the way to avoid any, issue of impropriety is to say nobody can trade options of any kind on products that we clear. I can trade, options on interest rates or currencies or oil or, what have you, but I never had an experience or an exposure to those products. And so I'm not going to, throw my money at it, but, maybe I'll learn those down the road. But yeah, that being said, they really take a close look at us to make sure that we're dotting all of our I's and crossing all of our T's and behaving ourselves. So yeah, we make sure we don't make recommendations of any kind, provide advice, and that nothing that we can do or nothing that we do can be interpreted as such as us giving advice.
Yeah, I mean, it makes sense. Nobody wants there to be any gray area, and I think the people appreciate that. Is there a typical day for you that you have?
Well, the interesting thing is, on my team, I'd mentioned Matt, Ken, and Roma. We all kind of have different projects, different responsibilities. So for me personally, all I do is create content. I'm just finishing up something that's going through the review process right now. It's complete. Hopefully, we're going to launch it within the next month or so. It's a strategy guide. 20 different of the most common strategies, how they work, outlook and motivation, how they react to changes in implied volatility, time decay, an example, what happens at expiration. So all of that's kind of interactive. And so I, categorized everything by forecast, by objective, et cetera. So you go on, you click, you're bullish, you click the bullish button, you're looking to, trade a bull call spread, you click that, and then it's got all of the, well, what do you want to know about bull call spread? So, that's something that we're finishing up and we should be releasing soon. We've also created this online curriculum, 9 courses, about 40 hours worth of free education covering from what options are all the way through synthetic positions. I'm just finishing up a new chapter on that. It's probably going to be standalone content dealing with corporate action. So what does my day look like for the last year? Really, it's been creating this content and making sure it all works, going through the review process, et cetera. Now I'm looking for a different project. Now that those are done, I've got to figure out something else to do, to earn my paycheck. But, one of the great things about our company and about our management is that they give us the bandwidth and the latitude to do whatever it is that we want in terms of projects, as long as it has that end goal of, providing options education, letting people know that we exist, spreading the word, teaching people how things work. So, that's a good chunk of it. The projects that we take on, like I mentioned, Roma's got the university program. Matt and Ken do all of these outside presentations with third parties, coming up with new content for them, and all 3 of them do fantastic work. And then the other thing is emails. We spend all day, investors write into us all the time, what's going on with this, what's going on with that. So we respond to emails all day long. And what I tell people is, we're just, a bunch of option geeks that sit around and talk options all day. And most people would find it, they'd rather listen to, people talking about Dungeons and Dragons than listen to, hear us talking about options. But, but it's a great job. We've got a great team, and I love the flexibility and the freedom that they give us. And it's always, it's something. It's never a Groundhog Day. It's always a new day and new challenges and opportunities.
Yeah. So I'm looking at chat here. First of all, there's been great reviews here. Sunflower is one of the fans of the show and actually recognizes you from some of the videos on YouTube. So
thank you. Much appreciated.
Great speaker. I have two. We got 3-4 minutes left here. I have two floor related questions. If for whatever reason,
oh Lord,
if for whatever reason there was a floor created again and there were single list names, would you trade on the floor again? I never traded on the floor, so I can't answer that question. We talked at length about floor and how it was and how our mindset was, and I always believe that stress should not be on anybody forever. But
you know what? I'm not that person anymore.
That's
I loved the floor environment. Like I said, it was the greatest job, next to being a rock star. But that, at least for me, that mentality, that environment, that climate. I wouldn't want.
Were you a different person when you were in trade on the floor?
I'm sorry?
Were you a different person when you traded on the floor?
Yeah, God, absolutely. I was aggressive. I was violent. I was angry. We would get in fights all the time. We would say the most horrible things to each other.
I mean, you compared to a rock star, but it's more like professional sports. Honestly. People get on the field, they're different.
It's more like maybe, MMA or UFC or something now than, being, and I didn't compare it to being a rock star. I was saying that, my ideal job would be a rock star. I've been playing drums for, 40 plus years.
That's right.
And I've gone,
music guy.
Not mostly deaf, but I lost a good chunk of my hearing literally. Because listening to music as loud as humanly possible. But all that being said is, one of the reasons I left the trading floor back then, again, I wasn't making any money anymore. I was on the brokerage side. So, my customers stopped trading the NASDAQ and the Russell and they went to other, products. S&P, started really exploding. So I wasn't making any money, but the stress was still off the charts. But, the third reason was I didn't like the person that I became. I mean, I took that aggression and anger home with me, to my then wife and my two children who, at the time were, younger than 10. And I was just always angry. And I was really quick to anger. So I didn't like that person that I became. So would I go back? I wouldn't go back to the trading floor with me being as I am now, but boy, it was sure fun while it was.
1 minute. Give me your happiest trading day on the floor.
Oh God, I don't even know my happiest trading day on the floor. I for the life of me, I can't even think about it. I was you know what? Here's something interesting. So again, I was on the brokerage side. One of my biggest clients, it was a bank, and they had a client that would basically sell credit and put spreads all day long. 6,000 NASDAQ credit and put spreads, day after day after day. Then they'd buy back 3,000, et cetera. So just, putting up some crazy numbers in terms of volume. Something happened and they needed to liquidate their entire position. So the bank calls me, gives me a list of 63 different positions, and they want a net cash price. What can I get for this? So now I had every, trader in the pit, I'm like, all right, I want to buy, 500 of these. I want to sell 2,000 of these. Give me a cash price. We did the trade. And I think I was there until, 7 p.m. Central Time trying to price everything up and writing out the tickets and everything. But I remember thinking this is the biggest trading day I've ever had, on a brokerage side, right? Volume's everything. It's the biggest day I ever had. This is incredible. And then, 2 days later, customer blew out, never heard from him again. And that was the beginning of the downfall of my career as a broker.
If it's not one thing, it's
it was one of those, be careful what you wish for. You just might get at things. And but it's good times.
Mark, thanks for coming on the show. This is more than awesome, man.
My pleasure.
Great
Jamal.
feedback
Thank you.
from the crew, man. Thanks for coming on.
Yeah, great to see you and everybody. Thanks for listening. Much appreciated.
Thanks for watching the show, folks. As always, be smart, be patient, trade them small, and trade them often. See you.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, Tim Knight here. Well, we've got a bit of a late start here, which is unfortunate because this is the first day in months that I've love to talk about charts. That's not entirely true. I like talking about charts, but it's more fun on a day like this. The market really does feel different today, and I say that with the ES down 0.22%. You know, it's not like we're down 8,000 points on the Dow or something, but given what the bulls have gotten used to, it sure feels like it. We had a CPI come out this morning, and the bulls were relieved, and it was, the tariffs seemed immaterial to what's happening with inflation. I'm not sure what planet they live on, but if the notion that prices have gone up 6% or so over the past 2 years is pretty funny. More like 70%, but all the same, they want to tell us it's 2.7, so yay. And so there was a rally, everything was green, and then it started to get kind of soft. At the moment, the NQ is still up. It's up over 60 points. Sorry for all the ding-dings. I'm very popular right now. In any case, I'll just, hey, Tim, you've used computers a while. Why not just turn your speakers off? Genius. Okay. Yeah, that sounds like a great idea. Okay. All right. Good. I've got some charts to share with you. I've got 21 short positions, and they're all up to date. In a good way. The positions are up to date. So that's pretty righteous. All right, so let's dive into the charts I've got. We're going to start off, as always, with the spider. And the spider was at a lifetime high on an intraday basis. Frankly, for the past 8 days, it's gone nowhere. It's gone up, down, up, down, up, down, up. But we've just been kind of grinding away. At the moment, the ES is down, as I said, just a little bit, about 1/5%. But there's really, let's change this to a candlestick to get a little bit of a different perspective. You can see it really hasn't, net done anything for the past 8 days. But I can tell you, and this doesn't sound very scientific or very, it feels different. The market definitely feels different today. I suppose because things eroded so swiftly after the opening bell. And I definitely took advantage of the strength because early today I got pretty aggressive on the short side. My biggest, at first, my only really big ETF position was with diamonds, equity ETF position. That's doing well. This is got a bearish engulfing pattern on the diamonds. Even when things were very, very green early this morning, the YM, God bless it, managed to be down a little bit. Medicine weakening all day long. I guess because it's kind of old school. I mean, NVIDIA, they'll be talking about a $5 trillion market cap soon, but the old crusty Dow 30 seems to be lagging to some degree, so that's worked out. Emerging markets are still green. After pushing off this cup with handle base, it's been ascending. And There it goes. I've stopped touching overseas stuff. EFA, EM, EWW, you name it. I'm sticking with domestic things. Now, even though the CPI was like the big thing everyone was waiting for, the big news last night was NVIDIA, because Taco strikes again. The Trump administration is like, NVIDIA can't sell anything to China. And they're like, nah, actually, no, they can. So NVIDIA is permitted to sell, is it H20 chips? Who cares? It's an important product class for them. And NVIDIA stock on the rumor went shooting higher. And so it went to another record itself. NVIDIA, even with a little bit of red right now elsewhere, is up almost 4%, a lifetime high intraday, almost certainly lifetime high close. NVIDIA shareholders are just having a ball. I shorted AMD first thing this morning because I figured to not only take advantage of the strength, but there was a gap I never thought would get filled that actually, well, let's just take a look. Let's zoom in. There's the gap, way back in the Pleistocene, back in October of last year. The gap itself was at 158.94. And today we went blasting higher on AMD, and the high was, according to this, 158.67. So exceptionally close. So we have gone in short order from around 76 up to double that. And we've got not only the gap fill, but a beautiful shooting star pattern. And if you want to get this ready for the Museum of Modern Art, here's what you do. Tomorrow's high, make it lower than today's low. I'll say it again. If tomorrow's high is lower than today's low, we will have a fantastic reversal pattern. Because it's like there's all kinds of words for like abandoned baby, and there's all these strange terms, but it's a very potent reversal pattern. We'll see what happens overnight. We are in earnings season, but there's nothing. I mean, unless you dig stuff like Equifax, there's really nothing that exciting going on. It's all banks still, and I could not care less about Wells Fargo, JP Morgan, Bank of America, all that stuff. So the really cool earnings don't start till next week, really. On semiconductor, also got into not a super clean gap with AMD, but this fantastic pop in the pink there. We've pushed a little bit into it, just a little bit, but not really into the thick of that pattern. So I'm comfortable having a somewhat higher stop loss than the absolute bottom of that pattern there. So that's going well. Some bullish stuff instead of all this doom and gloom. Joby Aviation having a good day. There's been a lot of excitement about domestic drone companies. You can see the volume at the bottom of the chart there, just roaring higher lately. So that's always very positive when you see good price action with strong volume. Paladine AI. Don't know if we've ever looked at this one before. Volume's punching up on this too, but that's pushing ahead. The metals company, TMC, also having a good day. In contrast to this, we've talked about quantum from time to time. I've mentioned, although I don't dare short any of this stuff because it's so much emotion around it. I did think that as a chartist, the most vulnerable one was QUPT, quantum computing. And basically the past 3 days has been just kind of grinding around because it went down hard 2 trading days ago and then up, reversing that yesterday, and then down again today. But this looks like it's pooped. Speaking of pooped, I think that's the word I used with gold yesterday. And yeah, it is, because we've got a gap sealed right here on Friday, I guess it was, right like so. Down yesterday and then down some more today. Nothing dramatic, about 0.5%. And then the miners, GDX, these are also down about 1 2/3%, like so. Now, whenever I talk about crypto, I usually say a few things. I really like crypto charts as a chartist. I think they're great fun. It's a very organic market, I find, unlike, say, equities, which is very heavily manipulated by the federal government for political purposes. But crypto is influenced by political stuff, but the Federal Reserve isn't going to run around, issuing trillions of dollars to buy Bitcoin to prop up for a bailout. So as a chart, they work. Crypto works great with classic technical analysis because classic technical analysis is based upon an actual organic market, which crypto is. In spite of all that praise, I don't trade this stuff anymore. But I did think kind of psychologically that we were probably at a short-term top because the bluster, high-fiving, exuberance, told you so's were in rare form over the past couple of days. Yesterday we had a lifetime high, got up to 123,000. And at the moment, we've shed about over $6,000 from that. And like I said yesterday, percentage-wise, these aren't huge moves. When you're dealing with a six-figure instrument, it can sound very impressive, but it's not a big deal. As I said, the bulls completely are in control of this unless this thing cracks under 109,000. At that point, it gets kind of shaky. But I'm not surprised even a little bit that $6,000 has been blown off the foam from this thing. As I made mention, I've ramped up from very meek and holding my hat in my lap and sitting in the corner of the dance floor to a little more aggressive, more like 100% committed now as opposed to 30, 40. 21 positions, a lot of them energy related, couple of semiconductors, as I said. Here's a few that I wanted to share. ConocoPhillips, COP. And in each case, you can clearly see the top. You can clearly see where the stop loss is. And just trying to give you a sense of some of these positions out there. Costco, we've talked about this a lot. We are slowly breaking below the support level. Hasn't really cracked it fully yet. As you can see, it's just trying to tap below that for the past 4 days. But we'll see if we can actually get below in a big way. Dollar Tree, down 1 2/3%. Sinking away from that dash red line where it had rallied to. Estee Lauder, I think I mentioned this as well as ELF yesterday. This is down about 4%. Hilton, this was at a lifetime high yesterday. And we've reversed the past couple of days of gains. And PepsiCo, a little more conservative, enormous top on this one. This is down about 1%. And then doing particularly well, made mention of Restoration Hardware, or I guess they call it RH yesterday, down nicely. Satanic 6.66% on this one. So all in all, as I say, every single position red, which is my favorite color. And so that's going great. And it's particularly encouraging because 21 out of 21 are going my way on a day that the NQ is green and the market's just tiptoeing down the most modest little bit, a fifth of a single percentage point. It's very easy to be like, to celebrate short positions when the Dow's crashing, which it stopped doing back in 2008. But when you're down about a fifth of a percent and things are still going very, very well, it's like, okay, I think I got some good ones going here. Another particular area of concentration has, as I said, been energy. Crude oil itself is not doing anything too dramatic, but the energy stocks within, I think, are sinking nicely. Besides all the individual stuff, I maintain my short positions in the two big energy-related ETFs, XLE, which is down about 1.5%, and then XOP, which is down even more nicely, over 2% there. And we're at the bottom of the hour. One last chart to glance at. Again, bonds, because in the face of the CPI news, bonds rallied and stopped and reversed. And so the ZB is down now about 0.7%. We are tiptoeing ever so slowly to the base of that giant pattern. I'll say what I say every single day. It's not guaranteed we'll crack it, but if we can get below that pattern, I think it's going to be a very potent new fact in the market to observe and to respect, because I think it'll definitely influence a lot of other stuff besides just TLD. Okay, that's it from me. Appreciate your time and attention. And I'll see you tomorrow. Good night.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap. Yeah, that's gonna. There's a spider on my desk. No, kill it, kill it, kill it, kill it! Oh my god, oh my god!
Where is it?
It's on my microphone!
I don't see it. Not from there, you won't.
Do you? Oh no! Oh god!
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
You'll buy me dinner. Tomas, we are back, my friend. And you know what that means? Time for the last call, Sadnoff. Something that was foretold, but we have not seen in weeks. That's right. Even the S&P's down, Sadnoff, down 1675. As foretold, only about 4 handles off of their lows, but it seems like a small win with only 1 million plus even the S&P's trade. On the other side,
it's a win because the Nasdaq's still up big.
I was going to get there. On the other side of the coin, you got the Nasdaq up 51, Russell down 36, the Dow down 370 and change, and you still got volatility down 8 cents. Even with 3 of the 4 indices lower, you can't get volatility to pump up at all. Something sick in the bonds, Sadnoff. They're 112. I know you, after they traded closer to 113.5, there's no way you thought 24 or 48 hours later they'd be 112. They traded down to 111.30. Go.
What do you mean 24 hours later? You mean 6 hours later? 8 hours later? Not 24 hours later. Yeah, that was on the number at 7:30 this morning. So let's see, 8 hours later, or 7.5 hours. I'm sorry, 7 hours. 7 hours. What am I saying? I can't even.
Don't worry, you're okay.
Let me do that calculus again. 7 hours, sir. Yeah, this was one of those days where the market got saved by Nvidia and a bunch of other of the chip stocks. They never budged all day. You couldn't move Nvidia off the blocks, not even a bit today. And
I mean, it's off of its high. I mean, it
by
opened
$1.
Yeah, 171 got as high as 172 and change. It's sitting there at 170. I mean, it's a solid 3.5-4% move for sure.
Yeah, but there was some, a couple things today I think that are interesting. Some of these Chinese stocks exploded. Baidu, Baba up $8, Baidu up $7. Explosion in the Chinese stocks. Not a crazy surprise, but an explosion. And then the chip stocks. I mean, we just mentioned Nvidia, but Taiwan Semiconductor, which has earnings this week, up $8. Where is it? Up $8.
$8.37. That's a new high if it closes up here.
AMD, another chip stock, up $8.50, up 10 earlier. But these are monster moves. MU, which was down $5 or $6 yesterday, is up $1.20. But for the most part, those are the big guys. But Microsoft, Google, Amazon, Apple, they're all up today. So this was a day where the Nasdaq kind of kept the market from, I think, getting really doing any damage. On the positive side today, we made a pretty good call on the U.S. dollar. It got really strong against the euro and a few other things. So the dollar against the yen, against the euro, against the Canadian dollar, against the pound. The U.S. dollar got strong today. That's interesting. But what surprises me is I thought when the dollar got strong, the bonds would rally, and it's the exact opposite. So the correlations right here, somebody sent me an email today, Bat, and they said, what's the correlation between the U.S. dollar, between gold, between Bitcoin, and between bonds? And
I give up. What is it?
I said 0 was my answer.
Yeah, whatever. I give up. What do you think it is? 0.
Your guess is as good as mine. And the reality is, it is freaking 0, and your guess is as good as mine. There is no correlation. In the indexes today, the Russell Nasdaq had a huge reversal the other way. This is, almost, let's see, it's 1,000. Well, it depends what ratio you use, but it's basically, it's a monster reversal in dollar terms. It's like a $2,000, $3,000, $6,000 reversal in dollar terms, but
because the Nasdaq stayed strong, Russell.
Yeah. And then on earnings,
Russell's down 1.5%. That's a decent sized move. That's
Citigroup was the big winner last night, up almost $4, and JP Morgan's been down pretty much $2. It opened up $1.50, down $2 all day, but JP Morgan's inside the expected move. Citigroup is obviously a little bit outside the expected move. The only stock tonight that we looked at, but we did not trade, so I don't want to make it seem like I did anything in there, was Goldman Sachs. It's down $10 today. I just think it's could have been up every single day prior.
Yeah, I mean, it's at the high end of its range. It's been going sideways to higher, but you are right. Last 3 days, it's been higher. IB rank a 16 in there, Sadnov. Expected move $22 for a $700 stock. I mean, it can have a $22 move on a normal opening.
Oh, 100%. I mean, I wouldn't sell. The only thing I would sell in here, well, there's nothing I can sell. Because actually, I wouldn't, with 3 days left to go, I wouldn't even sell the 650 puts in early 50 cents. And the 750, no.
You care about Bank or Johnson & Johnson, MS?
No.
ASML?
No. If you don't care about Goldman Sachs, you're not trading Bank of America or Morgan Stanley. That's for sure.
Okie dokie.
The answer is,
ladies and gentlemen, I tried.
Niet. No chance. Not doing it, not going there, nothing to do. Don't touch that.
You
cannot make me. Yeah, this is a weird day. You mentioned it before. The volatility futures were down.
Unchanged, down, yeah.
Unchanged or down,
Yeah, I don't think they turned green for a moment. Last night, I think they were green when the market was down around 8 handles, but not today.
Yeah, we went home short S&Ps. That was a winner. Short NASDAQ. That was a loser. Long bonds. That was a loser. Long dollar. That was a winner. It was a really mixed day. You know, P&L wise, it's going to be a nothing day today. But
one of your larger positions, bonds are not cooperating. I mean, it's hard to have a good day.
As we say in the trading game, I got a screen.
Okay, I
got a screen.
I apologize. I apologize. Does that feel better?
Yes, I feel a little better, not a lot better, but a little better. And let's see, looking around anything else to see if there was, any other kind of crazy movers. And I'm going to go kind of no. I mean, I think this on the
downside, you had Lilly down $28. That's a big move. Lilly is always one of the big movers, but it had caught a bid the last 4 or 5 days. Lilly taking it all back and some, down 28 change. But how many people have Lilly positions? Costco down 11 after rallying yesterday around 11. CRCL down. UNH is down. Meta's down. Coin is down. Obviously, Tesla was higher earlier this morning.
It's down now.
It's closer to 320. It's down. It was up $5. It's down $5 now. And then on the upside, you got a couple of other movers. CRWV, that would be CoreWeave. That's up $9 and change. You already mentioned TSM. And the leaders in the clubhouse are these chip stocks and Chinese stocks, which you don't usually see.
You haven't seen Chinese stocks as leader in the clubhouse in
quite some time.
Yeah. Chip stocks, yeah. I missed that Lilly move. I just noted when you mentioned it now. I just saw it, and so I rolled down some calls at Lilly. It's funny in Lilly, they pump in juice to the upside and they kill it to the downside. So even though the stock was down 20 today, if you have short strangles there, you didn't lose any money.
That's a good thing.
Yes, Mr. Batista, that is a good thing.
Very good
dog.
Thing.
Good dog. Can I pet that dog? Let's see what else we got here. Now, you know what? We're going home tonight. Same position as last night. Short a little less. Short some S&P and Q Delta, and with a little bit of theta. Very slow day for the good kids today.
What is your delta theta ratio? Is it still 1 to 4, pretty much?
1 to 4.
Yeah.
Very, just leaning a little bit short. That's about it. Tomorrow is VIXpiration, as the Vecchio likes to say. So we're going to have a little bit of VIX. We'll see what happens. Maybe I just don't think there's going to be much here on the opening, given the expected.
You're talking about VIX, right?
Yes, now? But the expected move is so small in there in the S&Ps. I just don't see it being a big play for tomorrow morning. I just don't see where anything's going to come from, any kind of power move or anything like that. This has been a very orderly volatility crush day after day after day, and
orderly on the way up. And I don't even know if you can consider this down, but they are 3 of them are down, and the Russell
I would not consider.
Down.
I would not consider.
Russell's down 1.5%. I mean, it depends.
I know,
on
but I would not consider 62.98 to be down. Okay, we're up on the week. It's not, this is nothing.
Up on a week. It's only Tuesday.
I know. Don't get excited. There's not much there right now. That's okay. This is what happens. This is called trading.
This is called summertime.
Not willing to
concede summer yet.
I'm not willing to bash summer. I think this is just like we're just in one of those kind of like little trading lows.
Sad enough, I got a gift from my daughter Chandler that I haven't had in probably, I'm 60, probably 50 years.
Okay.
Something to eat. Shoe fly pie. She sent it to me. Have you ever had it?
No. What is it again? I never had it.
From Lancaster, Pennsylvania. It's kind of like a molasses-y type pie.
Oh, yes. No, I've had it once.
Got a little bit of crumb on the top.
Yes, I've had it once.
And some fry pies. Yes.
What's a fry pie?
like an Amish apple turnover that's kind of fried. It's like a apple turnover that's fried. You'd love it. I mean,
I'm an apple turnover fry guy.
Well, they have blueberry and they have raspberry. They have a cream one, but they were excellent salad. But the shoe flat pie brought back memories since I was young. Well, probably younger than my son Vinny, younger than 15. It's been a long time. Very nice memories. Very thoughtful present, even if it was 3 days late.
Oh, that was your birthday present.
That was my birthday present. Yeah.
That's a good birthday present for you. That's a good birthday present for the guy that has pretty much everything. You don't have a shoe fly.
I am blessed.
No.
I have everything.
Yep. Show me a guy that doesn't have everything. Like I've never met a single guy in my life that says, "Oh, you know what? I really need this."
Yeah. I have to have this. Yes.
Have to have it. Yeah.
But it was great. It was very thoughtful. Yeah.
That's a good gift.
Yeah. Very good. Anyway, that was my gift when I got home.
All right. I like it.
Yeah, pretty good.
I like it.
Pretty good. Yeah.
Tell her I'm happy with that choice. She passes the passes the sniff test. So it's good.
Sure.
That's a good one.
The sniff test. Got it. I will tell her that exact words. Yeah. Okay. She'll be very happy to know.
Yeah. Maybe you should bring a piece in. I don't think it's been a long time. I might have to try.
Oh, I would be happy to. I would be happy to share. Absolutely.
Yeah, I may have to try. I think I like a little whipped cream on mine. Can you see what you can do?
I'll make it fresh and I'll keep it cold for you on the way down. Yes, for sure.
Yeah, I don't like Cool Whip either. I like the real stuff.
I know nobody does. I mean, Cool Whip is you got to be very desperate to go with Cool Whip. It's not even fake. I mean, it's fake. I mean, it's not real.
I don't even know what it is, but it can't be real.
Yeah.
All right, let's see what else do we got here for today. Just a quick little bit of housekeeping. We have tomorrow's What's Your Assumption? tastylive.com/assumption. We need trades, so give us your assumptions for tomorrow. tastylive.com/assumption. We would love to have your trade assumptions, suggestions, ideas, thoughts. Doesn't even have to be a full trade, just a concept. Find something interesting.
How about like Wordle? They just give us like the first 2 letters and we have to figure out what the third one is. I'll do anything at this point. I'm desperate. I got money to spend, ready to go.
Desperate, yes. And then also we have on every Tuesday, Cherry Picks goes out. It's our free quantitative newsletter. Nikki and Mike write it. And today we did a little segment called To the Tune of What's Love Got to Do with It? What's Vol got to do with it, Mr. Batista? What's Vol got to do with it?
Come on, I know you were a Tina Turner fan back in the day.
Oh, for sure. I told you I went and saw Tina Turner.
Okay.
Love me a little Tina Turner.
I figured.
Anyway, we did a whole segment here on volatility, just things that are where we have expectations of higher volatility and things that are low, and lower volatility and things that are high. Just pretty interesting piece that the guys laid out for you. Can you continue to scroll down for a sec, Ryan? And then we did a little piece on, only because Bitcoin's in place, so we did a little piece on ETH.
Ethereum's hot. I mean,
and it's getting more liquid, which is cool.
Yeah, don't sleep on Ethereum. It's a goodie.
We haven't touched our Ethereum position, but it's getting a little more interesting. And then scroll down a little bit more, I think. Oh yeah, 2 trade ideas. One's in ETH, which I have not. So in full disclosure, I have not traded ETHA. Have you?
No.
Okay, so that's one underlying that we haven't really traded yet. And the other one here is GDXJ. Let me just tell you my personal feeling about short strangles in GDXJ. If you're religious, go say a prayer for those strangles, because you're going to need it. Every time I trade GDXJ, I don't care if you told me what's going to happen in that stock 1 month from today, I don't think I could make money. I think it's the hardest. What is it, like a $40 stock, whatever it is, $50 stock? I don't even know what it is anymore. But whatever GDXJ is, I would run
$67, Son. If you haven't looked at it in a little while, it was $40 back in like, I don't know, March.
I would run, don't walk away from that stock. I know the guys put it up there as a trade idea. I wouldn't trade that stock with Batista's money. I can't make a dime in there, Tony. I've been trying for 10 years.
Hey, every stock there are always those stocks that have your number.
The junior miners have always had my name. I never feel like they put enough premium into the size of those moves. The stock's up 50% in 2 months. No, I don't like it.
Dr. Data likes to torture you there sometimes.
Oh, he's the biggest. He gets off on just torturing all of us with his trade ideas. It's painful, but I like the ETHA because I've never traded it, and we did trade. I did sell some calls today in IBIT. I did sell some calls in IBIT, and it was actually a good trade.
I know. Figure that. Imagine that.
Yeah, imagine that. I think we're up about 25 or 30 cents on selling some naked calls this morning. It's a cheap stock. So that's a pretty big move.
Yeah.
So good stuff there. Let's see. It's 2:52. There's 8 minutes to go in the trading day. Now, just as a little bit of, so we understand how this stuff works, the VIX expires on the opening tomorrow. So if you have a VIX position on VIX and you want to trade it, you got 8 minutes left. Because you can't mess with it in the morning.
or hold on, right?
Yeah, and there's no future scalping around it. Like if you do the next month out VIX, there's nothing you can do. So if you have a VIX position out, you're either playing Russian roulette wherever it closes, or you're far out of the money or whatever it is. But we cover it and just forget about it. I mean, I don't ever. When was the last time you took a VIX position into the close? Never, right?
Never.
Yeah, I can't even tell you that. I think I did one time, maybe 10 years ago. So that's it for that. And then, that's kind of the whole story there. So we've got the dream team in the hole.
We do have the dream team waiting and ready.
They're on deck. We like to say they're in the hole. And we got Dylan, Chris, and Ilya, and we're making new lows in the day. So let's see what's going on here. Let's bring in the boys.
Hello, gentlemen.
I like that better.
You like what?
You're saying you're not. I like the dream team better.
Oh, the dream team. Yeah, I said the dream team's on deck, man.
Love it.
Yeah.
So you're better than Gimps.
You're not supposed to take a VIX.
What'd you say, Dylan?
You're not trying. You're telling me now that I'm not supposed to take a VIX position into the close.
Into expiration. That's into expiration tomorrow morning.
Okay, you could.
Don't listen to what he says. Listen to what he's thinking.
You could have told me that like 14 years ago. I would have been a lot better off.
Well, you've got 6 minutes left to
right your wrong.
Yeah.
Don't take physical delivery this time, Dylan.
6 minutes and 14 years. Thanks for nothing.
The on deck circle at Wrigley Field, the Cubs tried to sell it to us to make it into a cherry.
Okay.
And we declined. Respectfully, because it was super expensive, but I really, really wanted to do it. but we decided against it. It was a lot of money. But I think it would have been cool to have the on deck circles at Wrigley as cherries.
Oh man, I agree. I couldn't agree more. I mean, are you kidding me?
Tom, they caught it on air. They caught it on air the other day. I sent it in the chat. PCA hit a home run to right field, and Tasty Trade was up on the banner, right where the home run landed.
Cool. What was the number?
Well, we're in center field too, so we have a big Tasty Trade sign in center field at Wrigley, and then on a random rotating screen, we're on the electronic screens. But then we're on the mound for every pitch, so we chose the mound, which was the right call.
What was the number?
What was the number? What to be on the on deck circle?
7 figures, 8 figures?
No. It was around, I want to say 700.
And what does that get you the whole season?
Oh yeah, that's the whole. But you can only really see it on home games, Okay. Yeah. But that gets you the whole season for that.
Yeah.
They never sold it, by the way.
I mean,
they
it
never
doesn't seem
sold
like
it.
such a big number because I mean, for the world's most famous on deck cherry.
Yeah, well, that's what it was. I think something like that.
All right.
It wasn't over. It was less than $1 million.
Tom, we're gonna go to turn on the next Cubs game, and Dylan's gonna be sponsoring it himself personally.
Oh, I'm waiting for a Dylan Radigan, just a full-out Dylan Radigan up in center field.
Dylan Radigan Enterprises, baby.
Nice.
I'll buy it on behalf of Dylanism. That's how I'm going to launch my religion.
Dylanism. It's almost like Kramerica, but it's Dylanism.
Yeah.
And with the stencil of a sneaker as the logo.
That's right. We'll get the Cubs to identify as Dylanists, which is kind of like a Buddhist at the end of the day. It's like a friendlier Buddhist.
Perfect. I can't wait. Can't wait to get
it's sort of like somewhere between a Buddhist and a Hare Krishna. The Hare Krishna is a little too friendly for my taste, but the Buddhist is a little too reserved. The Dylanists, they're not going to attack you with the flowers at the airport, but they're also not just going to ignore you sitting under a tree. You'll see.
Well,
it's going to be great.
I'm looking forward to my Dylan dog at Wrigley Field.
Oh, it's going to be a real bar. Listen, I don't know if I'm up for that. The Chicago hot dog game is very competitive. I'm not sure I'm prepared.
A Dylan dog sounds awfully good. A Dylan dog sounds better than like an Ilya dog.
Dylan dog sounds perfect.
You got the alliteration. It's all in the alliteration.
Yeah.
It's no problem.
All right, boys. So Ilya, you got to be a little happier today. S&P's down 22, 23.
Yes, definitely.
Even though the Nasdaq held its wings up, they basically tried to save the market today. The S&Ps and the Russell and the Dow really did give it up, and they're not closing strong.
I liked that the NASDAQ faded, though. It was much stronger than the others all day long. And then into the close, it seems to have kind of retreated back into its range.
A little tiny bit.
A little bit. So not great there either. But obviously, and Chris and I were texting about this overnight, the reprieve from the Trump administration for NVIDIA was kind of a one-off there. I mean, it was a Mag 7 up. It wasn't anything that you might say the markets aren't going to discount one time and then that's it. So it was the odd one out, but not for any incredible reasons to extrapolate forward. Dollar was up a lot. The Fed odds shifted. The Fed funds futures for this year now are the most hawkish. They're still pricing in cuts, but the tally is the most hawkish it's been since February 19th.
I don't know how they can price.
It's a really interesting time. Like that was the top before the sell-off earlier in the year.
Unless something radical happens in the next month or something like that, I don't see where you're going to get a cut. I don't see it.
Well, I think that's sort of what the markets are starting to say here was they got the inflation data this morning. It had a bigger swing in the goods component than the services one, suggesting the tariff inflation is starting to appear. And they said the Fed's not going to be able to do as much in this context. More data like this, they'll keep shifting. They'll start to take the cuts away altogether. But they're building for next year. So they're shifting them out in time. They still think we need cuts. Very importantly. So the growth scare with the inflation mix that the Fed has been afraid of.
I don't know that they think. I want to clear something because I think this is important. I don't think that they know that we need cuts. I think that nobody wants to change the narrative, meaning that the narrative is there's going to be rate cuts. If they change that narrative, all hell would break loose. But you are not, this is not rocket science. With the bonds at 112 and not getting an uptick, you're not lowering rates at any time soon. You're going to need at least a 3+% rally. If you look at the bond expected move, and I don't know if you guys have looked at this at all, but if you look at the ZB expected move, now I know it's been down a lot the last couple, it's kind of crappy. But if you go out to let's just say, October, which is when they kind of think the whole expected move is only $4 and 4.5 points, which takes you back to 16.5. That's your best bet for a rate cut. Like that's you got to hit the top end of your range to get a rate cut.
I think where you see that they want rate cuts is in the disconnect between what the Fed's been saying for the next 2-3 years in their forecasting and where the markets have been. And the markets have priced it much more dovish. So they're not saying the Fed needs to be worried about inflation. They're saying the Fed needs to be worried about what happens next. That essentially you get an inflation shock, but then there's a growth knock on, and the Fed, because it's slow, should focus on that. And we've seen that disconnect show up now for a few months.
We all agree, but you've got somebody in the White House who's screaming that the Fed chairman is an idiot and should cut rates. Right. And you can't, but everybody's got to understand, you cannot cut rates when bonds are trading where they're trading. It's what the market is.
It's what the Fed's been saying. Yeah, they can't.
And you had somebody screaming on Tasty Live that volatility was up and the market was up yesterday, and that was your bell. And you finally got your second bell today, Sadov, with even the S&P is down 27 as foretold.
I signed up on that narrative last week, Tony.
Very good, sir. You smart man. See, that's not enough. Some people are listening. We're going to take a quick, Dylan's going to listen next. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Sound good to you? Hey, Chris, sound good to you?
I don't know if I like the way that sounds.
We'll be back in 90 seconds. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes! So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready to move?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, it's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
The inflation report wasn't as bad as people expected, or was it? It's Tuesday, July 15th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco, Dylan Radigan's in Milan, here to take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're on the website, tastylive.com, the platform Tasty Trade, welcome. Thanks for tuning in. If you're on YouTube, thanks for joining the conversation. Tell us what you think of this action today. The pop higher overnight, thanks to NVIDIA being allowed to sell their top-of-the-line chips to China. Okay, I guess the export controls are over. Good news for semiconductors and tech stocks for a portion of the day. We run into the CPI report this morning at 8:30 a.m. Eastern, and while it appears that it's not as terrible as it looks, because sure, it's up, but not as up as people anticipated, the internals aren't great. The tariffs are showing up. If it weren't for a housing market price slowdown, you'd probably see more of the tariffs. And so there's two bad stories to tell. The market doesn't like it at all as the day goes on. Yields continue to spike. 30 years clear 5%. Stocks trade heavy. The Russell's crushed to the tune of 2%. Even Bitcoin's down 2.86%. Our sweet prince silver is off by a healthy 1.73%. It's not all bad news, though. Those playing for a dollar bounce are continuing to see it play out. The yen cracks on to new lows. The euro's below 117. The British pound trades below its 50-day moving average for the first time in 5 months. So things are happening here as we make our way through this Ides of July. That's not a thing. But we do cross the halfway mark of the month here with a little bit of a bump higher in volatility. Ilya, I think the report itself this morning is worth discussing, and I took the liberty of breaking it down on Futures Power Hour. But you mentioned the same thing I did, and we have not talked about this yet today, on air, off camera, anywhere. Core goods inflation. That's going bump in the night right now, and it's weighing heavy on the bond market.
That's right. So I'm going to have granular charting on this for macro money right after this show. So if what we're about to say needs a visual for you, and I think it does, I think it helps to kind of visualize what's going on, stick around. After this hour, I'll show you all of the charts on this. But the short story here is, obviously, most inflation is still locked in the service sector. Of course it is. The service sector is the biggest part of the overall economy. No surprise there. However, we have seen no meaningful goods inflation basically in 2 years. This is not that anymore. The biggest increase in contribution to the headline inflation figure came from the goods side. Now, the overall contribution was still small, only 0.13 percentage points out of the 2.7% headline, which came in exactly as expected, was accounted for by goods. So not huge. However, the change in contribution from May to June was 4 times bigger in goods than it was in services. Services increased. It's by far the biggest, sure. None of that's new. But momentum in price change, the inflationary thrust, it's in goods. And that's the part that's scary because, of course, that's exactly what the Fed was so afraid of. That the tariffs will eventually start to feed into goods inflation. And that their job then is to keep it from spilling over into overall inflation expectations, because were that to happen, it would become sticky. And so the markets react in a understandable way. They slash rate cut expectations for this year. We're down to 38 basis points. That's not even 2 cuts. That is now less dovish than the Fed's own outlook. Moreover, it is the least dovish since, drumroll, February 19th. There's the top in the S&P earlier in the year before that massive sell-off. This is the most hawkish that Fed policy expectations have been since right then. And the outlook for 2026 is now the most dovish since the contracts started to trade for those periods. So we have exactly the sort of thing that we would surmise here on the show for the past couple of weeks that the markets would be afraid of. That they want cuts and that the data is going to tell the Fed not to do them.
The data may be telling us that already, if that's what you read through in the inflation data today. And certainly you look at the breakdown, and were it not for about a third of the U.S. housing market in a bit of trouble right now, seeing year-over-year price declines, then you'd probably have a stickier inflation report to the upside.
Mm-hmm.
But Dylan, if it's the tariff side of the problem, the news from last night, to me, should be as informative as anything. China, our great geopolitical adversary and rival, the country whose economy is eating the world and going to flood all of our Western developed countries with their cheap goods that kill our jobs. We're going to give them more of our advanced AI chips. NVIDIA, AMD are going to be selling overseas once more to China. But we're going to be tariffing the EU at 30%, Canada at 35%. What's going on? Is this just all kabuki theater, Mr. Radigan?
Caught up on this, Vecchio? How many times? Here's the thing, okay? The same way that the oil trade, when there's a World War III happens and oil spikes, you sell it. When Trump tariffs get all cocked up like they are, then you buy them. The tariffs are not going to happen. This is a buying opportunity. The only reason I'm not here jumping up and down is because my boy Ilya is here and I don't want to hurt his feelings. And he might
actually agree with you on the tariffs.
Well, on the tariffs, I'm sure you do. So let's talk about this because I think we probably
actually agree with you completely on the tariffs.
So you buy the tariffs.
I told Vecchio as much over text last night. It's like that scene in Die Hard 3 where all of a sudden Bruce Willis stops and goes, "Wait a minute, it's a heist."
But so here's my question for you, Ilya. Whenever there's a tariff super scare, you buy them. Okay, fine. Just like when there's an oil super scare, you sell them. But we did get this data today, which does show that there's that's not nothing, in my opinion. Like
that's real.
That CPI data to me was not nothing. I would like to say it was nothing, but I don't believe I could say it's nothing because I think it's something.
That's real.
And so the reason I'm not just like, buy them on the tariff madness is because, well, you might buy them on the tariff madness and you'll be right on the tariff madness, but I can't help you out on the inflation / delayed rate cuts / slower economy. And I don't really know how to reconcile how much of the sell-off is tariff madness, which is just a temporary moment of madness, and how much of the sell-off is legitimate concern about higher costs, higher inflation, slower growth, and later rate cuts. And I don't know how to reconcile those two things. So I think we should have a sense, and obviously this whole thing is a moving target, but I think when last week there was a bunch of tariff announcements and the only thing that seemed to care was copper because the announcements spoke to it directly, but it didn't spill out elsewhere. I think that told you the markets are over the noise of this thing. What they want isn't the circus. What they want is economic data saying the stuff is real. And the problem with the CPI data is it suggests that, it is. And so the question, I think, goes back to, by the way, it's poetry in motion, really. That the Fed calculus for this year is back to mid-February, late February. Because what were we concerned about then? It wasn't tariffs conceptually. The time to be concerned about that was November. It didn't happen. The markets didn't care. We've said this a gazillion times. They were concerned about growth. They were concerned about real economic outcomes because business and consumer confidence surveys started to tell you we are in freak-out mode over this tariff rollout. Holy moly, this is going to be bad for growth. And then the hard data was delayed, and the Fed kept coming out and going, we know it's going to be delayed.
It's always delayed. And the White House keeps delaying the tariffs themselves to some extent. This takes time. The economy absorbs things over months, not days or weeks. So we have to be careful. We have to wait and wait and wait. Well, they're showing themselves to have been somewhat accurate. It's early days yet. It's one piece of data. But so far, it's looking like the freak out in the PMIs and the ISMs and at the Fed got its first big chunk of evidence today. It started, by the way, already in the PPI data going back to March, April. But this is a big headline thing. And it's not about, oh, the tariff circus is this or that. It's about, here's the growth implication.
But I guess, okay, great. I agree. And when it comes to an investing thing, whether it's indexes, commodities, all the things that we talk about, is it even possible to, with any granularity, to differentiate one from the other? Or do you think that basically you're like, listen, if I'm Ilya, I know I'm right, because tariffs are not, even if the tariffs are going to end up being, what we all know, 5-10% reciprocal, sort of kick the can, kind of basic, some sort of moderate, whatever thing.
Sure.
But the reality is it is not going to create, it is creating inflation.
Yes.
Fact. It is delaying rate cuts, or it is likely to delay rate cuts, highly likely, fact. And it is slowing growth.
Yes.
And the markets are at or near all-time highs.
And are telling you today that now that they have hard evidence that all of these things are occurring, they don't like it.
And so if you were to put on, if you were me and you had nothing, I'm long the dollar, I've been in and out of oil, I haven't done anything with stocks for months because I always fuck it up, excuse my language. Sorry, Chris, I'm sorry. I didn't mean that. It slipped out. Call your mom. Tell her I'll get me a
hide your kids, hide your wife.
I'm sorry. I'm really sorry. And so, but if you were going, I'm sorry. I apologize. But it's true. That's what happens when I get involved with stocks. That happens. I up it up. Okay. Anyway, so if I was to originate a new short thesis today,
yes,
based on this information, because obviously there's a little sell-off today, but this is nothing, and I want to sort of get into a 45 to 60 day arc, because there's going to be more inflation, there's going to be more slowdown, there's going to be, even if the earnings are good, there's going to be some cautionary guidance and all the jazz, and the rate cuts are not going to happen. Where do you put your best? I give you $5, you get 5 positions, $1 each. What are your 5 best new positions? Or 3. I mean, I don't want to corner you, but
so vol is incredibly cheap still. IV ranks in the stock indexes is incredibly cheap. So put verticals there are still very cheap. NASDAQ, S&P, Russell, I have all 3 on at this point. I think the dollar keeps going higher, and probably the place to really look at that is the yen. It broke a big range today. The euro didn't quite break its range. The pound didn't quite break its range. The yen looks like it did. So that's one. And then the other thing I would be looking at very closely is gold, which is down a little bit today with the higher yields and the higher dollar, but it is not running away anywhere. And that is a sign of impressive strength. Like, this is an environment where gold should look terrible, and it does not.
Yeah, silver looks terrible comparatively. It's not weathering
because
the storm.
it's got that risk on sheen on it as compared to gold. Gold today looks like the Incredible Hulk got bashed with a 2x4. The 2x4 broke and caused no damage.
That's comic accurate. I'll allow it. When we look at what's happening in the metals market, specifically in
I am nothing
silver,
if not comic book accurate.
we do see a pullback to basically the 1 week moving average today. That comes in at 38.02 in the SIU 5 contract, but our close is 38.04 or so right now. So there's still a hold there. We touched above 40 in yesterday's session in the end of year SIZ 5 contract before reversing. Dollar up, yields up. A little bit of growth negativity as well. We can't dismiss the fact that this is all interrelated. So it comes back in. Gold's holding its ground despite a little bit of weakness there. And then we see Bitcoin likewise, which was a high flyer. A little bit of disappointment perhaps today being front run. There's some legislation up on the Hill right now related to stablecoin, digital coin, anti-CBDC legislation. And one of those votes just failed in the House. Now, Polymarket says there's still a 93% chance that the bill's going to pass by the end of this year. So if this is a...
Appropriately, they dropped the DOJ investigation against Polymarket today.
What are the odds? I wish we could bet on that one. I would have taken the other on it. I would have taken that trade, given everything we've seen. So it's, you could see though, there was this kind of like period of reckoning around the data release this morning, Dylan, where, you know, you look at how the market responded initially. It's like, oh yeah, inflation's good. We're good. Oh wait, that's the wrong report. That's NVIDIA. Great. Okay, here's our inflation. Okay, yeah, we're fine. It's not as bad as we thought. Wait a second. Let's look through it. We're looking through it. We're looking through it. Oh God. Okay.
And then you know what they said? You know what they said around there? They said, oh,
Yeah. And Trump said that Powell is too late, of course, and that we need lower rates right now.
How do you lower rates when the cost of everything is going up as a government policy?
4-month high, by the way, on the inflation rate, both core and headline. So we've transitioned into ergonomics apparently over there at 1600 Pennsylvania Avenue.
And you know
I'm
what's so
going
interesting?
to Turkey, I think next week. I'll check in on the whole situation.
See what they think about this. They have a level of expertise in nonsensical monetary policy that's second to none, really.
Do a little man on the street. Chris is trying to do his job. I'm sorry.
No, I'm really not. I'm trying to get banned from Turkey, and so I'm thinking if there's a way.
We might be already, man.
Don't do it on my dime. I'm going next week. I like it, Turkey. These are my people. Leave me out of this.
I'm just saying, if like a Radigan is arrested in a bazaar,
I'm gonna be on.
But I take credit for that.
I'm gonna be in Turkbuku, baby. You're gonna find me in the sliver.
Yeah.
You're gonna find me in a perfectly fine situation. Don't.
Yeah. For the record, I have said nothing disparaging about the Turkish lira in a long, long time.
Anyway, you were going to say, sir.
You know, it's fascinating when we look at some of the mechanical methods of setting Fed policy right now. One such way is the Taylor rule, which is taking a look at what would the Fed funds rate be, assuming growth and inflation and unemployment rate statistics, and you assume certain run rates of growth, right? So you figure out growth gaps, you figure out the employment gap, the output gap. And right now, given where things stand, from a variety of metrics, the Fed funds rate should probably be higher at the same level, right? White is around the same level. Green means the rate needs to be up. Red means we could use cuts. Most of these are white or green. So you guys talk about a Fed that's losing the ability to justify cutting rates down the line for the reason that they've stated the tariffs, but for the tariffs, they would have cut already.
Yeah.
That probably gained some credibility here today, which is why on the other side of this inflation data, this is the key metric here. We go over to our CME Fed Watch tool. On the other side of an inflation report where the headlines were in line or just below the expectations, Fed cut odds went down for the month of July. They went down for the month. Yeah, so 4% there, but for the month of September, we lost, we'll call it 6.5% net in one day.
Yeah.
So let's, we look at the hold from 37.4 up to 44.1, 6.7%. This is not the data that you want to see if you're Trump. And that actually, Ilya, speaks to the whole possibility where we have expiration tomorrow. Maybe the market bounces back a little bit. But on the other side of this week, when you get into your seasonal peak, the market tends to peak, close on the 17th, the 18th, it starts to go down. You get another minor swing higher at the end of July, perhaps into a new local high for August, but then the market really starts to suffer. Volatility seasonally basically moves up from here through, which is the second of the two Jewish holidays, Ilya, Yom Kippur or Rosh Hashanah?
Yom Kippur, that's right.
Yom Kippur. Okay, I just Gentile. Okay, so it basically rises from now through Yom Kippur.
No excuse.
I've watched
Don't
enough
worry,
Curb.
we are
Seinfeld.
here among you to clarify.
I should know, Dylan, right?
And you're
I'm
a New
big Larry David
Yorker.
guy.
New Yorkers are better. Being a New Yorker is more Jewish than being a Jew.
So, there are many such cases. In any event, you have this seasonal window where through that second holiday, from the third week of July through the second week of October, volatility tends to poke up. So I'm still, after all of this today, I'm feeling a little bit better about my longer dated view, Ilya, where it's like this week I'm riding the rails higher in the NASDAQ with calls that expire next week. That still made some decent money today, all things considered. But I have started to layer in those puts. And those puts to me feel a little bit more comfortable today because if we go into a window where the Fed doesn't cut in July and is telling us that they can't cut because of tariff reasons, we have a pipeline of data coming now that's likely going to show some increased tariff-related inputs. And look no further than what happened with food. Coffee was up Coffee is being tariffed. We do not have the climate to grow it here. Coffee was up 2.2% month over month. Citrus, oranges, limes, lemons, grapefruits. There's like
we tariffed tomatoes from Mexico today.
Well, forget that today. We could see the citrus category in the food imports up over 2% month over month. We're just making things more expensive.
Were people about eggs? So how angry are they going to be about coffee, oranges, and now tomatoes?
Tomato sauce? Dylan, that sounds like anti-Italian discrimination.
It's a direct assault, frankly.
This, where I come from, they call this stupid.
What do you think the people in like Portofino are thinking right now? They're like, oh, my lemons are more expensive. I can't have my tomatoes. Like, who is this guy?
I'll tell you right now, in Portofino, they're not thinking about us.
No, they're not. I wouldn't be either.
This does not occur to them. They're thinking, they're like, will it be lobster or steak on the boat tonight? They're like, I hope the prosecco is properly chilled. That's kind of where they're at. They're not really.
Can I tell you what Portofino did for my flavor, my palate?
I can't.
That was the first place.
Yeah, please.
First place in the world where when I order a bottle of wine, I got Lay's potato chips as the side.
Well, no, aperitivo. You get it. That happens all the time.
Lay's potato chips and white wine is just an unbelievable combination.
But that, by the way, the aperitivo tradition, that, by the way, is the snack before dinner. Fantastic. We need to adopt it universally immediately.
I live in Italy,
How
gentlemen.
San Francisco hipsters haven't figured this out yet, I don't know. But I need to call all of my folks immediately.
And it's the best, like, low stake social structure because it's like it's not let's go out to dinner and blah blah blah, and it's not lunch or it's I'll catch you this afternoon for a drink and a chip. We'll have a chat. We'll catch you around. It's like it's designed for a social structure. But anyway, this is not the time or the place to evaluate the merits or lack thereof of the Italian social structure versus the rest of the world because it's already been demonstrated vastly superior in every category.
All right. So we have our problem with bonds today. It's spilling over into gold, but it is, Ilya, we were touching on the currencies here. Dylan, Ilya, we're all on the same page with this, that the dollar looks like it's due for a bounce. I can't help but notice, Ilya, the problem that we were ascribing to the U.S. dollar in April. We're seeing higher interest rates, the currency's losing ground. That's not how it's supposed to work. That's typically the sign of a crisis. It's sovereign risk being repriced or something else, one or the other. Right. In the UK, in Germany, in Japan, interest rates are going up. All of their currencies are going down. The dollar has interest rates going up too, but the dollar isn't the one suffering on the other end of this.
Mm-hmm.
The dollar's behaving in a very normal fashion.
Yes.
And it's behaving a bit of like a safe haven, people need to get their hands on some US dollars kind of situation. Yes.
I mean,
what
but
do we
the
make
dollar
it?
also really took it in the beak. I mean, because it all happens in context here.
That's
great.
right.
Yeah, it did. It was
Both
the
of
worst
those
start to the
things,
year
yes.
ever. Right? Dollars unpegged in 1971, August 15th, 1971. Nixon takes us off the gold standard. When the Smithsonian arrangement expires in 1973, basically everything else goes free float. And
Right.
so since 1973, we haven't seen a start to the year like this.
Yeah. 73 is basically the genesis of the financial system as we know it now.
Right. So, but you now have your turn here in the euro. You lose 117. You have your yen breaking through 0068. Hopefully some people held on for that ride with me. The Canadian dollar's almost breaking down. British pound's below its 50-day for the first time since mid-February. And so that brings us back to DXY, where among the euro, the pound, the yen, that's 80-something% of the dollar index. This is a test of the 50-day here.
Yeah, it's a meaningful turn.
This is 1, 2, 3, 4, 5 times. 4, 5 times now that we've been back to the 50 since we crossed below it.
And we take out former support, become resistance. I mean, obviously, you don't want to do technicals too granularly on the dollar index. It's a basket. It's a little fuzzy. It's not real market action per se. But you were in a range. You broke out of the range. You're back in that range. So whatever breakdown we were looking at in late June, it's a failed one now.
Do you think this is the bottom? Is the 50-day moving average the final boss, basically?
For now. I mean, I don't think that the sell-off in the dollar in the first 6 months of the year was a flimsy or a trivial thing. I think it speaks to the rise in term premium, that is general uncertainty and duration risk for U.S. assets. And there's this chart here from Morgan Stanley. Good for them to finally get on board. I've charted this a little bit differently over the recent months, but I've just been showing two curves, one showing the share of the break-even rate in the 10-year against the share of the term premium in the 10-year. And the break-even rate hasn't gone anywhere but down trend-wise, and the term premium has gone nowhere but up trend-wise as a share of nominal 10-year yields. We just showed it most recently on Macro Money yesterday. We'll show it again today. So this is a story of increased uncertainty. But to your point, what it's not is a story of credible sovereign risk. Because what happened in the first 6 months of the year is yields went down across the curve. They didn't go down a lot, but they went down across the curve. There was no shortage of appetite for U.S. sovereign debt. Nobody is out there saying that this is a credible, oh my God, the U.S. will default type of story. And of course it's not. That was always crazy. So when we look at what this is, it's sort of what I've been talking about for basically now 2-3 weeks. This idea that in the second half of the year, the market has switched gears. If the first half of the year was about, this is a growth scare, oh my God, it's a sovereign scare, oh my God, the U.S. is going to cut off its own nose despite its face. No, wait, no, it's not. Okay, deep inhale, deep exhale. What is it? Oh, it's a growth scare. And we're back to just what's growth going to do, and when's the Fed going to start handing out the Kevlar vests? And with data like this, with term premium rising, you have a difficult issue, because on the one hand, the markets are saying there's more uncertainty, give us the cheap money to paper over it, and the Fed is saying, nah.
I find it really interesting that, maybe that's what the exercise was in April and May, where the market was pricing this additional term premium. The chart I was showing deserves some explanation here.
I think so.
The gold line that you see, or brown, I don't know what colors people see these days, blue dress, black dress. Here you have a line that's a little bit lighter, and that looks at the relationship, just an OLS, Where was the Fed funds rate implied by the market versus the 10-year yield on a given close all days, April 2nd, 2024 to April 2nd, 2025. And then looking at that same relationship from the closes from April 3rd forward. And there is still that linear relationship, right? But the difference is compared to where the market is trading on the implied Fed funds rate and where yields are operating, there seems to be a 40 basis point gap now, given the relationship we've seen play out over the past year. And that's to suggest there's an additional layer of risk that's been built in since what happened on the afternoon of April 2nd after the market closed? Oh, yeah, we got that phone board day from Donald Trump in the Rose Garden. And so April 3rd onwards, the market has applied a new price for US dollar denominated assets. And if we've already done that exercise here now, we're back to a normal world. The term premium can it inflate more? Maybe. Will it? Perhaps not. But if it's not, and we're in a world where people are looking for liquidity right now, and they're trying to, well, maybe these tariffs are real. What are the big trades on the board? Long stocks, pretty crowded. Short dollar, pretty crowded. And their volatility is pretty low here. So, Ilya, the currencies seem to be a little bit more appealing. If we're looking for a bit of a reversion, these are a lot more crowded trades right now based on the positioning data that we can see. The yen, the pound, the euro, a lot more crowded on a relative basis than the NASDAQ or the S&P. So if we're going to get a big reversion, I really like playing it through the currency space right now, which is perfect because that's my bread and butter, how we came up.
Oh, yeah. This is what we know.
But this is a really interesting case because now you're seeing other currencies like early April, higher yields, bad for the dollar, sovereign risk. Okay, well, in Japan, yields are shooting up across the curve. They're doing so in Britain. In Britain, you have negative growth. They're continuing to increase taxes. No one can figure out why the economy's stalling. It's Brexit. And in Japan, they have a rice crisis. Rice prices are through the roof. But because of the cultural significance there, the government's not going to import rice. They're trying to incentivize production nationally. There's an election coming up right now in Japan. And so the political party can't say, yeah, we're going to flood the market with foreign rice and potentially push out Japanese producers. No. So can the BOJ do anything except watch Japanese real rates erode in the short term? I guess not.
And so they've kind of said as much.
And so Japanese nominal rates, their JGB yields, they keep going up. The yen keeps getting weaker. And the dollar is now, despite its warts and all, where did all of this bring you guys? Right back to me, to the king dollar. I think, Dylan, I think it's time.
It's classic. I mean, what did we see in 2008? The mortgage crisis was in the U.S. When everything hit the fan, where did capital go? The dollar. Why? Just unrivaled liquidity. And so as long as you don't have the sovereign spook, which was ridiculous because no borrower is more eligible than the U.S. no matter what's going on in the current environment, capital went to safety here. It went to liquidity. It cashed out into the most liquid thing. Sorry, Dylan, go ahead.
No. I mean, I think the only question is what's the most capital efficient way to be long the dollar? Full stop.
Highest bang for your buck in the IVR world is going to be in your Canadian dollar. And we're probably at a potential turning point right now in that regard. It's a place where I'm not having any exposure at present time, but I see these former highs that we have here in April.
Yeah, I'm watching
post-Liberation Day. We have our 50-day moving average here. We could do it through the typical tasty methodology, selling a call spread up here, risking 4 to make 1. We could go a little bit more cowboy out here and buy an out-of-the-money put spread. Out-of-the-money put spread would be risking a little over 5 to make, risking 1 to make a little over 5, 15% probability of profit. Obviously, when volatility is this high, it's prudent to maybe think about taking advantage of that. But the Canadian dollar with its 73.2 IVR, we talk about diversifying strategies, time assumptions, expressions of the same view. Perhaps the best way to do this would be, look, we have our short call spread in the Canadian dollar to harvest the vol, and then we go over to our yen, which is still exceptionally crowded. and we go out to say 85 days and look at the long 65, 66, rather long 66, short 65 put spread, and there's your 25% probability of profit, a 4-to-1 reward to risk. And so you kind of have it bracketed there. You're playing the dollar on both ends. One of them needs the dollar to really get going. That's the yen side of the trade. The other is just about the Canadian dollar not rallying. And so you have a dollar bullish expression there, two different costs. One's a little bit more risk averse. One's a little bit more leaning into it. I'm going to be doing both. I feel good about the dollar now.
Okay.
Because it's getting so hated. I already have my long yen put spreads on. I'm going to start rolling those down tomorrow.
Mm-hmm.
I think that fact that we find ourselves at this 50-day moving average in the dollar gives us a reason to pause. But if we were to flush through this cleanly, Ilya, we have not seen a close on the other side of it since February 12th.
Yeah. I mean,
That would be
I've
a
been
very
long
meaningful
the
turn.
dollar for about 2.5 weeks now. As you know, I started laying it on with the British pound. That was the one that broke first. I've since put it on in the euro. I've put it on in the yen. I've put it on in the Aussie. So it's starting to happen. I think it's got some more legs to keep going. There was a point today when it looked like the euro might get held up. It's basically at support now, which is a really interesting thing. So is the pound. So we might get a little bit of a reaction off these levels to give better entry points. The euro could bounce a little here, in which case I'd be looking for that as a selling opportunity. The pound, the same thing. The yen seems like it's broken, and that's a big deal because with the yen, you don't get a lot of mulligans. Other currencies vacillate around levels sometimes before they have the real move. So they'll kind of poke through a level and then hang out a second to digest. When the yen runs, it runs. And so this could be big there. The Canadian dollar is interesting. It hasn't confirmed it yet. The Aussie is starting to confirm it with this move today. So possibly a significant double top now in the Aussie. So that's an interesting one. I think now with basically no Fed action in July a given and September watered down, there's a lot of runway here because there's no Fed meeting in August. There's a bunch more data that's coming. If this data is emblematic of the start of a thing, as it looks, we're going to get a bunch more numbers that are going to make this look more dollar positive. And of course, if stocks are going to break, then, and we certainly got some steps in that direction on this, I wouldn't say it's confirmed, but it's certainly starting to look very spooky. If stocks are going to break and the dollar is going to be the classic haven that it is in times like that, it's going to rip.
Yeah, one thing that we've seen so far in the earnings reports has been the fact that the weak dollar in Q2 did help some of these companies with multinational exposure juice their profits a little bit. And so a world of higher interest rates coupled with a dollar that's moving on up, probably not going to be good.
Coupled with a little inflation action on the side just for a friend.
That's that tough skiing environment that the Russell ran into in 2022, where those companies have smaller moats, right? They can't really survive.
Maybe we should just back up the truck and go full madman on the Russell. You ever think about that, sir?
You know, the Russell's the Russell's at this spot where if you're not already short to give the Ilya of it all, right? You know, if you're not already long at the high, then what's the risk to reward? But we've already pulled back now into the 1 month today, the uptrend off of the April and June low. And then when I go to the 4-hour time frame,
you got to take out 2,200 essentially.
I have a head and shoulders pattern forming up here, which is a left shoulder, head, right shoulder. And in fact, I want to go to the 8-hour. There's a few things here that make why this is so interesting as a potential place. So shooting star for your left shoulder, evening star candlestick cluster for your head, and then bearish engulfing bar here for your right shoulder.
It's like textbook.
It looks good. And then the right shoulder is below the left shoulder, which is necessary. So we're at that neckline right now, not yet broken because we haven't cleared. I have it marked off as 2210.3.
Yeah,
so
that swing high. That's spike high right there. Yep.
This is the best place
You and
to
I
buy.
are looking at exactly the same thing.
I mean, like, but the trade here, Dylan, isn't to get short the Russell here. The trade for tomorrow is to buy the Russell here with like a 10 or 15 point stop. And if you hold this, then you're buying at trend support going back for the last 3 months. And that's what you should be doing in an uptrend. You should be buying at trend support. Here's the quip, though. If this
unless what you did was you sold it on the bounce into the formation of the left shoulder, which is what I did.
Well, this is the other side of this. Everything that's been happening. What if this is a big bearish rising wedge that's been forming, and the trigger formation?
That's how I'm looking at it.
The trigger here is going to be this head and shoulders. So like tomorrow, I'm looking for a bounce in stocks. S&P is near the downside of its range. Russell's at the bottom side of its uptrend. But if they don't bounce tomorrow, look, the July
PPI tomorrow.
Tomorrow's the 16th.
Which suddenly matters in recent months because that's where the math on how much margin producers are giving up to insulate consumers from tariffs has been showing up.
So we'll see it in there.
We'll see it
tomorrow's the 16th. If the seasonal peak for the month is the 17th, and then you just chop around with maybe a pop in the 30th or the 31st, like why fight those tides? I'm not going to fight those tides. I will take any equity longs off the table and sit with those longer dated S&P 500 puts and just coast for the next few weeks. And if I'm wrong, I lose a little bit of money being a bear. And I learned the very important lesson that being a bear is a stupid thing to do. No takers, no bait.
Sometimes until it isn't.
Time ago. I mean, that's
sometimes until it isn't.
I sit in awe of Ilya because of his he's got his micro short strategy. He's always in there getting kicked in the teeth, but it's only a small kick every time. And then when
just a little chip,
he's just
a little chip off the old canine.
He always has a slightly bruised nose at all times, but he never takes a full head injury. And then he's right in the room when it goes the other way, and he can step right into the whoosh. But God help you.
This has been kind of the thing with between the dollar and stocks in the first 6 months of the year. The dollar sell-off flattered the stock market by a lot. It also flattered my performance because for all the little dings I took on stocks, the dollar ran down, and it ran down way more than stocks rallied.
Yeah, for sure.
And so it's just, you never know with macro. The timing in macro is the hardest part of all.
Timing in everything is the hardest.
Say it loud, say it proud. The timing is very hard.
It's incredibly hard.
Which is
so
why
all you got to do is just manage risk.
But the only way you manage time is with position size.
That's right. Position size and trade structure and leverage management, because you're not going to know. So when you get a spot that looks risk reward appealing, you take a very modest shot so that you don't get killed. But worst case, you catch a little bit of a black and blue situation on the ribs. It's temporary. You'll be okay. And just wait.
It's funny when you say like the risk to reward, because if the stock market compounds at 8% and I'm not retiring for 30 or 40 years, it feels like getting long stocks at any given moment in time has pretty good upside convexity, risk to reward.
On that kind of a time frame, I totally agree with you. And I have a separate portfolio for things that do that.
Ilya's secretly a real bull. Like 95% of his portfolio is allocated bullish and
bull. Totally.
He only talks about the 5% that he leans on bearish with. Dylan,
totally. I am incredibly optimistic about U.S. growth, the U.S. economy, the ongoing next American century of economic prosperity and dominance. Totally on board with all of that. That's just not a 45 DTE cycle idea. That's a 10-year idea, 20-year idea, 30-year idea.
Netflix, Apple, some of these big names, Amazon, Dylan, they haven't really been doing much of anything. Amazon actually does close marginally higher here today. Taking a poke over to the retail stocks, those not having fun. Leader to the downside. What's the case here for the tariffs? We started off the show with this conversation and got a little sidetracked, but if we're giving China our fanciest GPUs that have military applications, Why on earth are we moving ahead with are we really moving ahead with these tariffs against Canada, Mexico, tomatoes?
I mean, I think I don't think you are. I mean, I really don't think that you are. I mean, I know that they are, but I just don't think it'll last. I think that the tendency I don't believe the Republican Party wants to be responsible for an economic catastrophe and be known as the biggest group of idiots since Liz Truss, which if they go through with this, they'll be known as the American Liz Truss. And I think that they know that, I mean, even if they try to go full Liz Truss, I believe the bond market will kick in here in a much more aggressive way. And the stock market. I mean, this whole thing's going to get flipped all over itself. And then it's going to be Donald Trump yammering with Peter Navarro and Howard Lutnick. And they're not going to have many friends.
Well, Trump's been touting the stock market again. He's been touting the stock market again. And at the start of this week, first call, we were talking about the, concepts of the taco trade. Trump chickened out because the bond market got yippy. Until the bond market gets yippy, he can't chicken out. So this is literally a game of chicken of who's going to move first. Is the bond market going to freak out to get Trump to back down? Or is the market going to tell Trump, this is all fine, do what you're doing? Because that's his perception. If stock market's near all-time highs,
no problem.
No problem. And markets go up and down over time. So like the S&P, yeah, it's off here today, but
this is nothing.
If you're one of his advisors today, what are you telling the president? Mr. President, we had inflation data due out today, and NVIDIA had their chip announcement. Market's happy. NASDAQ hit a new all-time high during today's session. And that's not false, that it did happen.
Yeah.
Do you think the guy's like, oh, yeah, I should back down? No.
Well, this is the whole...
Obviously not. However...
So we have to go one turn in the barrel before...
Yeah,
taco
exactly. Again. We're going to have to unload one round from the chamber to get everybody's attention, just like you had to do in April.
Well, this is the whole thing, right? And I'll borrow from what I was texting Chris overnight, because I think this is sort of where my head's at now. The only thing better than the news cycle of taking a thing and essentially setting it on fire, breaking that thing, is fixing what you just broke. And then the only thing better is to break it again. Because what that does is it creates this perpetual tension and instability that then becomes the negotiating tactic itself. It creates so much volatility for everyone involved that everybody just goes, oh, the hell with this. Let's just figure out some way to mollify this for 3 years.
Which is 10% on everything. Shut up and go home. How about that?
Yeah, can we just table this nonsense for the next 3 years? Just give him what he wants. He'll be gone in 3 years, and then we'll deal with whoever is left. So you get the sense that all this is just more circus. And I think the markets are there. I think the markets get that at this point. I think the markets had the concern in April that this was more than just a circus, because it looked like for a second there with the phone board that what the U.S. is going to do is surgically extricate itself from the foundation of a financial system that it built on top of itself. Basically, like the foundation of your house decided to dig a tunnel and leave. And then everything that's on top was just like, oh, well, figure it out, buy some stilts or good luck. And
that lasted a week. That lasted a week. It became very clear from April into now the beginning of July in the exuberant performance of the S&P that was not a real thing. That's not what the risk is. And if that's not the risk, then this is all a circus.
Can we throw in a new fun risk in there?
Yes, please.
As of today, the RFK-led Health and Human Services has announced that currently 1 in 148 Americans has COVID-19. 2.268 million cases going around.
Is that
My
a good
parents
number or a bad number?
are doing it right now.
Transmissions up 38.1% week over week.
It's a rough version of it too.
So what are you saying?
Nothing like a summer flu to lose some weight before the beach, Dylan? Are we going to go through
I like your thinking. I love silver linings, baby. I like the silver lining. You're going to look good when you come out of the vomitorium.
There is the bull in me that's like, what can we do to get some? We've done this before. We've looked at like Novo Nordisk.
Biotech's come back. Biotech got face plastered. It has come back a touch.
I don't know. Maybe we did this. What was it, back in May when or April when we had the bird flu going around just in case, and it almost worked out. We had like $10 calls, and it did rally up to $9. Unfortunately, they never printed. But I don't know. What tail risks are out there right now, Ilya? I think this is the question I'm thinking of myself. And actually, Dylan, I want you to go first. What are the things that the market is treating as we're a little too complacent about?
Probably tariffs.
Probably tariffs.
Because I couldn't be more complacent. I mean, I still think the outlier risk is that the tariffs are more real than my dismissive and condescending attitude would suggest. So, I mean, but I don't think I'm the only one. I think the entire stock market has looked at tariffs like a non-factor since mid-April for all the reasons we've talked about ad nauseum. And I do think I think that the risk of some sort of tariff chaos is probably underpriced. Although were the tariff chaos to emerge, I'd be a buyer.
I mean, so I think that is both right, and we need to make the distinction when we dismiss the tariffs that there's the tariff soap opera, and then there is the economic consequences. And while the soap opera is that, the economic consequences are very real. And so at some point, and maybe that's right now, because that's sort of how this was in February, the markets went, yeah, we don't care about the soap opera. We care about the economic consequences, and we don't like those. We're afraid. And then when the soap opera eats up all the air in the room, you go, yeah, but this is the soap opera. It doesn't matter. And then the data doesn't show up. It's only the soap opera you're talking about. So it's tariffs, and it's tariffs. And the one angle on it is a complete nonsense clown show. But the other side of it is a very real economic consequence.
Guys, we only have a few minutes left in the show, and I was figuring that we could throw in a little bit of a fun segment here to lighten things up at the end.
We're not having fun. I'm having fun. What's the issue?
Listen, I'm having
more fun.
Listen, sometimes you say things. I thought I was having fun last night when I was talking about the NVIDIA thing. It's like apparently the administration's plan is to give China chips and tariff our allies and not release the Epstein files. That rubbed some people the wrong way, as I learned in my direct messages.
It did?
Yeah, I'm surprised considering what some of these people's Twitter profiles said and some of the things they retweeted. They certainly give off the vibe of like F your feelings. And so I figured, a fun joke wouldn't be so terrible. But let's have some fun here at the end. What are we watching? What are we reading right now out of our free time out of work? What are we doing to stimulate our minds outside of the office? It doesn't need to be learning. It could be something complete crap. Ilya.
I have been listening to this new Clips album on loop since it came out on Friday. It is a masterpiece. It is an instant classic. If you're any fan of hip hop, go get it.
Dylan, surely you have something interesting going around in your life?
Push-ups and pull-ups, 100 a day. 100 push-ups a day, 50 pull-ups a day, and then more push-ups. I'm on a push-up and pull-up madness situation, and I find it mentally therapeutic, and I recommend it to all my friends. I suggest more push-ups, more pull-ups, and less cigarette smoking.
I'm with you. I'm up to 192 on push-ups, though not consecutively.
No, of course. But
of
no,
course.
Neither me. But I couldn't. I believe the push-up is the greatest unappreciated exercise. No equipment
100%.
necessary. Just get out of your chairs. Don't be an idiot. Get down there, do the work. It's not that hard. I might do some right now.
At night, after I put my kid to bed, I've been getting on my treadmill and putting on the Odd Lots podcast and just walking for 30 minutes.
Nice.
Like it's not an after dinner walk because it's dark outside, but like it's something to do. I find that actually really stimulating to just like unwind.
I think walking is probably the most underestimated thing in the world. I believe
Yeah.
You got to walk.
Gotta walk. In fact, it's a good time because the markets are now closed, so I can go exercise. You guys can stick around for Ilya because he's here for macro money and overtime is out of time. So for Ilya Spivak, Dylan Radigan, I've been Chris Vecchio. Good luck trading. We'll see you tomorrow. Same time, same place, as always here on Tasty Live. Keep watching. See you soon.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for cases when all I knew what to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bed. You got everything.
That is not even close.
That bitch stole my. Oh, it's flawless.
Oh, look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised, Sadlov. It's been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15
What?
minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got,
we didn't, wait a minute. So
when I got in this business,
we used to open it 9 o'clock. Since
1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Well, it finally had to happen, I suppose, and now it has. Inflation data has spooked the markets. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We finally got the CPI report to unnerve investors in all of this tariff drama since the beginning of the year. We're going to break it down here and see what it was in these numbers that the markets so disliked, what it means, and what are next steps here. Of course, as ever, we've been watching this story in the context of a disconnect that's emerged between what the markets expect for Fed policy and what the Fed itself has been saying. And today, we have a very emphatic check mark in the Fed's column. And what the markets have done is they've interpreted that information as one might expect, by saying that the rate cuts are probably coming still, just later and more forcefully. So we'll see here what the market response has wrought. Here's the performance across major markets for today. The NASDAQ basically flat, but that undersells the level of weakness. It was, in fact, up at a new record high earlier following overnight news that the Trump administration is going to let NVIDIA have a more free hand in selling to China. So the Mag 7 complex and sort of the AI constellation of stocks and tech in general had a good day. But for all of that, for all of the run-up in the NASDAQ here, we end up with a net, let's call it flat close and be somewhat generous. Because at one stage here, the NASDAQ was actually up by a meaningful amount here. From yesterday's close to today's high, we were up almost a percentage point, 0.8%, and we're closing having erased all of that rally. So quite the downswing here. The S&P for a sort of more catch-all view down almost 0.6%, yields up across the curve, 10-year up 1.2, 2-year up 1.28, oil down, gold down, the dollar up across the board, Bitcoin selling. Fairly classic kind of spooky interest rate environment kind of risk aversion across the major markets here. Gold probably the most impressive of the bunch because this 0.7% swing is quite modest compared to what you might expect in an environment where yields are up over a percent and the dollar is as strong as it is. You might have expected to see gold lose a lot more ground. It ends up swinging lower, but still well within the range that it has occupied basically since late to mid-June. So going back to sort of the overall story here, the 4-week, 3-week range in gold, 3 weeks back and then this week, it holds on this, which perhaps speaks to its resilience in the face of what is a shaky environment for risk sentiment. We get this data today, and it's basically in line with expectations at the headline, 2.7% for the headline inflation rate, just as economists had it penciled in. The core reading a little bit cooler, as a matter of fact, 2.9% versus 3% expected. One might expect this was, for the most part, good news. But when you look at the internals here, a number of things immediately stand out. It's certainly no shock that what you have is still most inflation locked up in core services. No surprise there. Core services is overwhelmingly the largest part of the U.S. economy. Most of the inflationary impetus, or frankly, disinflationary impetus, most of any kind of reflection of the economic growth to price connection should be in core services because it is the biggest part of the overall economy. The thrust for overall inflation dynamics will invariably come from this side of the ledger. But having said that, we are seeing the most significant contribution from goods that we have seen since 2021. Last time that we had something comparable like this, and it's not a lot, it's only 0.13 percentage points here of the whole. It's by no means a large contribution. So if the headline is 2.7, 2.24 of the 2.7 is services. No surprise. But the delta in the change here is much more eye-catching. Notice the headline up 0.3 percentage points. The increase from services, the contribution from services, is up just 0.02 against 0.08 for goods. So the swing in goods, the thrust in goods, is 4 times that what you see in services. And this is really the main situation here. Now, obviously, energy gets you a little bit of an uptick for reasons having to do with spiking energy prices around geopolitical risk, and that's probably a fleeting thing. But that's hardly what is the main concern here. It is this. Because what the Fed has been concerned about the entire time that they've been commenting on the implications of this new tariff regime that we've seen emerge since the beginning of the year and its implications for policy, is that the Fed doesn't know how this is going to go, but historically, you get this jump in inflation from a tariff because what a tariff basically is just a consumption tax on imports. And invariably, what it does is it makes those imports more expensive. Just tax on an extra cost. And that is something that the Fed does not want to extend out into broader inflation expectations, because then all of the progress that the Fed has painstakingly secured becomes challenged. The Fed has, through a very spirited rate hike cycle, the most spirited, one might argue, since Paul Volcker in the 80s, secured a decline in inflation from north of 9% by a hair back down sub 3. So this is not anything the Fed really wants to let out of the bag at all. It wants to keep inflation expectations anchored. And for the most part, it's been successful in doing that. But when you see this kind of a shock start to actually show up in the data like this, as an initial early step, perhaps, foreshadowing more downwind, you start to lose faith in the ability that the Federal Reserve is going to be able to cut rates with any kind of significant impetus this year. And so, indeed, as a response to this data, the calculus for the overall shifts a bit, but really the view for 2025 starts to move into territory where the markets are now less dovish than the Fed's own outlook. As of today, we're down to 39 basis points for this year, but we are out to 68 basis points for next year. In other words, what the markets are saying is that the Fed has less capacity to cut rates this year than even it has accounted for. But that what this will mean, what this delay is going to mean, is that the Fed is going to have to cut more later. In fact, notice where we are here. This setting for the 2025 Fed outlook matches us back to where we were here in mid to late February. And of course, this is where the stock sell-off began around the rollout of the tariffs as they began to spook business and consumer confidence surveys, and the markets thought this whole thing was a growth risk. Note that while stock markets have rebounded since all of that story seemed to crescendo in early April, but policy expectations have been anchored in a range. And the only thing that's changed, if you'll notice here, is there's a lot more gray here than there is yellow. In other words, the markets thought most of the peak 137 basis points in cuts here would come this year and a little bit next. That script has flipped. Now it's most of them are going to come next year because the Fed couldn't move and is right to be, frankly, dragging its feet for this year, according to what the markets now say. Compare that with what the Fed just updated for its summary of economic projections in June, and you have 50 basis points for this year, the median rate now 4.4%, so down to 3.9 is 50 basis points. That's 2 cuts. For next year, as of the latest update, the Fed slashed a cut out of the 2026 outlook because ostensibly it feels like the full tariff impact will take longer to see because of delays in the data and because, of course, the tariffs themselves have been constantly paused and variously diluted. We have another cliffhanger on the reciprocal tariff architecture coming up just next month. And so the Fed is only seeing 25 basis points next year from 3.9 to 3.6, and then another in 2027, though that's most likely a bit far to really have accurate forecasting. So the market is at this point at 100 basis points. The Fed is at 75. That feels like not the greatest disparity. But then you consider for next year, the market is at 68 basis points, so leaning in the direction of 3 cuts. And the Fed's at 1. And what that starts to say, of course, is that what's going on here is the markets are disappointed. They wish the Fed would go sooner. They've wanted the Fed to go bigger than the Fed itself has forecast. In fact, here was that update in June. The Fed's been on the dovish side of it basically since it came out. But it thinks that there will be an inability to act this year to the extent that they'd like. And so they think there's an exchange rate between rate cuts now and later. And that exchange rate means that for every rate cut you miss this year, you're going to have to do more next year, not just move the cut in time, but actually do more cutting, because what you'll end up with is a delay that then lets the economy become weaker, and then you have a bigger stimulative job that needs doing. With that, we have another batch of inflation data that's due tomorrow, and while the PPI index, the producer price index, is not typically the most market-moving thing in the world, this time around we might actually get more action here. In fact, we've been seeing more action here for the past several months. Now, we can see the expectation is that the overall headline PPI will come in a little bit from 2.6 to 2.5, and the core will come in from 3 to 2.7. But where that downswing comes from is tremendously important, because one of the things that we've increasingly noticed here is that weakness in PPI has come at the price of wholesalers giving up margins, giving up essentially profits in order to insulate consumers from tariff-linked inflation. So consider what we have right here. And this, of course, is something that is back to where we were looking here in April's data. It didn't show up in May. But this right here, this major spike down in the trade services component of PPI is telling you that margins are getting squeezed for wholesalers. They recovered a little bit in May, but only a bit. Whereas this swing down right here, as we can clearly see, was the biggest one since back here in COVID times. And so what we end up with then is a situation where we have now the biggest squeeze shaping up on margins since basically recession equivalent dynamics right here. So it's telling us that the resilience we've seen in CPI up until this report really was something of a mirage, because wholesalers were eating the inflation. And while they are perhaps still eating some of it has started to show up in CPI. If you now get a PPI report that's weak, and the reason it's weak is because margins are getting squeezed once again, and perhaps further, well, then all the architecture of an inflationary scare from the tariffs is on display. And from the market's perspective, it was always about the growth implications of that scare rather than inflation expectations. We go back to how the markets performed in the first 6 months of the year. We broke this down granularly last week, but we'll revisit it here because it seems appropriate. What we saw in the first half of the year, for all of the hand-wringing and for all of the concern around what's going on in the U.S. and all the extra risk associated with the tariffs and maybe the Fed won't cut, rates fell in the first half of the year, both at the front and the back end of the curve. And that tells us two things. At the front end, it says the markets are pricing for cuts. At the back end, it says there is no credible sovereign risk that the market continues to happily buy U.S. government debt and have faith in the U.S. sovereign as a borrower. And so it is not surprising then when we get the kind of performance that we get out of this news and out of this whole story today. We get higher yields and the dollar strengthens. We see the dollar behave as the anti-risk haven type of creature that we've been used to, not the sell America dynamic that appeared in April around the panic linked to tariffs then. And so we get into a much more kind of classic setup here, where if the PPI data is going to reinforce this sense that there is, in fact, an inflation scare, the implication for markets will be, oh, well, that's probably the one-off, but the follow-on is the growth hit. And that's how you reconcile. We have cuts. There is no sovereign scare. But a cyclical commodity like crude oil, for all of the fire and fury in the Middle East, fell 9.2% in the first half of the year. And in fact, if you unpick the makeup of the 10-year yield here, as we've been doing, into duration risk, that is term premium, how much the markets want to get paid extra for having risk of time, and inflation risk, the break-even inflation component in 10-year yields, we find that since the beginning of the year, break-even inflation is mainly trending lower. In fact, it's been mainly trending lower since the end of last year. Whereas sovereign risk, or at least duration risk, seems to be building. And while it's not a U.S. default type of a thing, it does suggest that the markets want to get an extra compensation for time uncertainty. And what that seems to speak to in the context of this is that it isn't inflation so much that the markets are concerned about, it's growth, which is why they want these rate cuts. They're not so much looking to the concern that inflation expectations might get anchored. They're concerned that consumers will stop buying as prices go up and the economy will start to fade. Hence this exchange rate in rate cuts, where the market is not saying, oh, this data means that we don't need rate cuts because, look, the economy is so strong. No. They're saying we do need rate cuts because the economy isn't strong, but the Fed won't be in a position to deliver it, so the economy will get weaker than perhaps it needs to, and it's because inflation numbers are as they've presented themselves, which suggests then that if the PPI numbers are anything like what we've seen over recent months in their internals when they come out tomorrow, one might expect this layout to continue to hold and perhaps an even more significant risk-off sheen to appear across the major asset classes. And that is Macro Money for today. As ever, we are here right after overtime, show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am going to be back with Chris for Futures Power Hour as ever, Mondays and Fridays, though I believe we're off this Friday. I am likewise writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
What is going on, everybody, and welcome back to Risk of the Week. Today's Tuesday. We're back in the studio today. Gus, we got some things to talk about, brother. But what's going on? How are we doing today?
Yeah, man, doing great. Errol's here in the studio in person. This is awesome. I can look right at you while I talk to you. I don't have to look down at the screen to feel like I'm talking to you.
I know.
Yeah, feeling good. Happy to be here. Having an okay day in the market myself. Got a little bit of a sell-off right there at the end, but a really pretty boring day overall. Yeah. As far as that's concerned, but yeah, we're here with Risk of the Week for you guys, bringing this segment back. Errol and I have both put on a position, and we'll be diving into that shortly. But anything macro you want to touch on? What?
Trading around all-time highs, I've never been a big fan of, and I feel like we're talking about all-time highs every other week now. So still trading at all-time highs, still managing. Other than that, have your eyes been on anything crypto-related? Any type of crypto exposure? Any type of crypto chats over the last week or two?
I can't say they have. I've been flirting with the idea of getting like just real long, some IBIT, some leaps, something like that. give me some crypto exposure without actually having to deal with the crypto. Be able to trade options as well is always nice. But I've been waiting for even a slight dip in Bitcoin to present itself for me to do that. Something kind of substantial. It is a cyclical asset to a degree. And it just keeps making all-time highs. And I find with crypto, but strangely not with the regular market, I do find myself in your camp where I'm afraid to trade at all-time highs. Right. And that really is a very backwards logic. And I'm aware of that because crypto makes all-time highs, much more often than the market. It's not uncommon at all, even now, for Bitcoin to have 100% year. So I don't know why I feel the need to sit on my hands so hard. But yeah, I think it's some long eye bit, like maybe into like 2027, like something deep.
No, I hear you. It just feels awkward. That's the way I like to describe it. It just feels awkward at all-time highs. Feels like the risk to reward isn't too much in your favor, but it's like glaringly a little bit, you might be a little bit more long biased, but just hard to pull the trigger when we're at all-time highs. So that's what we're going to get into for the day, a little bit of a risk of the week. So I'm glad we're talking about this today because there's a couple companies that I got in mind. So I put some thought into this one, Gus, and we can go ahead and just get into the slides for risk of the week now, actually. But NVIDIA, Gus, I'm feeling NVIDIA. I can't remember if I did NVIDIA for one of the first ones, but NVIDIA's at all-time highs. NVIDIA feels like it's not going away. A continued 3-month rally since the beginning of April. Before we even go any further, what are your thoughts on that rally since the beginning of April? We haven't gave back any of the gains considering we're at its highs since April 7th.
Yeah, NVIDIA is an interesting one. Meta was on this same trajectory for a little while, though I do think they've had a small pullback to kind of quell that out now. But yeah, I don't know. I go back and forth where, obviously anytime something is on a 3-month rally, what's the thing? On any time frame, it's hard to get more than 3 or 4 green candles in a row before you catch a red candle. And so if we were looking at this on the monthly time frame, we're starting to push that envelope where it does feel like it's high time for a red candle. But also, NVIDIA is the darling of the market in every sense of the word. It is the alpha and omega right now. First 4 trillion company in history, number 1 company in the world. You say AI, you think NVIDIA. They're making this big investment into their data center, I guess, development center in America to try to take a little bit of that tariff burden off themselves, which I do like. But that said, I do think every stock needs a little bit of time to breathe. And when Meta and Microsoft were also on these cataclysmic runs, right behind NVIDIA coming out of the Liberation Day sell-off, I feel a little bit more wary about that. But with both of those stocks having now taken a turn and at least had their own breathing periods, it feels like it might be time for NVIDIA as well. Yeah, no, 100%. To piggyback off of that a little bit, kind of feel this is a little bit of my personal opinion. It feels like everybody's in this NVIDIA trade right now. It feels like NVIDIA had a lot of steam to the upside over the last year now. It feels like NVIDIA has been relevant a year and a half, maybe longer. But it feels like everyone's in that trade to all-time highs, and that contrarian in me is itching right now. And then hopefully, maybe earnings could disappoint just with all of the tariff news, all of the uncertainty. I know there's still been conversations around China and their chips and the accessibility with NVIDIA and things like that, but maybe that caused a little bit of a hiccup in their earnings. So maybe we get some negative earnings that'll help my position out if we go ahead and put that position on. And then strong dollar had one. The stronger U.S. dollars makes NVIDIA's overseas sales worth less. That's better for a company with global customers. So look for this NVIDIA pop, right? I feel like we never got that pullback in NVIDIA. It's reminiscing of that March of 2020 COVID crash that we got in the market, and we never got that significant pullback. It feels like NVIDIA went on an absolute tear, and I've been waiting on that pullback that we never got. So that's where I'm at, Gus. Yeah, to address the concerns popping up in chat, this is, you said 33 DTE is what this trade is for you?
This is, no expiration yet. We're going to go ahead and put this one on tomorrow.
Oh, you're saying, okay.
Yeah.
I got you. We're
going to get short.
Short for sure, but like what are you eyeing? What expiration are you eyeing? Are you saying short stock?
No, not short stock. Too expensive.
I agree.
I wish I could short stock. When you guys know I made it, if you see me just shorting NVIDIA all willy-nilly, 100, 200 shares, just know we made it. But no, contracts, absolutely. Was looking more on the side of, I know we got earnings after the bell August 27th. So that's something to be mindful of. But short, absolutely.
Sure, I'm with it.
Short.
And you mean short term?
Short term, 100%.
I got you.
Short and short term.
Short and short term.
Short term.
All the shorts. Short square.
Short
You guys
square.
heard it here
Short
first.
square, duh.
All right, yes. And that's obviously true. I don't know how long term I would ever want to be short on NVIDIA. Shorting NVIDIA is like shorting PLTR. Can be painful, but can be profitable. I think we hit the nail right on the head with that one.
Oh, yeah. It's called risk of the week for a reason.
It
Baby.
is.
We're putting a little bit of risk on
Absolutely.
it.
And I'm about to talk about a pretty freaking stupid position.
No, I like no. I like where you're going with this one, though.
to be quite
I see
honest.
it,
But yeah, we can jump over to next here. My risk this week is Centene Corporation, ticker CNC.
Okay.
This is one that I've mentioned on air before. I took 2 positions on this one. The first one, which I closed for a loss today, I decided I was not going to let a short put run and destroy my entire year. So I finally had to get out of my initial short put. But this is the second one that I put on. I put this position on 2 weeks ago. It's actually moved down a little bit further. You can get a better fill than I did. 345 is the current price on this contract. But they're currently under investigation for securities fraud. Get that out of the way right away. That's an issue. It's not good. It's usually not good for your company. However, companies, and especially in healthcare, as I noted here, they tend to wiggle out of these things. And, the bigger the company, the better in that regard. But in healthcare especially, there's lots of ways that people tend to find their ways out of these things, I feel. So it came on July 2nd when this news broke. It's fallen about 8% from there. That's why I lost on the first contract. But I do feel that this investigation is fully baked into the price at this point. This is a long time to expiration, so there's plenty of time for everything to work itself out, however that may happen.
Yeah.
If they're found innocent of securities fraud, then all of a sudden this thing just shoots back up and this is a massive winner and it's done. If they're found guilty, I do think that they could move down a little bit further, but it's already slid over 50% on this news. And I feel that right now the market is pricing in the guilty verdict. I feel like this is a guilty until proven innocent situation, at least the way the market is treating it. And so I don't know how much more downside there would be should this result be what everybody seems to expect at this point. Beyond that, these investigations take time, and this thing could very well drag on and on and on through the end of the year, in which case I think that this will just slowly recover, if even by a few dollars, and stay well above this 30 strike, like the most. Why did I say 157? Where did I get that number? 157 DTE. Yeah, guys, it's a 30 put. The stock is currently closed at $30 on the nose today. 157 put is a typo. Mea culpa on that one. But yes, a 30 put. So I just need this thing to stay above 30. Even if we just get back another $1 or $2 before the end of the year, that would be all I need. And I think that there's a lot of ways we could see that happen. So yeah, like Errol said, called risk of the week for a reason.
Yeah,
This one is certainly high risk, especially being short a naked put, especially against all of this bearish news. Yeah. But I'm just hoping for a no news is good news situation that we can gradually recover, if even a little bit, if even 6%, and put me in a more comfortable spot. So that one's my
Contrarian Gus.
Yeah,
there we go.
I try to be contrarian. So I thought CNC was something different.
CNC. I gotta say, December 19th, day after my birthday. I hope this works out to you.
How about that?
And, so that'll be my birthday present to you. Is this trade right here?
you giving me a present on
if
your
it works
birthday?
out, if it works out,
not how birthday presents
exactly.
work.
But I mean, 345 of credit, 157 days left till expiration. Gave yourself a lot of time. And I mean, I think that was pretty smart. Like you said with the investigation, so much uncertainty with the investigation. Got a nice little time frame to work with.
I wanted the time horizon, and there's 2 schools of thought on this, because the other one, and it was I executed on both of these schools of thought, because my first trade was a short 3250 put that was set to expire at the end of this week. And my thought was, this is so short term. I think this all got fully baked in on the first couple of days of this news cycle, and that we will probably see at least some kind of little, recovery, like what UNH did. UNH all the way down to 270, and then it bounces back to 330 before we find a level and stabilize. I thought we would see a similar dead cat bounce with this one, and then it would all work out well with the timing. Doesn't always happen that way. The price continues to be negative. So I'm happy to still be holding this longer dated one. I stand to gain more from it anyway if it works out.
Yeah, I like it. I mean, the pop must have been pretty decent on it. I mean, 345 credit all the way out on December 19th. It had to have been decent, right?
Yeah.
What's going on?
I'm chuckling at Lone Sofo. Lone Sofo said orcas, which is just is so sharp. It is the orcas. But anyway, what was your question? I'm sorry.
No. Losing my train of thought there. No, but I like the time window on the chart. I like it. CNC risk of the week for a reason.
Yeah, should let it run. I like when I'm rooting for things to go to zero, because I find I'm pretty good at taking things to zero.
Yeah.
It's like I'm a zero man, and so I with the trading the tasty way, you can make money on things going to zero. So that's what I'm trying to do here. Whatever the opposite of Midas is. If somebody can tell me who Midas's enemy was, that would be great.
Moan might have that one for you.
But yeah, that's my risk of the week there.
No, I mean, I like it. We'll see if we can get filled on this one tomorrow on my end, but we can go ahead and jump into the platform here, do a little tour to market, see what we got on over here. You can see we were looking at NVIDIA. NVIDIA earnings is going to be after the bell, August 27th. What are your thoughts on like earnings season as a whole? As I was going through the options, the high options volume watch list today, it's like I'm wading through potential trade opportunities, trying to walk around all of these potential earnings that are next week, week after that.
Yeah, I agree. I mean, I love earnings season. I love earnings season because it, obviously because of the opportunities, but I like to kind of attack it in a different way. I'm not generally looking for good opportunities headed into earnings calls.
Right.
I want either to play overreactions to earnings calls or sector moves where there's another earnings call coming up.
Right.
So, for instance, something that I'm eyeing heavily tomorrow is United Airlines, which I wrote a wonderful article on today on tastylive.com. You guys should check it out. And I'm looking at UAL. They got this big pump because Delta Airlines had their earnings last week and they were really good. So the whole airline sector gets inflated. But now we have UAL pricing in somebody else's earnings. And to me, and it's already started to come back down a little bit, which I think is reasonable. I should have been quicker with this reaction after Delta's call. But to me, we're pricing in Delta's earnings into United already. How much better could United feasibly do? I suppose it could also pump the entire sector up if the two of the biggest players, I guess American also exists, report good numbers. But yeah, it's just very interesting. So sentiment moves like that, I like to kind of try to get contrarian and play the other side where we're acting like it was United's earnings call when it wasn't. And what could United possibly say in their earnings call to push higher highs? So I'm not 100% sure I'm going to get short on that one. I may try to find an angle, but I greatly prefer trading earnings that way as opposed to trying to trade the earnings call itself and predict.
Anything this earnings cycle you're kind of eyeing? I was debating. I was even debating on putting on an earnings trade for this risk of the week. But as we get in Chicago, I'm trying to nudge my way in there slowly. But any earnings you're personally on?
No, I like to take it week by week. And United is the one this week. I just, especially with trying to play overreactions and very often getting involved after the earnings call in the first place. I don't try to have an incredible amount of foresight.
Yeah.
And especially because anything that you're doing, anticipating earnings longer than say two weeks out, you're really getting
into. It's quite literally a binary.
It is. It's so binary, but also it's like, and especially in this environment with tariffs and everything and forward guidance often meaning more than revenue and EPS, they really, I don't know, it's more pronounced than ever, and their actual numbers, you can guess totally right about their numbers. You can say there's no way these estimates are right. I think they're going to beat EPS by 20% and be 100% right, but they give poor forward guidance, suddenly the stock slides. And so it's like you have to be able to be right about so many things, be able to guess how all of these variables are going to work together. Like with United, they have one thing is that jet fuel costs are getting much lower, which is obviously good for them. But something that we're going to be waiting on in their earnings call is their cost of labor. Has their cost of labor gone down? So then you have to begin to quantify how much does the cost of jet fuel work against that cost of labor? What are their actual earnings numbers even going to be in the first place?
Right.
Will either of those other factors override the actual earnings numbers? It feels like if you're trying to trade earnings, it's like a 5-team parlay, and you need all of these things to go right for your trade to really work out and pop. And I would much rather let everybody else try to price all that in and then get in after the fact and, let the panic go away and things usually work out.
You rather let the market show its hand a little bit.
Yeah, it's true. And
lack of a better phrase.
And in a more macro context too, not macroeconomic, but macro to me, I find myself being much more of a price action trader in general recently. Liking
in terms of finding your bias?
Yes, in terms of finding buys or getting short on things. Similar situations to what we were looking at with Disney. It's just when you get a strong move in one direction, especially in the age of information and instant information, the way that we have it, those moves tend to be overpronounced, and they produce a lot of very attractive premium that you can take angles on. So, I would say, just price action and the overreaction.
I'm excited. We'll see what overreactions we get in the next couple of weeks with all these earnings coming up. We'll have a lot to talk about. But a little tour to market. We're short on the micro NASDAQ right now. I know we got a little bit of a pullback headed into the close. But we'll see if that continues on into tomorrow. Kind of sitting break even right there. Coin sold an out of the money call spread on coin, Bitcoin, and crypto, standing strong. So 3 days left till expiration on that one. We're gonna have to just sit that one through for the rest of this week. Then we got CRCL, Circle Internet Group. This one's playing out pretty well. Very slow mover, up just $73 on this one. It is an out of the money put spread that I sold on it. So we're getting a little bit of a rally. IV's pretty low, so I might even consider taking this one off a little early just because IV's really low. I know it's 31 days left to expiration. I could be a little bit more patient, but at the same time, I could just deploy the capital elsewhere. And then we got Disney. Disney was another one that kept going ham to the upside, even after all the news. I don't know, that dad saved his daughter on the cruise line, jumped off, and then just shot Disney to the moon, even higher.
It's true. And I'll tell you what, too, the media tried to villainize that guy.
They did try to, and it wasn't
wasn't even his fault. It wasn't even his fault. They're saying this man put his daughter on the rail, and it was just wrong.
How was that the narrative immediately?
I know. I mean, I think it's because, and I don't want to make accusations here, but I think that perhaps Disney pushes that story to take less liability, take some liability away from them. I think that the news says Disney.
What a
happened,
great point.
And Disney says, "Oh, this dumb dad."
What a great point. You know what? That's so funny. I would be curious to know if it was something like that. I was curious if it was just like human behavior. Like, you know how when you play the game Telephone? I was like, did that just like catch on really quickly because people want to have an answer as to why something happened right away? But also, could that be another reason? Could there be something deeper behind it from a business perspective and from a perspective of how large this business is like Disney? Doesn't sound too far-fetched in my opinion.
Exactly.
Curious about that.
Well, yeah, and I mean, you shouldn't, and I mean, it's objectively true. 6-year-olds should not be able to somehow shimmy their way off of the cruise line. Yeah. So yeah, I mean, it raises lots of questions. So yeah, that's my tinfoil hat there. Is I think it's Disney doing that.
My tinfoil hat is the fact that this made Disney rally to the upside, and I happen to buy a put on Disney. So we got a little bit of time left on this one. It's going to expire here soon.
Was that your TA that the kid fell off the boat?
No, that was the fundamental. No. Okay. I was in it prior. No.
Oh, this is the one you've had open forever.
Yeah, it's been a while. I've been in that one a little bit longer than I would want to. Eli Lilly, this one has been moving a lot today. Had a big move to the downside. IV rank is propped up right now. And that worked against my position, but we were up a little bit on it. And if I wasn't up a little bit on the Eli Lilly position, I'd be down a little bit more on the overall position. And right now, both of the contracts are sitting out of the money. So I'm comfortable. I just got to be patient, give it a little bit more time. Netflix, this one's coming in clutch today a little bit. Netflix is down a little bit on the day. We had sold an out of the money call spread on Netflix. Both of these still sitting out of the money. And then we got QQQ. We got a few positions on in here. With QQQ, we had sold.
Yeah, just a few.
Yeah, just a few. I think one on in there was a test position that was just trying to route for today. But I'd sold an out of the money call spread just to indicate my longer time frame bias. I'm not a pessimistic. Okay, I'm not a pessimist. Right, I'm typically an optimist, so I'm always short on the market just because I'm naturally a contrarian, not because I'm pessimistic all the time, guys. And then I also have on this iron condor. I sold an out of the money put spread, sold in was out of the money call spread, and that one's gonna expire by the end of the week. So if we can get that pullback, this one can land right in the breadbasket, and we'll take that one off the table. But other than that, that's all we got over here, Gus. Nothing really too exciting, but things are moving. Anything exciting or standing out on your end?
No, I mean, I have a number of positions that are 3 DTE here. Oh yeah, I will say, I have a position on General Mills, GIS.
General Mills, GIS.
Yeah.
What's going on over there?
Yeah, so can we zoom out a little bit here? We had a nice dive on this one. How long have I had this open? 20 days. So yeah, pretty much that little micro bottom right there in the chart before, yeah, that one, you had it. I bought right at the bottom. They had that one, yes. They had a bad news cycle, grabbed it there, and this will at the time was an out of the money call spread, or sorry, put spread. I sold the 50, bought the 47.50.
Okay.
So just needed this to move back above 50. I was expecting a bounce off the bottom, like I just said. I like to trade overreactions to bad news, and they got bad news, and it came down. And so I was like, okay, cool. I think we're going to bounce. I think this presents a very interesting opportunity. Got short the puts immediately. It did bounce. For 4 days, I was like, I'm the greatest trader in the world, and there's no chance that this doesn't get home. And then eventually, things started to turn over just a little bit, and right now we are just pretty much right at the money, close 49.99 today, needed over 50 by Friday. So that's certainly what's stressing me out the most this week, though I do think that'll get home, and we just need a couple more solid days in the market here. But other than that, yeah, I mean, I've just kind of been taking some winners recently, honestly. I got longer some Qualcomm earlier this week. I have all types of things. I have an August 15th, 31 DTE this year, 170, and I have to say this year for reasons I'll get into. An August 15th, 170 call, which is bleeding. I also have a short 130 put for October 17th, which I picked up That's one of the ones, the additions that I made this week. We had suddenly gotten close enough to 130. 130 would be like a 5-year low. I don't know if it's 5-year low, 2 or 3 year low for this stock. I think there's no way we see 130, but suddenly there was some premiums on those contracts with this downside move. So I grabbed one of those, and I also have a 250 call, January 18th, 26, 250 call, 338 DTE, June 18th. I can read. June 18th of next year, June 18th, 26, pretty much 1 year to expiration, 250 call. That's more of a gamma play, hoping that maybe sometime some good news will break for Qualcomm and they get some kind of 8% move in a day and suddenly those premiums will fly through the roof. I don't know that that's realistic that could ever get in the money. I think that's one that I should be able to liquidate sometime before then profitably. But yeah. Oh, and I got long some bonds. Nice little boring bond trade. I know. So
I was getting too risky. I had to go with the bonds.
Yeah, right. Had to cool it a little bit. But yeah, bonds, that's a January 16th, 26, 185 DTE, 85 call. Bought it in the money. They've come down a little bit more since, but I just didn't really want to be dealing with theta in any capacity.
Yeah.
Again here, just thinking that a rate cut will come sometime before the end of the year is pretty much the entire line of logic behind this trade, and everything would work out from there. But yeah, that's all my new additions. And yeah, still got plenty of stuff open. Still holding my Surf Air from last week. And I'll tell you an interesting one is I got leaps also June 18th, 26 on Starbucks.
Okay.
Something that I like. I like this Brian Nickel. I think he's going to do good things for the company. Former Chipotle CEO. He obviously took them to cataclysmic heights. They had to split and things. And I just really like everything that he's doing with Starbucks right now. I really like this Back to Coffee initiative. Have you seen that? That's like his whole thing.
The Back to Coffee initiative?
Yeah. It's like his whole thing is he basically just walked into Starbucks and said, we're going to chill out. And he cut like 20 drinks off the menu. And he really wants Starbucks to just be about coffee and less about trying to be trendy. He wants, to try to steal the market share back from people who maybe abandon it because it got too expensive or whatever. And then another thing that I really like is he's really pushing what he calls the 4-minute rule. Wants every single drink made in 4 minutes or less. He's implementing all kinds of infrastructure, including some AI, to try to facilitate that. But I just think that both of those are very strong directions to take the company, and I like his funny words. So I'm jumping in on those.
I would agree. You know what? It's kind of funny that they may be taking that approach just because it kind of feels like coffee was headed in the direction of like ultimate you can customize your drink to the farthest extent. Have you heard of Dutch Bros?
Yes.
So Dutch Bros is really popular in Colorado.
I was going to bring up Seven.
Is it popular in?
I was going to bring up Seven Brew if you're familiar.
I've never heard of Seven Brew.
Yeah, Seven Brew, essentially the same thing. You know Swig?
I don't know Swig, no.
Swig is a soda place that's doing that. Started in Utah.
I think I've heard of Swig.
They don't care for alcohol or soda or coffee in Utah. So Swig, it's a soda mixing place, but it's the same concept. And then yeah, Seven Brew has also popped up. But yes, go on. I understand what you're about to get into.
No, I was just which part were we going to get into again?
You were saying where coffee was moving towards like full customization.
Oh right, absolutely. And I noticed other brands like Dutch Bros, Seven Brew,
number 7,
right? Number 7 Brew. I think Seven Brew, those type of brands were getting super popular, and it just seemed like Starbucks started to kind of dilute their own stock a little bit by kind of blending in with the rest of everybody. So,
did somebody just mention Lucan Coffee?
Lucan Coffee.
Do my eyes deceive me?
Is that like a Texas-based brand?
No, Lucan Coffee. They had a massive scandal during COVID. Like totally cooked their books.
How do you get a scandal and you're in the coffee business?
They fabricated like $300 million of revenue or something.
They're doing of
coffee, like. They traded. It's a Chinese company, like primarily in China, but they traded on the American stock market. It was like, I remember that it was like a darling during COVID, and it was popping, and then suddenly it was like they fabricated $300 million in revenue, and it didn't go away. It just got pulled off the American market, but it's still incredibly prominent in China. But yeah, BA and chat, if you could elaborate on that, I'm pretty sure that's Lucan Coffee's ticker, or it was. If we know, are they coming? Do we know anything about Lucan Coffee? Enlighten me. Did Starbucks sell their China portion? I don't know about that. Yeah, $5 to $50, then accounting fraud, then end of the stock. That's correct.
Then end of the stock.
And yes, they're coming from China, apparently. I didn't know they were opening Lucans in the United States. I can't believe the SEC is letting that slide, to be honest. Tim Horton is the best coffee. Everybody give your coffee takes. Let's hear your coffee takes in the chat. Drive by once a week. Yes, Mike, to your point about Dutch Bros, and I don't know if you had this experience as well, always line to the street.
Always. Great customer service.
Yes.
I feel everybody may have had that experience.
Yes, excellent. But
You know what's funny about their customer service is they try to be so personable with you right off the bat, and I think that's an interesting route that they take.
Yeah, I mean it's sort of the Chick-fil-A approach as well. But yeah, Lucan just opened 2 new shops in New York. How about that?
Hey, lastly, in terms of changing initiatives, what was it? Seafood boils.
Oh, Red Lobster.
Red Lobster. What are your thoughts on that? You think that was a smart approach?
I like it. Yeah, I like it. I think that Red Lobster had lost their place, and I mean the endless shrimp was what sunk them.
Yeah.
But I think that what happened with Red Lobster is that they began to try to elevate a little bit beyond what their actual market was. Red Lobster is seafood Texas Roadhouse,
right?
And you must treat it as
stay
such
within your bounds.
Yeah, and I think they started to get a little bit too big for their britches. Then they overcorrected with the endless shrimp, which just about bankrupted the company, which is hilarious. But yeah, no, I like this new direction. I think, and I mean, I'm a Red Lobster proponent. Those Cheddar Bay biscuits, man, that's good stuff. I'd like to see them come back around. And yeah, I think that this is the right angle. It's got people talking about them on social media again. People are wanting to get out there for that seafood boil. It looks like pretty good food. I would give it a try. So yeah, I'm a fan. Are they still public or did they delist?
I forget. I just know they were the talk of the town for a little while. I think it's interesting how both companies in a way are trying to go back to their way back to their roots. It's funny that these companies got super successful. Now they're like, what did we do right initially that got us here?
Yeah, and I think that's a great point. And especially in the case of both, but Starbucks in particular, like you said, all these competitors have entered the market to do the customization thing.
Right.
I would also throw Dunkin' into this.
Good one.
Into this hat as well. And so when suddenly because that kind of was their selling point, was the customization was, it was always like a 2000s meme, your double frap, double whip, whatever. I could probably still recite my dad's Starbucks order, even though he hasn't been there in some years now. But it was that was their thing. But when your niche has now been infiltrated, there's these other competitors who are able to do it, and with less infrastructure, mind you. Most Dutch Bros do not have a sit inside location.
Yeah, no, they have
it's like a drive-through freestanding building. Yes, it's literally
not even
the
size of a garage.
Yes, and Seven Brew is the same way. I mean, the Seven Brew literally was like the size of a shed, and there's like 3 people.
You think there's some psychology at play there with such a small place? It makes you think it's going to be quicker, even if you're sitting in a line.
Perhaps. I've never thought about it from that angle. I've always thought about maybe it seems like it's more mom and pop or something.
Agreed.
Like,
do you think mom and pop could insinuate or also communicate this might be quicker?
Perhaps. I think it definitely communicates this is going to be more personal.
Yeah. Or maybe
and which in the case of Dutch Bro is kind of part of the angle.
Good point.
But when there's competitors popping up doing exactly what you do, and they're able to do it with less infrastructure and sell their drinks for cheaper as well.
I mean, that's the whole game.
Yeah, that's it. That's it. Yeah, they figured it out. And Starbucks, I'll tell you what, their customer service sure as shit can't hang with somebody.
Not at all, but they do. Branding is king, and they definitely have the coffee branding.
Well, yeah, and there's Starbucks. Starbucks does the whole thing where they spell people's names wrong on purpose too.
Oh,
like you've seen that?
That was wrong on purpose.
Yeah, it's like that's a thing. Is Starbucks will?
Or is that another marketing ploy spin? That we've been doing that. On purpose.
We're
human mistakes are a must.
That's true.
Happen.
Yeah, maybe it is. Maybe it is just some triple reverse psychology. I had never thought about that.
Triple reverse. Wow.
But I do think that's interesting, and I actually just saw. Like yesterday, a girl that I went to high school with posted a picture of a Starbucks drink on her Instagram story and was like, "Oh, look, they spelled my name wrong." I was like, "You're a cog in the machine."
You're over here standing outside. You're outside of the matrix, just like
literally. So-called free thinkers when Starbucks spells their name wrong.
You chose that latte.
Yeah.
No. Anything else to add before we hop on out of here?
No. I don't have anything. Oh, let me read through some of these coffee opinions real quick. Yeah. I asked for them. What else we got? DRI. Oh yeah, Darden for Red Lobster. They got ruined by all you can eat shrimp. Absolutely.
I don't know how that ruins it, man. If I would have heard that, I would have been knocking on the door.
They were selling it at a loss. was the problem. Bro. They were like, we're going to loss lead with this. And then everyone just came in and shrimped until they were sick. And then they weren't making any money anywhere else. But, oh, man. Okay.
Sounds fire.
I'm not seeing any other thought. Maybe, Dunkin' Cold Brew, Pete's Muffins, Pete's Coffee. I haven't thought about Pete's Coffee in some times. Keen's Coffee, only 2 locations. Good pull, Mike. I like the local places coming out. But yeah, I guess Lucan Coffee making a run on America. Everybody, watch out. do not buy that.
Report it here first.
Yes. If Luke and Coffee goes public again, everybody tell a trusted adult because we are in serious banana times. That's funny. Barnes and Noble, yeah, Barnes and Noble with the Starbucks. That's kind of a vibe too. I don't know.
Oh, it is 100%.
Yeah.
No doubt. Barnes and Noble, great. Great date spot, I gotta say.
It is. Yeah. For real. I would meet. I used to meet my ACT tutor at a Barnes and Noble.
Oh.
At Starbucks at a Barnes and Noble.
Yeah.
Made a 35 on that thing too. So shout out to her. If anybody needs ACT tutors, get at me. I got a wreck.
35. You got a 35 on the ACT?
I did. Yeah. I was always really good at standardized testing. That's a thing. Like
that's a great score. We are running out of time here, guys, but that is going to wrap it up today for Risk of the Week. We'll see how CNC plays out. We'll see how NVIDIA plays out. It's going to be the new risk. We'll be back here Thursday, and that's going to do it for Gus and East. Be sure to stay tuned for more segments coming on next. We'll see you guys next time. Peace.